guys, good morning. You're watching India Market Open, and well, in case you were planning to study in the United States, they're not welcoming interviews anymore. I mean, what's going on, guys? I mean, we'll get to the setup, markets and all of that, but this story really struck my attention. Why would a nation shut the doors to the brightest and best in the world who have gone on over time to head their largest companies?
I think it's good for us.
It's good for us, maybe. Yeah. We have to give them the same opportunity.
Yeah, that is true.
Well, the only thing is us and everybody else, right? So I read an article which said that the Hong Kong University of Science and Technology has already offered to unconditionally accept Harvard students.
Interesting.
Yeah. So what is US is
already done the
China will boss. Our
best universities need to do that. You got to accept it to Harvard. Come on,
unconditionally.
We'll bring you in.
And we have some now. I mean, we anyways had some very revered institutions. Now there is a lot of private institutions which have come up and put up their hands. So I think there is merit there.
Yes, we're going to cover this more on the on NDTV Profit all through the day. But let's get to markets and what you're going to see on markets this morning. So, all right, after a bit of lag, the US markets woke up. Remember, they were shut on Monday. So, the kind of response that you've seen Tuesday morning, that is Tuesday night for us, is to what happened on Sunday evening US time. So US markets resumed trade with a bang after that Monday holiday. Trump's decision to postpone EU tariffs and that deadline for a 50% tariff cheered the markets as well. You saw the Dow up nearly 750 odd points. S&P 500 also up 2% and 2.5% up on the Nasdaq. Let's pull up the US futures. US futures were flat because what US futures are pegging in or waiting for, and the market is waiting for, is on Nvidia results. They're due Wednesday after market action in the US, and Street will watch the impact of Chinese restrictions. Already that has shown some rumbles, and the Nvidia stock took a fair bit of a knock today. Bond yields have moved lower on tariff fears, easing the 10-year at 4.46%. Oil prices have been under pressure ahead of the OPEC plus meet. Brent was under the $65 mark. Asian markets have actually opened pretty decently, and let's see if we can pull up what's happening there. Right, the Nikkei up about 0.5%, Hang Seng and Shanghai also in the green. Implied for India, let's pull that up for you and set up the day for you, because yesterday was a tough day, a tough day. And today, I mean, it was looking like something like this 24 hours ago, where the implied was showing you a flat to negative start. But then midday, sort of all levels broke down, and you ended up way below the 25,000 mark. You could see a bit of an anomaly today as well. But remember, yesterday, expiry pressures came in. Some of those could perhaps ease, Alex.
No doubt. All right. In fact, that sets a tone perfectly for me taking you through what happened in trade yesterday. First, let's talk about the fund flow data. And this is an interesting update, right? Because you had 350 odd crore net buying by foreign institutional investors. Domestic institutions, that figure was 10,100 crore. But bear in mind that there were a lot of block deals in trade yesterday, large deals taking place, and both FIIs and DIIs participating. But interestingly, you have FIIs that have net bought for 3 sessions in a row, domestic institutions that have bought for 6 sessions in a row. Institutional flow data contains, as I said, significant blocks, including the likes of PG Electroplast and Interglobe in trade yesterday. The Sensex expiry.
Just before we get to that, Alex, just a word on this. The interesting piece was that the Interglobe block was completely skipped by foreign institutional investors. Right. So you have such a small number, completely filled by domestic MFs.
Even PG Electroplast, it did get interest from foreign institutions, but a large
GIC, Government of Singapore, has bought into PG. But Indigo was a surprise, because I would have thought that everybody wanted a piece of the Indian skies.
Yeah.
No foreign investors. Are they waiting for the further stake sales from Rakesh Gangwal? Who knows?
I mean, there's about 8% left. 8% more to go. So maybe they're waiting to pencil that in. But good for domestic investors.
Of course.
Your portfolios will look better.
But I was just surprised. I was just surprised. It was very surprising.
I'm wondering what happens to the ITC block today, and that's something that we will discuss as well. But let's quickly go through the rest of what happened yesterday. So Sensex expiry seemingly having a bearing resulted in higher volatility through the day. And what a swing. If we can pull up the intraday chart for the Nifty 50, it saw very wide swings, the Nifty 50. It started off with cuts of 1%, recovered all of that ground by about 11:30, and then once again lost ground, hit the low point of the day at close to 2 o'clock, and then recovered some to end near the midpoint of the intraday range. 39 stocks of the Nifty 50 lost ground in trade yesterday, and heavyweights like HDFC Bank, ICICI Bank, Reliance Industries, ITC all weighed on the benchmark. Broader markets outperformed once again. That's something we've been saying more often than not in the recent past, with the market breadth very close to even Stevens towards the end of the session. The Nifty 50 losing about 0.7%, the mid-cap index and the small-cap index gaining about 0.2% and a 0.1% respectively. Defense once again constituted the top performer. In fact, it continued to rule the roost once again with gains of 1.1%. The FMCG and IT index were underperformers on the other end of the spectrum, losing about 0.9% and about 0.8% respectively. Cement companies were under pressure also on account of the effect of an early monsoon and what that means for the first quarter performance, which ordinarily would have been pretty decent.
Yeah, I mean, okay, yes. but just trying to, we speak about the longer term, but just trying to throw a bit of a here and now in today's session as well. And I think what stood out from a trade parlance, and it's a story that my colleague Sajid Mangat has written on NDTV Profit as well, is the kind of subscription that, or the kind of open interest that exists on the AI. So what we will see today, right, viewers, Alex spoke about the ITC trade deal. I think ITC will drag the index a bit today, but you expect some support from tech. And the good part about the Indian IT service or the Indian IT index is that it has not necessarily rallied for 4 days in a trot, and therefore it's kind of done the heavy lifting already. It was down in trade yesterday. So some bit of a support out there might actually help counterbalance the ITC drag that the index will see today. But the total open interest call strike prices between 24,800 and 25,000 strikes is a whopping 1.05 lakh crores across May and June. And one would suspect that if May has such a large OI, I'm sure Puneet will talk more about it, suffice to say it will get rolled over. A lot of it, if not all. You would suspect that such large positions don't get extinguished at the end of the expiry. So this time around, the rolls, we'll see that starting today and tomorrow. So would love to know from Puneet how they shape up. But I think I would keep an eye out for the rolls on the strikes, call strikes between 24,800 and 25,000. And that becomes a stiff line of resistance. I would suspect that, and then you think of sectors, I would suspect that LIC's results may actually spur further interest in insurance stocks, and Tamanna will speak more about it, so I'm not going to dwell too much on it, but could be an interesting one. But guys, we spoke about pipe companies, right? Remember the PVC price uptake and showing that, uptake possible. They are showing the anticipated breakout move, and dealers say it may not be done as yet. And look at the 5-day moves that have come in. Apollo Pipes in 5 days is up 20%. Supreme Industries 13.25%. Astral 12.5%. I mean, this is after Astral numbers came out, and we spoke about this on Monday morning in the last 2 days as well. Supreme was up some 4% yesterday, 3% day before. Astral was up. Some very strong moves that have happened into the pipe companies. So it's a pocket that one certainly wants to watch out for. And after a long time, I'm looking forward to a listing, guys. I mean, an IPO subscribed 41 times. We need that green on the screen. We were spoiled for it in 2024. I think we need that.
But the one yesterday was not half bad. Burana was okay. In a bad day, it was still about 17-18% up. So textile company, today you have an auto anch company, always in the hot space as well. So Bellrise is something we will actually be discussing just before the listing, 9:50 this morning. We'll be telling you if you got allotment, what should you do? If you didn't get allotment, should you still come and buy in? So if you're interested in the Bellrise IPO, stay tuned for that. Meanwhile, some factors to watch which, I'm penciling in. Yes, stock-specific, result-specific factors will very, very much dominate the screens even today. You might see some rebound in IT stocks taking on from Nasdaq cues. Remember, IT was the worst performer yesterday, and that was because it was overall a very volatile session. The index hit an intraday high near 24,973 and slid 300 points from the high. So that is how deep the cuts were. The index also failed to close above the falling resistance trend line, but continued to sustain above key moving averages, which is a positive sign. RSI stood at 57.63, which is a downward tilt, so definitely not in the overbought zone, if that's any kind of a reprieve. If the index defends the support zone at 24,700 and upside towards the 25,100 to 25,200 range is possible. On the other hand, a decisive fall below 24,700 could drag it to 24,500 to 24,450. Nifty Bank Index continues to trade above all key moving averages, which is technically positive. However, both RSI indicate a weakening momentum. For the Bank Nifty, resistance at 55,700 and support at 55,100. But for more details, technical levels and what positions are building up in the F&O space, I'm going across to Puneet.
Well, thank you for that and very good morning. We've seen Nifty as well as, Bank Nifty again trade in a much, in range yesterday as well. First, let's look at what the GIFT Nifty is also indicating at 36 points on the premium. We again saw open interest collapse yesterday, and as we're getting towards expiry, that is an expected move. On the Bank Nifty as well, 55,500 has been a level we've been speaking about, just a tad below that level, but largely maintaining that, and that's a positive sign as well. When you look at, the F&O position as well, when you go forward and look at that, they have been largely, yesterday was a mixed day in a sense for both, for FIs across indices. They did maintain a long position in index options as well as Nifty options, but largely were net short on the stock futures as well as, something like the Nifty futures as well. Let's also look at, the long short ratio. It's again fallen to 31%, and we've been speaking about that for a while, that it hovered around 37% last week, then collapsed to 32%. We saw a recovery around 35%, and then again we are seeing shorts being built up in the system again. The net OI put to call ratio is again hovering around 1, which is largely essentially a very neutral sentiment, to say the least, where puts are being sold as well as calls are being sold at a similar number as well. And finally, just let's look at the levels as well, where there's a build up on calls, and Neeraj did highlight about that. The big candlestick being formed at 25,000 again. 25,400 has also been one of the other levels along with 25,500, but largely indicating that at 24,500 on the puts has largely been indicating that traders are taking out of money puts as well as calls in their bets going forward. Again, that will be something to watch out for going forward as well, but largely seemingly estimating that a 13-point fall in the implied open, the 25,000 level is one of the key ones for the Nifty going forward.
Definitely, 25,000 seems to be that hill that's getting difficult to climb and stay above for the Nifty. Let me talk about key results though, and I think the big one to watch is LIC. Now, detailed look at how these numbers have paired out needs to be seen, and depending on that, we should assess it. I'm giving it a thumbs up. One, because of valuations, and key that numbers were better than expected on a few metrics. So here's what's working. On the margins, the VNB, that's value of new business. VNB stands for value of new business, very key metric when it comes to insurance companies. So those margins are up 152 basis points at 18.75% versus 17.23%. That's a key metric that the street will watch. VNB margins continue to improve every quarter. That's a plus point. VNB margins in power business also improving. Power business is participatory business. This is where the customers they insured actually participate in the equity upside. Individual business touching a VNB margin of 20.9%, so that's also good. In terms of key commentary from the management, non-par mix has grown from 18 to 27%. That's a higher margin business. That's good. Growth is important while considering margins, and that is a big contributor to VNB. That's value of non-business is non-par. In terms of valuations, this is what is working for LIC, which is why you'll see a lot of brokerages giving positive view today. Indian embedded value is up 6.8% year-on-year to 7.7 lakh crore. LIC trades at 0.72 times trailing 12 months price to embedded value. Embedded value is, of course, present value of profitability of all current businesses. So at a time when most stocks are seeming extremely expensive, LIC might look better. Let me come to the core numbers. The annual premium equivalent has seen 11% downtick. Value of new business was down 3.18%. That's consolidated year-on-year. VNB margin was at 18.75%. Final dividend of 12 rupees per share was also declared, and net premium income was 3.2% down to 1.48 lakh crores rupees. But the net profit was up 38% as well. Let me quickly tell you what Macquarie is saying about LIC. They've maintained an outperform with a target price of 1,215. They're saying the VNB growth caution and valuation provides a safety net. The VNB miss in Q4 was driven by a decline in APE growth, increasing non-par mix, and decline in cost ratios provide margin support. Valuation support despite downside risk to VNB estimates is what Macquarie is saying. Let's listen in just for a bit to what the LIC management said on the conference call.
Regarding the economic assumptions in the VNB walk, it's mainly due to the fall of RFR over the duration. We have observed that the RFR has fallen between 30 and 35 bits over the duration, and that is what has resulted in a negative 280 bits in the margin.
Okay. The second one I'm looking at is Vodafone Idea. Thumbs up just because of what they've announced. They're going to be considering a fundraise either by equity or by bond debentures. The board will meet on the 30th of May. That's when their Q4 earnings will also be declared. Vodafone Idea has already raised 18,000 crores last year via equity. The company's performance has not really improved since then. And remember, they have to go out and raise more money because of what's happened with the AGR case. They went back to the Supreme Court. They did not get any reprieve there. So in their last fundraise, shares were offered at 11 rupees versus a current market price of 7 rupees. The stock is now below 7 rupees as of today. So it will be difficult to raise funds again. This may just be an enabling resolution if at all they're successful in raising some funds. Indus Towers will benefit the most. So watch out for Vodafone Idea and Indus Towers. The reason why I've given it a thumbs up because sentimentally a fundraise might be seen as positive for a short-term uptick on the stock. Well, in 2019 as well, the company had 25,000 crore rupees but failed to grow. Shares were at that time offered at 12.5 rupees versus a current market price at 7 rupees. And revenue market share has dropped to 14.2% as per Q3 of the last financial year from 38.5% in FY18. So you've seen a slide in their market share as well. So company fundamentally looking poor, needs to go back to the market to raise funds again. The only reason this is a thumbs up because the act of raising funds and the fact that they managed to raise 18,000 crore rupees last time might be seen as sentimentally positive in the short term. Bharat Dynamics though, the numbers were a disappointment. Their margins and PAT were under pressure despite strong revenue growth. They saw a delayed execution, cost of materials going up by 122% year-on-year, profit lower due to a refund received from customers in Q4 FY24. So that base effect also has impacted what they saw in Q4 of FY25. Core numbers, revenues are up 112.2% to 1,800 crores odd versus 848 crores. So that metric is looking good. EBITDA up 4% to 322 crores. Margins but have dropped significantly. This is because of increase of costs, as I explained. They've gone from 36.6% to nearly 18%. So halved. Net profit is down 6% to 272 crores, which is why you might see a downtick on Bharat Dynamics, considering this is a stock and the space which has been running up consistently.
You said it yesterday as well, in a tough market, defense pack as a whole gaining ground. The first stock on the list, I must confess that I contemplated whether or not to give this a thumbs up or a thumbs down, and I kept it neutral because fundamentally this stake sale by British American Tobacco and ITC does not change anything. I'm going to argue that if at all you see a downtick in the share price, it provides an opportunity for long-term investors. And I'll be curious to find out what our experts over the course of the day have to say about that argument. But let's talk about the latest update. British American Tobacco, which is the largest shareholder in ITC, is set to sell 2.3% in a block that will take place today. The price is interesting, but before we get to that price, bear in mind that BAT holds 20.3% stake in ITC as of the 31st of March, and it owns those shares in the form of its subsidiary or through its subsidiary, which is Tobacco Manufacturers India. The price of the deal is set at 400 rupees, which is why you saw a swing. And if we possibly can, let's pull up the intraday chart for ITC yesterday, because you saw quite a bit of a drop suddenly. Midway through the session, it dropped to, if I'm not mistaken, close to 3% and then bounced back a little bit. That price of 400 rupees is still a 7.8% discount to Tuesday's closing price. So already there is a considerable drop in the value that BAT is asking for when it sells its stake. The value of the deal overall is measured at 11,600 crore rupees. Goldman Sachs as well as Citigroup are managing the deal. Now remember that this is not the first stake sale that has been done by BAT. In fact, just last year, they sold 3.5% stake for 17,491 crore rupees, and at that time, it was the third largest block ever conducted in the Indian equity markets. This is a little smaller than that, but a sizable amount nonetheless. ITI is the second stock that I want to talk about, and this is a thumbs up purely on the back of an improvement in operational metrics. Despite the fact that it's a loss, the EBITDA loss is actually narrowed on a year-on-year basis. The revenues increased quite considerably, as much as 74%, but the EBITDA loss has come in at 28.2 crore rupees, and that compares with a loss of 174 crore rupees in the year ago period. The net loss has come in lower because of an exceptional item, and I'll come to that in just a bit, but it stood at 4.4 crore rupees compared with a loss of 239 crore rupees. That exceptional gain stood at 62 crore rupees during the quarter. Now, what I found interesting actually is in the notes to accounts, which speaks about the order book, which stands at 14,828 crore rupees or thereabouts, which is quite strong. And it also expects the company a conversion of unbilled revenue of as much as 1,793 crore rupees in the current financial year, that is FY26. And that bodes well for the company's revenue generation in the current financial year as well. So the stock was a big gainer in trade yesterday. It might actually be in focus at the start today as well. Maybe a situation of buy the rumor, sell the news. Watch out for it nonetheless. Time Technoplast. This actually is the strongest set of numbers that I looked at today, okay, barring what everybody else is looking at. And a few observations before we come to the core numbers. The revenue increase was on the back of an 11% volume growth during the quarter. And overseas volume was 15% higher during the quarter, and the contribution to the revenue stood at 31%. Now, interestingly, the company is attempting to increase the production of value-added products, and it defines those products as intermediate bulk containers, composite cylinders, and something called MOX films, which is used in industrial packaging. Now, the revenue from value-added products during the quarter grew 9% year-on-year to 377 crore rupees, and the margin of that value-added products stood at 18.5%, which is considerably higher than its other established products. So that mix improving is perhaps what is also contributing to an improvement in the EBITDA margin, which incidentally was the highest in as much as 3 financial years. So watch out for that. The core numbers now, the revenue grew as much as 5%. The EBITDA was up as much as 15% on the back of an expansion in the EBITDA margin, which came in at 14.5% compared with 13.3%, and the net profit was up as much as 19% during the quarter, coming in at 109 crore rupees, also the highest quarterly profit in at least 3 years.
Oh, very interesting. So a great list of stocks. Mine, you would argue, is entirely result based, but interesting names for sure. So one of them is V2. Actually, all three have a thumbs up. I mean, very good results that have come in. So V2 Retail, for example, revenues were up 68% at 498 crores versus 296 crores. Margins on that base from 10.6% have moved up to 11.6%, as a result of which the profit after tax up 79%, 6.4 versus 3.6. Both Vishal and V2 Retail have actually been doing very well off late. Watch out for these stocks, and in today's session maybe a reaction because the market is also looking okay. Techno Electric, nearly a 15,000 crore market cap company, decent volumes, revenues were up 85%, margins expanded from 12.4 to 15.5, and net profit up 73% as well. So a bit lower than what the revenue growth was, but I don't think too many people will complain because the margin expansion is rock solid and there is an 85% uptick in revenues. So might be worthy to actually, at some point of time understand what the outlook for FY26 for this company is, but very strong results, very likely that the stock could react positively. And then Entero Healthcare Solutions. Revenues were up 29%, strong. Margins at 3.6 versus 2.8%, so pretty strong numbers there too. Net profit a bit lower than the revenue growth, 22.5 at 26 crores versus 21 crores, and this is because there was a higher tax outgo that led to the net profit jump not being as strong as the revenue jump. But net, the numbers seem okay. A lot of very high margin accretive business lines delivered this EBITDA margin jump as well. Again, on that base, viewers, you ought to appreciate from 2.8 to 3.6 on that base is a very good jump. So suffice to say, fairly good traction on the margin front on this as well. So 3 solid numbers. And by the way, there are a clutch of others that we haven't spoken about today, which we will during the course of the day. But just saying that a lot of numbers, Alex was making this point yesterday, right? There are a lot of hits, especially on the margin front as well. We're seeing evidence of that overnight too. Clutch of numbers, very, very solid. Yes, some misses too, Dynamatic, etc. But a clutch of numbers, very solid performance. And very likely some of these will react positively.
What's exciting is that the real story is in a company whose shares are not even listed yet.
But behave like they're listed.
I mean, talk about the increase in the NSE unlisted stock price, I think from $1,600 a few days ago to close to 2,000 rupees a pop right now, is insane. Talk about a debut that people are waiting for with bated breath, and that's the story that we're tracking this morning. Now, sources have told NDTV Profit that the National Stock Exchange has seen its valuation surge to 5.8 lakh crore rupees, driven by growing investor excitement and optimism surrounding its long-awaited IPO. My colleague Charu joins in with the details. Now, Charu, you need to explain to us what has triggered this. Is it in part because of what the SEBI circular has said, where it said very clearly by 15 June, tell us your preference about expiry, etc. And what NDTV Profit has reported, that SEBI is now looking at a way out to pave the way for the eventual IPO of NSE.
So the past 1 week at least has us buzzing with a lot of positive news regarding the regulatory approvals that might be coming in soon for the National Stock Exchange. So for India's leading stock exchange that has been looking for its IPO approval since 2016, this comes as a big news, and that is why the people who have been associated with it for a very long time, in fact the shareholders also reaching around 1 lakh shareholders very recently, who have been waiting for the IPO, they are buzzing with a lot of positivity regarding this IPO related news. We must also consider that the SEBI chairperson recently at a Delhi event also hinted that they are working very closely with the exchange to sort of get the IPO put together and get the approvals moving. Apart from that as well, there has been some buzz about the expiry days where the regulator has given the exchanges time till June 15 to come out with their preference of the expiry day. We are aware that NSE has shown interest in using Tuesday as its expiry day, and the regulator is waiting for proposals on the from other exchanges as well before making a decision. But for now, a lot of positive news for NSE is buzzing. For example, the expiry day as Tuesday, and the regulatory approvals coming in soon as far as sources have told us, and even the chairperson hinting towards it, and that has led to a sort of a good sentiment about the exchange and the markets. In the unlisted space, last week itself, the value of the share was around 1600 to 1700 rupees. That has zoomed over 2100 rupees now, and the valuation has also increased from 5 lakh crore rupees to around 5.8 lakh crore in the last few days only.
Okay, so you've gone from 1600 rupees to 2100 rupees is what Charu is saying. in the last week or so. I mean, it's mind-boggling to think of that kind of interest going up, and this is the key thing, you know, that people are going to bundle in more and more into NSE with now no clear sight when the IPO finally comes, but it's seeming closer than expected.
Yeah, closer than expected. And I think even on a global platform, I think in one of the global news channels, the chairman went ahead and spoke about the market share losses being the erosion coming off. In an investor call, they mentioned that as well. And you're seeing increased appetite, right? I mean, I think Drew Investments, which is Monish Pabrai's daughter, Monsoon Pabrai, doing an instrument which allows global investors to invest into NSE. They're creating a fund or an SPV specially for investments into NSE. They would have done it because they would have gauged investor interest into doing that. So more and more global money and local money wanting a piece of this pie because it's a duopoly business. There is no other exchange which has been able to come and make its mark. I credit to BSE for clawing back from that measly 2-3-4% to where it is right now, wherever it is. But otherwise, it's a duopoly. You don't see too many others coming in. And if just one last point, if the economy and therefore the market is moving from 4.5 trillion to wherever it does in the next 10-15 years, you want a slice of the way you can play this market, right? NSE.
I completely agree to all of those points, but only a small worry from my perspective for the retail investor that may not be able to participate like other large investors can, and will only
now
have...
You can.
Yeah, but a lot of people, okay, to what extent though?
2,000 rupees a pop.
And now people are actually doing transactions for 300 shares.
Sure.
Yeah, so 300, 200 shares. You'll have to pay a small premium for it, but that's about it. I mean, 10 days ago you were getting a 1,500 share for 1,700. But that's fine. I mean, again, you do your own check on valuations. We are not recommending it out here.
That is the point.
Yeah, we are not recommending it here. But there is a way to participate.
So now there is a way that retail investors are also participating, which is why recently we did the story that the number of investors have crossed the 1 lakh mark.
Yep.
So you are seeing a wider participation. But more on this story ahead on NDTV Profit. So if this is something you're interested in and understanding how the pre-IPO market works, then stay tuned to us. But meanwhile, the watch list for stocks this morning. Here's what's on the thumbs up list. Time Technoplast, they've seen volume growth, strong numbers. JK Lakshmi Cement, lower cost and volume uptake have aided the PAT. EPAC Durable has seen a strong set of results. Aarti Industries as well, UBS is upgraded to a buy from sell. V2 Retail on the other hand has seen its highest ever PAT.
Now, ITI is something we spoke about. Losses have narrowed on lower costs, something to watch out for. It was in focus in trade yesterday. Vodafone Idea, a fundraise is set to be considered. Whether or not this will pan out immediately or not is a question mark at this juncture. On the flip side, the ones that are unlikely to do too well today, P&G Hygiene, high costs are hurting the EBITDA and have done so in the fourth quarter. RCF, the PAT is down as much as 24% on higher tax outgo. Bharat Dynamics from the defense pack, which has been in focus in the recent past, top line has doubled, but the margins have contracted sharply. All right, quick look at the implied open at this point, still pointing to a marginal downtick. This is more or less where we started yesterday. And we were in for a roller coaster ride over the course of the day, so it's not indicative of too much. We have to slip into a very quick break. We've got stocks to talk about on the other side, so do stay tuned.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Back with India Market Open right here on NDTV Profit, and we are likely to see a flattish start, but it might be deceptive, or maybe actually marginally in the green, but it might be deceptive as well because the world markets have looked pretty solid, and therefore let's see if we actually open up a green or chart our way into the green in due course. But while we've highlighted some results which the three of us think are very good, there is a set of stocks which have come out with maybe disappointing numbers. Varsha Johnson with the caution list for the morning. Varsha, what are these companies and how did they report the numbers?
Yeah, good morning and thank you for that. Let me start with RCF, which reported weak numbers. Now, what were the key highlights? The lower profitability that we are seeing is because of lower profits in fertilizers, which impacted financials. Freight charges have impacted EBITDA for the company, and higher taxes impacted net profit. Just on the four numbers, if you see, revenue was down 4%, EBITDA was down almost 9%, margins were at 4.9% versus 5% last year, but net profit was down 24%. Next on the list is P&G Hygiene, wherein again weak set of numbers, higher cost of raw materials have impacted EBITDA, lower interest cost and tax led to net profit growth, because if you see, there was a downtick in revenue but net profit was up 1%. Now this is because of lower interest costs and tax. Last on my list is DCX System, wherein if you see, market headwinds and global uncertainty basically impacted overall financials for the company. Raw material cost and employee cost impacted overall EBITDA, while order book as of March 31st stands at around 2,855 crore. Just to speak on the four numbers, revenue was down almost 26%, EBITDA was down 73%, margins were at 2% versus 5% last year, and net profit was down 37%.
Okay, thank you for that, Varsha. Those were some of the howlers, but there's some pretty good ones also which have reported today. MedPlus Health is one of them, EPAC Durables, all good set of numbers, Supriya Life Sciences, and we'll get into details of all of those, but you might see some uptick there. But let's welcome on the show this morning Amardev Singh of Angel One, Mayuresh Joshi, Market Smith India, also joining us for the technical and fundamental view respectively. Welcome to both of you. Amar, let me start with you, and whether you're seeing some potential of a rebound on the index after the kind of battering yesterday?
Yeah, I would say that if you look at the indices, clearly there is some sort of definite selling pressure at higher levels, no doubt about it, be it Nifty or Bank Nifty. And to start with Nifty, somewhere around 25,000, 25,200, that's a very strong zone of resistance. And on the downside, however, support is strong around 24,400, 500 zones. So it's more of a trading range. And if you look at some of the technical indicators on the intermediate term trend, they are very strong and positive. Whereas from a short-term perspective, some of the technical indicators, they clearly point towards some sort of consolidation, some sort of selling pressure. That's the reason we are seeing these choppy trading sessions, because both of these major short-term trends and the intermediate-term trend, they are not in sync. So that's what we are witnessing in Nifty. And also, if you look at Bank Nifty, also portrays a similar sort of, I would say, picture. And if you look at Bank Nifty, I would say Bank Nifty's got very strong support around 54,800 levels, 55,000 levels. And whereas on the upside, 56,000, 56,200, that's a zone of resistance. So I would say it's more of a very, I would say, tough battle going on between the bulls and the bears camp. And we've been seeing that on any dip, it's a buying opportunity, but you need to look at booking profits because it's more of a consolidation phase right now.
Okay, I believe that you've got a couple of picks for us as well. Good morning to you. What are they this morning?
Yeah, so the first one is, I would say, India Cement. That's one stock I would like to talk about. So what we are seeing here in India Cement is that the stock has been inching up higher. It has been going up consistently from almost 260 levels. Currently, it's around 335. Technically, it's quite, Technically, it's quite strong on the charts. The short-term momentum is there. The medium-term is also, we are seeing, and long-term is, I would say, positive. So this is one stock one can look at. Buying at the current levels are towards 335 levels for a target of 367. And with a stop loss of 313. And the other stock to look at is Geofinance. This is one stock which has broken out of a key zone of resistance earlier. Around 270, 280 was acting as a zone of resistance. That has been taken out. Momentum has been building up quite strong for the stock. And technically, it's quite strong on the short-term, intermediate-term trend. Long-term, it's moved out of oversold territory. Currently, it's around 290 odd levels. So one can buy at the current levels with a stop loss of 269 and a target of 325 in the short term.
Over in trade yesterday. All right, Mayuresh, good morning to you. We're likely to see movement on ITC this morning, purely on the back of the price that was set for the block deal and the sale by BAT. 400 rupees, and yesterday we saw a decline in the share price as well to the extent of 2%. I'm just wondering, nothing changes fundamentally, and so therefore, if the price drops today, do you believe that it is an opportunity for long-term investors to start picking up a little bit of ITC?
Morning, Alex. Again, I think two perspectives here. One, you're absolutely right. I think it doesn't change anything fundamentally. I think it's change of hands that will largely have some element of bearing in terms of the price action that the stock will go through. But if you probably go through the different business segments, the expectation largely again is that the cigarette business should continue delivering decent volume growth. The demand elasticity obviously plays out as far as the cigarette business is concerned. And therefore, I think the EBIT performance as well as the strong cash flows should probably continue. As far as it comes to the other segments, the expectations in terms of the other FMCG, I think a large emphasis has been laid in terms of how consumption is expected to make a roaring comeback over the next few quarters. So I think the other FMCG business of ITC is something to be closely watched out and monitored, both in terms of volume growth and margin improvement, as we are looking out for other FMCG players as well. With better monsoons expected this time around, I think the agri-trading business should see some element of comeback. And therefore, I think the only laggard in the business might be the paper business, which might be a sort of a drag in terms of how dynamics will play out. But core numbers should start remaining stable and improving for a few of these subsegments as well. The only other issue that the street might probably have, Alex, is the kind of foray that ITC has planned into different products, into different platforms. A large part of the free cash flows might actually get diverted in terms of developing these platforms and products, like we've seen in the past when they were developing the other FMCG business. And therefore, ROCs might remain a little bit subdued as this process at the transition probably happens over the next few quarters. So nothing really changes. But in my opinion, anybody holding ITC should continue holding on. And let's not forget a dividend yield is pretty low this stage.
The only flip argument, and Mayuresh, I don't know how you think about it, and would also want a trading view on this, by the way, because remember, one, that because it goes ex-dividend and the people who buy in the block today are not eligible for that dividend. So keep that in mind. But BAT holds 25.43% stake in ITC viewers. And BAT, we know, 2023 was a terrible year for BAT. They've swung back to some bit of profits because of amortization, depreciation, etc. But they're not exactly smelling like roses. Will they continue to sell stake in ITC over a period of time in order to fund for the other global pieces? And that's a view that one side of the street might take. And therefore, the question, Mayuresh, is that does it remain an overhang on ITC despite reasonably okay performances in the other, fundamentally in the other aspects of its business?
Morning, Neeraj. No, absolutely. I think that supply argument always probably remains against any stock under question. But again, I think, is there sufficient demand that can probably come through? Are institutions probably going to see far more value on what ITC is probably expected to achieve over a longer period of time? I think they have started delivering results. I think the proof of the pudding was when they forayed a few years back into other FMCG and they actually delivered. And therefore, I think the confidence is that with the new product forays and the platform forays I was just mentioning, if they're successfully able to probably deliver this over the next few quarters, my own sense is that the appetite might actually be there. But again, I think both these factors might actually, as I said, the supply question obviously comes through. There will be a next round of periodicity where they might not be able to sell for the next few months. But again, I think the product foray is something to be watched out for. And therefore, my own sense is that this might actually become a range-bound stock, at least for the next couple of quarters.
Okay. Amar, just wondering, so if ITC starts off lower today, it will, right? Ex-dividend plus this. Let's assume it settles between 390 and 410 or thereabouts. Is there a trade on the long side because it is in key support levels, or would you wait for a trend to emerge before doing a trade there?
See, if you look at ITC, clearly I'd go with what Mayuresh has said, that if you look at from a long-term perspective, also in the charts, that's clearly towards consolidation right now. Because upside seems to be capped around the 430, 440 zone. So roughly you can say 440, 450 on the safer side. That's a zone where the stock will meet with strong resistance. Whereas on the downside, the stock has got good support coming around the 400. So it's a stock that's very likely going to trade within this range, 400, 440, 450 level. So I would rather recommend more from a trading perspective, not from a trend perspective, because the trend definitely isn't strong at all from a long-term perspective as well right now.
Okay, I mean, the other question on whether you want to look at ITC as a consumption play going forward, that's one theme that is brewing, monsoon, etc. But for today, at least it will see some pressure. The other stock very quickly that I want to talk about is EPAC Durable. Because of the numbers that we saw, which were pretty decent. These are consolidated year-on-year numbers. Revenue was up 22% to 643 crores. EBITDA was up 30%. As well, margins have gone up from 10.5% to 11.2%, net profit up 35%. So they've met their FY25 EBITDA guidance of 160 crores. They've had new product launches like Nutri Blender, vacuum cleaner, coffee maker. So these kind of categories have been initiated as well. Their revenue growth in FY25 was up 53% to 2,170 crores. And high margin components revenue has been at 180 crores. Mayuresh, I'm wondering if you've looked at this company, which had a pretty decent set of numbers.
Morning, Tamanaya. I think decent set of numbers. And again, I think the expectation here is that a lot of companies are foraying into a lot of these consumer appliances business. You've already seen huge competition come through. You've seen Havells, you've got V-Guard. Obviously, there is competition from the unlisted space as well. But what EPAC has probably done, obviously on a lower base in terms of revenue growth, has been stellar. The expectation again is, if you probably go through management transcripts over the past few quarters for EPAC, they've been guiding to consistent growth in terms of their EBITDA performance, both in terms of new products that they're probably expected to introduce, and expectations in terms of a few of these products having better margin profile, which probably makes us believe that if they're able to successfully launch this in areas that they operate out of and add more distributors and dealers with the kind of confidence that they have now achieved over the past 2 years, my own sense is that the EBITDA performance might be a little bit more consistent. And yes, coming back to that consumption story, I think the entire consumption story, which everybody is hoping should kick off significantly as we head into the second half of this financial year. I think that can also aid EPAC Durable to a large extent. So yeah, I think it's a good play in terms of both consumer discretionary party and consumer durables.
At 386 rupees, Amar, EPAC Durables with the kind of move we've seen, up about 6% in the last 1 month.
Yeah, I would say that the stock is definitely positive on the charts. There's no doubt about it. But somehow the stock is struggling towards breaching the 420, 425 zone. So, and yesterday also the stock corrected from almost 410 odd levels. So 420, 425 is a very strong zone of resistance. Currently it's around 386. Any pullback towards 370, 375 could be a buying opportunity because the stop loss needs to be below 360. For an upside of around 420, 425, because till the time that is not taken out, don't expect any major rally in the stock. But sustaining above 425, 430, yes, then the stock could trade higher towards 480, 500 odd levels, because the structure of the stock technically is quite positive.
I'm just so. Maybe you have coverage on this, which is why I'm just checking. It's not a very large company, but I did look at it and the numbers look good. Time Technoplast, Mayuresh, it's 8,630 crore market capitalization and the numbers look pretty good. Another company where you've seen margin expansion and seemingly their bid to increase the value-added segment is what is contributing to some of this expansion. Have you studied it at all?
Morning, Alex. I think in the past, didn't get the time to probably look at it. I believe they're also into composite cylinders, if I'm not mistaken, and a lot of other value-added products. So I think they've obviously been trying to innovate a lot more over the last few years. But no, genuinely didn't get probably the time to look at this in the past.
Okay, so it's gained not too much, 3% or so over the last 3 months. It was up about 2% in trade yesterday. I'm just wondering if there's a trade in this one, Amar.
Yeah, I would say that the stock is definitely trying to inch higher. It's turning positive on different indicators, but somehow the stock is getting very strong resistance coming around the 395, 400 odd level. I would say that's a level to watch out for. The trend definitely is positive and strong from a short-term perspective. So I would say that buying above 400 would make more sense, or maybe buying at the current levels, and the stop loss in that case needs to be below 360 odd levels. And sustaining above 400, then the stock has a potential to rally anywhere between 8 to 10% on the upside.
Okay. Let's see how this one reacts. A clutch of others, and we'll talk about all of those too, by the way. But Vodafone Idea is certainly in focus as the company plans yet another fundraise, either through equity or bonds or debentures. The board is set to meet on May 30th, where the company is also expected to post its Q4 earnings. Sumit Johnson with more details. And Sumit, it seems that fundraising activities in Vodafone are almost as frequent as other companies declaring their results.
Well, yes, every now and then we have seen a fundraise coming in for Vodafone. In fact, this time also on May 30th, the board will consider a fundraise via equity or bonds or debenture. And on May 30th, the company will also be reporting its fourth quarter numbers. Now, why it will be very difficult to raise funds again for Vodafone Idea? Because the history is not at all supportive. Despite the multiple fundraise that we have seen in the past, the company's financial performance has not yet improved in any meaningful manner. Now in 2019, if you remember, the company had done its first fundraise after the merger between Vodafone and Idea. Back then, they had raised close to 25,000 crore rupees via rights issue. The price back then for the rights issue was set at a steep discount of around 60% as far as I remember, at around 12.5 rupees per share. Now if you look at the current market price, it's 7 rupees. So whichever investor or whoever investor has invested in the rights issue is currently sitting at a loss. The subscriber number back then was 38.7 crore of Vodafone Idea, and current subscriber number is 19.98 crore, and this clearly shows how the operating performance of Vodafone Idea has not at all improved despite the 25,000 crore fundraise that they had done in 2019. Then in 2024, that is last year, they did another fundraise. It was an FPO of around 18,000 crore rupees. The FPO price was set at a price of around 11 rupees per share. Current market price again 7. So any investor who had invested in this FPO is again sitting on a loss of around 4 rupees per share. Subscriber number back when the FPO was announced was 21.5 crore, and despite this fundraise of 18,000 crore rupees, the company has not been able to sustain its subscriber numbers. It has come down to 20 crore, a loss of around 1.5 crore in matter of just 3 quarters, and this is despite multiple fundraise that the company has done. Now at best, what is the situation, and one of the biggest hindrance that could come in fact for an equity issue or equity fundraise for Vodafone Idea at this point of time, is the fact that the current market price is 7 rupees and the company cannot issue shares to any new investors at a price below 10 rupees, and that is because the face value of per share is 10 rupees, and the Companies Act will not allow the company to issue any share below 10 rupees. So any investor who has to come in at this moment has to come in at a premium, and this raises the biggest question that why will any investor invest in Vodafone Idea at a premium of 3 rupees per share compared to the current market price? So that is the biggest hindrance coming in for the equity issue. So what is the best scenario here that could happen for Vodafone Idea? At best, this may just be an enabling resolution that the company does every year if at all they need funds going forward. Or the second alternative that Street could estimate is the fact that there could be a bank debt that Vodafone Idea could raise going forward. But then again, despite the multiple fundraise, we have not seen any meaningful financial performance improvements. So the best bet here, if Vodafone Idea is at all successful in raising a fund, would be Industars, because that company will definitely benefit out of the fundraise that Vodafone Idea will do, because whatever fundraise Vodafone Idea does will be spent towards capital expenditure, and Industars could benefit out of that.
Yeah, so, Sumit, I think one factor which has kept Vodafone afloat and also keeps people coming back during their fundraisers is the belief that government is not going to let this become a duopoly and will ensure that the third player survives, and they have a sizable stake as well. So that's at the backdrop of all of it, right? Because otherwise, fundamentally, why should anyone fund Vodafone?
Right. Yes, government will not allow the telecom market to be a duopoly, and they have been backing and they will continue to back Vodafone Idea. But then again, for any investor, it's the share price move that will benefit them and not government backing. And that is not something that we have seen in when it comes to Vodafone Idea. It was at 20 rupees at one point of time. In fact, since merger, I have not seen this share price going about 20 rupees at any point of time. And right now, it's trading even below its face value. There are very few shares in the market that trade below the face value currently. And that's what we have not seen coming in for Vodafone Idea at any point of time so far.
It's a retail investor darling as well. So Vodafone Idea is something which is of high interest and doesn't seem to have an upside right now. Thank you for that, Swamit. But we're keeping it with telecom. Big exclusive from NDTV Profit now. Elon Musk's Starlink is ready to beam in India, and my colleague Aishwarya has all of those exclusive details, including the pricing and the beaming capacity. Yes, Aishwarya.
All right, Tamanna. Like you mentioned, LOI is in place. We've heard about that, the government providing LOI to Starlink. But what we're learning from our sources is the big push in terms of bandwidth, the pricing, as well as a D2C push that they're talking about. So first off, let's talk about the phase one of their capacity. Starlink will begin beaming about 600 to 700 Gbps, gigabits per second of satellite capacity over India once they get their approvals, which is likely to happen soon, between 9 to 12 months in full swing. Apart from that, the beaming capacity of 600 Gbps, what does that really mean? Right? It means it will support about 30,000 to 50,000 subscribers concurrently. Now, 30,000 to 50,000 subscribers concurrently means over a certain area or a certain city. So across India, it will, of course, have more capacity. But this particular subscriber base that we're talking about is concurrent data connectivity over a certain area, which would be as big as a city. Now, they're also projecting a capacity of about 3 Tbps by 2027. And this is obviously subject to in-space approval of their phase 2. So what we're hinting here is that in phases and in tranches, these SATCOM companies will be allowed to open up their capacity to the Indian market. Now, Starlink had earlier said that they have identified 2 to 3 Earth stations in India. Each of these Earth stations will have about 9 gateways planned per site. Apart from that, apart from B2B service that Starlink is providing to the Indian market, they're also ready to introduce D2C, which is direct to customer model in India. Now, how exactly that will happen is something that we really need to look out for, and only Starlink will decide whether they will be coming out with retail stores like Jio and Airtel. But right now, as of now, they do have a pact with Airtel as well as Vodafone, Airtel as well as Jio, as far as their B2B plans are concerned. This is what we're learning from our sources. Now, a D2C service that is expected to be priced between $250 to $600, which will be ranging between 20,000 to 50,000 rupees. We're seeing that in our neighboring countries as well. And the commercial launch is targeted between 9 to 12 months is what we're learning from our sources. So these are the key details. We'll keep you posted on their launch as well, closer to time, and bring you more developments on that.
I'm sure you will. And everybody will be waiting for that. But need to slip into a very quick break. Thank you for this update. Slip into a break, back with the pre-open.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
scholars from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching India Market Open. Just about a few seconds left for the pre-open session. And remember, it could be deceptive because we saw a pretty decent start yesterday and then the market's not really holding up as much as they could have. Mayuresh Joshi with us of MarketSmith India. Mayuresh, just your take. Let's get a overall market view right now. 25,000 seems to be the tough cliff to climb. But having said that, is this a good time to stay put and build positions? Because fundamentally, there's nothing really to worry about, is there?
That seems to be the base case scenario at this juncture. And obviously, I think the expectation is that corporate earnings will start making a comeback. And we've always harped about second half being relatively stronger for corporate earnings. Is it different this time around is the key question. And the hope here is that it actually might be with consumption expected to get a boost because of the tax cuts, because of monsoons, rural consumption expected to come back strongly, inflationary data points pointing lower, liquidity abundant in the system, government capex continuing, some hope of private capex. So I think all the macros that you're probably looking at will enable micros, which is corporate earnings, to probably grow at a decent pace as the base case scenario. Yes, the expectation last year was a 12 to 14% growth, but for various reasons, we could not do that. But this time, I think the second half might really be different. And therefore, corporate earnings as a base case scenario in which the markets work out might actually be better. The second aspect, obviously, as a risk factor outside, this is obviously going to be global cues in terms of how Trump administration decides its tariff policies at the end as we approach June. And the other aspect in terms of the inflationary data points across globe, which are probably directing bond yields, which have come up quite significantly yesterday. But how does that scenario play out is going to be extremely critical. And therefore, my own sense is that India better placed, valuations, yes, a tad bit on the higher side compared to the mean standard deviations on a 3 or 5 year basis as well. But if earnings start coming through, selective pockets and selective stocks might actually start doing well and outperforming over the next 12 to 18 months.
Got it. Okay, we've had the first few ticks come through and we are seeing cuts of about 0.4%. Of course, this could settle over the course of the next 5 minutes or so. Chandan Taparia joining us this morning. Chandan, as always, very good morning to you. Thanks so much for taking the time. Do you anticipate that the near-term move will be one of volatility heading into the monthly expiry and also in the slightly broader time frame consolidation?
Good morning, Alex, Mayuresh, and the entire team. Yes, the market got stuck in a range. The good part is that volume weighted average for the entire series comes at 24,600, which may provide a key support. But at the same time, call writing is visible at 25,000, and most of the writers are trying to keep the market slightly below 25,000. So tussle between the major trend and the call writing is keeping the market float in a broader range. I believe next 2 days will be highly volatile, being the monthly expiry, and VIX is at 18.5. It's not cooling down even after the hold at 24,800 mark. So till VIX doesn't go down, I believe such kind of roller coaster ride and the swings of 200, 250 points on either side cannot be ruled out. So as of now, I'll play the range in between 24,600 to 25,000. And post the expiry, I believe market may commence the next leg of rally if it manages to hold beyond 25,000 marks.
Okay, for a few early buzzers before we get to your picks, Chandan, Techno Electric, this is the first 3 minutes, so keep that in mind. These rates will settle, but just giving you a sense of direction. Techno Electric, great numbers, 18% up. ITI, another stock that we covered on our watch list today between the three of us, 5% up. LIC, we called it as a positive up move, 3.5% up actually right now. Aarti Industries, there's a UBS note on it, and we'll come to that at 9:05. That is seeing an upside as well. Early movers. Vodafone, we gave it a thumbs up because we said sentimentally Street loves a fundraise. The stock is 2% up. Chandan, what are your picks this morning?
Yeah, good morning, Tamanna. I'll focus on ITI. The stock is bottomed out and formed the rounding formation and the double bottom on the lower time frame. In fact, you've seen a surge in the trading volume, and I believe this counter could see a higher territory with support of 300. It can head towards 330 marks. And apart from that, I believe some positive bias could be there in selective counter. You mentioned about idea, but I think stock is likely to be highly volatile in a range between 6.5 to 7.5 levels.
Okay, no, Chandan, sorry. Can you, I just want to hear the second idea again, please.
So second idea is not the recommendation. I've just given the trading range because idea is one of the counter which has got stuck in a selling pressure. It has been making lower top, lower bottom. So I just mentioned the range that 6.5 to 7.5 will be the broader range for idea. No recommendation because we have seen sustained supply pressure and this company is going in bad.
I was wondering about that, but yeah, Chandan is looking at the charts. Viewers, you have to understand this. Chandan is looking at the charts. He's telling you where that short-term trade is on Vodafone. Mayurish is smiling there. Mayurish, you want to add something to the Vodafone story?
Well, nothing to add. I just remember the tagline, what an idea, Sergi. So.
That's a compliment from Mayuresh to Chandan. And Chandan is saying, I'm not giving an idea. I'm just giving a range.
Okay, Vodafone in that range. But listen, we said that Vodafone would see a sentimental up move. I mean, if you're stuck in it, somehow miraculously bought at some 4-5 rupees and you're stuck in it, maybe you can use this time.
4-5? I
can't remember.
When did it go to 4-5?
3-4 or whatever. If you got it at a lower range, long back, then maybe. LIC, Chandan, how do you look at LIC?
Yeah, LIC is better. I think we should focus on ITI and LIC rather than talking about any other name because
no,
LIC
your calls are your calls. You don't have to be apologetic on it. LIC on the charts.
Yeah, so LIC has bottomed out after a long time. It has seen a corrective move in last 9 to 10 months from 1220 to 715 marks and now has been making higher tops, higher bottom. It has managed to hold the higher base at 840 marks and in fact the supports are shifting higher to 850 level. So with support of 850, I believe LIC can head towards 900, 910 levels.
Okay, let's talk about the big brokerage call of the day and some of those stocks moving as anticipated. We'll talk about that in more detail. But we've got a few interesting notes coming through. One of them is from UBS on Aarti Industries. And the brokerage has upgraded the chemical company or the stock to a buy, and there's a considerable upside from this current price. Perhaps the worst is over, is what UBS is saying. Harsh, you've been hearing wolf is here, wolf is here. Is the wolf finally here?
Well, that seems to be what UBS seems to be suggesting, Alex. Good morning. Let me first start off with what the concern was. It's a double upgrade, firstly. From 615, they've hiked the target price to 625, so it's a minor hike, but a 31% upside and a sell converted now to a buy call by UBS. So why was there a sell? One, there was a peaking chemical cycle. Second is the risk. There was a risk to guidance as well as consensus in the past, which seems to be now getting better. You're looking at a lot of the expectations from the energy segment being tepid also having played out. The stock is down circa 35% from August of 2024. So there's been a considerable correction as well. Those were largely concerns which are now priced in, is what UBS is saying. They're now seeing meaningful improvement in company performance. This is what is going to lead to it. One, there's going to be a gradual cycle improvement with low channel inventory now existing in the system, according to them. There's a steady pickup in the MMA, which is the monomethyl aniline volume going forward as well, and they are expecting strategic initiatives to improve efficiency, especially fixed cost initiatives to improve efficiency on the margin count going forward. They do not believe that the market is fully pricing this in. These factors, since the stock is trading well below its 5-year EV to EBITDA averages. Now the guidance and how will the numbers add up? 800 to 1200 crore increase in the EBITDA all the way up to FY28 is what they are penciling in. How? Cost optimization around 150 to 200 crore odd increase there. You're seeing volume and margin ramp up around 350 to 550 crore of increase there that they are pricing in, and capex led growth. Now this is likely to be nominal, especially in initial years, but they are expecting a 300 to 450 crore increase or contribution to EBITDA coming from there, and therefore that will lead to around a 25 rupee EPS from the current 9 rupee EPS that Aarti Industries has clocked in FY25. They've cut their EPS guidance though for FY26 and 27. Given the fact that FY25 was a tough year, they are expecting steady improvement across metrics, pricing this at 30 times June 2027 EPS.
Thanks, Harsh. Thanks for that. At the end of the pre-open session, it's up 2.4%. Now, just before I go to Chandan on this, because we have a fundamental view on Aarti from UBS, would want to get the trading view. But just keep in mind, viewers, UBS has selectively turned constructive on a bunch of chemical stocks. Stocks may not necessarily have gone. So they turned constructive on Phillips Carbon Black or PCBL at around the same price about 3-4 months ago. And the stock is largely at this 400 range. Their target prices are much higher. So not necessarily that these up moves will necessarily last, because the chemical space is flattering to deceive a lot of times. Chandan, I wonder if there is some bottoming out process in Aarti Industries. The brokerage house certainly seems to believe. Is there a trade here?
Yeah, definitely the trade is there, and the stock is bottomed out on the monthly chart after the decline of last 7 to 8 months. It had seen a corrective move from 765 to 345 and recently bottomed out and has been making higher tops, high bottom on the weekly chart from last 6 to 7 weeks. In fact, the stock has given a consolidation breakout of last 28 weeks, trading at multiple months high. So momentum could be there, and I believe this leg of rally can take it towards 530 to 550. So with support at 465 or 470, one can look for a upside target of 5 to 8% on the counter.
Okay, so that's on this one. Now, just a couple of things. One is ITC, and we learn, by the way, viewers, that let's pull up that stock price. We learn that the block size of ITC has been upsized to maybe 15,000 crores. And this is what we were talking about, the overhang. One, this means that the demand could be high as well. So that's maybe look at it positively. The other part being that's a large supply that is coming with maybe more on the way. So don't quite know if the stock really recovers very swiftly from here. So keep ITC at the back of your mind. Very quickly, just want to mark if Astral, Supreme, Phenolics and Apollo Pipes are doing any moves today, because there's a stellar move the last few days. I wonder if there's a bit of a green today. Astral marginally in the green. Supreme Industries and Apollo Pipes should come up on your screen as well. Supreme is flat right now. Was up 4% yesterday. Apollo Pipes marginally in the green. Mahesh, are you a buyer in the pipe companies? PVC prices going up. The expectations are that the China imports are off, and therefore there could be one more price hike, which actually helps the pipe companies in stocking.
Yeah, that seems to be the base case scenario, Neeraj. And the expectation largely, again, that is getting built in, is that if you look at the operational performance, whether it's APL, Apollo, Tubes or Astral, the Q4 performance has been relatively better. And therefore, I think on an annualized basis, it might be a little bit deceiving. The point here that I'm trying to make is that if Q4 gets replicated over the next few quarters, both in terms of the product profile that they probably got and the expectations in terms of the EBITDA, absolute EBITDA as well as the EBITDA per ton actually inching higher as we speak. I think there is a huge potential out there. For APL Apollo as an example again, right? Structural steel is expected to grow exponentially over the next few years. Both in terms of government capex, because a large part of that food is infra-driven. Similarly for Astral, I think what you've probably seen in terms of price deterioration in terms of both end product pricing and the expectations in terms of margin performance has largely come back very, very strongly in Q4 based on a combination of all these effects put together. And therefore, I think if if the capex is expected to continue as we assume, the expectation in terms of the product mix expected to continue, my own sense is that these companies might actually drive a lot of revenues. Obviously, I think they have seen a large part of the price action. They might consolidate. But I think this is a very interesting space to be probably looking at. What we hold in our local and global portfolios is a stock called Welspun Corp, where our belief is that local and global operations might actually turn in favor of Welspun.
Chandan, just on ITC, a larger block, the ITC block has been upsized to 15,000 crore rupees. You're going to see some pain there. It's closed the pre-open session about 3.5% down. Is there an opportunity here? Is there an opportunity here to buy ITC at all?
Actually, the entire FMCG pack had goes stuck from last 30 trading session, and ITC has been moving in between 420 to 440 zone from last almost 30 trading day. Only the concern is that multiple supports are there, but sustained call writing is not allowing the stock to move higher. But I believe any decline towards 410 can be bought with major support at 400, and that scenario, the trade will be positive to range bound for a bounce towards 430, 432 levels.
Yeah, so viewers, if you can play that kind of a game, wherein you're buying it at the right price and selling it maybe 5-6% higher, then that's a game to be played. But please keep in mind that the overhang of further stake coming in from British American Tobacco or BAT on ITC will continue, and therefore that is an overhang that you have to contend with. Remember, ITC is no Indigo. It doesn't have the growth that Indigo has beneath its wings to actually sail higher even after every stake sale. So just keep that in mind. But here come the first trades. The Nifty maybe flattish. Okay, and this is despite ITC, by the way, not bad. Maybe the IT index is helping here because banks are flat. IT should have gotten a spurt from the Nasdaq move. 0.5% higher, not bad at all. Let's bring up the mid cap and the small cap indices. 0.11% for the mid cap index, the small cap index 0.42%. Not bad again. The breadth on open itself is not looking too bad, but I reckon the ITC drag here. Let's pull up the heat map and see what ITC is doing. 4% lower. Maybe some other FMCG names along with it. So you see a Nestle here, you see Tata Consumer as well in the red, Reliance marginally in the red as well, 0.4%. So that's the other drag on the index. You know, if you look at for the weightages, I think it's ITC and Reliance putting pressure. Now that is being thwarted by an equal number of green, but on the heavyweights which might be doing well, Infosys 0.8% higher. There is strength in Wipro. So essentially IT is negating any kind of pressure that ITC brings to the table. Aside of IT, Geofin and Bajaj Financial and FinServ. So all those three financial biggies are doing okay. We're not seeing banks, viewers. Curiously, it's the NBFCs which are actually moving higher. So the news from the center on open, a lot more green than red, but ITC being the principal drag, coupled with maybe some drags from Reliance Industries as well.
Financials also, because of BlackRock's entry with them and the nod that they've got from SEBI, maybe moving the JFS stock. I wonder, the story we did this morning on Starlink's entry, locked and loaded, could be something that you would see impacting RIL over the next few days as well. But I want to pull up the broader market indices just for a second and look at what's happening with the small cap and the mid cap. Mid cap at least still in the green. The Nifty is dipped in the red, but mildly so. The small cap 250 actually not doing too badly at all, about 0.5% up. So broader markets doing okay. Bank Nifty not participating, completely flat. I want to pull up the Nifty IT just for a second because we told you that this segment might see some recovery. IT stocks were the biggest losers yesterday, and there you go, lo and behold, about 0.5% up on the Nifty IT. I'll pull up the sectoral heat map for you as well to see which sectors are buzzing this morning. IT sector right on top. Small caps doing okay. Public sector companies, the CPSE index also doing fine. But FMCG, they're sulking because of ITC. Remember, it's also a technical factor. You have huge supply of the stock in the market. You are going to see the stock taking a beating. But ITC, let's see if there's any recovery through the day. Let's come to specific stocks, and result impact is what I'm starting with because that's where the key interest lies. Techno Electric, good set of numbers. Hind Copper, good set of numbers. Let's see how the street has rewarded them. 8.5% up on Techno Electric was on our watch list. Hind Copper doing very well, about 3% up. LIC, now here better than expected numbers. A whole host of brokerage notes are seeing great opportunity at the current valuations, which is why the stock is 3% up. ITI on Alex's watch list. That stock nearly 7% up this morning. MedPlus, V2 Retail, some other companies which have reported numbers. MedPlus Health, 9% up on the stock. Again, a solid set of numbers. V2 Retail not doing too well, 5% down. Bharat Dynamics, the margins have almost halved for Bharat Dynamics. That stock about 4% down. I want to look at what's happening to Aarti Industries, an upgrade from UBS and quite a robust upgrade. Stock is about 2% up. Vodafone Idea. Let's see what's happening with Vodafone Idea. Another fundraise in the offing. Stock is managing to stay up in the green. So some movers over there that we've been discussing since this morning, but I think the big story this morning is definitely what's happening to ITC.
Doubt. ITC, and I'm sure we'll talk about that in a lot more detail over the course of the day, but one stock reaction has caught my eye, and you did mention it, but I want to delve a little deeper into it. No buyers at this juncture in V2 Retail. It's at a lower circuit, 5%, and you would have thought, based on the numbers, revenue uptick of 68%, net profit up as much as 79%, a margin improvement by as much as 100 basis points, that the stock would react positively. Mayuresh, if you've looked at the numbers, why is it having this kind of a reaction?
No, very surprising. I think a very decent set. In fact, I think the entire tier 3, tier 4 apparel makers, whether you talk about V-Mart Retail, Vishal Mega Mart, even V2 Retail number to a certain extent, have been showing signs of strength. And therefore, I think the expectation largely that was getting built in or is getting built in is that as discretionary spending comes back very, very strongly, because these players have a very strong presence, specifically in tier 3, tier 4, and where their price points are very, very attractive, both in terms of apparel, which are close to 500 odd rupees or even below that in most cases. And therefore, I think the apparel, the FMCG and the non-apparel part of the business, along with the store constructs that they probably got, and expansion in tier 2 cities as well, I think it makes us believe that as the consumption boom starts coming bottom up, I think these stories will be stories to look at. But yeah, absolutely agree with you. I think very, very surprising on why this stock is locked in low circuit.
All right, so that's the view on the fundamentals. It's a little surprising, but let's talk about ITI as well. Good set of numbers in the fourth quarter, as well as something on Chandan's list of recommendations. So Chandan, a stock that gained 10% yesterday is up another 6% at the start today. What about the targets? Do you want to revise them?
Yeah, so already we recommended about the same, and in fact on daily and the weekly chart we have seen a positive price pattern. In fact, on the last trading session the stock has seen a major surge with rising trading volume, and in fact now the momentum looks positive. I believe those who are holding can keep the trailing support at 320, and stock has potential to further rally towards 340 to 352 marks.
Okay. All right, let's also talk about ITC then. Anything that you're seeing in the open trade, it's not dropped as much as one would have thought. 400 is the price that the sale is taking place at, and it's 30% more than that was anticipated, right? So it's 15,000 as opposed to 11,600 or thereabouts. But on the charts, what are you seeing in terms of the direction, Chandan?
So direction is the mix. As mentioned that any decline towards 410 could be bought. It made bottom near 413. We are not in hurry. In fact, from last almost 30 days, it got stuck in a broader range. 410, 420 on the lower side is major support. 440 is major hurdle. So it got stuck in a range, and I don't think that the major momentum will be there. But yes, support-based buying could be seen. So those who are looking for making position can initiate some bull call spread or bull call ratio, or can buy delivery and sell OTM call. So this is what one need to play in ITC. So, and again, the concern is the entire FMC is not performing, and decline in ITC might give pause in positive momentum in most of the FMCG name as well. But those who are looking for bargain buy, they can use the support of 400 to buy this around 410 marks.
Okay, what else? I mean, just trying to look at stocks which might be moving in trade today. There is Zinka Logistics up about 2.5%. Some small names popping up on the screen. Avalon Tech about a couple of percentage points, and then of course we spoke about Techno Electric, which had a big bump up on its results, up about up about 7-8%, if I'm not wrong, 8% currently as we speak. The question though, is there a trade, Chandan Taparia, in technology? Because it's been bobbing between the red and the green on almost every given alternate day. So how do you initiate a trade, and do you do it with strict stop losses? Because the sector is very volatile if you take a weekly perspective.
So I think better to be with selective name where we have margin of safety compared to finding out the sector which is comparatively volatile and mainly due to the global scenario. In fact, if you look at the Nifty IT, it got stuck in a broader range. There are very less names which are giving the positive stance. However, the good part is that Coforge is trading at higher band of the trading range, trying to hold near 8500 levels, but follow-up is totally missing. But I believe buy on decline could be the stance. If I look at the other name, whether we talk about HCL Tech or the Persistent System, most of the IT counter got stuck in a range. So as of now, there is no major trade. But I believe if someone has to take the priority, then I believe Coforge and Persistence could be two names which has potential to outperform or remain resilient if the entire sector declines.
So that's the view on the IT pack as a whole. One stock that is standing out on the back of results is LIC, is up as much as 4% in trade at this juncture, or 3.7% now. But the entire pack has been one to watch, Mayuresh, in the recent past, a breath of life, so to speak. Would you buy LIC at this point based on the fundamentals, things improving?
So totally concur. I think the life insurance players have given decent set of numbers, and it's across the pack, whether you talk about HDFC Life, ICICI Pru, SBI Life, and even LIC as we speak. And therefore, the expectations in terms of new premium growth is expected to be steady state as we head into the next few quarters. Obviously, I think the incentives that the new budget has probably thrown out in terms of the new tax code, how does that play out on savings and specifically insurance-related savings as products is something to probably monitor, specifically in Q1, Q2. The second aspect, obviously, is that a large part of that product mix, specifically for the private players, have gone through a transition over the last few quarters. You did see a bump up in terms of the overall operating stroke, marketing stroke, selling expenses as a percentage of the overall premiums that these companies had incurred. And therefore, I think the moderation might start happening as these products start having some element of maturity in their life cycle, making us believe that the VNB margins that they have posted respectively should probably hold on. Obviously, I think from an end valuation perspective, what really drives growth is going to be how embedded value is expected to play out. Embedded value has remained extremely strong. And with hopes of new premiums expected to grow decently with better VNB margins as well, the return on embedded value should probably hold out. Now, those are arguments in favor. The only risk factor, as I see, is with the new tax policy that has come through and the exemptions that are given. Does that really dampen the kind of new premium growth going forward is a monitorable aspect to be seen. But yes, a fabulous set of numbers. Within the pack itself, I think SBI Life, on a whole host of parameters, including operating expenses with high single digits, the bank insurance, which is a tad bit larger compared to the others, and expectations of their product mix, specifically when it comes to participating products, I think stands out a little bit better compared to the rest of them.
And I would think also valuation comfort vis-a-vis HDFC Life. Chandan, I'm just wondering if there's a trade in Life Insurance Corporation of India, LIC. It's up about 4%. What's the upside potential from here?
Yeah, so positive view, in fact, recommended in the morning as well, expecting next leg of rally. However, I was expecting move beyond 900, but already it is trading much higher than 900 marks. I believe one can hold and trail the support. 885 could be the next support, and I believe the ongoing momentum can extend towards 930, 935 marks.
Okay. Well, 3.76% higher. Mayuresh, I'm squeezing in a question here on insurance stocks because I think while we spoke about it briefly, I'm just trying to understand if you had to make a choice between investing in a life insurance company versus a general insurance firm right now at this stage, because both are looking okay, and if you had to choose only one, which one would you choose between the two and why?
So again, I think ICICI Lombard.
So you're choosing a general insurance firm?
Yes, and I'll give you the logic why.
Yeah.
I think the kind of growth that can come through, specifically for a private player like ICICI Lombard, can be exponential. Obviously, they've reduced their exposure to the riskier segments that they were catering to a few years back. And therefore, I think the underwriting has probably improved drastically as we speak. The expectations is purely based on the fact and rationale that they might be able to improve their market share quite significantly as we head into the next few quarters and years. And I don't believe myself that many players will probably come into this space, which gives them that advantage that new entrants might not actually come through, giving them that advantage in terms of pricing related to the products that they're catering and the segments that they're probably adhering to.
Okay. Let me quickly get Chandan's view. Chandan, nearly 15 minutes into trade. Anything that you're seeing interesting as a pick this morning, looking at the first 15 minutes?
So, like a couple of mid-cap name which have seen the momentum, like ITI or LICI are the two names which are in the budge. I believe momentum could continue. And then a couple of capital goods name like BHEL looks good. In fact, the positive momentum is clearly visible in the counter. Has been making higher top, higher bottom. Recently, it gave the breakout about 255, 260, and the higher zone is clearly visible. So, with support of 259, one can look for an upside target towards 272 in BHEL. And I believe selective capital goods counter could be in focus. Apart from that, I believe market needs to hold the immediate support zone, or we requires a hold beyond 24,850 to get a decisive bias. Otherwise, it is likely to be in a broader range with higher swings during the day.
All right. Thank you so much, Chandan and Mayuresh, for speaking with us on this leg of the conversation. Markets, range bound at this point, but let's move to an interesting corporate conversation. Dr. Ranjit Rath, CMD of Oil India and Chairman of NRL as the Numaligarh Refinery, is joining in exclusively on NDTV Profit. Dr. Ranjit Rath, thank you so much for speaking with us. Let's start by you taking us through the numbers for the financial year and for the quarter. We've seen a 10% increase in PAT, record production levels, but year on year there has been a dip in profitability, isn't it?
First of all, thank you very much for having me, and good morning to all of you there and the viewers. Yes, we had a record performance this year, the highest ever since inception, 6.71 in terms of crude oil and natural gas both. We also scripted a highest ever natural gas, and the year we scripted about 10% growth in terms of our standalone PAT, which is about 6,000 crore, and consolidated we did about 7,000 crore, which includes NRL and other subsidiaries of ours.
Okay, what has been the standout feature for you, Dr. Rath, for the quarter, and do you see production levels of the kind that we've seen sustaining?
See, it's like this. Oil India is primarily having assets in Upper Assam, which is one of the best basins that we have in Category 1 basin. So we see a lot of opportunity still left in Assam self rather. Now, having said so, we have enhanced our exploration, which is near field exploration per se, and our development drilling campaign, which has resulted in the enhanced production. Now, since these are all mature fields, there is a ingrained production decline which happens. So that production decline happens, say, about 8 to 10% year on year. So whatever growth that we script, say about 2.5 or 3, or last to last year it was even 5%, that's on top of the decline. So the gross one would look at is about 12 to 13% growth. So that happens by virtue of undertaking multiple drilling in terms of our development drilling efforts and immediate monetization given the infrastructure availability that we have in terms of crude oil evacuation.
Okay, what is the kind of trend that you're seeing on crude oil prices? I mean, crude oil prices now have been depressed for a while. We'll wait for the OPEC Plus meet to give us some more clarity. But what is the trend that you see, sir? And how are you changing or moving strategy accordingly?
I totally agree with you. I tend to believe that the current trend that we are witnessing since last 2 months is going to stay here for some time, And given that last year we had a realization number of about $78 per barrel, and this year the outlook would hinge around $65 per barrel or so. So we have lined up three-pronged strategy to counter this depressed price point. Number one, something called a cost efficiency in terms of our operations. That we have already initiated. Number two, we are going to drill more identified prospect driven, which has got a better pool size wells to maximize our production. And number three would be, during the same period of 1 year, we would have a more aggressive drilling campaign. Let's say last 3 years, we have been scripting about 30 to 35% growth on drilling efforts. And last year, though we spudded about 70 number of wells, we could finally complete the well 59. Now this year also we will have an aggressive drilling program. So these are the three things which we think will give us a enhanced production to counter the depressed price point.
Okay, let me just talk a bit about your volume guidance, sir. You have remained committed to a short-term target of 4 metric ton of oil, 5 BCM of gas output. This is by FY27. So you're going from your current 3.5 to 4 for oil and 3.2 to 5 for gas. What is the basis of this volume guidance?
So these are the targets that we have given to ourselves. Okay. And as you would know, our target for this year would be about 3.77. Now all that would happen by virtue of multiple way of drilling. Let me explain. A, we would identify more potential blocks within our mining lease. B, we have identified some more reported presence of hydrocarbons in our additional development wells. We have done about 40 plus geological studies in the same area, and that has given us a new identified locations about 90 plus, and those are all the prospects that we are looking at. That's one. Second, we are already given an order for a multilateral drilling effort where from a single plinth we are going to drill 3 wells. So that gives us additional opportunity growth. Plus we have also lined up integrated drilling services where the consumables will also be given by the charter hire rig supplier. So these are those interventions in which we would like to enhance our production. As far as the capacity in terms of evacuation is concerned, for crude oil we do not foresee any constraint at all. In terms of natural gas, as you would appreciate, we have a pipeline dedicatedly running from Numaligarh to Duliajan, that's Duliajan-Numaligarh pipeline, where currently we are supplying gas to Numaligarh. Now once the phase 1 of IGGL, that is integrated Indradhanu Gas Grid Limited, the Northeast Gas Grid is commissioned, the phase 1 will have a hookup arrangement, and DNPL, once it is announced as a common carrier, from 1 million standard cubic meter per day to we can ramp up to 2.5 million standard cubic meter per day. That's one in terms of gas infrastructure. Second, from our Kumchai field, which were earlier getting flared, about 1 million standard cubic meter per gas, now we have a dedicated pipeline connecting Kumchai to Duliajan. So we are evacuating that gas as well. There are some infill lines which we are also replacing, but most importantly, the Duliajan feeder line for IGGL under Northeast Gas Grid, as we speak, is getting approved, and that connectivity will help us to evacuate another 6 million standard cubic meter per day. So that's the outlook we carry for evacuation infrastructure for natural gas.
Got it, sir. So, okay, I'm just trying to, Dr. Rath, good morning, Neeraj here. I'm just trying to pin all of this down into what it would mean for investors who are looking at the business right now. I presume you had an analyst day today or have an analyst day today. And I'm trying to think of the central piece of communication that would pop up in any investor's mind, that while oil prices have been volatile and well accepted, but between FY23 to FY25, for Oil India, the revenues have gone down a little bit. The operational metrics have come off quite a bit, operating margins FY23 to FY25. So what is it that can give me as an investor some comfort about the outlook? What would you say to that, sir?
Okay, so the outlook would always remain positive as far as Oil India is concerned. If you would look at the last 2 years' results, including and the year just concluded, Oil India has been scripting higher production every year, both in terms of natural gas and crude oil. So therefore, we will continue to grow at a level of 3 to 5% this coming year and year after also. So that's the outlook I would like to give to our investors. And second, we are looking at a better operating margin this year because the crude oil price point is depressed. The rig supply, we would probably have a better rate this year. That's the outlook I would like to share with the investors.
What level are you seeing EBITDA margin, sir? Because you're in the 35.9, 36 range, which is lower in Q4 compared to Q3, compared to Q2 as well. So there has been a bit of depress in that EBITDA margin range for the quarter. Can you tell us why, and do you see a significant improvement to what level?
I agree with that. Now, what happens when you undertake a higher number of drilling? Your every effort is to establish hydrocarbon and then produce. So its basis the additional drilling component, the EBITDA margin has seen a drop. But the most importantly now the target is to identify prospects which will be of bigger size that would enhance our production potential and then an uptick in the EBITDA margin as well.
Dr. Rath, okay, I'm just trying to simplify this, sir. One is, you've given us some sense of what the volume picture could look like, but I'm just trying to understand in the end, what will matter is the bottom line, right, sir? So, you've given some guidance around margins. Do you reckon...
I agree with you.
Yeah, so do you believe, sir, that is there a probability that at some point of time in the next 2, 3, 4 years, you could nudge those 10,000 crores worth of profits that you had clocked in FY23? Is that a possibility, sir?
With NRL getting commissioned in December 25, 10,000 crore profit I do not foresee will be an issue.
So in FY26 itself, or maybe in by FY27 you reckon that could happen?
Yes. Because by then we will have the refinery stabilized and we will have a higher production growth. So I do not foresee there will be an issue.
Just one last question before we let you go, sir. Any plans for an IPO for NRL? Would you want to spin that off?
I am not sure about where from you got this message, but at an opportune time I'll definitely share with you, should there be a decision.
Sir, it's not a message, it's a question. Is it something that you are considering, not considering, okay, not on the books, okay, at all, you know, one way or the other? It's a very obvious question, sir.
Okay. I do not want to. Okay, no problem. I am glad that you have asked this question, and I will definitely revert to you once any such decision is taken.
So it is in consideration.
I would say so.
Okay, that's the big one there. Thank you so much, Dr. Ranjit Rath, CMD of Oil India and Chairman of NRL, saying that production levels expected to go up. And I thought this was interesting. NRL as an IPO is under consideration, Neeraj. They will come back to us when that happens. So that's and that's an interesting statement coming up there.
It is.
All right.
It is very interesting. So two key standouts from this one. We will move to the next one, the NRL IPO. And by FY27, a profit after tax of 10,000 crores may not be an issue, considering that they've done about 7,000 this year. I think that's a good one. So
the fact
keep an eye
that
for
crude
that.
prices will continue to be depressed. There's always.
So despite all of that.
Yeah, despite all of that. Okay, on to our next conversation. We're talking about Goldium International is the focus on the back of their earnings and rising demand for lab-grown diamonds. Before we speak to Anmol Bhansali, MD of the company, let me get Mahima, who tracks the space, to set it up for us.
Right, so just a brief about the company. The company has, transitioned completely from a natural diamond in-store jewelry to now a company that is a major supplier of lab-grown diamonds and has done this via omnichannel sales strategy. In terms of its Q4 earnings, revenue was up 34%, EBITDA up 51%, margins significantly improved from 16.2 to 18.3. Net profit was up 30%, and they've also declared a dividend of 1 per share. In terms of Q4 performance, the major highlight was that their online sales was almost 30%. In terms of the lab-grown diamond sales, lab-grown diamond share in Q4 exports has gone to 82% in FY25 versus that of 50% in Q4 FY24. Realizations for lab-grown diamonds have also continued to be at a premium as compared to the mined diamonds, and this is in terms of jewelry. B2B exports, 73% of their inventory as of 31st March is lying with a customer as a consignment. In terms of their order book, that stands at around 140 crore, which they will implement in the next 3 to 4 months. And in terms of their origin store updates, now they have overall 6 stores in place right now in Mumbai, which is the highest lab-grown diamond stores in Mumbai right now. So, a couple of questions to ask the management would include how will the UK FTA impact them? Of course, the rising demand of lab-grown diamonds in India as well as in the export business, and of course, what is their FY26 outlook when it comes to lab-grown diamond sales?
Thanks, Mahima. And those questions to Anmol Bhansali, MD of Goldium International. Anmol, good having you. Thank you so much for taking the time out. Neeraj here, good morning. And well, Anmol, must say you're walking the talk, right? Because you kind of spoke about this. There was a pivot that you did. When I look at what you've done from FY23 to 25, there has been a discernible linear uptick in all forms, revenues, operational metrics, profit after tax. Talk to us a bit about the quarter though, because it was exceptional. EBITDA up 51%, net profit up about 30-35%. Pretty good going there.
Thank you so much, Neeraj, and thank you for having me on NDTV Profit. So absolutely, we've been very happy to deliver what effectively is our all-time high fiscal year revenues, all-time high profits as well, where for the full financial year, we've now nearly hit 120 crores of profit after tax. I think our distribution on the B2B side with US large wholesalers and retailers is paying off, and the lean and bend of management at Goldium into lab-grown diamonds has benefited us as the end consumer has naturally shifted into this segment. Naturally, we've got a larger segment of the pie as growth has come in the lab-grown diamond jewelry segment, thanks to our early move into creating designs that uniquely use lab-grown diamond jewelry.
Let's try and understand if you believe, Mahima was saying, right, that one, we know that you are amongst the largest company-owned, company-operated LGD stores in Mumbai, at least. I'm guessing there are expansion plans there, but more importantly on the numbers. Your exit margins are at 18% versus average of 20%. So I'm trying to understand, do you reckon that with more and more lab-grown diamond stores and you getting the valuation maybe of a retail chain as opposed to a wholesale jewelry maker earlier, the street would want to know whether that can be accompanied by higher annual margins and a linear growth rate in revenues? What would you say to that?
Sure. So as of this financial year, Origem, which is our domestic brand in India, accounts for less than 1%, less than 2% of our revenues in the financial year. However, a lot of growth is being planned for Origem. A lot of investments are being planned in Origem. The way we see our business is over a long-term trajectory. Our B2B core distribution for jewelry manufacturing, which is what predominantly has delivered all these results, that should naturally and stably grow, provided there are no macroeconomic shocks. Whereas further fuel of growth will come in with Origem and the domestic B2C brand in India. Today, as your channel is rightly mentioning, we've opened 6 stores in Mumbai. We are the largest cocoa retailer for lab-grown diamond jewelry within Mumbai metro region. We hope in this financial year now to basically repeat and duplicate this strategy in Delhi, NCR, Bangalore, and then a few other key markets as well. That will happen while our B2B distribution of jewelry also continues growing on its steady path.
Anmol, hi, good morning. Tamanna here, and always great to speak with you. Just let me take off from the last point you mentioned, the expansion of more stores. Can you give us a number, cities, and the expansion that you have in mind over this fiscal?
Sure, Tamanna. So, we, as you might rightly know, Goldiam has a significant cash reserve as well. We are a net debt-free company. We hope to utilize some of our reserves to expand Origem in this fiscal. Internally, as management, we hope to open around 20 stores within this fiscal year, specifically focused in our largest metros in the country. So, what's left to target for us is Delhi, NCR, as well as Bangalore, Hyderabad, and then perhaps some few other stores to test in other markets. So that's the phase 1 idea. This does not include any other speed up in terms of expansion that we may review at a later time, depending on how this phase of expansion goes.
Stores will all be company-owned, company-operated?
Yes, that's correct. For this full financial year, everything will be COCO.
Are you looking at any other formats, franchisee formats? I'm just trying to understand as a strategy, are you keener on being in more places with larger visibility, or are you keen on sticking to the COCO path?
So COCO for this financial year for sure. The idea is the brand is new. A lot of people don't know of Origem, of course. In general, the common public also would not know of Goldiam as the brand and company behind Origem, because we've been a B2B exporter largely up until date. So the idea is to focus on operations, control that, and go deep in the store experience that we're delivering to the customer. We offer from day 100% customization on almost all jewelry, whether that's changing the carat of gold, the color of gold, the product size that one wants to buy. We offer 100% certification, as well as all the standard buybacks, exchanges, etc. that is required to compete in our market. And Origem is positioned largely as an everyday fine jewelry brand. So we compete in that 20,000 rupee to 2 lakh rupee price point segment, which is occasion-led jewelry, not wedding day, effectively. So birthdays, anniversaries, gifting, job promotions. I think those are the occasions where our customers are looking to buy jewelry in India. And we believe that in that price point, with Origem, we are able to offer a far better look and a far larger piece of jewelry in terms of the wow appeal with the amount of diamonds that are available in that.
Sure. What is the margin differential you see in lab-grown diamonds and traditional diamonds, and what is the kind of demand you're seeing? Because conflicting reports and conflicting narrative on this one, Anmol. Some saying that in India, lab-grown diamonds are not being accepted to that pace. Is that something you're saying?
I think it's, I wouldn't say it's not being accepted. It's certainly being accepted. We don't see, a customer coming to our store, learning about lab-grown, and then really walking away. I think it's going to take a little bit longer than, the shift that happened in the US and in global markets. Maybe, it might be pushed out by a year or so. But in general, we believe and we see that in this price point, which is non-wedding day price points, naturally customers tend to want bigger bang for their buck. And lab-grown fits in perfectly in that narrative. So we're not seeing hesitation from customers, but yes, to win the market as such, I think it will require time. Firstly, for one or more retailers to scale up nationally, and then secondly, for the consumers to and large national marketing campaigns to occur such that the consumer can port here.
What is the margin? Sorry, what is the margin differential?
So on our B2B business, there is really no margin differential. Natural diamonds and lab-grown diamond jewelry effectively more or less is at the same margin today. On the B2C business, which is in India, which we've just seeded in the last 6 months, we are operating at around the 40 to 45% gross margin. This is solely driven by the supply chain efficiencies at Goldian, being a company that either grows or procures all diamonds ourselves, makes jewelry ourselves, and distributes through Origem. With these margins, which are about 10% higher than our B2B business, we believe we can offer something very unique both to consumers as well as to our shareholders.
Anmol, what is the guidance you're giving for FY26? And last time that we spoke, you said there were no immediate plans for a fundraise, but something could come about in 2025. So is there a equity fundraising plan in the offing in the next 6 months?
Sure. Thanks for the question, Neeraj. So regarding guidance, we don't put out any guidances. We do state that our long-term EBITDA margin guidance is 18 to 22%.
Right.
We will stick to that in terms of profitability. We do see, however, Q1 and potentially Q2 a slight softness due to the US tariff issues. That is transitory in nature, and it's truly something not in our control. We are working with our retailers to pass on this tariff onto them.
Got it. But any fundraise? You didn't answer that question before we wrap up.
Yes.
Any fundraise?
Yeah, absolutely, Neeraj. So we've taken an enabling resolution from a board of directors. At the moment, it's just an enabling resolution to allow us as management to act faster as and when we see opportunity. Hopefully, if we see the right opportunity, we will be able to act on it and truly allow Origem the fuel required to win the market within the lab-grown diamond space in India within the next couple of years.
So just since you said you're debt-free and have cash on the books, why the fundraise? Is there inorganic acquisition you're looking at, or is this just to fuel the spread? Because earlier you told me that we have enough money and that's why we're going to be expanding.
Absolutely. So, Tamanna, the reason to even consider it is to grow faster on the Origem side. So, Origem today is at 6 stores. We hope to do 20-25 stores in this financial year. Any requirement for fundraise will only be to boost that number faster and eventually to get to a national presence, which I personally deem would be at least 80 to 100 stores by the time you cover the breadth of our country.
Okay, 80 to 100 stores by when, Anmol?
Again, Tamanna, depends on the fundraise and as and when we see opportunities. So I'd be happy to, once those those decisions are decided in stone, I'd be happy to come and share at that point.
Sure, looking forward to it. Thank you so much for speaking with us. That's management of Goldian on their numbers. And I don't know about lab-grown diamonds in India. I think it's a way off.
I don't wear them, so I don't know.
I would never accept it. And I doubt
But there are people who are buying it, right? Left, right, center.
Would you dare buy a lab-grown diamond for your better half?
I mean, if she believes that a lab-grown diamond is a good investment because she can wear it. I mean, my wife doesn't wear diamonds, but if she were to, then it's her call.
Yeah. I don't know. I think it's a while. Anyway, is it going to be a diamond in the rough when it comes to Bellrise Industries? We're taking a very short break. That listing in just a short while from now. What should you do? Astha Jain joining us on the other side to tell us more.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Back with India Market Open right here on NDTV Profit, and we will see a new listing, Bellrise. In fact, the discovered price might already be there, but remember this over 2,000 crore IPO and was subscribed some 41 times. Astha Jain, senior analyst at HAME, is here to tell us if people who get allocations should hold on, or if you don't have an allocation, is it worth buying into this company? Astha, good morning. Thanks for joining in. Quick word on this one. How have you analyzed Bellrise?
Good morning, Neeraj. Good morning, Tamanna. And a very good morning to all the viewers out there. See, talking about this counter, we have given subscribe rating to the IPO, given the good valuation, given the kind of market share this company is having, and given the kind of OEM they are targeting, because they have 29, they are targeting to 29 global OEM. So we are like very much optimistic on this counter. Now, what we believe that one who has already applied for this IPO and got the allotment, so they should continue to hold this counter. And they should not, exit on listing. Maybe partial exiting is a good choice, but not fully exiting. So I'm recommending it to keep it in the long-term portfolio, because we are finding more upside to be here. And this IPO has a potential to move upwards from here, maybe 10 to 20% above the issue price. So we are recommending it to hold for the long-term perspective, those who have got the allotment.
The outlook that you have on the kind of profitability and revenue growth for the company, Astha?
Yes, so we are very much optimistic on this counter, and we believe that this company will continue to grow at a double-digit CAGR in the coming years. And the main rationale behind it is that now they have started in the Pune facility also as a EV hub. So they are now diversifying into the renewable energy, EVs, etc. Apart from the core portfolio which they are having. So definitely that will be a good, a value-giving portfolio to them going ahead, and hence we are optimistic on this company, and we believe that 120 to 130 is the fair price where this issue should settle on in the medium term.
Astha, very good morning to you. We're watching this. In fact, let's cut in. This is always a nice moment for a new company. Let's cut in and see if we can get some of that ambience up.
It's public.
There you have it. Issue price was between 85 to 90 rupees, 10% up on the listing price, nearly 100 rupees on Bellrise Industries. You know, considering, Astha, that they are one of the leading auto component makers, that they have quite a bit of market share, and dependent on two-wheelers, relatively steady in terms of demand structure than other segments. Do you think that the premium is a below par kind of premium? I'm seeing it come off also as we speak.
Right. So what I believe, due to the present market conditions, maybe this company is not holding at a very strong premium, and I think the market conditions are the major reason which we are seeing that this issue is now continuously slipping in the terms of premium wise. It listed at 10% premium, and what I can see from the screen, it is now quoting at only 7% premium. So maybe some weak hands, they are coming, to offload the positions. But what I believe that, yes, you are absolutely right, Tamanna, they have got a very strong market share of 24%. They are among the top three, manufacturers in the auto component space. And as I've already told you, they are now going into the high margin and a high growth segments like EV hub, like renewable energy, that will be giving them a very, very strong, financial push going ahead. In fact, Q1 of FY26 will be very important for this company because one of their Pune facility will become operational, and from there we will see some very strong growth figures going ahead, and that all we will see in the medium term. And hence my view is that hold it in the portfolio from the medium term perspective, not from the short term perspective, and hence I'm recommending just book partial profit on the listing day, that is today, but keep partial quantity in the long term portfolio for more upside from here, which can be 20 to 30% from the issue price.
All right. So would you recommend buying at 98? 98 rupees, 9% up right now. If you've not had an allotment, I mean, two parts to this, right? I don't think at a 9% premium anyone wants to sell, even if they got an allotment. But would you recommend buying if you did not get an allotment?
Yes, because the kind of expectation was very high from this IPO, hence 9% premium will not be, satisfactory for those lucky people who got the allotment. So definitely they will not going to offload some of the position. And those who have not received the allotment, they can enter into this counter, but not at 98, maybe 96, 95 is the good price to make a good entry into this counter. So what I would recommend to them, just enter at around 90. I mean, it is not a major difference, only 2 rupees difference is there. So 96, 95 is the major, point where one can make a fresh entry into. So we believe, yes, at these levels, one can make a fresh entry also.
Okay. Thank you for that, Astha Jain, saying that it's still a buy, but I mean, of course, look at what works for you as far as IPOs are concerned. Just before I let you go, Astha, I don't know if you're still there. Any of the other IPOs that are in the offing right now that you've looked at, and if you have any view on, because quite a few, you have the Leela IPO, you have Aegis, you've got quite a clutch of them out there right now.
So I would just like to give one ranking. ProStem is the one of the IPO which will be, closing tomorrow, I suppose. So number 1 ranking to that, followed by Hotel Leela. In fact, we are recommending subscribe for the small listing gain to Hotel Leela because the kind of brand the company is having. We are optimistic on that IPO. On the EV by EBITDA multiple also, we find the valuations to be not that very high. So first choice is ProStem, followed by Hotel Leela. And for Aegis Vopak, we believe that it is a good long-term story to bet upon because in the short term, maybe the valuations can be, little bit, it is at the higher side. So we are not liking and very, very much comfortable with the valuation of Aegis Vopak. So these are the, ranking which we are giving to all the present IPO which are going on.
Okay. All right. Thank you so much for that, Astha Jain. Very gung-ho on the primary market, but tread with caution is what I would say. I mean, Bellrise, let me just pull up Bellrise for a second again. For an IPO that looked promising, the premium is a bit blah, to say the least. 8-9% premium is not something that you would expect, but anyway, at least moved upwards on its T-Street debut. Let's see how it pans out through the day. You'll be hearing from the management on NDTV Profit ahead on the day as well. Let's take a look at a deep dive now. We're looking at Camlin Fine Sciences. They've rallied 51% in May. It's the best monthly performance since April 2014. What are the growth drivers and what's pushing the rally? Varsha joins in with more.
Yeah, thank you for that. So yes, as you rightly said, 51% in last 1 month, and if you compare it with index also, it has given returns much ahead of what index has given. You look at year to date and you look at in the last 1 month what Nifty has given index returns or what Nifty mid cap has given returns. It has surpassed that returns. Now the highlighting point here is what has led to this rally. One is strong Q4 FY25 numbers. Now this is on the back of their good blending business and ramp up in vanillin division, which is nothing but a component in the vanilla extract. They've also tackled underperformance by shutting down loss-making units in Italy and China. One of the reasons why investors are very interested into this company because of the discontinued operation in their losses. The crucial vanilla plant, which is a game changer, is now fully operational, which will actually lead to increase in profitability. One of the reasons why investors are bullish on this company. Now let's talk about what are the growth drivers. Will this rally continue? this company is the only producer of vanillin in India, and vanillin division likely to contribute almost 1.9 billion of EBITDA in FY26, and product purity of this company is better than the competitors. And the other growth driver for this company is the anti-dumping duty of 186% by US and 131% by EU on Chinese vanillin. It's a major tailwind which will drive growth for this company. Strategic acquisition will actually drive growth for this company, and because this company is into higher entry barrier business like antioxidant and animal feed, will actually support the long-term growth. And they are expecting revenue growth of almost 20% when it comes to the blending business, with mid-teens EBITDA. EBITDA is likely to improve at 20% going forward. Now, taking into this consideration, is more steam left because the stock has already run up so fast. So if you take FY27 growth per se, considering 20% growth what management has been guiding, the future P, or rather forward P basis FY21 stands at around 22x, and if you see the historical P, that stands at around 48. So overall, good set of company is on the path of a big growth that will come in next 2 to 3 years.
Varsha, thanks for that analysis. Just while you are with us, Varsha, very quickly, a summation of some of the pharma companies or the healthcare companies that came out with results. Supriya Life, Entero, maybe a MedPlus. Quick updates. How did the results stack up?
Yeah, so starting with Supriya Life Sciences, so good set of numbers. Now this is on the back of their antihistamine products that the company deal in, and also because company has been diversifying when it comes to geographical diversification, we are also seeing uptick in revenue and uptick in margin because of the more regulated business. The next on the list is MedPlus. Now overall, if you see, the revenue growth has been 1%. Now because of the higher penetration of private label, which has led to increase in EBITDA. So for MedPlus, you shouldn't be seeing into revenue growth, but you should be seeing into EBITDA growth. And in FY26, they're going to add 600 store, which will likely lead to profit growth and margins. Last is Entero Health. Again, a decent set of numbers if you see. Cost efficiencies and high value margin accretive acquisition has actually led to this growth.
All right, thank you for that, Varsha. Entero, MedPlus, some of those on count today. LIC is what I want to pull up. I mean, that stock after the numbers and improve in VNB is roaring. I mean, when is the last time you saw a 7% move up on an LIC? Insurance back with a bang. Okay, Gautam Shah joining in now. He's founder Goldilocks Global Research. Gautam, great to have you on the show as always, and superb time to speak with you. No one quite understands what's happening with the index. On the face of it, nothing too much to worry about. No major clouds on the horizon. Technically, do you think that there's some fatigue setting in as far as the Nifty is concerned?
Good morning. I think no news is good news, and confusion is great for any bull market. And I think because people are not being able to make sense of what's been happening, it's actually a good place to be in, because that fuels the bull market. If you look at the last 10 days, despite all the happenings, we've been in this 500-point band on the Nifty, which is great news, 24,500, 25,000. But let's not forget that we've had a fabulous run in the last 2.5 months. And if after such a big rally, the market is not able to lose 2-3%, I think that's quite commendable. I think we are still inherently strong. The market has been displaying bull market characteristics. The momentum is excellent. Participation is great. A sector after another seems to be coming back. And if at the starting of the year, somebody told you that there's going to be an economic slowdown, there's going to be FI selling, Mr. Trump is going to take on the world, and there's going to be geopolitics, would you expect the Nifty close to 25,000? The answer would have been no. But that's what liquidity can do. And I think I saw the same thing in 2003, 2008 bull market, and I'm seeing the same thing again. Last time it was foreign, this time it is domestic. So I do believe that the markets are headed higher. Our working target is 25,600 and eventually lifetime highs. So stay committed and ride the trend.
This comes, Gautam, in the current calendar, you think? Good morning, of course.
High probability, Neeraj, because the market does not waste time anymore. Gone are the days where you wasted time to go down or wasted time to go up. I think we are at 25,000. Who would have imagined that you are 4% away from lifetime highs? The bank nifty is already at lifetime highs. So it's a good place to be in. I wouldn't be surprised that this year itself, sometime this calendar year itself, we should be at new lifetime highs. Because as I said, we've gone through a lot of stress locally and globally. How much worse can it get in terms of news flow? We already got what we could have got.
Wow. Okay. Gautam, so the street, I mean, fundamentally, right, people are saying, let's not bet on large cap versus mid caps versus small caps. Let's bet on where the growth is. But for sake of charts and simplicity for understanding for our viewers, I'm trying to understand from you. If the Nifty is not unfavorably placed, could it be that the Nifty does this 1,000-point jig, and whenever point of time it does, but a lot of broader market stocks might have exaggerated moves?
Absolutely. That's exactly the view that we have, because I think in percentage terms, the Nifty is not going to do anything special. Even if it were to move to lifetime highs, that's a 5-7% move. I mean, at best, you could see a 10% move on the Nifty from current levels. I'm not looking at any numbers beyond that. But I think the wave of outperformance in the small caps and mid caps, which started in the COVID lows, seems to have, found strength once again. And after this 6-month cleanup that you saw in the broader markets, you are seeing quality make a very strong comeback in the mid caps and small caps. So I do believe that the next 6 to 9 months is all about mid caps and small caps, and that's where serious alpha will be created. The Nifty will do well. It will keep you pepped up. It will keep you excited on the screen, but I don't think the returns are going to be in the Nifty and the Nifty stocks.
Where do you think the push is coming from, Gautam? Do you think that you will see banks make a comeback, have been quiet on the sidelines? A lot of people we're talking to say consumption is a story that's yet to play out. Is it discretionary consumption? What are those pockets that you are identifying right now?
Well, consumption remains an underperformer, and there are still questions about the Indian economy making a comeback and whether it can actually sustain. So you will need to see a couple of quarters. I mean, the fact that the paints industry has still not able to come back, and we keep talking about Asian Paints and many other stocks, is an indication that you don't want to go the consumption way. I think right now is about financial services. I think every time I've been on your channel or at an event, in Bombay, I think the view was very clear that financial services is the way forward across the board. So banks, NBFCs, insurance companies, housing finance companies, all look excellent. And my working target on the bank Nifty is about 60,000. And it's coming out of almost 2 weeks of consolidation for the bank Nifty. So I think I'm still betting on the top NBFCs and the top banks. I think alpha will be generated there. 2 other pockets that we like and we feel should do exceedingly well
I think
in the next 6 months is metals and real estate. And please realize a lot of people, are trying to pick stocks which have already done well in the last 2 years. But I think there will be new leaders emerging in the next 6 to 12 months. Metals, I'm looking at a 15% move from here on the index. Real estate, I'm looking at a 15 to 20% move from current levels. Those are the pockets to bet on.
Wow. So metals, real estate, what about defense? Defense story is done, Gautam?
See, the price action is still very good. I think 15 days back, post the geopolitics, I think a lot of defense stocks ran up quite a bit. Valuations are out of whack. People seem to be chasing them just because of momentum. But I don't think these are good levels to make a commitment into defense. Yes, it might be a good 3 or 5 year story, but risk reward commitments at these prices in defense and railway, I'm not in that camp.
Wow. Okay. Gautam, the one which is facing the conundrum is tech, and the views are divided on the Nasdaq. The views are divided on what Indian IT Pact does as well. I'm guessing you look at both. Could you dwell upon this?
Yes, Neeraj, we now have an official US market product. So we track the US markets very closely on a daily basis. And again, globally also, when I speak to many institutional investors, people are surprised that the Nasdaq is actually within striking distance of lifetime highs. The S&P 500 is, at levels of 5850, and I think looks good for 6150. But I think we still live in a world where Mr. Trump could get up and say that, okay, I want to do this today, and markets will have to react to that. He might roll back it, but that's a different story. But at least you live in that risk of something happening overnight, and that's probably the reason I've been more keen on investing or recommending businesses which have less to do with foreign markets or foreign soil. So that's probably the reason IT is definitely not in favor. IT and pharma, I think I would stay away. They will be market performers, but they will not generate outperformance. Many of the mid-cap IT stocks are very expensive, and large-cap IT cannot run from these levels. So that's probably the reason both these sectors are an avoid. I think it's a wastage of time and opportunity cost to be committing into them.
Okay. Gautam, a word on gold. Can't not talk about that, can we? Because it's had a phenomenal 2025, arguably even 2024. You were right on the button there. Would love to know what from here on.
Well, who would have thought, Neeraj, that gold would double? We always talk about percentage returns, but a $1,700 on gold, I remember 18 months back when we first spoke, tested a level of 3,400. I think it's a little overdone from a short-term perspective. So please do not make fresh commitments at these prices, but hold on, because I think it's a mega trend. If the view is 2 to 3 years, it will do much bigger things and possibly even cross a 4,000. But I think a 7-10% correction is coming. That will be a good time to invest in gold. But the other precious metal where I'm very excited about, as excited as I was about gold 18 months back, is silver. I think it seems to be laying a foundation to a mega uptrend. At levels of $30 to $33, there is not much to fall. And I think if all goes as per plan, I think silver can actually give you a 30 to 40% upside from current levels. So that's the next mega trend that we are trying to catch at Goldilocks.
Silver is the next mega trend that you're catching. You know, when you see all of those, and this is very, very popular on social media right now, Gautam, that people have wasted their time in equity, take it back to any kind of a time span, and gold has performed better than equity. What do you think when you see that?
That's true, and I think that's going to be the case for the next 6 to 12 months, because if you're going to compare Nifty returns or Nifty 50 returns versus gold and silver, I think that underperformance of equities over gold and silver will continue. So, I mean, that's the reality. You have to live with it. But if you're in the right mid caps and small caps, I don't think they can compete with, gold and silver, or gold and silver cannot compete with them, because I think the mid cap, small cap story is still very strong. The way auto ancillary stocks are doing well, some of the smaller infrastructure stocks are doing well. I do believe that that's a new mega trend. In fact, PSU as a basket we like, valuations are comfortable. So avoid the top 50, 100 if you want to really create alpha. Stick to quality mid caps and small caps.
What are some of these quality mid-cap and small caps? Because that's when you're looking at, and I'm sure you've looked carefully at what we've seen this result season, and it seems to be a case of extremes. Some extremely good numbers, some extreme howlers. So what are some of those, quality kind of ideas that you have identified, Gautam?
See, for your viewers who don't want to really work too hard and look at stocks and pick stocks on a daily basis, the best thing is to buy an ETF. Because, in some sense, when you buy an ETF, the exchange is working for you. You'll always have the right basket of stocks in your portfolio at all times. I've seen this over the last 20 years. So ETF investing, I think, is the future. And I think a lot of investors, passive investors, have realized that. So that's one good way to play the entire basket. You could look at the mid-cap, small-cap 400 index. I think it has an ETF. It's a good way to play that basket. But if you really want to go stock-specific, I think some of the metals PSU, I mean, look at what SAIL has done in the recent past. Look at some of the other capital goods PSUs like BHEL has done in the recent past. Lovely setups, and I think they're going to do bigger things going forward. Look at some of the infrastructure PSUs. I think that's, again, a good place to be in. Power is a story which is here to stay, if you want to play the India story. So non-PSU and PSU power stocks, I think, are right up there. So I think these are some of the baskets that we like. I don't want to recommend any specific stocks, but these themes, I think, are likely to do really well over the next 6 to 12 months.
Gautam, for pockets which have been promising a turn and not quite happening, I wonder if finally the turn has arrived. So one of those pockets is chemicals, right? Been promising for such a long time. Some of the prices are not quite moving as a pack. Is the bottom getting formed, or is it difficult to call that right now?
See, I've always believed that the market is the best judge of what's really happening fundamentally. And I think after 3 years of underperformance, you're finally seeing some upticks in some of the top chemical stocks. Now, I don't think this underperformance can can continue, because when I speak to many of my institutional clients, I think the view is very clear that all this Trump talk is only going to be beneficial for India and for many of the chemical companies out here. And I'm seeing the first signs of strength returning in the chemical space. But you still have to be very picky and very choosy. So don't go overboard, but keep a watch. I think the trend will emerge over the next 3 to 6 months. But I think the other two spaces which have been trying to turn around, one is FMCG, which we still do not like. Some stocks might do well, but I don't think it's a preference. But I think auto has finally turned the corner. And I think some of the top auto stocks are likely to deliver supernormal returns. So along with real estate and metals, we also like auto, and just keep a watch on chemicals.
Since you brought that up, tempted to ask you, ITC, there's this big overhang of the institutional sale coming in on ITC consistently. The stock is down today. Now, I remember at 200 when it was a sleeping giant, you were the first ones, probably the only one to say that let's see this moving now. It went up quite substantially. It's again been in a slumber and now with a negative bias. Does the negative bias continue, Gautam? Would you be short here? Would you be away from it? Or would you be conversely long here?
See, Neeraj, today's financial markets is all about picking the right theme. And if you buy the worst performing stock in the best performing theme, you will still outperform the markets. I think this is what the last 5 years has taught you. So be in the themes which are showing relative strength. FMCG as a basket, I think there are still questions on the economy. Valuations are still, very expensive. And that's the reason I don't think FMCG as a sector will do well. But ITC remains a favorite. I mean, if somebody is having a 2 to 3 year view at levels of 400, 420, you can't go wrong with ITC. So I wouldn't be negative. But then in this market where there are so many opportunities, do I really want to commit big on FMCG and ITC? Maybe the answer is no. So it's really about active and passive. If you're a passive investor, go with it. If you're somebody who's looking at more 3 to 6 months, don't go with it.
Okay, so, so clearly what I can sense is you're not buying this whole FMCG staples theme, consumption will come back story. Same for discretionary. Are you done and dusted with the whole eternal Swiggy madness that we saw a few months ago?
Well, I think Swiggy was a madness, maybe not eternal, because I think it continues to hold that 220, 230 area really well. Swiggy was oversold and marketed aggressively, and we've seen what has happened over the last 6 months. So I think market is very smart. It knows what to give value and what to not give value. And some of these stocks are still very expensive. So while Eternal has really played out the entire six-bagger story, it might not see serious upside, but I think it's broadly going to be in that band of 200 to 300. But the bigger opportunity is clearly, in some of the other sectors I mentioned. Do not forget valuations. At a 25,000 index, you can't buy a story. You buy a story with relative strength and with good valuations. And that's why I think metals, for me, is on top of the list, because, all three check boxes get ticked.
What about the insurance play? I mean, LIC is booming today. If you look at the numbers, it's not like there were some great fireworks, maybe not as bad as expected, but that's the pure numbers. Valuations is what has excited most brokerages. On the charts, or how are you looking at LIC and the whole insurance space?
We like it. I think 2.5 years of hard work is now finally paying off. I think some of the top private insurance companies look beautiful on the charts. HDFC Life, ICICI Pru, even in ICICI Lombard, SBI Life, MFSL. Great charts coming out of 2.5 years. And, insurance is a theme which is here to stay when, given the younger generation and their perspective on life and, what insurance is. So I do believe that this is a mega theme for the next 3 years. So I like it. In fact, we've recommended a couple of stocks in the last 1.5 months. And I think this theme is here to stay. And that's probably the reason I keep saying, don't go back to the winners of the last 3 years. They will not deliver great returns when the Nifty next move to lifetime highs. Some new pockets like these will now make a comeback.
I mean, so you said private insurers, just clarifying that, because HDFC Life hit a new high 2 days ago, right? So is it the HDFC Lives and the SBI Lives, or ICICI Pru life insurers, or are you liking the general insurers like ICICI Lombard, for example?
See, I think a mix of both. ICICI Lombard, I think, is an absolute winner for me. I think if you have to play the next 3 to 5 years, insurance as a theme is likely to do well, and I'm more tilted towards the private insurers because I believe over the next 3 to 5 years they are going to gain a lot more market share from the PSU players. I mean that's how I see things. So that's the reason I would bet on the private insurers because I think that's a mega story.
Gautam, so good talking to you. Thank you so much for taking the time out and have a good run.
Thank you. Thanks, Neeraj. Pleasure.
The pleasure is ours. And that's Gautam Shah of Goldilocks. Well, you got a lot of insights on a lot of things, including a multi-year theme in insurance is what Gautam Shah believes is in place. Okay, what's cracked today as we wrap up though? Maybe we wrap up on a somber note, and that's with Bharat Dynamics because it's cracked on a muted quarter, particularly the margins which have shrunk. Anushi Johnson with why this happened. And Anushi, an unusual rise in cost of materials, right? I saw 122% uptick.
Right. So now what has happened here is while we have seen a more than 100% of a jump in terms of where the revenue growth is concerned. So while that is in line, it's the cost of materials which have seen about a 122% of a jump, which has led to this kind of margin pressure that we are looking at. In fact, along with this, even the profit was lower due to the base effect as well. If we look at Q4 FY24, they had received a refund because of which we are looking at a bigger gap in terms of where the net profit is. So net profit has seen a 6% of a downtick to 272 crore, while margins have shrunk as much as 17.6% as compared to 37%. But again, on that note, defense sector, as we have seen on a quarter-to-quarter basis, the execution pattern differs for some of these counters that are there, because of which we can see these varying type of margin profiles for a lot of key defense players. It's on a year-to-year basis that we have to look at the sustainable range. In fact, if we talk about the orders, now the order inflows for FY25 came at roughly 6,700 crores, which increased the backlog to about 22,800 crore. So that, taken with the context of where the market cap is considered, it shows revenue visibility, which we have seen in this quarter as well. But it's the margin profile that we have to see whether that would sustain in the range that is there or not. So that's the overall view on Bharat Dynamics. It's because of margins that we are seeing the stock cracking in trade today.
Got it. Okay. Well, thanks a lot for that, Anushi. And well, we need to wrap up India Market Open. Just pull up the indices on the note that it's a bit soft this morning. So keep that in mind. And if you have specific questions, Ask Profit takes it up next. Keep in mind the indices are soft. So about 0.27% lower for the Nifty as we speak. But with that, from Tamanna and me and the team that has put this show together, thank you so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
welcome to NDTV Profit. You're watching Ask Profit. I'm Mahima Vachajani and with me is Alex Matthews. Well, before we move on to the show, let's take a quick look as to how the markets are doing. Well, in terms of the Nifty 50 as well as the Sensex, it's trading almost at its day's lowest point. There you go. It's down by about 0.3 odd percent. The Nifty Bank as well as is trading in a very flat range. It's hardly up about 0.01%, but the broader markets are doing better than that of benchmark indices. The Nifty Mid Cap 150 is up almost 0.3%, the Small Cap 250 up almost 0.4%. In terms of the Nifty 50 heat map, let's pull up that and see what counters are doing well in trade today and which counters under pressure. ITC after the BAT stake sale, of course, under pressure, down by about 3 odd percent. Apollo Hospitals, Bajaj Auto, Nestle, M&M, some counters trading in red. Some counters doing well. HDFC Life up by about 1 odd percent. Jio Finance, Adani Ports, Bharti Airtel, Axis Bank, all trading within the range of that 0.5 to 0.9 odd percent. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. Well, it's a range-bound trade today. So the sectors as well, there's Nifty Realty, which is up hardly 0.5%, PSU Bank up 0.5 odd percent, Nifty Energy 0.4%, Nifty FMCG definitely under pressure, and this is on the back of heavyweight ITC seeing a downtick of almost 3% in trade today. Nifty Consumption down by about 0.7 odd percent. Nifty Auto, Nifty Metal also under pressure. Let's pull up some stock-specific names and see how they are faring in trade today. And this is on the back of news plus earnings that have come post-market hours. There's DCX Systems, where cost of raw material is weighing on the overall profitability as well as margins. The stock is down 7%. Red Tape on the back of its earnings down by 5.7 odd percent. There's Stylum, JTL, Home First, Bosch, Bharat Dynamics also seeing pressure in trade today. Some counters like Techno Electric up 10% on the back of stunning numbers. Spark up 10%. Infibeam also seeing momentum in trade today, up by about 9 odd percent. Triveni Engineering also up by about 9 odd percent, and there is LIC that's also up by about 7 odd percent in trade today.
ITI is doing quite well as well. It's something that I looked at closely this morning. It's up about 6.7% or thereabouts. And interestingly, a narrowing of the loss. There was an exceptional item as well, but the EBITDA loss has narrowed on a year-on-year basis. Interesting counter to look at. It was in fact on Amar Deo's watch list heading into trade as well. Time Techno initially started off in positive territory after a pretty strong set of numbers, but it has since lost ground. And the one stock that stands out in the large cap space is ITC. In fact, let's pull that stock up. It's trading with cuts of about 3% or thereabouts. It's off the low point of the day. And interestingly, this is on account of the sale of stake by British American Tobacco. Remember, before this transaction, they had 25% stake, and they're selling stake for the requirement that they have for funds. And initially, it was expected to be an 11,600 crore stake sale by BAT. But it's ended up being 15,000 crore or thereabouts. It was an upsized deal. The details of the buyers will be known eventually over the course of the day. But that selling pressure is what you're seeing, because the price was decided at 400 rupees per share. And that was about 7% below even yesterday's closing price. And you saw the share price drop about 2% in trade yesterday. Interestingly, we've been asking experts whether or not this is an opportunity to buy ITC. The cautionary tale, of course, is that BAT after this transaction will still have upwards of 20% stake, and this overhang of supply into the market by the way of BAT selling additional stake could come through at any point over the course of the next years as well. Remember, last year they sold 3.5% stake in one of the largest transactions in the block space that India has seen, the third largest in fact. We've got Vaishali Parekh as well as Nirav Ashar joining us this morning. So let me ask that question up front. Nirav, fundamentally, nothing has changed. And very good morning to the both of you. But Nirav, nothing has fundamentally changed for ITC in terms of results. But this overhang of stake sale by the largest shareholder, which held 25% before today, and will lose, maybe end up with more than 20% even after this transaction, it remains, right? Would you go ahead and buy based on the price correction of the last couple of days?
Good morning and thank you for the invite. I think ITC has a deep embedded value within itself. We have a lot of exposure to different kind of businesses, despite the fact that, of course, the hotels division is out. But I think still we have cigarettes, which is an interesting play, tobacco, agri commodities, FMCG, paper boards, etc. And from a valuation perspective, it is still quite reasonable. The performances of all these divisions have been quite decent. It's a cash flow generating machine, and I think the prospects are looking quite decent. So I think every fall should be used as an opportunity to keep accumulating in small quantities.
Just want to point out that neither the experts on our platform nor us at NDTV Profit suggest that you should consume tobacco, cigarettes or any other form of such consumables. It's bad for your health. But let's go to a new listed player on Dalal Street, Bellrise Industries, which made a positive debut in an otherwise weak broader market. The shares of the auto components manufacturer listed a premium of 11% or thereabouts, lost a little ground since that point. We've spoken to Shrikant Badwe, who is the managing director, and Swastik Badwe as well, who is a promoter at Bellrise Industries, about everything that you need to know. Listen in.
How your revenue split up? You're largely an auto ancillary company with roughly 60 or 65% of revenues coming from the two-wheeler space. I just want to start off first with within the two-wheeler space, what kind of products do you currently offer? And do you expect the share of two-wheelers to be around this level given the growth expected over the next couple of years?
So today, we primarily work in the two-wheeler space. We work across OEMs, so right from a Bajaj, Hero, Honda, TVS, Royal Enfield, the new age EV players. We work across the whole bunch of them. And two-wheeler really, as you said, been our bread and butter for the past 3 decades. It's where we derive a majority of our revenues from. Today, we've got 24% market share in the two-wheeler metal component space, which means that 1 in every 4 vehicles out on the road has a metal product, so a chassis or an exhaust system or a metal component made by Bellrise Industries. So that's the type of market leadership that we have developed in the two-wheeler space. Going forward, two-wheeler will continue to be a focus. We are launching a few new product offerings in the space, including multiple different steering column products, including multiple different filtration products, which we think can be very interesting and can increase our content per vehicle. At the same time, we want to also focus on the four-wheeler and commercial vehicle space, where our presence today is quite small. And we would like to focus more on the four-wheeler commercial vehicle space by working with our existing OEM relationships like Jaguar Land Rover, Tata Motors, Ashok Leyland, Volvo, Mahindra, and so on and so forth.
I just want to get into a little bit more on the product side. You mentioned that you have 24% market share as of FY24 in the high precision metal component space. Now that will include chassis along with the other products. So essentially, will chassis have a higher market share for you, and while the others are still trying to get through, or do you have a stable market share with essentially 1 in every 4 vehicles having a product from Bellrise?
I think it's more of a weighted average. I think in that sense, I think the market share will be quite stable for a chassis and exhaust system and other metal components. I think one thing you'd appreciate is that metal does create a large part of the bought out material in the metal space in the two-wheeler. So more or less when we do well in the chassis, all in all it translates into other components also. Because one thing that you'd appreciate about the two-wheeler industry is that the way we usually win business is in a basket. So we don't usually win business only for a chassis or only for an exhaust system. It is for a basket of products put together for which we quote and win a business.
Fair point, and point taken. I just want to get into the industry also, because last year in FY25, we largely saw the two-wheeler industry outperform the passenger vehicle industry by a mile in terms of growth. This year, though, we've seen over the last 3 to 4 months that especially the motorcycle segment has started to slow down a bit, and the market seems to be moving towards scooters. At least that growth momentum is continuing from the last year. For you specifically, how do you address this? Because you mentioned some of your key clients, Bajaj Auto, Hero, as well as Eicher Motors, all largely present in the motorcycle space. So how do you see the outlook essentially specifically for the motorcycle space this year in terms of growth?
See, I think we work across motorcycles and scooters. We don't have any particular liking to the one. I might say, I think motorcycle and scooters both form part of a business. So in that sense, we're quite hedged against the industry because we work across multiple different OEMs. I think even if scooters do better than motorcycles this year, we don't believe it will impact our performance materially. We feel that growth will be robust across scooters and motorcycles for us because not only do we grow organically with the current platforms that are in the market, but we're also vying and have won quite a few new platform wins in the past few years, which will overall increase our business going forward.
Okay, so that's the management of Wellrise. The stock is up and about, giving up gains, as I pointed out, from its initial uptick that it saw when it listed, uptick of 11%. It's now up as much as 4%. Now, there are several questions that have come through. I do want to remind you, if you're tuning in for the first time, you can call us on the number at the bottom of the screen, or you can send us a message on that number on the top of the screen. That's our WhatsApp number. Appreciate that you've taken the time and you're waiting by, Vaishali as well as Nirav. And we just spoke about ITC. Now, like I said, there are several questions that have come through. Let me take the first one on NALCO, National Aluminium Co. We've got Ranjana from Bengaluru, who's bought at levels of 185 and is wondering whether to hold for the short term. Vaishali, good morning. Would you do so if you bought at levels of 185?
Very good morning, all of you. Actually, yes, NALCO has been showing some strength right from the beginning of the day. So I would say it looks attractive. In my opinion, this can go towards 188, 190 also. So my view is positive.
All right, so that's with regards to where NALCO stands. The next question is from Ganesh, who wants to know as to what should be the next course of action for PG Electroplast. He's bought shares at 962 and sitting on a 19% loss. If you can see, if you can quantify his losses, let's put that up. He's also said that his investment horizon is for the next 6 months, so he wants to know whether he should hold or sell. Vaishali, I'll again come to you on this one. What are the charts indicating for PG Electroplast?
Actually, the long-term chart is pretty interesting. It's quite positive, and right now it's in a consolidation phase. And to give my view, it's currently also sitting on a 200-day moving average. So that makes it a very strong support. In my opinion, from here, this can go towards 850, 900 to start with. So I would say hold with a stop loss of 750.
Okay, so that's with regards to where PG Electroplast stands. The next question is from Venkatesh, who's writing in from Rajamundry. He's holding 6875 shares of Whirlpool at 1360 and wants to know as to what should he do. Should he continue to hold or average out? Nirav, I'll come to you on this one. Lots happening when it comes to Whirlpool. The earnings were decent this quarter, but overall in terms of the Whirlpool Corporation selling its stake in Whirlpool, what are the views like? Should he continue to hold?
I think he should exit out of Whirlpool and maybe shift to some better pedigree names like Blue Star.
All right. Okay. Now let's shift focus and take a look at the earnings update. EPAC came out with its earnings and we spoke to the management earlier. Listen in.
What has led to this kind of an outperformance in terms of the numbers, and specifically the strategy with regards to your operational guidance? How has that helped to meet that 160 crore number?
So firstly, definitely last year FY25 was a fabulous year for air conditioning business, but EPAC did not just grow in AC like at 50%, but all our levers around diversification, both product diversification, customer diversification, something which was well executed. So we grew 100% almost in the component business. We grew 22% in the SDA business, and then the newer introduced the large domestic appliances like coolers and all, which was introduced only last year. So 25 we saw that also increased. So we have substantially reduced our overall customer dependence on top customers from almost 72% in FY23 to 48% in FY25. So on all aspects, be it product diversification, customer diversification, all the strategies we had planned had worked very well. And this is why the asset turn also has improved for us. From almost 2.6, we have achieved an asset turn of 3.2. So going forward, definitely we will keep focusing, and the strategy is to keep growing in other businesses and to keep diversifying while maintaining the pace of growth in the AC business.
Right. Ajay, one of the strategies that you've looked at is in terms of reducing your exposure or the contribution of revenue that comes in from room air conditioners to other products. From what you're looking at in terms of reducing it from 80% to 65%. Where do you stand currently, and what are the product segments that you are going to introduce?
See, reducing dependence on AC does not mean we don't intend to grow. So AC will continue to grow at outpacing the market growth, but at the same time, our other business growth, whether it is the small domestic appliances, the newly introduced washing machines, and the cooler business, the component business, so all others we are focusing to grow them at double the pace or triple the pace of the AC growth. So this is how we are reducing our overall dependence on AC, and at the same time also trying to maintain a uniform business every quarter. So that's the objective the company is following right now.
Okay. No, so agreed. I'm not saying that you're not going to grow your RAC business. The question is, if the other segments also come in, where does that stand currently in terms of overall revenue share, and how margin accretive are those other segments as compared to RAC?
So last year, FY25, our overall AC contributed 74%. So we come down from almost 85% to 74% in last year. And going forward, we are guiding that we will further diversify, and AC will contribute 65%. So that's the overall guidance we have given.
Okay. And taking into consideration your capacity utilizations, where do they stand for RAC, and how much of the capacity now is being utilized for your small domestic appliances as well as the large domestic appliances for the remainder?
The good thing for us, most of our investments in capacities is into manufacturing of the parts required. So these parts can be used for AC or any other product. So all the investments except the assembly lines are fungible. So herein the focus is, like I shared earlier, is to diversify as much as possible so that the utilization during the off-peak AC season improves. So the overall objective has been to improve the utilization in the off-peak AC season, and this is why we are repeatedly saying that we will continue to focus on growing our component business, the large domestic business, and the SDA business. So while AC during the peak AC season, definitely the utilization of the assets is close to 100%, 95-90%, but it is the off-peak season or the off-peak AC period which definitely challenges us in terms of asset utilization. So this kind of activity, we are overall, I shared earlier, from a 2.6 asset turn, we've already achieved 3.2, and going forward, we are further looking at bringing it up to 4%.
So Ajay, just to understand this correctly, one, RAC, which has been the core business, now you're looking at ramping up your RAC component portfolio as well, and that automatically looks at backward integration in terms of manufacturing. Correct me if I'm wrong anywhere on this front.
Yeah, you're absolutely right. Just to add on, so the components are not just for AC. The components are for the other products like the washing machines or refrigerator, and the component business in terms of the PCBA controllers. So it is component for any appliances manufactured. So our focus, we are also doing component for energy meters. So our focus is to look at business which can give us substantial revenue during the off-peak AC season.
Got it. Apart from that, when you look at the domestic appliance business as a whole, inherently it's a high margin business as compared to the room air conditioner business from a margin perspective. Now that EBITDA has been at 160 odd crores this time around, when you increase your or reduce your RAC to revenues from a 80% to a 65%, how much will it actually impact your margins on a positive end? Further expansion that we could look at in terms of FY26 and 27?
Definitely, first of all, I like to again say we are not reducing the AC business. We continue to grow. At the same time, the growth in the other business is outpacing the AC growth definitely. So overall, yes, the revenue mix and the margin mix is changing. Although last year we took a dip in the margin compared to FY24. That was basically because of the low utilization of City, the new facility. So as our utilization of the other facilities and the utilization overall throughout the year improves, we will definitely looking at increasing or improving the EBITDA. So from current year 7.25, we are definitely looking at a higher 7% kind of an EBITDA for the next year.
Okay, strong set of numbers from EPAC Durable, and a stock to watch going into the rest of the day's trade as well. It has lost ground from the early part of the session today. We've got our first caller for the day. We've got Man Singh calling us from Andhra Pradesh. Very good morning, Mr. Singh. How can we help you today?
Good morning, sir. My query is regarding techno-electric engineering, sir. Okay. Yesterday it posted good results, sir. Yes. I am holding 20 shares, average price 11.75. I want to know both fundamental and technical analysis and what is the entry level? Where should I start pyramiding or accumulate more shares?
Okay.
How is the future prospects?
I got your question. Nirav, if you've tracked Techno Electric, the numbers looked particularly strong. Would you hold on to this? Would you add more at this point?
Yes, I'd like to hold on to the stock because this has got exposure to the power segment, and it does balance of plant assignments. And of course, the outlook for T&D space is looking quite good. Power sector investments have been on the rise. So I'd like to hold with a medium to long term perspective.
Okay, so hold for the long term, but a quick view, Vaishali, on deploying further funds into this very sharp up move in trade today and holding at higher levels. Would you deploy?
So I would say it's open with a gap up and it's already surged quite a bit. So in my opinion, it's better to accumulate because it can go a little bit into a retracement towards 1250. That would be an ideal level. So I would say accumulate from here on.
Okay, so that's with regards to where Techno Electric stands. The next question is on Maruti. Bhupendra Mehta from Mumbai is writing in and wants to know as to what should be the next course of action. He's bought 16 shares at 11,740 levels and wants to know if he can continue to hold at the current levels. Vaishali, I'll come to you on this one. What are the charts indicating for Maruti?
So right now we are just seeing some profit booking, but I think the trend is intact as long as 12,200 is held on. So continue holding with a stop loss of 12,200, and once if the stock goes above 13,000, you're ready for a target of 13,600 and so on. So I would say hold with a stop loss.
Okay, so that's with regards to Maruti Suzuki. The next question is from Devinder, who is writing in from Hyderabad. He wants to enter into the metal space and wants to know as to which mid-cap and small-cap stocks he can enter into right now. Nirav, I'll come to you on this one. Any stocks that are looking attractive to you right now in the metal space, especially from the mid-cap and the small-cap space?
We like a couple of stocks, Nalco and Hindustan Copper. I think both of these are looking very attractive.
Any particular reason as to why you're choosing these two counters, Nirav?
Well, the valuations are very attractive. The results have been quite good. The margin trajectory has been improving. They're backwardly integrated. The demand scenario is quite good. So I think they make an interesting combination, basically.
Okay, so that's with regards to where the metal space is concerned. Next caller, Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Adani Green. Can we enter into Adani Green at current levels is my query, ma'am.
Okay, got your point. I'll take this up with Vaishali. Vaishali, what are the charts indicating for Adani Green?
I would say actually whole of Adani pack is at very attractive levels and it's showing a lot of strength. So talking specifically about Adani Green, this stock has actually fallen from 2,100 and now oscillating, in a narrow range. So I guess it's a matter of time. 900 is a very prominent support and it's very close to the support level. Once we see momentum setting in, this can go towards 1,200, 1,300 to start with.
That's a view on Adani Green. Standard disclaimer here, this is part of the Adani group of companies and so is NDTV, of which NDTV Profit is a part. Vishwanta Reddy from Madanappalle is asking about high-tech pipes as well as Apollo Microsystems. Interesting, right? The entire pipe space has been in focus in the recent past and another day of run-up for high-tech pipes. So the question to you, Vaishali, would you deploy in any of these?
So yes, actually my preference would be the frontline like Astral and Supreme, etc. But I was seeing high-tech since yesterday. The volume has really surged in, technically very well placed. So I would say yes, one can accumulate from here on and can see a return of around, as a trading perspective, towards 110, 115 and 95 should be the stop loss.
So that's with regards to where these pipe companies stand. The next question is from Saif Rahman, who's writing in from Saudi Arabia, and he's holding 163 odd shares of Tanla platforms at an average price of 793. He wants to know whether he can continue to hold or book losses at the current moment. Nirav, I'll come to you on this one. Tanla platform, what's the outlook like?
Well, Tanla is looking interesting, but I think he'll have to have some patience with respect to the stock. So I think he needs to wait for a couple of quarters before we start seeing any improvement in the performance.
Wait for a couple of quarters to see improvement for Tanla platforms. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, a gentle reminder, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, our next caller, Ravi, is calling in from Bengaluru. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning. I bought 300 shares of Aether Energy at an average price of 305.
Okay.
And I think today it is trading at 320 or something like that.
Mhm.
I just want to know the long-term perspective. I bought it immediately after the listing of the share when it took place.
Okay.
And even though I'm on a little profit, I want to hold the share for more than a year.
Okay.
And EV vehicles are in, it's a big buzz
Right.
today. I just want to know what is the long-term perspective of the...
Got it. Got your query, Ravi. I'll take this up with Nirav. Nirav, he's talking about Aether. The stock is not really trading, it's trading pretty much near to its issue price. The issue price was 318 and it's currently trading at 321. What's the outlook like? Should he continue to hold for the next 1 year considering the EV demand in the two-wheeler space?
Yes, he'll have to hold for a decent period because this is going to be a slow burn. This company is an associate company of the Hero Group, so I think definitely the prospects seem to be quite good. But there is going to be a waiting period, so he needs to keep the patience with respect to this stock.
Waiting period for the stock along with the scooters that it sells. KPR Mill is the name of the counter that we're talking about next. Anshu from Chennai is asking this question. Bought at levels of 1,150 levels. What is the outlook for the next 6 months? Vaishali, on the charts?
I guess it's already in a trend. I think the way the formation is, it's likely to show targets of 1,400, 1,500. And for this, I would say keep a stop loss of 1,100.
Okay, the next question is from Venkat, who's writing in from Andhra Pradesh. She's having 5,000 odd stocks of HDFC Life at an average price of 781 that he bought recently. He wants to know, can he hold this for 6 months or so? Vaishali, I'll again come to you on this one. What are the charts indicating for HDFC Life? This is around 6% of his overall portfolio.
Oh, wow. So I would say, of course, to that extent, I would say definitely keep a stop loss, hold it with your trailing stop loss. But seeing the chartical view, I think, it's given a breakout even on the monthly chart. So having said that, I would say that, yes, now the prominent support lies at 740. And in all likelihood, if the momentum continues and the trend continues, this can go towards 900 levels also. So 900 to 1,000 levels would be the next target. But since he's already held for a long time, I think disciplined trading is a must. 740 should be the stop loss.
Okay, disciplined trading is a must, is the view coming in on something like an HDFC Life from Vaishali. Our next caller, Rohit, is calling in from Delhi. Rohit, a very good morning to you. How can we help you?
Good morning, ma'am. I am hello.
Yeah, I can hear you, Rohit. Go ahead.
Sir, I have 2050 share on Natco Pharma.
Okay.
My average price is 972. So
Okay.
I want to know about should I hold or should I add on?
Okay. Okay, got your query, Rohit. I'll take this up with Nirav. Nirav, Natco Pharma is the counter. What's the view like, and your view on the entire pharma space now that most of these companies have come out with their earnings?
I think with respect to Natco Pharma, he'll have to hold. The prospects look good from a medium to long-term perspective. As far as the entire pharma space is concerned, it's made a very smart turnaround. I think we continue to like the front liner companies like Cipla, Dr. Reddy's, Sun Pharma, and Divi's Labs in particular.
That's with regards to where these pharma companies stands. The next question is from Nataraj. He's asking about Graphite India. He's holding 30 odd shares bought at 556 a piece and wants to know as to what should be the next course of action. Vaishali, I'll come to you. What are the charts indicating for something like a Graphite India, and what are the supports and resistance levels that you're observing?
So yes, the stock has shown signs of bottoming out and getting into a trend. For some time, it is only consolidating. So I think the near-term view would be that 520 is the near-term immediate support level. And once we see the stock going above 580 levels, this could go towards 620, 640. So on a broad base, 500 is a support. But for near-term, if you're looking, 520 should be the near-term support.
All right. Vindhya is calling us from Hyderabad. Vindhya, I love your name. How can we help you today?
Yeah, hello.
Hi, Vindhya. Please go ahead. How can we help you today?
Okay. I have 220 shares in Gravita at the price of 1900. So I just want to know the future for 1 year. Can I hold it for 1 year? What is the view of
Okay.
that?
When did you buy this, Vindhya?
1 month ago.
Okay. And you bought it with the intention of a price appreciation for less than 1 year. Is that right?
Yes, correct.
Got it. Okay, Vaishali, then on the chart, she's in the green right now. Bought at levels of 1900. Stock is trading 1923. Should she hold for upper levels, and what level should she place her stop loss?
Oh yes, so she has bought it at good levels. 1900 is the support. So I think below that, if it goes, it can go towards 1800, but yet it does not damage the trend. The view gets negated only below 1800. And the confirmation of a trend is seen only about 2150. So if that occurs, this will go towards 2800. So final stop loss 1800. Wait for it to go above 2150 and see it going towards 2800 levels. That would be my view.
Okay, so that's with regards to where Gravita stands. Next question is from Vijay, who's writing in from Croydon. His question is on BSE and wants to know as to what is the right time to enter this particular counter. Nirav, I'll come to you on this one. Considering the valuations at where BSE stands plus NSE getting listed, what's the outlook like, and is this the right time to make an entry?
Yes, definitely, because this is a portfolio stock, so you can enter even now.
Okay, so that's the view with regards to where BSE stands. The next question is from Himanshu. He's been holding NTPC Green since IPO listing. He's from Gujarat and wants to know as to whether he should continue to hold the counter or not. Nirav, I'll again come to you on this one. NTPC Green, what do you think is the outlook like? Should he continue to hold?
I think this is going to be a slow mover, so I think he can shift to an Inox Wind. That would be a better.
Okay, shifting to Inox Wind is a better option as compared to NTPC Green is the view coming in from Nirav. Our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Very good morning and thank you for taking up the query. This query is the fundamental analyst.
Okay.
I am holding 200 shares from 8th Construction.
Okay.
Bought at 13.99.
Okay.
And yesterday I happened to see the interview of the management with the NDTV team.
Right.
Okay. And I want to know, considering they are talking about the minimum guidance of 15% growth and last 5 years they have grown extremely well.
Right.
Very, very high ROC and leader. Can I add from long-term point of view at this price?
Okay.
Considering their guidance and India's growth story, especially this. They also got a huge order from
Right.
There's a difference also for this mining and all.
Right. Got your point, Murli. And for viewers, the interview that Murli is talking about, you'll be able to find that entire interview on our YouTube handles if at all you want to go and check out the entire interview. Nirav, I'll take this up with you. What he's saying is that they've, remained conservative with respect to their guidance. What do you think? Is this a good counter to continue to hold from a longer term perspective? Afcon's Action Construction is the counter.
Yes, Action Construction Equipment has seen a dream run, and it's a leader of sorts as far as the cranes and the construction equipment is concerned. They are also vying for some orders from the defense. So the prospects are very, very strong. And in fact, I think this temporary blip which has happened can be used as an opportunity to add more stock to the portfolio.
Right, so that's the view on Action Construction. Murli, hopefully that answers your question. JP Power, I'm not sure if we're going to be able to get you a view on this, unfortunately. Prashant writing in from Cochin. I'm going to still take a chance and he's bought at levels of 15.2. The stock is currently at 15.2. Vaishali, on the charts, is there any sense in holding this for a period of 2 years?
Say so. Actually, the stock is showing signs of revival. So I would say keep a stop loss of 14 rupees. And if the horizon is 2 years, in all likelihood, this can go from 15 to 24. So stop loss of 14 and look for a target of 24.
Okay. All right. So hold on is a view on JP Power. Our next caller is calling us from Bengaluru. Keshav is calling us. Very good morning, Keshav. How can we help you today?
Good morning. This is Keshav from Bangalore. Thanks very much for taking this call.
Our pleasure.
My query is about Bajaj Housing Finance. My entry point was, 165, right? I would like to get the kind of long-term view on it.
Understood. So you bought, when did you buy?
It's around nearly a year ago.
Okay. And so you bought it from the perspective of the long-term based on the fundamentals, that's correct?
That's right, right, yes.
Okay, Nirav, on the fundamentals, this is a company that has seen between 25 and 30% AUM growth over the course of the last few quarters. It's in a space that is developing. There's going to be need for mortgage going forward as well. Fast growing, over 1 lakh crore of a lending book. What would you say about the prospects? He's bought at elevated levels though.
Yes, the entry point has been on the higher side. So I think the advice will be to still average from the current levels because the prospects are quite good. We have a very strong promoter. The execution is quite strong. The demand is quite strong. And the margin trajectory is quite attractive. So I think the advice would be to average at the current levels.
Okay, average at the current levels is the view on Bajaj Housing Finance. The next question is from Kalyan, who's writing in from Hyderabad. He's holding 1,000 odd shares of HFCL at an average price of 125 a piece and wants to know as to what is the trend that Vaishali you are observing on the charts for the next 2 to 3 odd months.
So I would say actually if he's bought for at higher levels, think you can average out because the stock is technically got into the oversold zone right from 70 and it's bouncing back and it's making higher bottom formation. So that means it's ready for a takeoff and it can come towards 100, 110. So I think no harm averaging at these levels.
Okay, our next caller, Anant Shaina, is calling in from Bengaluru. Anant Shaina, a very good morning to you. How can we help you?
Hi, very good morning. So I'm Ananta Shaina from Bangalore. So I'm holding a RVNL 40-80 quantities at the rate of 25 rupees.
Okay.
So I can hold for long term. I just wanted your opinion about the midterm to long term, whether I can hold or exit or something like that.
Right. Anand Shaina, first of all, congratulations of buying, RVNL at such an attractive level. Just want to get a sense as to what was your thinking behind buying RVNL at 25 rupees.
Yeah. Thanks for that. So the idea behind that was, the India is growing and the Indian infrastructure has to grow if India has to grow. So, and one more thing, our Prime Minister Modi kept saying about railways a lot. And then I think I mixed my analysis with the government initiative. I think that made me to buy at a very good level of 25 rupees.
Got it. And congratulations on the profits as well. I'll take this up with Nirav. Nirav, RVNL is the counter. He's sitting on a profit of over 16 lakh rupees right now. Should he book partial profits or continue to hold?
Well, congratulations on account of the strong mixture which you created. So I think the RVNL story looks quite good, and we've seen a couple of quarters where there was a lull as far as the railway stocks are concerned. But I think in Q4 we have seen a revival of fortunes. The margins are slowly making a comeback. Government orders are coming. Spending is picking up. So I think you need to keep the faith and hold the stock.
Is the view on RVNL. Congratulations, Anant Shana, on the acquisition that you've made, and also the conviction to hold as long as you have. All right, let's talk about Jose's question. Jose is writing in from Bengaluru and holding on to Piramal Pharma since December 2024, incurring a loss at this juncture of about 10,000 crore. Apologies, certainly not 10,000 crore, 10,000 rupees. If it was 10,000 crore, you wouldn't be speaking to us. All right, border levels of 256. Should you exit at this point? Is the question. Time horizon is 1 year. Vaishali?
I would say actually there's really nothing much happening in this stock since quite some time. But now that he's held on for so long, continue holding with a stop loss of 200. Below 200, the trend would further weaken. But this stock needs to move about 230 levels to show some clarity. So right now it's range bound 200 to 230.
So that's with regards to where Piramal Pharma stands. Our next question, Atharva is calling in from Mumbai. Atharva, a very good morning to you. I believe you have a query on LIC.
Yes. Very good morning to you also. So I bought LIC in IPO at 904 3 years back. I'm still holding it, but I don't see much movement in this stock also. But currently it's up now. So should I hold it or sell it?
Okay, I got your point, Atharva. In fact, I was just seeing, and the LIC is right now seeing the highest ever volumes recorded. So it's interesting, and we're also seeing that kind of move in the stock as well on the back of its earnings. Nirav, I'll come to you on this one. What's the view like when it comes to Q4 numbers for LIC, and from a longer term perspective, should we continue to hold or not?
Well, he should continue to hold. As far as the results are concerned, like average kind of results, nothing really great, but then the expectations were so low. So I think everything looks good at this point of time. He should continue to hold.
Question, and this is from my end. We asked somebody earlier as well whether you would pick a general insurance company or a life insurance company at this point. The reason I'm asking is I spoke to a prominent player in the motor insurance space, and what he was pointing out is that you've not seen a third-party insurance premium go up over the last 4 years, but that could be on the cards right now. If that does take place, that would lead to significant improvement in the operational metrics for these general insurance companies. Would you agree, and which one would you buy?
I think GIC fits the bill.
All right. So GIC Re is something to watch out for. The next question is on Tata Chemical, and we've got a question from Advit Sharma, whose borrowed levels of 1,182, currently incurring a loss of about 10,000 rupees or thereabouts, and asking whether to hold, exit or average at this point. Hasn't given us a time frame. So Vaishali, I'm coming to you on the charts. How does it look?
Yes, I think a few of the chemical stocks are now showing signs of improvement, and so is the case with Tata Chemicals. I think you should average it out, because once we get a clarity of the trend, this can go towards 1050, 1100 in times to come. So no harm averaging out at these levels.
Okay, so that's with regards to where Tata Chemicals stands. Our next caller, Ravi, is calling in from Hyderabad. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning. Yeah, my query is on Paradeep Phosphates.
Okay.
I want to know what is a good price to enter into the stock.
Okay.
And I can hold for 1 to 2 years.
Okay, got your query, Ravi. I'll take this up with Vaishali. Vaishali, do you think this is the right time to make an entry in Paradeep Phosphates?
Not really, because the stock has given one-way rally right from 90 to now 162. So ideal level, wait for a dip, maybe at around 140, 145. That would be still better to get.
Okay. All right. Shri is writing in, and when I asked him where he's tuning in from, he says, from my mobile. Thanks so much for that information, Shri. And then he specified that he is traveling abroad. So I hope you're having a great holiday, Shri. He's asking about State Bank of India and looking for the long-term prospects. Nirav, in the banking space, would you say that State Bank of India is something that you should acquire right now? Is it a portfolio stock?
It is a portfolio stock, but it will give slow returns. So I think we would prefer to go with an ICICI Bank.
He's clarified that he's talking about 6 months to a year. So from that perspective, Vaishali, at 798, close to 800 levels, would you buy for that time frame?
I would say so because right now also if you see banking sector is doing very well and compared to that the PSU banks are not yet showing that great movement. But technically I would say it is very well placed and I'm looking at a target of 900, 920 if 1 year is the horizon. 1 year, 1.5 year. Time is difficult to tell, but yes, the next target that we would look at will be 900, 920. So why not?
Okay, all right. So that's view on State Bank of India. Satish is calling us from right here in Navi Mumbai, Panvel. Good morning, Satish. How can we help you today?
Yes, I am holding Bharti Airtel, 7,000 shares at the rate of 1845.
Okay. And what would you like to know?
Yes, sir. Actually, the stock is consolidating, not going the good move. So where should I book this call?
Okay. So did you buy it based on the fundamentals for the long-term growth story?
Yes.
Okay. So
fundamentals for short term. Short term. Okay. So many big houses are betting on the Bharti Airtel telecom story. That's why I bought it.
So you've got a view of less than 1 year or more than 1 year?
My views are around like 1 month.
1 month. Okay. All right. So Vaishali, on the charts then, it's at 1858 and he is making a decent profit because he's bought 7,000 shares. So pretty sizable quantity. Would you book at this point or hold for higher levels?
I would not say book because it is showing a lot of strength. So hold with a relative trailing stop loss and look for a target of 1900, 1920.
Okay, so that's with regards to where Bharti Airtel stands. The next question is from Rohit Uzaitin from Nagpur. He's holding ICICI Lombard General Insurance and took at 1809 a piece. We've already taken Nirav's view on whether he should choose, one should choose LIC or GIC. Vaishali, I'll take this up with you. ICICI General Insurance, what are the charts indicating?
So I think still there is a lot of scope upside. So I would say continue holding. This can go towards 2050 and longer term horizon, I think 2300, 2500. So I think continue holding.
Okay. Himanshu is calling us from Lucknow. Namaskar, Himanshu. What is your question?
Actually, I am holding PNB shares of PNB Bank, 200 shares at the rate of 98.78.
Okay.
And I can hold for maximum for 6 months more.
Okay, understood. All right, so let me get a technical view from Vaishali on your share price. You bought at levels of 98.78, not too far from the current market price. It's just over 100 rupees. Punjab National Bank, would you hold on and what levels would you watch for 6 months?
So my view remains the same that as PSU banks have not participated, PNB is also one of them. And if 6 to 8 months is the time period you're looking at, I think if this sector picks up, this can go towards 125 levels also. So hold, don't be in a hurry.
Okay, hold is the view coming on PNB. Our next question is from Satish, who's holding 300 odd shares of Varun Beverages at a price of 580. He's sitting on a loss of almost 29,000 rupees right now and wants to know whether they should continue to hold or not. Nirav, I'll come to you on this one. Just the other day we were discussing how Campa Cola, is possibly giving a tough competition to Varun Beverages, plus Jubilant Group also acquiring Hindustan Coca-Cola. What's the outlook like for Varun Beverages?
The competitive intensity is quite high. There's been an early onset of monsoon that is also likely to impact the demand. Regional players have become very aggressive, and the larger players, of course, the incumbents have also picked up pace. So I think it's going to be a tough road as far as Varun Beverages is concerned.
Void at this point, book profits if you have them?
Yes, it's better to book out of Varun Beverages.
Okay, all right. Coming back to you, Motherson Sumi is the name of the counter. Actually, I'm not sure if he's talking about Motherson Sumi or Motherson Wiring or Samvardhana. So why don't we talk about both? Vaishali, between the two of these at the current level, Kiran wants to know, which would you buy?
Well, so Samvardhan, Motherson, if you talk about, it's already a good trend, but buying appropriate level would be 135, 140 and look for a target of 170. And the other one that we are talking about is Motherson wiring, that is 59 rupees. So I would say currently it is at a resistance level. If you need to buy this, wait for a dip retracement coming towards 53, 54.
Okay, the next question is from Angad, who's writing in from Indore. He wants to add some stocks from the hospitality sector and wants to know as to which counter can he invest in right now. Nirav, I'll come to you on this one. Any particular stocks that you're looking at and are attractive enough to buy right now in the hospitality space?
We already had Indian hotels in our portfolio, but now we are looking at East India Hotels, EIH, Taj GVK, and APJ Surendra Park Hotels.
Okay, interesting. All right. So it's an interesting space because ultimately the consumption story is being played by a lot of people through these hospitality stocks. So watch them very closely. Angad, hopefully that answers your question. Let's move to the next one though. And we've got Sunena, who's asking a pretty broad, open-ended question, but might still be difficult to answer. This one's for you, Vaishali. 2 lakh rupees she wants to deploy for a period of 1 year. And she's asking for one stock in which she can deploy it.
Well, so as we just spoke about EPAC, I like EPAC technically also. So that could be one of the stocks that you can invest. 370 is the support level, and this can show a target of 450. And if you said 2 years, right? So I think this can go towards even 600 level. So EPAC is one of the stocks. And if you want to go in the front line, then I think capital goods are quite promising. So I would suggest Siemens at these levels.
Okay, the next question is from Milan Sarvaiya, who's writing in from Bengaluru. He wants to buy Triveni turbine at the current market price and wants to know if that's the right thing to do. Nirav, I'll come to you on this one. He wants your opinion specifically. Should he enter Triveni turbines?
I think he should wait for a correction before entering into Triveni turbine because the stock has run up quite well. It's had a very good quarterly results also. So I think the better thing is to wait for some correction, let the stock consolidate, and then he should enter the stock.
Okay, Bhanu Prasad is writing in from Amravati and asking about Hindustan Construction, which he's bought at levels of 42 rupees per share, I believe. 3,000 shares have been bought. The stock is currently trading at 32 rupees. He's looking for a 1 year time frame. Vaishali, on the chart, should he hold on?
So I think it's nearly done with its corrective move and it is surging high. So yes, continue holding or even average out because once you see this stock moving about 36, which is the near-term target resistance, it can go towards 45, 48. So I think to lower the cost and to get quick returns, can average out at these levels.
Okay, all right. It is time now to hit the rapid fire round, and this, Nirav and Vaishali, is where we throw as many questions at you as possible over the course of the next 2 minutes. 2 minutes is what we have, not 15. And I'll start with V. Let's talk about that. Bhupendra wants to know, should he hold on if he's bought a level of 6.8? Vaishali?
Sorry, which one is this? Oh, no. I would say exit.
Okay. All right. The next question is on Persistent Systems. The person has bought 4,500 odd share at the rate of 4,500. Wants to know whether they should hold or exit. Neera, what's the view like?
Hold.
Jubilant Foodworks bought at levels of 670. Jacob from the UAE wants to know, should he hold or exit? Long-term investor, 5 year time frame. Nirav?
Hold.
Mahalakshmi from Hyderabad is holding 54 shares of KI Industries at 3480 a piece. Wants to know as to what should be the next course of action. Vaishali, your view?
KI Industries, I think hold. It will go towards 44.
Okay, Inox Wind, I'm coming back to you on this one. Shamik from Bengaluru wants to know, what level should he enter in, if at all? What's the view?
So Inox Wind currently 195. Enter price should be 180, 170.
Okay, sale is the next counter. Raghunath from Pune wants to know short to medium term prospects. What are the charts indicating, Vaishali?
So short term target is 133. Next target is 143. So these are the levels one can look.
Okay, block in PG Electroplast, it was in focus. We've got Sumit, who's bought at levels of 805. He's wondering, for a time frame of 1 year, should he hold or exit? Neera, what's the view?
Hold.
Okay. Prediction for Tata Motors. Currently purchased 10,000 units at 738. What are the charts indicating, Vaishali?
Continue holding for a target of 800.
Okay. Would you buy any InvITs, Nirav, for the dividend play at all? InvITs? No. Okay.
Okay. IDFC First Bank, 1,400 shares bought at 78 a piece. What are the charts indicating, Vaishali?
I would say shift.
Shift to what?
frontline banks like Axis, ICICI.
Okay, all right. On that note, thank you so much to the both of you for taking the time. Always a pleasure having you on the program. All right, that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching KYC. I'm your host Harsh Saita, and today we're going to look in at Info Edge. It's an interesting company because one, it's an expensive one. Two, it's also a holder in Zomato as well as PB Fintech, two absolutely new age listed companies now by themselves. It derives a third of its market cap from those two companies. But most importantly, what does Info Edge do in terms of core business? And the core business is Naukri.com. So hiring trends, Q4 has been better. Is FY26 going to be even better in terms of hiring trends is what I want to understand. Because if you're trading at the kind of valuation that Naukri is trading at, which is around 75 times 1 year forward price to earnings, then I want to know whether the business underlying is going to do as well in terms of growth. So that's going to be the first piece. And within this hiring, IT is going to be the is the big bulk of the hiring that Naukri generates, and therefore is IT hiring at a risk given AI as well as some of the other trends playing out? In the core IT business, a TCS, Infosys, we're not seeing hiring pick up, even though the Info Edge business does not seem to be very, very affected by it, but one would want to understand whether there is that risk which Info Edge business carries from a hiring perspective. The other piece is other businesses. So the other businesses that it does, the likes of a Jeevan Sathi, 99 Acres, Shiksha. Jeevan Sathi is the matrimony platform, 99 Acres is the real estate platform that it runs, and Shiksha is the educational platform that it runs. Now, when you're looking at profitability in all of these businesses, has not happened. So basically, Naukri is the one business which is profitable, which kind of diverts money into these businesses to ensure that these businesses can continue to run and continue to scale, and hopefully at some point start to generate profitability, core profitability. And that's what all business is about, right? When does that happen is really the question, and whether when that happens, as and when it does, whether that is sustainable or not. Now, the fourth piece of this is, how do you monetize some of these? So maybe they turn profitable at some point, maybe next year. Do you monetize your opportunities at that time? Is there a plan to monetize? Because shareholder value will get unlocked only when you monetize some of these prospects and businesses. And what are those plans? And the last one is with regard to promotion spends. Now, this is more micro than macro. A lot of the margin also depends on how promotion spends go. And what brokerages and analyst community has done this time around is they've reduced the EPS estimates with regard to FY26 and 27, saying that there may be some amount of pressure with regard to margins which are coming through, and some portion of that is because of promotion spends. So I want to understand whether that at all is at risk or not. So all of that and more once we start to analyze Info Edge, and of course we'll speak with management as well. But first off, I want to start by introducing the company itself. At its very core, it's an online classified company. It has a portfolio of brands, and what it does is it services companies as well as individuals to help with regard to marrying both sides with regard to hiring and people. So that's essentially what it does at its very core. That's how it was conceptualized and started. Now it owns a bouquet of brands. So let me talk about the first and the largest one that it owns, which is Naukri. It's an online recruitment platform. This is the first part of the business. The second part of the business is you have a 99 Acres, which is an online real estate platform. The third one is Jeevan Sathi, which is an online matrimonial platform. And fourth one is Shiksha, which is an online educational information services platform. So that's how it runs its business, core business. Outside of this, it also incubates other businesses. So it acts as an investor and has invested in several startups, starting from a Zomato and a PB Fintech, and now runs active portfolios within itself. It also has an AIF where Temasek has a 50% investment in. So it's fascinating how they have pivoted in terms of their business. They started off with core Naukri, and they had the very, very famous founder, Mr. Sanjeev Bikhchandani, who is now worth $3 billion odd. But he incubated this business from scratch, and it's a $0 to $3 billion story for someone like the founder of Info Edge. But that apart, it has investments with carrying value of around 640 odd crores. So all of the cash flow coming in goes into these investments in new age tech companies, including the likes of an AI. Now they have financial investments in some of these companies as well, which are flashing on your screen, but along with it, they have several financial investments in plenty of companies through their AIFs. These are some of the strategic investments that they've done, of course, which are very similar or which help their existing and current businesses. So all of that, plenty to unpack, of course. Now, in terms of the largest ones, The financial investments, the largest ones is a Zomato, where it owns a 12% stake. Zomato is worth 2.2 lakh crore. 12% of that is around 25,000 crore in itself. PB Fintech, which is again worth roughly 10,000 crore or 12.5% stake in PB Fintech. So overall, the value of a PB Fintech holding of Info Edge is around 10,000 odd crore. So Zomato plus PB Fintech at current market value is worth around 35,000 crore within that Info Edge basket. And then of course it runs Info Edge Ventures, which is what I spoke about, the AIF, through which it makes financial investments. So all of that. But let's talk about the core business a little bit more. This is how the recruitment business revenue has been growing. Look at it, 770 crore in FY21. It's gone up to around 1982 crore in FY25. But you look at the last 3 years, right? FY22 to 23, fantastic year. 24, 25, growth not coming through, right? You can see that visible in terms of the numbers. And this is the core business of Info Edge. So this is where I have started to try to understand as to how the risk is getting built in with regard to both valuations. That's one, something you want to understand as well. And two is the fact that can this grow and scale at the rate at which it did in FY22 and FY23. That's really the setup that I will want to look at when it comes to recruitment. Now look at matrimonial now. Largely flat, right, over the last maybe 5 to 6 years. No real traction seen here. Profitability, you'd want to wait and watch and want to understand how this becomes profitable, because currently looking at the numbers doesn't seem like an enthusiastic set. Let's look at property now, the 99 acres business. There too you've seen decentish uptick, right? So this one again chugging along fine. And the last one is education, where you've seen the sharpest uptick in terms of the way in which the business has scaled. But you want to try and understand whether the scalability is followed by profitability or not, because that will hold its key. In terms of the total, the net sales sits at around 2,657 odd crore, but out of that nearly 2,000 crore comes from the Naukri core business. So that's how large Naukri is in terms of contributor to top line. Even in terms of growth rates, Naukri of course hasn't done as well in FY24 and FY25, just an 8% growth in FY24, just a 10% growth in FY25. So the recruitment growth hasn't come through, as you can see on your screen. We saw the numbers in absolute terms. We're looking at the percentage terms now. That growth hasn't kicked through, especially with regard to its most profitable Naukri business. So I want to see whether that business actually starts kicking through in terms of growth. The matrimonial business has done okay in FY25, but of a low base, because FY23 we saw degrowth, mind you. Property has done decently well. We saw how it's been doing, 17% growth on the back of 31 and 24, not bad at all. And last one is with regard to education. You're looking at again a declining growth clip with regard to education, even though we saw a good solid spike in terms of the numbers. Now it's declining. You want to see whether these start making profit, because growth is declining and you want to see whether profitability starts to kick through or not. Now let's quickly talk about the recruitment business in terms of sector wise. What you're seeing is the top line is around 1880 crore, the sector wise revenue picture, versus the 2000 crore number in FY25. We spoke about some of these numbers, and look at the total number. It's 2850 versus 2000. So a large part of the revenue sits in the recruitment solutions business. Now I want to also last off talk about the 99 acres business, the total listings, because some of those also contribute to how the business traction is and how that gets built up. So when you're looking at, okay, so this is the billings by customer type, the different types of customers which contribute to the billings within the recruitment business. This is the recruitment consulting business, contributes around 26%. The tech and IT services 28%. Now, why I have put this up? Because this tech and IT services is at risk given AI. So I want to see whether that is actually at risk, or can the growth clip and the revenue and the billings by customer in terms of percentage continue. That's how the breakup with regard to the 99 acres customer base is. The type of customers: brokers, owners and builders. That's how the split currently sits at. Again, the billing breakdown: brokers, owners and builders. Just for information, of course, as to how the billing as well as the business works with regard to 99 acres. Now let me quickly take it across. I hope we've tried to, as comprehensively as possible, cover the way in which this business works. Let's talk about the metrics that we look at on today's KYC. We look at the income statement, the balance sheet, the cash flow, the shareholding. So those are the four first metrics we look at. Thereafter, we look at street cred, outlook, valuation and street coverage. That's how we'll kind of cover all of the parameters today. Let's start off with the income statement. The top line growth has been reasonable, 21% odd over the last 3 years, FY22 to FY25. That's quite a decent growth clip. EBITDA has gone and done much better because some of the non-profitable businesses are obviously inching towards profitability, and that's why what you are seeing is your EBITDA going up 31% on a compounded annual basis. The net profit may not be the best metric to look at because there are exceptional and one-off items which are always sitting there. Like for example, in FY22, you had the listing of a Zomato where around 2.5% stake was sold by Info Edge as part of the IPO, and some of those proceeds are sitting there in the net profit number as well. So maybe not the best metric to look at, but look at the revenue and the EBITDA. Honestly, it's a cash flow positive business, and therefore the net profit in its core sense may not really matter as much given the kind of gyrations that you will see periodically with regard to the net profit number. Let's look at the balance sheet now and let's try and break this one down. Now, in terms of the balance sheet, it's a clean balance sheet, no equity raises that they do, a large other equity base. Look at the way other equity has gone up because of all the stake sales that they've done. So 13,000 crore was the equity base maybe in FY23. It's currently sitting at 35,000 crore. There's no borrowing on the balance sheet. There's decent amount of cash sitting on the balance sheet. They continue to deploy the free cash. I did mention in some of the ancillary businesses which they run, as well as the fund which they run to incubate other businesses. So that's how the play kind of works with regard to the balance sheet metrics. There's definitely a decent amount of cash and no real equity or debt issues per se. Let's talk about quickly the third metric, the cash flow. Now you look at the way in which cash flow has gone up. It's a free cash flow generating company, mind you. It continues to generate cash at a rapid pace with regard to its platform businesses because the platforms are already set up. What they do is they do a little bit of investing in AI to optimize the platforms better. But outside of that, your cash flow from operations continues to grow at a very healthy clip. So no concern there. We've given that a thumbs up as well. Some of this cash, I did mention, gets invested to their AIF, which invests in new businesses. That's how the net cash flow adds up, and which is why it's currently negative. They also give some amount of dividend to shareholders, which kind of impacts that cash flow number. Let's talk about the balance, let's talk about the shareholding now. When you're looking at the shareholding, around 38% is promoter holding, around 30 to 34% is FII's holding, around 16 to 18% is DII holding, and the balance is public. See, the public holding is very low, which is likely a positive of sorts. But when you're looking at the promoter holding at 38%, 24% is owned by a Sanjeev Bikhchandani alone, who is the founder, and thereafter there are some of the other promoters which also hold stake. So that's how the 38% is held. In terms of when we've seen promoter incubated businesses, we've seen that they hold a larger stake. Promoters hold a larger stake. That's not so here because it's a typical Indian startup which has diluted some of the promoter holding. No concern. Let me put that across in candid terms. But when you have FII and DII holdings which are that large, you might see exits, and therefore you could see some exits happen at some point. So something to look out for, and hence we've been slightly more cautious and given this a neutral. So shareholding out of the way, let's talk about street cred. Now, in terms of the way the stock has performed, 1 month absolutely flat, 6 months down 14 odd %, year to date down around 19 odd %. So some pressure in the very, very short term, but in the 1 year term it's up 16%. So that's a positive. And then you're looking at a 5 year where the stock is up 2.5x. So it's a 2.5 bagger over the last 5 years. Therefore, we've given this a clear thumbs up with regard to street cred as well. Now, I want to delve a little bit into the outlook and what's playing out. One, the company owns around 12.5% in Zomato and PB Fintech. I did mention this. I did the math as well. Around 35,000 crore in market cap currently owned by these two. Typically, you give a holdco discount when you have such large holdings in companies, and therefore even if we were to give a holdco discount, that'll be around 20% odd. That's what average analysts are penciling in terms of holdco discount. The second piece is it leverages on cash made by Naukri to invest in newer businesses. It invests in existing businesses, uses the AIF vehicle to invest in new businesses as well. It's now set up a completely different business with regard to investing. It does that through its AIF, which is the vehicle they use. The recruitment growth is led by niche and adjacent segments, including branding services. You want IT to grow or you want branding to grow? That's really the question, and that's something I will pose to the management as well. The A&P spend has increased, which is likely a concern and might impact margins. You have hiring activity, which remains subdued at this point, and therefore likely if IT hiring activity were to pick up, you could see a positive, but at this point, it's still weak. Look at expansion into new towns and customer additions. That's what's driving growth. It's not IT revenue or hiring. It's expansion into new towns which is driving growth. In property, you look at billing growth, which has accelerated in Q4. Can that sustain? Can profitability as well come through? And in terms of cash EBITDA, the segment has improved given the strong billing. So that's how we kind of sum it up with regard to what the outlook is. Let's talk about valuations now. In terms of EPS, FY26 average analyst estimates 19 rupees of EPS, FY27 23 rupees of EPS. So you are seeing the price to earning multiple shrink quickly, but as per Bloomberg, the competition average is 31 times. If I remove Zomato and PB Fintech from the market cap to adjust the price to earnings ratio, that adjusted price to earnings ratio will also be maybe around 50 times odd. So therefore, you will see this as slightly expensive compared to competition, maybe much more than slightly expensive compared to competition, and therefore we've given this a thumbs down, given that growth does not seem to be very, very strong like some of the other startups. We see startups growing at 20, 30, 40%. This one is growing somewhere at mid-teens. So something to take care of. Last off, with regard to analyst recommendations, there are 15 buy calls, 5 hold calls, 1 sell call, potential return being 14%. There is some bit of caution. We'll give this a neutral as well. To sum it all up, let's look at the rating. It stacks up as you can see on your screen. There you go. So 3.5 with regard to the first 4 metrics, and thereafter you have 5.5 as the total of our on our KYC rating with regard to an info edge. That's how it stacks up. Now let's quickly go across. We spoke with the management earlier. I spoke to Chintan Thakkar, who's the Director and Chief Financial Officer of InfoEdge, and I started off by understanding the risks which are getting priced in for FY26 from a growth perspective. Listen in to that entire conversation. So first off, I want to start off with Naukri. Growth in Q4 looks decent, but can this sustain is really the question. When I'm looking at the numbers, maybe over the last 3 years or so, the growth hasn't really seen a significant uptick. Do you see that in FY26, and what's the reason for that? Give us some perspective.
So first of all, thank you very much for having me.
It's a pleasure.
going straight on the questions on the recruitment solutions. If you look at 3 years as the time frame, then we were coming out of COVID, and I think there was this great surge that happened, right? And in that process, what happened is that there was a level of over hiring that happened. So that's why in the second year we've seen that kind of the growth kind of got steady over there, right? And it was flattish. If you really look at this year, right? This year in FY25. We have seen that Q1, was little kind of, it's coming out of that, the flattish type of a year that we had, in FY24. And we had said that, look, it seems that we are coming out of that U-shaped recovery, right? And that's what happened. So Q1, the Q2 was better than Q1, Q3 was better than Q2, and Q4 seems to be better than, Q3. So I think it looks like that it's an upward trajectory. And when I look at the numbers, and we can divide it in terms of the verticals, in terms of geography, functions, yes, there would be some pockets of higher growth and some would be little lower growth. But on the whole, it looks like that it's a very secular trend. Also, what we are hearing from the ground, is that I think there seems to be a little bit of momentum continuing over there. We also seem to be executing much better because of the adoption of AI that we have done in our products as well, in terms of how our algorithms are working, how our matching platforms are working, right? So when you look at, let's say, JobSpeak Index, as compared to that, we seem to be performing, a bit better. And I think a lot to give credit to how the product and the engineering people and the sales guys have kind of really performed. So we seem to be doing little better. I really hope. Of course, in today's world, I think every day and every week could be very different, and the whole business environment seems to be so volatile. It keeps changing. Business confidence keeps changing. This is one tweet or one news item.
Sure.
I think keeping that and all those external factors which can impact us. Other than that, that it looks like that it's a reasonably that yes, Q1 to Q2 to Q3 to Q4 we seem to be ramping up. And maybe we should be able to hold on to this type of growth. Certainly, from our side, we would want to achieve that as a part of our goal for next year.
Sure. So, with regard to IT in particular, and I'll talk about the recruitment business first. Let me take that out of the way. IT, there still seems to be some amount of momentum which needs to get built up, because that doesn't seem to be playing through. What's the sense like on ground with regard to IT? And do you believe that there is a systemic challenge that IT recruitment may be on the wane for maybe the medium term? Is that a risk that you're dealing with, given the AI, given the AI risk that IT employees run?
So first of all, I need to put the IT in perspective, because when we say IT is it's a very broader kind of a spectrum, right?
Sure.
So IT has IT services, the export-oriented IT services company. Some of them are listed, and a lot of the narrative gets built on the basis of what those guys are really talking about in the market. But then there are product companies, there are PPOs, and there are GCCs, right? So there are some pockets where it seems to be doing well. GCC is certainly a brighter spot, than what the IT services companies are. So I think on the overall trend basis, we think that there are certain pockets in IT where it seems to be an opportunity so far as our business is concerned. I also want to kind of highlight that, like I said in my earlier comment, that look, even if there is no gross hiring happening in IT services, there is attrition. Right? And the attrition is also because of GCC coming and triggering some of those attrition. Some of these startup companies that gets funded, or some of the other tech-oriented manufacturing that seems to be setting up in the country, that kind of triggers some of the attrition. And when there's an attrition, there is at least a replacement. So for us, whether it's hiring because of the overall growth and expansion, or it is just to replace the existing account, for us it is still a growth. So in that sense, I think we need to also take into account that IT services company, their utilization rates are at its peak, and they seem to be doing a lot of replacement hiring. That's certainly happening. So that's helping our business. That trend may continue. The AI trend, has also there are two sides of the spectrum. One is that the lower value items, which is mostly like around customer support services and some of those type of segments, that could be an impact over there. But at the higher end, the guys who are involved in data science and and machine learning and high-end engineering. I think there the demand is far outweighed than the supply is. So I think again it's a mixed bag over there. Yeah.
Sure. So point taken. I want to therefore talk about now other businesses. What's the profitability outlook there? Because while Naukri continues to support those businesses well, at some point you'll want them to turn a corner, right? That doesn't seem to be happening.
Well, I think that we have arrived at that point. So if you look at Q4 numbers on the top line on billing, all the four businesses have kind of clicked good amount of growth. So overall, we have grown. Billing growth is about 19%, which is just not about Naukri, but even if you look at 99 acres, you look at Jeevan Sathi, Shiksha, I think so everybody seems to be growing. And probably this is the first time that we are seeing that all four cylinders are are firing, and they all seem to be growing profitably. So even if you look at from the cash from operations for each of these businesses, which sometimes when you just look at the PBT, which is PBT is when looking at top line as revenue, which is like looking in the in the rearview mirror. But when you look at the billing and you look at the expenses, you realize that there is a cash profit that's got generated. So non-recruitment business taken together, it's a cash positive this quarter. And when we look at each of the businesses, like Jeevan Sathi, which used to burn cash, which we have seen a decline in that. Even 99 acres, I think for the year. So both are kind of close to EBITDA neutral. And not only that, for in real estate business, 99 acres, we seem to be also gaining market share. So it's just not about that we are growing efficient, but also we seem to be growing in terms of.
Okay, so that's of course the conversation we had with Info Edge, but completely out of time on this edition of KYC. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets continue to trade in a range bound. Nifty trades below 24,800. Sensex trades flat. ITC tumbles over 4% as British American Tobacco offloads a 2.5% stake, accounting to capital worth over 12,000 crore rupees. Earnings candidate LIC is gaining in trade as company clocks over 30% growth in its March quarter. NSE valuations hit a huge 5.8 lakh crore in private markets ahead of expected SEBI nod for IPO. Well, that's an NDTV Profit exclusive for you. And it's raining exclusive. Sources tell your channel that Elon Musk's Starlink is poised to kick off phase 1 operations in India with a satellite capacity of 600 to 700 Gbps. Well, hello and welcome to Markets at 12. I'm Anushi Vakharia. Let's take a quick look at how the markets are faring in trade currently. Now, in terms of where the benchmark indices are holding up, we are looking cuts of about 0.26% in Nifty 50. Well, in the last half an hour or 1 hour, so markets have been just seeing in a choppy trade, range-bound kind of moves is what we are looking at. If you talk about the Nifty Bank, now flattish moves over there as well. Almost in the red, seeing flat cuts is what we are looking at. Let's pull out the point contribution table, in fact, for Nifty 50 to see where the action is unpacking. So something like Bharti Airtel and Infosys is trading in green. ICICI Bank, BEL, another counter which is up 1% in trade today, while counters like ITC, Reliance Industries are in pressure. Now ITC is also in focus on the back of British American Tobacco offloading 2.5% of its stake, while we are seeing some pressure in counters like HDFC Bank, M&M as well. So that's as far as where the Nifty 50 point contribution table is. In fact, let's also look at the Nifty 50 heat map to see which are the top gainers and the top losers. So right at the top, what we are seeing is ITC, Bajaj Auto. They are right at the bottom of the list, while Bharat Electronics, the top gainer for today, up over 2% in trade. HDFC Life and Bharti Airtel seeing gains of around 0.8 to 0.9%. But if you talk about the sectors today, now where the action is in terms of sectors, if Nifty Defense, right at the top, gains of over 1% is what we are looking at. Like last week, it had cooled off for some of the gains that we had seen after the kind of rally which had been happening over the past few sessions. But again, it's in trade, it's back in action today. While something Nifty FMCG is seeing cuts of over 1%. But let's take LIC in focus. We had a conversation with Siddharth Mohanty, CEO and MD of Life Insurance Corporation of India. Let's listen into that.
It was a good year on a whole, and I'm told that you're retiring next week and you're leaving on a high, highest ever VNB margins, higher individual premiums, highest bonus to policyholders. How do you sum up the fourth quarter as a whole?
You see, the impact actually post product regulation change, it has impacted our Q3 last year. Yeah. But somehow we regained in Q4, actually towards last part, towards March, not in January, February. February some growth was there, but March we... So that made some, whatever loss we made, that we could make up during Q4.
Sir, and if you look at the APE growth, for the first half it was 26% odd. And full year we have seen, on a flattish note we are ending. How do you see APE growth from here on, and what do you see as the key strengths of LIC which will drive that APE growth going into FY26?
You see, if you see entire industry, EV has been affected 24-25. But for us, somehow we have shown some good growth, 6.45% growth in EV. So current year 26, I am confident because the way we have taken certain strategies, further growth will be there in EV.
And how about the APE growth, premium?
AP actually last year AP was just flat because of, as I told, product regulation changes and all those things. Our people, they take time to adjust. But current year we have particularly focused on WRP and AP. That is our target, not a total premium like single, non-single, no. WRP AP. So my sense is in current year there will be good growth in AP.
So while non-par has been good for you, you've been able to take it up as part of your product profile to 27%. Par is something which is a challenging one because of the regulatory changes we saw in the second half of the year. How do you see par product growth, especially given the fact that the ticket size have gone up for par products? So how do you see the growth coming in for par products?
You see, par we still maintain more than 72% because 27.69 is our non-par share and 72.31% is par share. And par, you see, yesterday we declared 56,000 crore plus bonus.
Yes, highest ever actually.
Highest ever bonus that will go to par policyholders.
Yes.
So my sense is par product also will launch, which will be attractive, and the policyholder will decide whether to take non-par or par, because both products have their own inherent characters which will attract policyholders. Benefits are there. So par policy also will maintain our in total basket, though non-par will grow, but will not ignore par.
Sir, we've been talking for a couple of years, and every year when we speak, you talk about how you are focusing on product innovation and product mix change towards non-par so that your VNB margins go up. We're ending the year at 17.6% in VNB margin. How do you see that margin going up from here? And what is the kind of strategy that you will have for non-par? Because you have always said that you want to reach out to the private players who have 20 to 25% VNB margin, and that's a goal ultimately which LIC has. So what is the game plan that you have here?
You see, margin last year 23-24 we gave a 16.8%. So now 80 basis points growth is there, 17.6. And the way current year strategy already we have adopted, initiated work is going on. Further growth will be there, and I am very much confident at least 2-3% growth will be there in the current year margin, VNB margin.
Do you see FY26 you ending with a VNB margin of 20%?
Around that is our objective.
And that would be led with more non-par products coming into play?
Both non-par will be there, of course, non-par will be there.
One of the things which is coming out is the kind of distribution network that you have been able to put. You have around more than 50% people more than 5 years into the play. How is distribution playing a bigger role now, given that you have challenges coming from the regulatory front with respect to ticket size of par policies have to be increased and those things coming into play?
No, it takes actually time, because any change, because that will take time, because our field force they have to adjust. And already that is over. Last 6 months you see our field force and some impact on business also is there. But current year they have adjusted, and ticket size, any change, our agents are well prepared and they will sell good policies.
And they should be able to come back to normalized level of selling?
Normally, yes.
And that will happen in FY26?
Absolutely, absolutely.
You said that non-par is now roughly around 28%, 27.6%. What should be the optimal mix for par and non-par?
You see, that depends on how we promote our non-par product, but there will be good mix and some growth will be there. Further, some growth will be there in non-par.
And because that's the one which is driving your margin, and you said your driving margins have to reach to 20 plus levels. So is the aggressive push that we have seen in the last 2-3 years under your leadership of pushing more non-par so that we get a better VNB margin, that's going to continue?
You see, though margin, of course, growth in margin will be focused, but at the same time, growth in bonus, as we demonstrated 56,000 crore plus, both to make that balance, it is a very difficult, challenging task. But I am thankful to enter my team, actuarial people, everything. So we will maintain both. We will demonstrate growth in margin. We will also demonstrate growth in bonus also. So both par as well as non-par products, focus will be on both, but there will have balance mix.
As the industry leader, sir, we saw the biggest disruption in par products because of the surrender value regulations which came in. How did you navigate through that? Because that would be a good learning for industry of how the leader managed a rehaul of the entire product portfolio and relaunching it and coming back.
You see, last 6 months, because regulation came in October, we do not experience any such adverse thing in surrender. And my sense is because surrender, in any case, surrender is lost to the policyholder. And surrender defeats the purpose of insurance. So even if surrender regulation has changed, first year more surrender value you will get, but you will get still less whatever you have paid. So you are a loser. And over and above, you are losing your risk also. There will be no risk because you are out of contract. So my sense is this regulation will have very, very minimum impact or no impact, because it is actually designed for people who may be under stress. Because somebody has taken a policy under some circumstances, but certainly something, some family emergency, medical emergency, something happens, he wants to withdraw, he does not have any other source. So he wants to surrender that policy. Earlier that was not there, now that is there. So that category of people will be very, very negligible, very minimal, and unless there is very much urgency, nobody will withdraw policy.
And you see this impact having very minimal going into FY26 as all your policies have been redesigned accordingly.
Yes.
How do you, what is the kind of strategy that you're going to have for PAR policies going forward? Because this is a policy which is more in term insurance kind of nature, and as you said, only under stress people will surrender. But are there policy product gaps for you in the PAR segment?
PAR also will also depending upon the feedback from market, because we take market feedback from our agents, customers, we design product in both segments, non-PAR as well as PAR. And my sense is, since recently we gave this bonus 56,000 crore, it is very much attractive. PAR policyholders also get very high return. And if we design good product in PAR segment also, that will get traction in the market. So my sense is both PAR as well as non-PAR, both will continue.
Sir, if I look at the market share, there has been a slight decline in market share on a year-to-year basis, and it could be understandable because the industry players are increasing and the pool is also increasing. How do you look at your market share? Will there be a time where LIC will look at, say that I will have to maintain my market share at the cost of margins, or I will continue to grow and let the market grow as a whole?
You see, market share is a function of growth. The rate at which smaller players grow, for me, having a large base, it will be challenging. Having said that, we have our internal strategy. We cannot go below certain share in the market. That is our internal thing. But what we are focusing now is profitable growth. Post-listing growth over growth, that we are demonstrating profitable. So that is our focus area. So that in coming days you will get more profit, more bonus for policyholders, but at the same time market share at certain level will maintain.
Sir, if I look at your embedded value, and you said that your embedded value grew at around 6.8% this year, is that the comfortable level of growth that you're looking for your embedded value going forward? Because you've been growing at a much higher rate. Actually,
it will further grow. And my sense is it will go further in the current year. Rate will be higher.
And how do you look at the market risk which is there, or economic risk which is there in today?
All these are embedded. Our people calculate everything while designing product, everything. So that will factor into.
In the last 1 year, sir, your exposure to the rural markets have increased with respect to distribution. How do you see product sales or product adaptability in that market, and your entire online digital framework of Ananda which you had launched, how is that expanding?
You see, if you see rural market particularly, I will just mention here, we have launched one Bima Sakhi, Women Empowerment Mahila Career Agent Scheme by Honorable Prime Minister on December 9th last.
Yeah.
And if you see the data, after Bima Sakhi launch, share of female insurance has gone up from 28% to 34% plus. And that is mostly from rural areas. And our objective for rural area, because we want to cover all rural panchayats. Every panchayat we should have at least one Bima Sakhi, so that to achieve the ultimate objective of insurance for all by 2047. What is the vision of Honorable Prime Minister, Government of India? We are working in that direction. So rural focus will be there for LIC.
And what about ULIP, sir? Because
ULIP, you see
that 166% growth,
yes,
which is a huge
ULIP last quarter, you see, we have shown substantial growth. That will continue because ULIP investors are different segment. They watch market, they take their own decision, they take their own risk, and that segment is to grow.
And you're going to bring in more product in the ULIP category?
It depends, depending upon our experience and feedback. Definitely some products will come in different segments, not only ULIP but other segments also.
Sir, your investments have given decent gains this year, and that also helped both policyholders and shareholders in terms of dividend and in terms of bonus which you have provided. What is the kind of investment that you are looking for FY26 into the markets?
Actually, it depends upon how market moves.
And what's your take on the market then? Let me ask you that way.
We are, you see, we are, as you know, contrarian investor. So even if market goes down, we also invest in good scripts because that ultimately gains for all our policyholders. And current year, definitely last year experience, current year, let us see how market is moving. As per that, LIC will also take its action.
Sir, my final question, and I'm running out of time here. So, bank assurance is something which you've been focusing on, and you have doubled the contribution coming from bank assurance. How do you see bank assurance channel for you? And do you see, there's always this reports and talks about there could be some regulations that will come in for bank assurance. What is your view on it?
You see, last year our banca channel did extraordinarily well. Last year more than 5%, 5.6% share of banca premium to total premium. And current year definitely further growth will be there from that channel. Banca channel will give further growth. So far as regulation and other things are concerned, those will not affect LIC because our banca channel is very disciplined and very. So I don't find any challenge for LIC to promote any banca product.
But do you are you looking at some regulations coming from the regulator for the banca channel?
There may be something. Government or regulator may decide something that when it comes we will be able to know.
Sir, as you leave on a very high note, to sum it up, VNB at the highest margin, highest bonus for the shareholders, highest single premium that you have done. You are also telling us that the VNB margins will head higher from here.
Yes.
And also the growth, APE growth will come back once this entire thing settles down, right?
Absolutely, absolutely.
Well, that was the management of LIC and their outlook for FY26. The stock currently roaring in trade today, up over 7% right now. But let's shift focus to another interesting company, and we are talking about Royal Orchid Hotels. In fact, to talk more about the outlook and the strategy, we're joined in by Chandar K. Balaji, the chairman and managing director of the company. Along with me is Mahima Vachrajani, who tracks the space closely. Mahima, now if you're talking about the fourth quarter results, we're seeing a revenue growth of 13%, margins stood at 23%, and net profit was down about 21%. Mr. Balaji, I want to understand from you your assessment of the fourth quarter and how FY25 was a year for you.
No, the year has been pretty good for us. Only thing is that there have been some ups and downs because we've taken up a lot of renovation work, particularly in the last quarter, because it was long overdue. So the main flagship hotel, we've taken up a lot of renovation work, which is, of course, not really capex or so. So we have done that, and I think it's going to give us good results in the future. I think most of the work is nearing completion now, and we've taken up work in Metropole Hotel, we've taken up work in our flagship Royal Orchid Hotel. And of course, what we are also doing is we have added a lot of team members to fuel our support our growth. You see, we added 14 hotels in the last 1 year, about almost 963 keys last year. And this year we suppose probably another doubling that number to about 30 hotels So for that, we have to hire a lot of new people, which have been hired in the last quarter or during the last 1 year or last half year. We've added that. So that is just to prepare ourselves for the future growth. And I think in the times to come, things should be really looking up.
Okay, just a quick update before I ask the next question to Mr. Baji. Something that's flashing on your screen, the ITC block deal has been completed. The expectation was that it will be around 11,600 odd crores, which has now come at around 12,100 crores. So, our sources reported earlier as well, that the block deal has been upsized and the net proceeds will be used to extend share buyback by around 200 million euros, and this is from the Bloomberg that we are getting in. British Tobacco overall has seen a block deal of around 12,100 odd crores. That's something that is flashing on the screen right now as well. All right, shifting focus again back to Royal Orchid. Mr. Baji, hi, Mahima also joining in. Just wanted to get a sense of how the key operational metrics are for this particular quarter. What is the occupancy rate at right now? What has the total RevPAR been like? And overall, what has the ARR been like?
See, in our own hotels, we have done an ARR of 5,700 approximately against about 5,200 or so, so a growth of about 9%. And in terms of occupancy in the JLO, our own hotels have been flat, but the RevPAR has gone up by about 6%. But in the case of our managed hotels, ARRs have gone up by 12% and occupancies has gone up by 2%. So there's a robust growth as far as both the segments are concerned. We have a large number of managed hotels, and of course the managed hotels, because they're smaller hotels and not in metro cities, the ARRs are slightly lower than in the we call it JLO, main joint venture, leased and owned hotels. So there the ARRs are slightly higher. But I think both have grown. RevPARs have grown both in both the things, and which is the key metrics you really measure.
That's as far as where the key operational numbers are concerned. Mr. Balji, coming to your first point, you mentioned about there being a lot of cost incurred for future growth, which is there. Now, considering FY26, now that we are entering in FY26, what's your outlook in terms of some of these costs? Are they expected to stabilize? When are we looking at signs of normalization in terms of some of these key costs which are there? What's your outlook in terms of margins as well as revenue growth as well?
See, I would say that now only thing our new hotel is going to open, which will open probably in the month of June. And this is a 300-room hotel or a 291-room hotel at the T2 terminal in Bombay. So that will stabilize in the Q2, and because it's just going to open in June, sometime in the June. So July, August, September, it should stabilize. So real, bump up will come. Will come in the month of October onwards. But that'll be a substantial jump because that hotel will be a game changer for our company. And of course, the other projects are likely to be completed, like our resort in Bangalore. The expansion is going on. Renovation in Royal Orchid is going on. These are likely to be completed within this next 1 month. So I think the next quarter should see better results. That is starting from July onwards. We should see better results from these existing hotels also.
Your quick answer on something that you had mentioned in your call last time, that is you were planning to look for management contracts in Sri Lanka as well as Nepal. Any update there?
Yes, we are operating a hotel in Sri Lanka and we're also operating a hotel in Nepal. And but of course, Sri Lanka and Nepal, their management contracts, they're not very large properties, but we are looking at expansion. There are discussions going on for some other contracts also. And hopefully this year, we should see significant expansion in these two markets also.
Okay, thank you, Mr. Balji, for joining us and sharing your outlook for Royal Orchids for FY26 and how the quarter and the year had gone by. But with that, we conclude the bulletin with a captivating campaign that is sweeping through social media. Check out this sponsored feature.
Today, the mystery gripping the nation just took a shocking new twist. And this time, it happened right in the heart of Bengaluru. In what commuters are calling straight out of a thriller, a digital billboard suddenly glitched and just for a few seconds revealed a flickering QR code. Then, poof, it vanished. But not before one sharp-eyed commuter stuck in traffic captured it on video. She scanned the code and it led to a website that has now gone viral. The site, a glowing red envelope. The message, this envelope delivers destinies. And at its center, a countdown timer ticking down to 12 p.m. tomorrow. But the internet is exploding with theories. This isn't an isolated event, folks. It all began days ago. A mysterious wrap midair on a flight.
सुनो ना भाई, बहुत सारा पैसा है बनाना, अपनी सोई हुई किस्मत को है जगाना। लाइफ में मिलता है सिर्फ एक बार ये चांस। Learn how to make your money dance.
A man pointing passengers to a cryptic Instagram page.
अगर करना चाहते हो अपनी डेस्टिनी से डील, find on Instagram the red envelope seal. होगा वही wealth mystery reveal.
Then a woman in red satin handing out red envelopes to business travelers across India. Inside each envelope, QR codes that vanish instantly after being seen, leaving behind no data, just questions. The Instagram page tied to the mystery red.envelope.society now has over 250,000 followers with millions glued to every new post, every new clue. Will the red envelope mystery finally be solved tomorrow at noon? Or is this just the beginning of a much deeper rabbit hole? One thing's for sure, we are all watching. Stay with us, the truth may be closer than you think.
That's huge! That is a biggie! It's out of there!
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. An interesting day of trade. I am Hiral Tatia, with me is Puneet Javeri. Puneet, clearly, 24,776 is what Nifty 50 is trading at. In the last 10 trading sessions, it's 25,000, which is becoming a crucial resistance level. We are seeing that up and down, but we're not really decisively able to close that 25,000 mark. And usually, whenever you see at that rounded off psychological level, that always becomes a concerning point, and that's exactly what you're seeing right now, 0.2% lower in terms of Nifty 50. Let's quickly pull up Bank Nifty on the screens as well and see what that is doing in trade, and then it'll be followed by what sectoral indices are looking like. Bank Nifty also absolutely flat right now. What's leading? The defense pack continues to outshine. But currently, if you see in terms of other sectors, media is on a front footing as well. Energy is up in trade. PSU Bank Index trading in the positive. IT, surprisingly, pretty much on the borderline, followed by a real estate. But what's drooling under pressure is Nifty FMCG. That stock is down in trade, and it's mainly ITC which is pulling FMCG lower on the back of the block that has happened. Auto is also down around 0.5 to 0.6%. Metals also trading under pressure. So that's with regards to what the sectoral picture is looking like. Let's quickly look at the heat map in terms of Nifty 50 counters, and then we'll see the contributors. BEL, I mean, that stock has been on a bull run over the last couple of trading sessions. HDFC Life, in fact, your life insurance players apparently are making some bit of a comeback. So I think that's going to be a story that we will be looking at as well pretty closely. Bajaj Finance, Bharti Airtel in the positive as well. Adani Ports trading in the positive, followed by Tata Motors as well as Infosys. There you go. We said ITC, 3% downtake. Bajaj Auto, Nestle, Tata Consumers, Grasim, M&M. These are a few of the ones which have been trading under pressure. Again, today is the 28th as well, so the entire auto pack also has been in focus, because in the next 2 to 3 days, you will have the auto sales numbers that will trickle in for the month of May. So that's going to be a space we should be watching out for pretty closely. Let's also pull up the VIX and see what the VIX is doing in trade. And because categorically, it's stayed elevated above 15. There you go. I mean, it's still at around 18.36. So there is that cautiousness that is prevailing in the markets as well. And I think that should be a cue why we are not able to cross that 24,000 mark yet again as well. But a lot of individual stock-specific action is what you're witnessing, Puneet.
Well, definitely, and let's pull up, see where the mid-cap and the small-cap index is as well. We've largely seen these two indexes actually outperform the Nifty, and today as well, up in the green as of now, while the Nifty is down in red by 37 points. Let's also look at the small cap and then move on to the BSE 500 as well, because we've again seen a lot of stocks react to news flows as well as earnings. Currently, MMTC is one of them. ITI also up almost 8%, continuing its positive momentum from yesterday. While we are seeing LIC, on the earnings as well, reacting positively, up almost 6.7%. And we were just flashing, it's seeing the highest volume since February of 2024. On the loser side, TTA Prestige continuing its losing momentum since yesterday. The results came largely in the last hour of trade and was impacted because of that. Bosch as well, while the earnings were largely okay, it wasn't something to write home about, but company did report just about a percentage growth in profits. And that's largely because of a deferred tax, but some more commentary for FY26 will be something to watch out about. I also just wanted to pull up a couple of stocks in the EMS basket, see where EPAC is doing, because company reported results yesterday, really strong number. They met their guidance for FY26. It's definitely come down though from the day's high of 405. And just want to pull up Avalon Technologies as well. The other one that's reacting very actively in trade today. There you go, almost 8.5%. And also let's look at a couple of defense names. Let's bring up DCX. The results weren't that great for the company yesterday. EBITDA is also down more than 20% and down 6.2%. On the other side, something like an Apollo Micro, that is seeing a very sudden spike over the last hour. And there you go, almost up 15% now. Results came a couple of days ago as well. Let's also welcome Gaurang Shah, who's the head investment strategist at Georgia Financial Services. Gaurang, thanks so much for joining in. A very good afternoon to you. Again, we've seen the mid caps and the small cap actually outperform the benchmark indices, and it's been a continuous momentum. Do you expect this to continue, largely backed by a lot of individual earnings from the mid cap and the small cap space?
Thanks so much, Puneet, for having me on the show. Thank you, and good afternoon to all of y'all. So, our sense at Geojit is that there will definitely be a catch-up as far as the earnings is concerned. But the concentration of that catch-up, according to our sense, is going to be more in the mid-cap universe rather than the small-cap universe. And the fact of the matter is also that there are times when you have outperformance from the broader indices, mid cap and small cap. But when it comes to a downward reaction, the first casualty that you see is the small cap, followed by mid cap, and then the large cap. So I would urge viewers of NDTV Profit to be focusing on mid cap first, and in that mid cap universe, look at sectors rather than betting on anything and everything, because that's not how it's going to work out. So mid cap IT looks good. Mid cap banking and NBFC stock look good. Mid cap cement, power, defense related stocks in the mid cap looks quite attractive. And also mid cap pharma. I think that would be the sectorial allocation as far as mid cap is concerned.
Right, so that's the overtake in terms of sectors that will look attractive from the broader markets as well, and a lot of interesting ones that Gaurang has mentioned. But moving on, one stock that is pulling your FMCG sector lower right now is ITC. 3% kind of cuts coming in on this space, and we just have the detail. ITC. 3% kind of cuts coming in on this space, and we just have the details that have come in with regards to ITC BAT stake sale, which is British American Tobacco. My colleague Mahima is standing by with us to tell us more. Mahima, from what the details have come out with regards to the block that has happened, what's interesting is the expectation that Nuvama had is where BAT would get around 11,500 odd crores, whereas the number has come in much higher at around 12,100 odd crores. If you could contextualize this for us in terms of the expectation and what has happened and what's the next step now.
Right, so as you rightly mentioned, the block for ITC, that BAT selling its stake in ITC has now been completed. The expectations were that it will come at around 11,600 odd crores. Then there were sources telling that this might, be upsized and could also go to around 15,000 odd crores. But the final block deal has taken place at around 12,100 odd crores. In terms of this proceeds, the ITC block will be used to extend share buyback of around 200 million pounds. Now, in terms of the details with regards to this particular block deal, the price deal was set at 400 per share, which was a 7.8% discount from its yesterday's closing price. The current stake of BAT in ITC is roughly 25.4 odd crores, and even in 2024, BAT had sold around 3.4% stake in the company for around 17,400 odd crores. Now, inflows due to this stake sale, where IIFL Capital expects inflow of around $96 million owing to this particular stake sale. The stake sale will lead to increase in free float adjustment in the Nifty as well as the Sensex. And Nifty related passive flows will see the overall action on 27th of June, and Sensex will see this on June 20th. Now, Nuvama's expectation related to this particular stake sale, post the stake sale, they're expecting ITC stock to bounce back post the deal. A bit negative overhang in terms of a structural change being considering the entire stake sale, and this could have some kind of overhang, but the stock might bounce back. They do not expect BAT to reduce stake in ITC hotels for the next 2 to 3 quarters is what they're saying, because of the luxury exposure that this particular company has overall in the hospitality space. Lastly, in terms of ITC business, they expect margins of ITC FMCG business to start recovering from Q2 FY26. They are also expecting margins to recover in the paper business as well. They're expecting second half of FY26 to be much better than that of first half, and in the cigarette business, decent volume growth is expected, though less than that of Godfrey Phillips. Lastly, how will this entire thing change in terms of the governance for ITC? BAT will not be able to block any kind of special resolution going forward, because their stakes will come down below that 22% threshold, and before this, BAT has only once blocked special resolution for ITC. So this is the overall view as to what has happened with ITC with regards to where the block deal is concerned.
Mahima, just stay with us very quickly. One of the things that you mentioned is that BAT will not be able to block a special resolution. So what is the threshold for that? Because currently the assumption is that the stake will come down to around 23.14. Just correct me if I'm wrong.
Right, so because the block has been upsized, the expectations were that the selling would likely be around 2.3%, but that has been now increased. So we'll have to wait and watch out for as to how much of a percentage stake sale has happened. And generally beyond, below the 22% mark, they will not be able to block any kind of special resolution that ITC wants to take. So that's the overall update. So if it's below the 22% threshold, they will not be able to take the block the special resolution.
Understood. Thank you, Mahima, for that clarification as well. In fact, Gaurang, let me come to you. British American Tobacco, how big an overhang will this be in terms of further stake sales? And how are you looking at this entire aspect, taking into consideration that the stock is under pressure? Because this does lead to some bit of a free float adjustment as well on Nifty and Sensex, from a stake sale perspective.
So, Hiral, this is not the first time that any large promoter or a large investor has sold out and exited a particular company. We saw yesterday Gangwal family. I think it was the fourth instance where the exit happened. Before that, we also heard from companies like Whirlpool, a parent company, exiting. So this exit is not going to impact the working of the company. It may have a momentarily hangover in terms of maybe a day or two. Does this impact the working of these companies where the stake sale is happening? I don't think so. In fact, I would look at it from the other side. That is, a glass is half full. If somebody is selling it, then on the flip side, somebody is buying it, Hiral. So I would not read too much into it. Since we are discussing, it's prudent to give a disclosure that we have a positive fundamental coverage on ITC from a long-term point of view.
Got that view, Gaurang. But another stock that's in focus is LIC on the back of its Q4 earnings, which saw big, while there was the VNB margins which was down, the stock is reacting very positively. Let's get in Harsh to bring us some more perspective of what's giving that boost to LIC today. Harsh.
Well, it's clearly the margin number, Puneet, which seems to be positive. When you're looking at it over a YOY basis, margins have improved around 150 basis points. So a better margin picture that we are seeing. Also, the company guided in the interview to NDTV Profit for a further margin expansion of around 50 basis points. So a better margin picture that we are seeing. Also, the company guided in the interview to NDTV Profit for a further margin expansion of around 200 to 300 basis points. So that's the other key piece, that margins will continue to expand in an otherwise difficult margin environment. Non-par is the larger focus. So while top line growth hasn't really come through, or APE growth hasn't really come through, that's also in part due to surrender value, and likely that will reverse in FY26. That's the other positive guidance that's come out as part of the NDTV Profit interview. The couple of other pieces is that there's going to be a larger focus on profitability, obviously, because of that margin outlook. And margins have done very well for themselves over the last 3 years since its listing in May of 2021. LIC has really doubled down with regard to the way margin trajectory has played out for the stock. I apologize, since its listing in May of 2022. When overall you're looking at the valuation picture as well, around 7.7 to 7.8 lakh crore in terms of embedded value that LIC is currently worth. You're seeing market capitalization which is a shy short of 6 lakh crore, and therefore there is plenty of scope for a re-rating on the embedded value if growth were to kick through where LIC is concerned. All of that positivity playing out on the stock, as well as the way analysts are viewing it. What analysts are saying is, while it's a subdued result, the target prices aren't revised at all. They hold, and there's a very strong upside to how they see LIC playing out.
Well, thank you for that, Harsh. Gaurang, in terms of LIC as well as what's happening in the insurance space, we've seen a sustained amount of volatility there in earnings, but now seems to be turning the corner. What's your view specifically on LIC and anything on the private side as well? Do you have any topics?
So first, let me answer your second question. We have coverage on LIC, HDFC Life, ICICI Prudential, and SBI Life. Now, this change in earnings is a result of the thought process of individuals like you and me in terms of approach towards term insurance. Earlier, before COVID, the thought process was you need to take a policy so that you can save something on tax. Post-COVID, the thought process has taken a major flip with respect to if something happens to you and me, then if you have a term policy and a decent sum assured, then there is something that is left behind for our dependents if something has to happen to us. This is a major shift and change that is happening, and the millennials have now realized it. And our sense at Geojit is that in the next maybe about a year or maybe a year and a half, the run rate of new insurance premium is going to only increase thanks to the higher sum getting assured and of course the kind of settlement rate, etc., etc. My only request is that if you decide eventually to invest in insurance related companies, then please have a time horizon of 2 years plus.
Right, 2 years plus is the kind of timelines that you should be watching out for with regards to insurance companies, but a smart move coming in with regards to LIC is what you're watching out for. But moving on, from the broader markets, two stocks that we're going to discuss is DCX and Bosch. Praneeth will take us through Bosch. But in terms of DCX, if you pull up the counter, the revenue and the EBITDA is down, and that's the reason why you're seeing cuts of around 2.8% coming in there. On Bosch, sorry, on DCX, it's down around 6.5%. Now, what has hit revenue is the market headwinds as well as the kind of global uncertainties that we've seen. The raw material and the employee cost has been higher, and that is what has impacted the EBITDA as well as the margins this time around. And they're sitting on an order book of around 2,855 odd crores. Revenues, 26% downtick. EBITDA, which is down around 73%. Net profits have seen a dip of also 37 odd percent this time around. In fact, let me take a quick question with Gaurang. Gaurang, your view with regards to DCX?
Well, I think sector specific, Hiral, you could have some problems in terms of earnings disappointment, maybe a 1 or 2 quarter. To expect, every quarter to give you a run rate of 15-20% earning growth is not advisable. So maybe because of certain headwinds and constraints, there has been a disappointment in earnings, but the sectorial outlook remains positive.
Got the view, Gaurang. But the other ones also, which is in trade, reacting in trade today, is Bosch. Now, while when we started this morning, it was largely positive. It's turned negative right now, down almost 2.9%. And essentially in the results, while the company did report a decent set of numbers, revenue was up 16%, so was the EBITDA. But the profits was down 1.9% and margins were almost flat. And that's largely because the company's total tax expenses have doubled to 224 crores versus 96 crores. And that was essentially the growth in revenue, and hence that has come as a drag. The other aspect is that the consumer goods business of the company, that's roughly about 500 crores in terms of revenue. So that's 10% of the quarterly revenue. That's also not been growing for a while now. It was up only 4%, while the automotive revenue continues to grow at 18% in this particular quarter as well. 4,000 crores is what the number was. Overall, the other key aspect in this particular result was that the energy, building and technology vertical of the company also declined by 8.7%, and that's come in the presentation just an hour ago. And since then, we've seen that continued negative momentum on Bosch. But a stock that's, let's put out the 1 year chart actually of the company, because it's done well for its investors, but it's a very expensive stock in that sense. So definitely some aspect to look at. Let's look at the 1 year chart also very quickly. Not gone anywhere, just about 1.5% in terms of returns as well. The other ones which I want to highlight is Bharat Dynamics, and there was definitely issues for the company in this particular quarter in terms of execution. It's almost recovered a lot of its losses. Let's look at the days low as well. While the revenue almost up 100% in this particular quarter, the EBITDA is actually just up about 4%, and margins have actually halved to 17.9 versus 36% on a YOY basis. Net profit subsequently is down 6% as well. Now, one of the key aspects was delays in execution, and that's impacted in this particular quarter, but largely expecting it to recover from the next couple of quarters. And I think that's one of the key reasons why Bharat Dynamics has recovered in trade. And we saw similar action in terms of price performance for something like a Bharat Electronics as well. The guidance was missed for FY25, but the company's already gotten orders in April and May as well. So Gaurang, let me come to you on this. Specifically, let's start first with Bosch. A stock that's expensive, but do you have any view on Bosch earnings as well as anything in the auto ancillary space? Any top picks for you?
So we have coverage on Bosch Limited. We have a hold recommendation. Other than this, we have coverage on CI Automotive and Uno Minda. We believe if auto sector has to do well, auto component, tire and battery manufacturing companies will also contribute to the growth. Bosch relatively is a very significant player in the auto component space because it makes very crucial components as far as the safety of the vehicle is concerned. Parent company Bosch AG has a very good support, and I had read a report wherein the parent company is having a view to make the Indian counterpart a base and a hub for manufacturing to the rest of the world. So we have coverage from a long-term point of view, continue to hold. Sorry, what was the second question?
Second question largely on, you did answer a little bit on defense, Gaurang, but Bharat Dynamics, do you have a specific view?
So, let me give you a purpose. Like I said, get invested in defense-related companies. Please have 3 years, 5 years plus horizon, because these are the companies that make components for the armed forces in India. Whether it is Air Force, Navy, Army, Border Security Force, or Indian Coast Guard. The components that they make, the ancillaries that they make are very complex in nature and high technology oriented. It takes times to make a prototype and get an approval and then get onto the mass scale production. So that's the kind of time horizon you need to have. While Bharat Dynamic, we don't have coverage, but it's one of the stronger players. BEL, BHEL, and Cochin Shipyard are the ones that feature in the defense sectorial investment idea.
Right, so that's with regards to Bharat Dynamics as well, and BHL was another one that we spoke about. But let's look at a few of the other names. You have ITI as well as Techno Electric. Let's pull up both these stocks and see. ITI, strong move, 7.5 to 8% is the kind of up move that you're seeing on this one. If you can just have a long-term chart also of both these counters. Techno Electric also at the day's highest levels with gains of 13 to 14% coming in there. If you can just have a longer one, I mean, ITI 11%. So you did see a major spike that did come in the month of January, but from there it's cooled off pretty much. So it's going to be interesting to understand what you should be doing with this counter. And if you can have a longer term chart in terms of Techno Electric as well. A similar scenario from January onwards, it's receded again, trying to see that upside, but 30 to 33% is the kind of returns that you've seen in the last 1 month. My colleague Varsha is standing by to decode both the earnings for us. Varsha, what are the Q4 earnings indicating, and anything that you've picked up in terms of their FY26 commentary?
Yeah, so thank you for that. So talking about ITI, good set of numbers, the loss narrowed down due to other income that the company has seen. Now other income increased 3x. One of the reasons why the losses have narrowed down. Now cost of raw material, if you see, has decreased by almost 19%, and the inventory clearances have led to narrowing of losses. Finance costs have also decreased by 25%. Then on the list is Techno Electric and Engineering. Good set of numbers again there. The EBITDA margin uptick that you're seeing is led by lower other expenses, and other income of course aided net profit for the company. So just to speak on the 4 numbers, revenue was up 85%, EBITDA was up EBITDA was at 126 crore versus 54 crore, margins were at 15%, and net profit was up almost 74%. Last on the list is Triveni Engineering, wherein again if you see, strong performance was led by growth across their diversified business segments, and which has led to uptick in revenue and of course uptick in EBITDA as well.
Right, thank you Varsha for getting us the details. Gaurang, a quick one in terms of ITI, Techno Electric, any views that you have on any of these, and Triveni Engineering as well?
Well, why the relative performance over the next couple of quarters is likely to improve, Hiral, but I won't be in a position to give you a specific buy, sell and hold on either of the 2 companies.
Okay, so that's with regards to the 3 companies that you're watching out for. No recommendation coming in from a Gaurang. But thank you, Gaurang, so much for joining us on the show and sharing your views as we speak. But moving ahead, let's jump on to a NDTV Profit exclusive. Now, the Federation of Indian Chambers of Commerce and Industry has been advocating for streamlined regulations, and this is mainly to go ahead and facilitate the capital market operations for listed companies as well as the other participants. What does this mean, and what is the outcome from here on? My colleague Charu gets us all the details. Charu, over to you.
Hi, we must understand a couple of background points here that recently the SEBI chairperson Tuhin Kanta Pandey met with a lot of industry associations which included the industry body FICCI as well, and they had a meeting with around 50 odd members, and they spoke about optimum regulations, streamlining the norms that govern the listed companies, and how to rationalize them more, make them a little more relaxed and easier to follow. Now to look into what sort of regulations they really pointed out in terms of relaxing, and sent out discussion papers to SEBI. So they want some relaxations in listing obligations and disclosure norms, changes about takeover norms, delisting conditions, as well as promoter lock-in requirements for listed companies, and rationalizing timelines for regulatory approvals. And this is something that is being done in a phased manner. So regulator is receiving a couple of discussion papers from the industry body. First one has already been sent, second one could be sent this week, and the rest might follow. Apart from this, we must also understand that the regulator has recently also met other associations, including the ones for investment advisors, research analysts, AIFs as well. And he himself in an interview to NDTV Profit spoke about optimum regulations. So there is a lot of A's in doing business for several market participants likely very soon. And let's tune in till the board meeting at least to see what happens.
Well, thanks for that, Charu. But another big exclusive now, Elon Musk's Starlink is ready to beam in India, and my colleague Aishwarya has the details of the pricing and capacity going forward. Aishwarya.
Well, Starlink is preparing to soon beam into India with a big bandwidth, a D2C push, and premium pricing as far as their device pricing is concerned. What we're picking up from our sources is that in phase 1 of InSpace's approval, Starlink will begin beaming about 600 to 700 Gbps or gigabits per second kind of satellite capacity over the Indian market. Now, this beaming capacity will support or enable traffic in one go or concurrently about 30 to 50,000 subscribers over a certain area. By certain area, we mean an area approximately the size of any city or urban cluster. The projected capacity is expected to rise up to 3 Tbps by 2027, according to our sources. This is, of course, subject to regulatory approvals, which are still pending, and Starlink has not unconditionally agreed to all of the terms of the LOI as well, what we're learning from our sources. Now, they also have plans for 2 to 3 Earth stations. In India, the sites have already been identified, and 9 gateways have been planned per site is what we're learning. Apart from their B2B business, Starlink is also planning to introduce, still mulling and having conversations and discussions around the D2C, direct-to-customer model in India. D2C services will target premium users or premium pricing. As far as the pricing of the devices is concerned, that is expected to be anywhere in line with the global pricing, which is about $250 to about $600. That means about 20,000 rupees to 50,000 rupees per device. They have devices like the standard Starlink kit and also Starlink Mini. Those could be in the starting range, and for consumer or users, common users, the business kits could be upwards of 50,000 is what we're learning. Now, according to DOT sources, Starlink's global licensing head, Parnil, had met with DOT officials earlier this month to take care of some regulatory approvals and signing off some of the papers that are related to the GMPCS license. DOT is in process over and after this of securing bank guarantees from SATCOM companies, and the license is expected around mid-June is what we're learning from our sources, and Starlink is currently reviewing the terms under India's new SATCOM norms. We've written to InSpace as well as Starlink, but no response from them as of yet, but we'll keep you posted on the developments further as far as Starlink's India debut is concerned.
Well, thanks for that, Aishwarya, but it's time for a very quick break. Stay tuned to NDTV Profit. We have a very couple of interesting conversations live on the other side. Hila is going to talk about Hindustan Copper as well, so do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets trade flat, Nifty trades in a tight 150-point range, hovers around the 24,800 mark. Sectoral action mixed. Nifty defense continues the rally, leads gainers. And LIC shares buzz and trade with gains of almost 7%. Whilst the insurance giant has missed its Q4 estimates, growth in VNB margins and contribution of non-par business is what has enthused the street. And DCX Systems, on the other hand, is trading with cuts of over 6%. And this is because your profits in the fourth quarter have gone down by 37%. Margins have contracted as well. Sources tell NDTV Profit that valuation of one of the most anticipated IPOs, NSE, surges to 5.8 lakh crore rupees. That's an NDTV Profit exclusive. In another NDTV Profit exclusive, Elon Musk's Starlink is ready to beam in India. The company is poised to kick off phase 1 operations in India with 600 to 700 Gbps of satellite capacity. Welcome back. You're watching Profit Buzzers on NDTV Profit and I'm Hiral Dadia. But very quickly, let's just pull up Nifty 50 as well as Bank Nifty to see what's happening, if anything changes in the last half an hour that we've been discussing as well. There you go, pretty much now on the borderline in terms of Nifty 50. We are seeing cuts of around 0.1% coming in there, but it's trying to inch higher. Let's see where we end. And apart from that, let's just pull up Bank Nifty on the screens as well and see what that is doing in trade. Again, it's trying to recover the lost ground and nearly at the day's highs, we hit a high of 55,521. So we're just around 40 points away from the day's highest level. So it's going to be interesting to see if Bank Nifty comes to the rescue as well in terms of markets and helps Nifty 50 retrace those 25,000 levels back in trade today. But let's shift focus to one of the metal companies that has been in focus on the back of earnings, which is Hindustan Copper. Let's pull up that one on the screens and see what the stock is doing in trade. It's cooled off from the day's highest levels in spite of posting the highest ever revenue. 1.7% is the kind of gains that you're seeing on this counter. In fact, let's welcome in the management. We have Mr. Sanjeev Kumar Singh, Chairman and Managing Director at Hindustan Copper, joining in. Mr. Singh, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. My first question coming to you is, firstly, what has led to this kind of a number in terms of top line? Is it the pricing or is it the improved production? And will this continue from here on?
Yeah, I'll just sum up. Strong prices, operational efficiency, and then there's a government support also, I should say, and low TCRC prices globally. So all these have helped us to grow, I should say.
Okay. Moving from there on, now if you have to talk about the overall mines, which is Jharkhand mine, which is Rakha and Chapri, with a combined capacity of 3 million tons per annum, they are set for auction in October 2025. So what is the status and what would this mean for Hind Copper?
Ma'am, they have already been auction. Matlab, they have already been the auction part is complete. Means from the Hindustan Copper point, and the JSW has been awarded that contract, I should say, and we have already signed a MSA document in the month of January, and now just we are waiting for some clearances, which are expected in 3 to 4 months, and then they have in fact already started the pre-mining activities there in Jharkhand.
Okay. And what about the smelting and refining operations at Gujarat and Jharkhand? Because they were the ones which have been suspended since 2019 due to business constraints is what we understand. And if you have to look at Taloja, which is in Maharashtra, the plant is also limited to third-party activities, which is also restricting the downstream output. So what is the update on that front?
The status as of Ghatshila plant is that it's closed, but we are studying it. DPRs are other things are under preparation, but there are some other issues also. We'll look into once the mines. Our main focus is on mining operations. When we generate the ores, then only we can start these. So our focus as of now is presently on opening up of mines and increasing the production of Hindustan Copper.
Okay, so that's the focus for the company. And if you could help us understand with regards to MCP, which is the Malajkhand copper project, that has been transitioning to an underground mine. This will, actually ensure an increase in ore production capacity from 2.5 to a 5 MTPA. Where are you on this one?
Ma'am, I'd just like to add 2 lines to it. It is the flagship mine of Hindustan Copper, and it got converted from open cast mining operations to underground seamlessly. This is very important, seamlessly, without stopping a production there. And this year, 24-25, that 2.73 million tons, which was the production of Malajkhand, was exclusively from underground. So this is one of the most rarest of the feat which Hindustan Copper has achieved, and will grow. This mine will grow up to 5 million tons within 29-30.
Okay. Apart from that, if you have to see in terms of the consumption, the anticipation is that because of the Chinese usage decreasing, that will drop. So how is Hindustan Copper looking at it? How are you planning to manage your inventory levels if there is a potential surplus market? And are there risks of inventory built up?
Ma'am, in fact, I would like to mention that we are able to serve only 5% of the needs of this country. So Hindustan Copper doesn't have any issues on that.
Okay, so again, domestic consumption is what you'll be focusing on. Apart from that, in terms of the kind of prices that you're seeing, what is the outlook for the next 12 to 24 months in terms of copper prices? Because your International Copper Study Group is indicating a considerable global copper surplus for the next 2 years. And as we know, the domestic prices are linked to LME prices as well. So there is a major global impact that comes in terms of copper prices. How are you reading the entire situation?
As of now, the copper prices are very strong, and you have seen it within the last 3-4 months also. They are hovering around $9,500. I expect them to remain the same because the demand of that green energy, AI, you just see infrastructure everywhere. Whatever you talk, you cannot achieve that without copper.
Okay. Apart from that, if you have to look at the other aspect in terms of businesses, the capex plans. Now, how are you looking at capex from here on? Because your model is shifting towards a leasehold model. So what will that capex look like, and what's the utilization like?
Ma'am, as far as capexes are concerned, since we are growing a lot, so it is a huge capex. This year we have already planned at least 350 crores. I'm talking at least 350 crores. It will go beyond that also. Big concentrator plants are going to come at Malajkhand. Even at K3 units we have planned. augmentation of the concentrator plant. At Ghatshila also we are augmenting the concentrator plant. So it's a huge expansion, ma'am. We need lot of capex. So this year we have planned at least 350. We'll go beyond that.
Okay. So that's with regards to where the capex plan goes. So taking the capex that you're looking at, what's your outlook looking like in terms of FY26 and 27?
Ma'am, will definitely do. I can't speak of the figures, but you just see the trend of last 4 years. We'll try to maintain that.
The last 4 to 5 years kind of growth is what we should be looking at to understand how FY26 and 27 will look like as well. But thank you, Mr. Singh, so much for joining us on the show and sharing your views. So that's the management of Hindustan Copper. A completely shift in terms of a business model goes is what they've started looking at, wherein from a self-owned mine business, they are looking at a lease business, and that is what is actually leading to lower capex, lower operational expenses, and that's what is looking at in terms of the margins as well. So a smart move coming in terms of Hind Copper, the stock seeing gains of 1.5%. Another stock in focus today is Aarti Industries. Let's quickly look at that one on the screens. UBS has in fact given it a double upgrade, that the stock is trading at the day's lowest levels as we speak. If you see in terms of the target price, it's 625 and the current market price is around 478. What they've indicated is there are strong growth initiatives which are absolutely strategic in nature, which is making them positive, and the cycle is expected to see a recovery as well from here on. Additionally, the focus on market development and long-term client relations is something which is positive as well. And they are expecting an achievable EBITDA guidance, the guidance that the company has given, and they're forecasting a 25% CAGR growth in FY25 to 28. The energy business MMA is expected to ramp up gradually, is what UBS is indicating. So probably a recovery is on the horizon. What's interesting is a double upgrade on that one, target price of 625. That is maintained as well on our Aarti Industries. In fact, this is going to be a sector which we will be focusing on as well, where Barsha will be getting us more stuff in terms of what's happening across the industry later on during the week. But that's with regards to Aarti Industries. Another stock that is in focus as well that we should be putting the spotlight on is a Cummins India. It's the last leg of earnings right now. Cummins will be reporting numbers today, and ahead of numbers, the stock is seeing gains of nearly 1%. Let's understand what is on the cards. The margins are expected to be under pressure for a Cummins India. If you have to look at the standalone business on a year-on-year basis, revenues are expected to improve by around 18 to 19% at around 2,693 odd crores. If you talk about the profit number, a 15% decline is what you're seeing. And the margins are expected to be under pressure at around 19.4% versus a 24%. Now, why the decrease in terms of margins? Firstly, there has been a strong base effect on the back of a one-off that was seen in the fourth quarter of FY24. Secondly, the margins are contracting on the back of lower other expenses in the fourth quarter of FY24. So the other expenses component probably will be higher this time around. And there is higher competition in few of the offerings as well that is actually putting some bit of pricing pressure in their product portfolio. So these are the factors that could be impacting the margins this time around with regards to where Cummins India goes. Let's also understand the key expectations. The revenue growth that we are seeing versus the other parameters which are declining are on the back of domestic as well as the export recovery. And you're expecting a 30% growth in terms of exports for a Cummins, and this is again coming in on a lower base. The management commentary with regards to the pricing outlook going ahead and the power gen segment is absolutely going to be crucial to understand the roadmap in terms of where FY26 goes. So that's with regards to where Cummins India goes. But moving on, again, let's shift focus to the hospital space once again. In fact, Varsha is with us as well. Varsha, we'll be joined by the management of Yatharth as well, but a quick update in terms of what has happened in terms of the numbers and what are the key talking points.
Yeah, sure. So talking about Yatharth, let's see how the Q4 has panned out for the company. If you see the revenue growth, company has seen the revenue growth, which was led by growth in occupancy and RPOP, that is average revenue per occupied bed, which is a crucial thing when it comes to hospital segment. Now, the EBITDA margin contraction that you're seeing is led by operational losses at the Greater Faridabad unit, and adjusting for Faridabad hospital, EBITDA margin is at around 27%. Now, profit growth impact that you're seeing is led by increase in depreciation. If I want to talk about occupancy, there was a good growth when it comes to occupancy. Occupancy was at 61% versus 57% last year. Good growth in RPOP. So overall, even capex plan also, if you see, they plan to incur 300 crores when it comes to expanding their facility. But to give us the outlook when it comes to 26 and for future years, I am here joined by Mr. Yatharth Tyagi, who's the whole-time director of Yatharth Hospital. Welcome, Mr. Tyagi. Good to have you here. I just wanted to understand, the margins were impacted due to Faridabad unit. Which we, now, when are you expecting your normal margin to come back? Number one, and from there, can they go up? Because considering the 700 beds that gonna be go live in FY26, will there be more drag when it comes to EBITDA margin?
Hi, thank you for having me. So if you look at the EBITDA margins for the whole quarter, there has been a marginal dip. It's not a big change in our EBITDA margins, and this is as per our expectations because when you start new hospitals that you talked about, when we started Greater Faridabad, so it was expected to drag down some margins, and however, if you talk about the latest month in Q4, that hospital has become EBITDA break-even on month-on-month basis. So now going forward, as we enter the new financial year, the losses at Greater Faridabad will stop in terms of EBITDA, and it will start contributing towards the EBITDA positive there. As you rightly also mentioned, that we are starting 2 new hospitals, one in New Delhi and one second hospital in Faridabad. These 2 hospitals will have 700 capacity combined. So yes, there will definitely be certain drag on the margins of these 2 hospitals, but the margin drag that Greater Faridabad had for the financial year 25 will not happen for financial year 26. As well as our other 2 hospitals like Noida Extension and Greater Noida, occupancy ramp up is much more expected in those 2 hospitals, which will be upwards margin of even 27-28% in those 2 specific hospitals. So overall at the group level, with the 2 new hospitals also dragging down the margins, we feel the margins that we have seen in Q4 would be somewhere around that would be right estimation for the upcoming financial years ahead.
Got that. So 25% of margin is what you are expecting when it comes to FY26. Okay. Now, you've seen good growth when it comes to RPOP. Now, what's the outlook there? Can you quantify any sort of growth that you are expecting going ahead?
We feel the RPOP growth, we have constantly maintained around 8 to 10%, yearly for last 3-4 years. And this is an area where we still have a lot of room to grow, because there are certain key treatments that, are huge RPOP boosters like oncology, cardiac surgeries, as well as, international patients. Remind you that one of our hospitals, which is in Greater Noida, is the city which is opening Asia's largest international airport. That hospital is just 20 minutes away from the upcoming airport. So a lot of international patients also expected in that region. So overall, all these factors do contribute to a higher RPOP, and we feel that going forward, we should continue to maintain the growth momentum in RPOP as well. In fact, if you look at our RPOP, the one more key factor that we feel the RPOP is bound to increase is the change in our payer mix. As a contribution of government business will go down, more private insurance and cash, that is self-pay patients, share increases in the pie, which are higher rates than government government businesses. So that will also ultimately help our RPOP to grow and sustain that momentum in the years ahead.
Yatharth, good afternoon. This is Hiral on this side. As you're talking about the average revenue per occupied bed, which is the RPOB, how much of it is driven by advanced surgeries as well as inflow of international patients, to understand how well medical tourism is working in the country?
See, I think if you talk about an average ticket size of an international patient for this same surgery of what domestic patient would land, it would be around 30% higher than the tariffs when it comes to international patients and domestic patients. But it is not just those like-to-like, tariff increases. It is also international patients which come to India usually come for very complex cases, and these come for high ticket size themselves. So, like kidney transplants, liver transplants, and bone marrow transplants. An average ticket size of these transplants is somewhere around 15 to 20,000 US dollars, and a lot of markets of international tourism in India caters to these specific treatments. So, anyways, if you're doing international patient treatment, you're doing these high-end treatments. So that also does significantly boost the ARPOB that all the hospitals operating in the regions have.
So that's with regards to the average revenue per bed. Now, if you have to talk about bed occupancy as well, yes, it has improved specifically with regards to your Noida as well as the Jhansi Orcha hospitals overall. But from here on, what is your target in terms of improvement with regards to occupancy at all of these levels? And if that happens, how does that benefit your top line? What's the kind of revenue addition that you're expecting to see?
See, I think we have constantly grown our occupancy levels if you look at for last 3 years, and not just grown at occupancy level but even grown on increased bed capacity. So 2 years ago we used to have a bed capacity of 1400 beds. Today, with these 2 new hospitals starting up in Delhi and Faridabad in financial year 26, we will be counting our occupancy on 2300 beds, and even then we have shown significant growth in the occupancy rate is concerned. And we feel that especially our Greater Noida and Noida Extension hospitals, which are somewhere around 60-66% of occupancy, these two specific hospitals can touch 75% occupancy over the course of next 2 years. Ultimately, overall group level occupancy will also be boosted by these factors, and ultimately this leads and contributes to the yearly revenue growth. For last 3 years, company has constantly delivered upwards of 30% growth year on year. This time even in Q4 year on year growth is 30%. So we feel that with the increase in our bed capacity helping us at a higher occupancy, increase in our ARPOB, this momentum should continue, and that's what we have done for last 3 years in the past, and this momentum should be continuing for a few years ahead also.
Okay, so Yatharth, to understand now from here on, with your average revenue, with occupancy, the next important aspect is how are your expansion plans looking like? And to what is known so far is a 700 bed capacity is what you're going to commercialize in this quarter. Now, that's the target where you will take it to 3,000 beds in FY26 itself, correct? What's the capex plan over the next 3 years? What is the addition that you're looking at? And the amount that will go in terms of this expansion and the funding plan?
So, this FY25, we have incurred a capex upwards of 300 crores. In FY26 also, a similar capex would be incurred as far as our existing hospitals are concerned. But, we have always maintained in the past as well that each year, company would like to have one inorganic acquisition. That's what we have done for last 3 years. Each financial year, we've acquired a hospital. So, 300 crores plus any more acquisition that we do in the upcoming financial year would be the total capex for the year. The company is, well positioned with a strong cash today on our books of close to 500 crores, and we are also debt free. So we have enough, in terms of.
Yatharth, sorry to interrupt, but I understand well funded from here on, but from the 300 crores that you will incur on existing capacity facilities, right? If you have to look at one acquisition per year, what is that approximate quantum going to look like in terms of capex? Because again, we're talking then about brownfield or greenfield here. And 2, what is the number of bed additions you're going to see in the next 3 years? So say, for example, if you're going to close FY26 with 3,000 beds, what is FY27 and FY28 going to look like?
When you're acquiring a new hospital within the Delhi NCR, the way we look at it and a lot of other hospitals look at it, the per bed ticket size usually for a hospital here is usually 1 crore per bed. That's the minimum when if at least when you're trying to build a greenfield project, excluding land is what I'm talking about. So we have always had hospitals which are above 250 beds, 300 beds. So that's the minimum of 300 crores should be going for one hospital if we have to add be it a greenfield and even the brownfield expansion that we are doing in our existing 2 hospitals in Greater Noida extension. That will also capacity will come in the years ahead. So that's as far as the roughly ticket size of a hospital acquisition is concerned. Your question on the added bed capacity, we, as I said, that each year at least 300-400 bed acquisition would be done. So that would take in next 3 years at least 1,200 beds coming from inorganic acquisitions, along with the 450 bed addition of a brownfield that is expected to commence within 2 years. So that's how we are shaping up in terms of total bed capacity is concerned.
Right, got that. Yatharth, last time we spoke, you said that you'll grow at 30% for FY25, which you have surpassed that guidance. But now, what is the target which you have set for FY26? Because for FY25 you have grown at like 35 to 38%. Will you see the same growth, like 35 to 38%, or the growth will tamper to 30%? What's your outlook?
So I think overall at the group level, we have grown 30% when it comes to FY25 compared to 24. And as I earlier mentioned that, this is what the company has delivered over the last 3-4 years. And we would look to deliver the same growth. And this growth is possible because of the added capacity, increase in our RPOP, increase in our occupancy levels. So we feel this growth momentum should continue. And we should also add to a bed capacity within the North India region, within the Delhi NCR markets. More beds should be added by Yatharth hospitals.
Got that point. Also, Yatharth, what is the status when it comes to the income tax case that we had? When are you seeing this to get resolved?
So there's a big positive development that happened in the income tax matter as far as the latest quarter is concerned. In fact, just a few weeks back, we have concluded the large part of the income tax audit for a subsidy AKS, which contributes to 40% to the overall group's revenue, where a marginal tax demand has occurred, and the company would be doing that. And this is as per our line that we did not see a major or a significant financial impact from the matter as far as the company is concerned. And with this moving forward now, we are quite hopeful that for the remaining company as well, the matter should be settled, and we are quite hopeful that before the end of somewhere this calendar year, the whole matter should also be resolved, and that is as per our expectations and timeline. Any matter takes usually 2 years to close when the audit starts, and we are quite on the timelines as well as that matter is concerned.
Yatharth, we are short of time, but a quick response to this one. So would it be right to say a top line growth of around 30%, taking into consideration the CAGR that you've given out earlier in terms of FY30, plus hospital acquisition annually is what you're targeting, and we'll see margins stabilizing in that 26-27 kind of a band by FY30, because the projection is around 950 odd crores in terms of EBITDA and a 700 to 750 odd crores in terms of profitability. And I'm talking about FY30. Is that something that you're aiming for?
I think the factors of the revenue as well as EBITDA are close to what you have mentioned. As far as the margin levels are concerned, we feel the Q4 EBITDA margin of somewhere around 24.5% would be a right estimation, to go ahead for the next few years. We would like to be, because, we are aggressively adding capacity. So, a new hospitals will incur EBITDA losses, and that's what we're prepared for. And this is as per our expectations going forward.
Right. So that's going to be an interesting one to watch out for. Thank you, Yatharth, so much for joining us on the show at NDTV Profit. An interesting one, Varsha, coming in here, and I think that's going to give you food for thought in terms of analyzing what hospitals are doing in terms of their capex plans, the occupancy, and the kind of brownfield and greenfield expansion that they're looking at.
Exactly, yes, absolutely.
And so that's going to be a space we will be focusing on, but completely out of time. With that, it's a wrap on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio.
Hello and welcome to Earnings Edge right here on NDTV Profit. My name is Puneet Zaveri and we're going to be speaking and taking stock of Kararo India after the company came out with its Q4 earnings. Q4 was largely in line for the company, a very decent performance, but what does the outlook look for FY26 as well as for the business? We're now joined by Mr. Balaji Gopalan, who is the Managing Director of Kararo India. Mr. Balaji, a very good morning to you and thanks so much for joining in to NDTV Profit. I think this is the first time we're speaking, so just wanted to get a little bit more color on the business first before I get into Q4. For the company, you're largely in terms of products, you are largely into transmission axles as well as gears, and you largely work in the agricultural as well as in the tractor space as well as the construction equipment space. Just talk to us a little bit about your products first in terms of transmission axle and gears. What is the product proposition in India, as well as how is the current competitive intensity for the same?
Okay, thank you very much for taking us in for your telecast. I'm Balaji Gopalan from Kararo India Limited. We are an Italian multinational. We have our manufacturing locations all around the world. And in India, we are present for the last 27 years and we are consolidating and growing. Our product range starts from the agriculture transmission, which moves from roughly 50 horsepower to about 130, 150 horsepower. So we have the entire portfolio of axles and gearboxes, both for construction equipment, which includes backhoe loaders, wheel loaders, teleboom handlers, all those kind of machinery. And in the agriculture, largely we focus on tractors. So we have the entire range covering from 50 horsepower to 150 horsepower with technology including manual, semi-automatic, automatic transmissions for the market that we are catering to. All tractor manufacturers are in some way a customer for Kararo in India. We have a big basket, a total of 49 customers in our basket, and we cater to almost everybody in this industry. Kararo's strength is on technology. We are a technology solution provider of transmission systems. When I say transmission systems, the product of Kararo, our technology, is to take the power from the engine and transmit it to all the four wheels. This is where Kararo plays a role by introducing axles and transmissions to meet this purpose. We are not into low-end mechanical and low horsepower vehicles. We like to focus on horsepowers beyond 50 horsepower, going up to 150 horsepower, and at least a synchronized gearbox, preferably semi-automatic and also automatic. So we feed what the emerging technology of this industry needs with an experience legacy of 90 years globally in all soil conditions and all duty cycles. So our products are very well tested, validated and reliable and quick to market for all OEMs in India who are planning to launch new vehicles in agriculture and the construction equipment sector.
Got that, Mr. Balaji, and thanks so much for the detailed answer as well. So largely, of course, you mentioned that you have a global parent, and I'll just come back to that in a bit. Roughly 47% of your revenues for this year comes from the agriculture space, where you mentioned you largely, look at the tractor space from this and that vertical. The rest 41%, of course, in the construction equipment, and as you rightly said, backhoe loaders being one of the forklifts are the other products. For tractors, last year was actually a kind of like a decent year. In Q4 also we saw decent growth, and over the next couple of years as well, a lot of positive commentary coming in from a lot of tractor players that are also listed on the stock exchange. Do you expect that this segment will have higher growth compared to construction equipment? And it's also, if you can give us some details on the margin profile for both products. Is it largely similar between the 10 to 11% range, or is agriculture slightly more margins? If you can give us some color on that.
Yeah. First of all, coming to the market, the agriculture market, the tractor market is showing resilience. It is coming back and it is growing. If we look at the total market, it is roughly 10 lakhs, about 1 million. But Kararo focuses, as I said, on high technology, high horsepower and four-wheel drive. We don't operate in two-wheel drive segment at all. So if you look at the four-wheel drive segment, that is an emerging segment that is coming into India, and our growth will not be determined by the industry growth, but by the segmental growth of the four-wheel drive in India. Just to give you a perspective, in developed countries like Europe and US, the four-wheel drive market constitutes close to 98-99% of their total tractors sold in their country. Compared to that, about 4 years back in India, the four-wheel drive market was only 1 to 2%. Okay, in 3 years, that is last financial year, we came close to 20%. Today, it is around 20-22%. There is a technology absorption that is happening. There is going to be a complete change in the platform of tractors, because the two-wheel drive tractors are the old technology, the legacy system that is being continued, but with the focus on food security, on focus on farm efficiency, focus on the contract manufacturing that is happening in all the farms. So small holdings are now getting converted into aggregated farming action places, and that is the reason the four-wheel drive market is catching up. When you need farm mechanization, you need a higher horsepower and a four-wheel drive tractor to support the implements that are getting attached to the tractor. So all in all, it is creating the right fertile ground for the four-wheel drive technology penetration in India. And as I said, in the last 5 years, from a 2% market share, it has already touched 20, and Kararo is expecting very, very realistically that it will go close to 40% in the next 2 to 3 years or maximum 4 years, while the global average comes to 99%. And this is the future for Kararo. This is what we are betting in, and the OEMs are supporting us well. We have a very significant market share, dominant position of more than 60% in this segment as well. So the going seems good. We are in the right path. We have penetrated the right segment in the market, and the OEMs are recognizing the contribution that Kararo can give for them to launch a technology product that is higher than what is existing currently with them, and quick time to market with products that are already tested in the Kararo portfolio. Secondly, coming to the margins that you were asking, it is by and large the same. It doesn't matter whether it is for agriculture or for the construction equipment. It is determined by the configuration and the technology patch-up that is happening in the products that we sell. So you could, like we have the cars where you have different levels of configuration and the cost varies. Same thing happens even for the gearbox and the axles, where you can add in technology and the cost and the margin improves. Better the technology, better the margins. That is the principle. It doesn't matter construction or agriculture.
Got that, Mr. Balaji. And just wanted to talk a little bit on the export market as well. That's roughly about roughly 33% of your revenues. It's fallen from the previous year of around 36% share, but I'm guessing that's largely because the domestic market has performed well in Q4 also. What is your current relationship with your parent in this regards for the export markets? What are the geographies that you target specifically? And also, what is the relationship with the parent? Because I'm guessing that if you are targeting Europe, for example, there will be another subsidiary possibly of Carraro there. So what is the working of that relationship, if you can give us some light there?
The Carraro industrial footprint is on the basis of center of excellence. For Carraro Group globally, Carraro India is the center of excellence for transmissions and transmissions specifically for agriculture application. It is a high investment industry. There is a lot of technology that is built into the manufacturing process itself. And to that reason, we cannot be replicating the same thing in different locations of Carraro Group. So to answer your question, we have our sales and marketing team, which is integrated with the global sales and marketing. Business is acquired globally, and based on the center of excellence, it is passed on to the respective subsidiaries of the group. So anything pertaining to transmission required globally, Carraro India will be the first choice for the sourcing of those products from here. And secondly, the export market, we have always said that it is a bit subdued, it is going a bit slow. OEMs are waiting and watching. They are hoping a pickup because they feel it has bottomed out. So they are only waiting for a pickup probably during the last few months of this year. But again, we always say Carraro is a small player, but see the big in the small. Our segment is very, very defined, and that segment is not the largest segment in that market, but in that segment, we become the dominant player, and we have market share of more than 60%, like in the four-wheel drive axle market. So same logic applies to the export as well. We get new wins, we get new businesses. For example, we have recently got a very big business from a top global player, wherein in the next 3 years, we are ramping up for a revenue of around 300 crores just by this single customer to whom we have started export. We have already started exporting. We would be exporting around 8 to 10,000 axles this year. Next year, we are looking at going to about 13, 14, ultimately going to 19,000 plus axles, which would give me a revenue of more than 300 crores by export. Okay. Thirdly, it is the markets are for us a kind of a blue ocean where we don't target any specific region. Our global team goes and acquires market. Very often the customer picks up products in one location, assembles the vehicle, and then onward export it around the world. So we have really no direct control, or we can't even monitor where the final vehicle is reaching. We only know where that vehicle is getting assembled. So we have an open field as far as the export is concerned from a Carraro India perspective. Have I answered your question?
Yes, Mr. Balaji, most definitely. I also just wanted one question on the historicals as well, because the last 3 years, if we see the company's revenue profile between FY23 and 25 has largely between 17 to 1800 crores. But in this time, you've improved your EBITDA substantially by 50%, and profits have gone up almost 100% when I compare to the FY23 level. What has led to this growth in EBITDA as well as profit at a time where revenue hasn't grown, and how does that augur for FY26?
Yes, perfect. This is a very valid question. And this is the feather in the cap that we have today, that with a modest revenue of just 1% growth, we could pull out a better EBITDA of plus 35%, moving from 8.3% EBITDA to a solid 10.2 EBITDA. This basically highlights our focus on operational efficiencies and localization, and this has kind of indicated when we have declared these results now. Our royalties were reduced when we went for an IPO. We reworked the royalties because about 154 IPs were bought by Carraro India during this period. So we have stopped paying the product royalty to our headquarters. This was partially captured in the previous financial year because it happened from September, October of that financial year. Now, this coming year, we will capture it fully. So that will give us some advantages. Lot of cost savings. Our strategy is to keep the cost fixed and grow our revenue. So in my 2026 plan, I have a growth projected at 8 to 12% in my revenue, which will take me to the range of 215 to 220 or even slightly higher million euro. So we will cross the 2000 crore mark this year, keeping our fixed cost the same. A very strong indicator from a metrics is we are increasing our revenue by probably 10%, but my headcount, I have reduced 100 people. So we have agreement signed with the union. We have other fixed costs that are being monitored and controlled. And we have a big component of localization that comes in. In the past, my localization was in the range of around 65 to 67%. It was around 65, 67%. That moved up to around 77% this year, last financial year. And this financial year, we hope to have a 80% localization. Moving forward, we will touch 88 in the next 3 years. This localization, every component, we save duties, transportation costs. So the landed cost, I save between 10 to 15% on the purchasing price of this component. So localization, efficiencies in the plant, cost cutting measures, and the royalties, all put together is supporting my growth in my EBITDA.
Just one last question, Mr. Balaji, to you. You also have a others segment specifically because 47% from agriculture, 41% from construction equipment. There's the less 11% others. That's roughly 200 crores of revenue for this year. What does that include, firstly? And second, also on capacity utilization, both plants running at 75%. Do you need to do any capex for increasing the plant capacity over the next 2 years?
Okay. Coming to the first question, the others is basically spare parts, gears, and loose components that we assemble in Carraro India and send it to our Carraro locations globally. So basically coming down to, we are looking at the gear business, we are looking at loose components that we assemble, and we are looking at spare parts, which constitutes the 200 crores. This is answering the first question. Can you repeat the second question, please?
Yes, sir. It was just on capacity utilization for both your plants in Pune. Yeah.
Okay, perfect. Capacity utilization for our kind of manufacturing setup, we normally do not exceed 80% because it is not healthy to load all our capacities 100%. There could be breakdowns in machinery. There could be a sudden spike in demand because many of our OEMs win some tenders and they quickly want to deliver within the next 2 to 3 months a large number as per the tendering process. So we keep our capacities as 80%. That is optimum and that is very healthy. Currently, we are between 75, 78%, but with the growth that is coming in on the export that I told you, which is going to give us 300 crores in the next 3 years, we need to expand. We are squeezing our capacities. We will be moving to close to 80, 82%, 83% in the next 9 months, by which time we will kick in the expansion project. We have a plan to expand 25,000 square meters. That is 2.5 lakh square feet of factory area. We have the land bank to do that. and that will happen in 3 steps, starting more or less in the last quarter of this year, and then we will be doing the expansion in the next financial year and closing it in the third financial year. So my investments will get divided into 3 tranches, and we will ensure that our capacities don't get underutilized. This is one of the key to bring in better profitability as well.
And this will be at Ranjangaon in Pune itself, the additional land bank that you have, this new plant will come there itself?
Yes, we have 53 acres of land in Ranjangaon, and we still have around 35 acres which are there available for the expansion.
Just wanted to have your view. How was Q4 for you? What were the misses according to you, and what led to this growth? What were the key highlighting factors that you would like to mention?
Sure. So obviously, as I've been speaking over various forums in the last 1 year, we were focused completely on private label, our own brand of medicines actually. And we have seen a significant growth of that. We have focused on it. So we did achieve what we really wanted to do out there. But because we put a lot of emphasis on that and the entire incentives and all were aligned towards actually increasing the private label, I think our rest of the sales may have suffered a little bit. So the growth was not to the level I wanted. And we would have been happier with a slightly higher growth over last quarter. That's about it. But, that was to be expected. We will be making some course correction as we go forward, in the next 2 quarters and all, and I'm pretty sure it will get adjusted. The other thing, while the overall profit and everything else for the year was decent, we would have, wanted slightly more, and that would have come on the back of slightly better same-store sales growth. And the reason why I believe it did not come was mainly because we have grown quite significantly in the last 2-3 years, and that kind of, put a pressure, put a lot of, strain on the supply chain and everything else, which we are in the process of correcting actually. We have taken on some of those costs. The benefits have not yet come. So all the benefits because of private label growth have not completely gone down to the bottom. So that will happen. And 2, the same store sales growth, which should have actually been slightly higher, will, actually correct itself as we go forward on the back of some of the corrections, both in the supply chain side, easing of some of those constraints out there on our warehouses and all, and also, staffing, the right staffing some of these areas.
Got that point. Now, Mr. Reddy, private label, which is the highlighting factor when it comes to MedPlus, and which is actually the interesting point. What is the target that you have set, say, for next 3 years? Because you've done a lot of, I would say you've done a big transition in terms of product mix, but how are you thinking when it comes to next 3 years? Because I believe currently it contributes almost roughly 14% to the top line. So where you want to take this private label contribution?
Sure. So let me actually put that in the right perspective. Our private label, we sell on a MRP of 100 rupees. We sell it at around we sell it around 45 to 50 rupees versus a brand which we sell at 80. So when a brand is substituted, you will see a top line dip out there. So the right way to look at it is, match the MRP sales to MRP sales so that you actually get the volume sales out there. If you look at it that way, 20% or 21% by MRP was, contributed from the private label side in the last month of last quarter actually. So if you look at it, from 0 in June 23, we have now come to almost 20-21%. And this is, mind you, 20% of the 80 which we sell in medicine. So if you look at it, 25% of all the medicines which we sell today come from the MedPlus brand. So pretty steep, growth curve, I would say, on that side. But now that the early adopters have come in and all, I expect that the growth will be slightly slower. We expect that we'll grow only at around 1% every quarter kind of stuff. Q1 could be slightly weaker on that side because I think we've probably taken in some extra sales in Q4 of last year. So 1% every quarter is the number we are guiding towards on the growth of private label. That's one. But that is for the next 6 to 8 quarters. At some point, I believe, as, let us say, more and more customers understand that all the medicines which are made in India are more or less generic, and all you need to do is pick the right manufacturer and get the right price, I think people will start switching towards the generics more and more. And we could actually see, I would say some kind of a tipping point at some point of time. That will be aided by what the government is doing on educating people about generics. What I believe my competition will also, sooner or later come around and basically start selling this stuff. So when everyone starts talking about this along with us over a period of time, I expect that the entire country will, at least this medicines will get completely genericized. So I don't see any, I would say, cap on the amount of sales. But in the near term, I would expect that, we'll probably grow at the rate of around 1% every quarter.
Got that point. Also, on the store expansion, so last year you opened around 305 stores, and if I'm not wrong, this year you're targeting 600 stores for FY26, and I believe you have around 400 crores of cash, so you won't be requiring any external funds, right? So how will your margin shape up considering the store additions that you have for FY26?
So the 600 stores will have a small lag, let's say, on the drag down on the margin, but not very significant, because now it is going to be on a base of nearly 4,700 stores. So I don't really expect it to be a huge drag, I would think, but there will be some. As you rightly said, we have the money in the bank. We don't have any debt at all. So we could basically borrow if necessary. But I don't think it will be necessary, given that we are adding only around 600 stores this year. That should not take us more than 170, 180 crores to actually open, and that includes the inventory and all. So cash-wise, we are, good. Growth-wise, we should, come back once our warehouses and all are in position and we start doing things the right way on the back end. And once we align our front-end staff also more towards a top-line growth rather than just only towards a private label growth. And and on setting up the store itself, I think, we're more than capable of doing that. Although we did only 300 stores last year, that is kind of a small, I would say a dip for us. And we were just, kind of going slow to make sure that the back end was all in place for future growth. So yeah, I think we're good on both capability as well as money side. And I don't think that the effect on margin will be too big. The drag will be too big, yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Well, it's another day of kind of consolidation. India market closed. Welcome. I'm Harsh Saita. With me is Neeraj Shah. Let's look at how the Nifty 50 is shaped up. We've largely been range bound around a fifth of a percent lower. 24,770 is the number we're staring at this point. Nifty Bank, slight bit of outperformance seen there. But let's try and break down as to where the pockets of outperformance actually are. Let's look at the intraday on the Nifty 50, and when you're looking at the way the day has progressed, the top, that spike made right at the start, after which it's been a fairly range-bound sort of day pretty much through the day. We're definitely off the low point of the day as well, so around 50 odd points from that low point of the day. That's how it's shaping. Let's look at the heat map on the Nifty 50, and there you go. Not too bad, but life insurers is one pocket which is doing well. SBI as well as HDFC Life sitting in the green for sure. HDFC Life the top gainer. In terms of the top loser, no real surprise with ITC sitting at the bottom. But outside of that, you're also seeing consumer stocks under a bit of pressure. Nestle, a Tata Consumer, a Grasim, some of those names are seeing some bit of pressure in trade today. You're also seeing some bit of pressure within hospitals with Apollo Hospitals down, Sun Pharma also down. So the entire flavor around pharma also looking slightly on the weaker footing. Let's look at it sectorally now, and maybe that gives us a better flavor. The India Defense Index, the Nifty India Defense Index, perennially at the top, at least over the last couple of weeks, 1% higher again today. But FMCG, no surprise that one is down. Auto, metals also, two of the laggards in trade today, 0.5% down each. The Nifty Bank flat, I did mention that. The Nifty IT also flat. So no real contribution coming in from both of those heavyweight indices, and that seems to be playing out on the Nifty 50. Let's look at the advanced decline before I toss it to Neeraj for broader markets. It's been a more stabler day of sorts than yesterday, if I can describe it. But the advances outstripped the declines by just a narrow margin, and that has been the case pretty much through the day. Neeraj, broader markets?
Yeah, well, you could argue that the volatility index has compressed a bit more, which is actually a good sign in trade. But if we can pull up the BSE 500 or the Nifty 500 gainers and losers list for the top movers, and just give you a sense of what's moving and what's not. So on the losing side, Gujarat Fluoro and has been under pressure through the morning and continues to succumb to some selling pressure. So that one stands out. There is some weakness in Oro Pharma as well. Shree Cement succumbs to some selling, about 3% lower for itself. There is weakness in Escorts, Kubota, and TTK Prestige after the numbers that came out continues to have a bit of an issue. NMDC corrects because of a slightly weaker quarter two. On the gaining side though, ITI rock solid today through the day because the numbers slightly above what was estimated, I think, and on the margin performance they've done well, as a result of which I think that stock stands out. LIC of course stands out, and today we're going to do a bit later on in the show a bull versus bear argument on Life Insurance Corporation of India. So that is something I'm looking forward to. But the T&D players and the energy players, energy transition players like Hitachi Energy, Suzlon, Inox Wind, etc., I think are doing pretty well for themselves. So that's a bucket you want to certainly keep an eye out for. 5.5% for Hitachi. The others too have not done too badly. Suzlon about 1.5%. Wonder if Inox Wind is in the green as well. Should pull that one up to, I think, or Inox Wind Energy, because those stocks too have done reasonably okay. Shivangi Sarda, analyst of derivatives, wealth management at Motilal Oswal Financial Services, with us on the show. Shivangi, great having you as always. Thanks for taking the time out. We were looking at the call data for both May and June, and seems that across strikes from 24,800 to 25,000, there is massive OI build-up. Is it difficult for the index to breach those levels because of this call writing done?
Hello, very good afternoon. Thank you for having me. So we've seen that, rightly pointed out, call concentration has sharply lowered in the last two trading sessions. Earlier, we were seeing that 26,000 was the maximum call open interest for the May series, but we've seen yesterday it shifted to 25,000 marks, and today we've seen some pressure as well at the higher zones. Overall consolidating because bulls are also acting up on the lower levels as the crucial support zones. But of course, there is a capped upside that we can see. Now, remarkably, for both the May and the June series, we've seen that the premiums are quite heavy. Now, even in the monthly expiry week that we're standing, and it's just 1 day prior to the expiry, we're actually seeing a lot of premiums near about the at-the-money strikes, which is quite a lot of remarkable right now, because we've seen that Nifty index hasn't been moving in a very volatile manner, but the swings in the option premiums can be seen. So overall, quite a different expiry that we will be witnessing, but buy on decline to continue positionally. Of course, intraday, there will be volatile swings on either sides because there is a clear tug of war between the bulls and bears. So we are looking at 24,650 as a major support level for Nifty for the upside of 24,915 marks.
Would you be slightly more constructive, the Bank Nifty, Shivangi?
Harsh, looking at the banking and financial space, of course, there is some sort of outperformance here. I would like to say that Bank Nifty has been, in strength as it's not fallen as compared to the Nifty index. But overall, we've seen quite a lot of lackluster move from the last 5 trading sessions here, and heavyweights have been, are a little bit on the back seat from the last 2 trading sessions, although volumes and long build-up can be seen in some of the good pillar names. But of course, there is a good support at 55,000, which is being clearly respected here. So this can be looked out for the monthly expiry for the next up move towards 56,000 levels.
So therefore, what are your picks for this afternoon, Shivangi?
So first up on my radar is CDSL. We've seen that overall, with the retail participation increasing and the kind of financial literacy that the industry is focusing on, the awareness, we've seen that the growth trajectory for these exchange platforms have been quite good. Of course, gradual recovery has also been seen in CDSL. Technically, if we talk about this stock, it has come out of its consolidation of the last 7 trading sessions, holding very well at the higher levels. We've seen a gap up and a sustainable follow up after the breakout. So overall, strength can be seen here. RSI is also showing positive divergence here. So recommending a buy on CDSL with a target of 1570 levels with a stop of 1480 zones. Now, the second pick on my radar is Cummins India. We've seen that this stock has been placed well above its key exponential moving averages recently. We've seen that on a month-on-month basis, this stock has consolidated from the last 4 months in a very narrow band. But interestingly, there has been a very strong support-based buying, which is indicating that there is a price surge which is due to happen in this stock. Overall, we've seen that resistances are also shifting higher, and call writers are slightly unwinding their positions as well. So this one is also looking quite positive, recommending a buy here with a target of 31.30 and a stop of 29.50 levels.
Shivangi, where are you short?
Looking at the markets, we've seen that there has been quite a lot of tricky pockets. Now, of course, there are some pharma names which are looking quite weak, but overall, the markets have been quite volatile. And I would suggest that, even if we are going short, it should be with a strict stop loss. We have seen some of the metal space stocks and the power stocks also in weakness. But of course, there has been quite a lot of consolidation among these stocks. So recommendation would be to be very light on the sell side because short covering move can also be seen very quickly in some of the other names in the same sector.
Okay, that's interesting. Okay, Shivangi, I don't know if you've ever looked at this business or no, but it's the management that we are speaking up next and would love to know if you have a view here. Transrail lighting. If you've looked at that, and if you haven't, then other businesses in the T&D space, KEC International had a fairly sharp move yesterday. There are a couple of others. Any thoughts here?
So of course, looking at KEC, because that's one has been on my radar. We've seen that this week has seen an exceptional price volume surge, and RSI is also showing positive divergence. Of course, there was a lot of lackluster movement in the last 3 months, but overall, this stock has picked up. And after the outperformance of the last around about 5 odd years, we've seen a little bit of a halt here, but overall respecting its lower levels, which is a good sign. So investors are quite comfortable, because there is not much of a pain point here. But trading point of view, this stock might lack momentum as of now.
Okay, Shivangi, thank you for joining us. We'll let you go on that note. We'll quickly switch to that corporate conversation that Neeraj was referring to. We have Mr. Randeep Narang with us, who's the Managing Director and CEO at Transrail Lighting, joining us here physically. Thank you so much, sir, first off, for taking out the time and coming and meeting us. So I want to start off first with the FY25 numbers. It's a very strong set of numbers for the full year. You've grown at 30%. You've got a strong order book. What's the outlook like for FY26? One, from an execution perspective, and second, from an order book perspective. What's the potential currently looking like?
Okay, thank you for having me over. It's a pleasure to be here.
It's a pleasure, it's completely ours.
So we had got listed in December, and we had given guidance that we will look at around a 25-30% growth, and our EBITDA would be in the range of 12.2%. So we are actually on track for that for 24-25, and it has been a good year. Also, we had around 9,500 odd crores of new orders. So as of end of March, our unexecuted order book is approximately 14,500 crores. Now, with this trajectory, the growth in infrastructure, both in India and international, specifically for T&D, because 92% of our focus is T&D. That's the way we look at it. We are a T&D company, and we're also looking at growing in different sectors, but we're looking at a slow growth, looking at where we build our PQs, and we develop on this other side of T&D. So our guidance for this year would be, again, maintaining the level of order intake. See, we are very careful on the selection of our orders, be it geography, margin profile, the risk of managing the execution on time, the right kind of utilities. So we therefore have a very clear risk matrix which defines where to go, where not to go. And almost 4 to 5 jobs out of 10 we do not go ahead with. Okay. So the drive is the margin-led growth, margin-led order intake.
So you would give up orders largely because they are lower margin? Is that what you're saying?
See, it
is that
depends
the
on
only metric?
No, it's not. It's competitive intensity. It's looking at the geography, completion on time, the projects, understanding the payment terms and payment cycle, commercial terms. So it's a whole lot of 7-10 factors which decide which jobs to bid and which not to bid. And of course, in the end of the day, we know if the terrain is hugely having ROW or issues and projects are going to delay it, it impacts your margin. So we are careful about that.
So should we expect a 30% growth at least visible over the next maybe 2 to 3 years? Is that something that
we would look at
reasonable?
Around 25% going forward in the year 26.
Sure.
And then as the order continues to flow in, that will be in the same trajectory of 20-25%.
Got it. Now, when I look at, I mean, it's an interesting point that you made, Mr. Narang, that you're picky and choosy about T&D, even though, did you say 92% of your business is
revenue
T&D?
is,
Yeah, when I look at comparable companies, the margin difference is stark and visible. You reckon that order inflow can continue to be as strong as it has been while you maintain your margin profile? The reason I ask this because almost everybody seems to say that evacuation is the big problem right now, and therefore your business seems to be well placed.
Well, we have our execution both happening internationally and domestically. It's a 50-50 mix on T&D.
Okay.
And obviously the part focus is that you execute on time within the timeline of the contract. What we believe is that that's a basic mantra before time completion, and we endeavor to do that. Of course, there are challenges on the way. It could be ROW, could be forest, could be, sometime seasonal issues for, functional Diwali, Holi, where the skilled labor goes away. So these are all the challenges, part of our, DNA of a EPC company.
Okay. What's the outlook like? I mean, you briefly gave the color when Harsh asked you the question, but I'm kind of inclined to ask this a bit further. So would you believe that the way the DEX is set right now, that this growth number that you spoke about could well continue for the better part of the remainder of the decade? Or is it a fairly near-term visibility that a company like yours would have right now?
So we don't believe in, short-term focus.
Okay.
We have a 3-year strategic plan. And we are very clear that with the growth of infra, we're talking about T&D growing in India and internationally more than 100,000 crores of, the potential market opportunity, new geographies. So we believe that the T&D space in infra will go for the next 3-5 years without a problem.
Okay.
And we are very happy and bullish to enjoy this journey and do what we are supposed to do, is deliver good results for our company and stakeholders.
So, sorry, just a follow-up there. And I believe that the past, so revenue CAGR, let's say 15, 20, 22%, whatever, for the next 3 to 5 years. I've seen that your last 3-4 years, if I look at the EBITDA CAGR, it's been much higher. But it might be deceptive because you may not be able to do it the same pace because your margins have stayed steady per se, right? If I'm not wrong, 12%.
Yes.
So would it be safe to assume that as you pencil in your growth for the next 3 to 5 years, you would probably do circa 20% ballpark revenue growth, EBITDA growth, and bottom line growth in almost equivalent fashion?
Revenue growth for sure. Margin profile, as we said, we are picky and choosy, so we definitely want to look at 11.5, 12.5%,
that range, broadly.
Yes, yes. Because, see, as you look at the geography and the orders and the intensity, we need to be very clear about, the balancing of the order intake and balancing of the revenue profile. So we would do that.
And I'm guessing, sorry, one follow-up to that. I'm guessing you would keep leverage under check, and therefore it will not be that the interest cost goes so high that the PAT growth is not commensurate with the EBITDA growth.
Absolutely right. And the other part which is very important for our company to be informed is that we are well diversified, backward integrated.
Okay.
So we have our own conductor manufacturing, tower manufacturing, our own testing, which is unique to the industry, because we also have conductors which we manufacture, which is the AL59, HTLS. So therefore, that helps us in being more competitive.
Got it. So the current, so net point being the current debt of around 600 odd crore should remain as is?
It will go up marginally because we are expanding our factories and looking at some capex loans and etc. But that is well, within the realms of what we think is right in terms of the payback.
Fair point. And so therefore, capacity expansion, you're building in for very, very strong expansion. You're virtually more than doubling, at least on the ongoing expansion that you've announced. How quickly does that come on stream? And how quickly do capacities get maxed out?
Okay. So we are having 2 phases of expansion. The first phase of tower expansion, which we got a budget approval from our board in January, was around 326 crores, which already work is happening. We are doing a brownfield and a greenfield project. A brownfield project itself will come into stream by June, July this year for towers. The new factory conductor, which is already towers is started, will happen by end of the year. And the conductor expansion in our existing brownfield factory will happen in the first quarter of next year. So we are already in stream, and this is very clearly defined based on the order intake we have and the order book we have to execute. Now that was phase 1. Phase 1, which is phase 2 now, is what we are looking at is, as you rightly said, new orders. How do we look at planning for 2 years? So that's a 2-year horizon, 18 months horizon, where we are now looking at within the existing tower and conductor factory a brownfield expansion. We're looking at 50 odd crores both for tower and conductor. And when you're executing on time, you need tools and plants. So that is very important in terms of TSC machines, rollers, winches, and so all this is part of the DNA which we need to make sure that our margin is intact, and you pre-plan that for a 2-year horizon.
Mr. Naran, some idea about the landscape as it stands right now, because we've been talking about energy transition being such a big thing. Suddenly people have come up and say that evacuation is a problem currently while plants are getting built. As we understand, power demand during busy hours, maybe because of solar plants coming on stream, has gone so low that spot power rates have actually gone to near negligible, right? So give us some lay of the land of where you are operating in right now, and how do you see that changing, if at all, over the next 5 years?
So for us as a company, and being focused on T&D, which is around 90 odd %, whether it is solar generation or it is nuclear or coal based, transmission remains the same in terms of evacuation of power and reaching from A point to B point, both domestic and internationally. So what we see is in India itself, a huge growth of the evacuation need. Several of the big companies are enjoying the order intake happening. We're talking about a 1 lakh crore opportunity. Internationally, both Africa, where we are pretty predominant, more than 15 countries we're working on. We're talking about Southeast Asia, SAARC. Everywhere there's a huge power demand, and there is a need for evacuation, and therefore transmission lines come in. So we see the next 5-7 years horizon, since we are well spread out between international and domestic, gives us the buoyancy to feel that yes, we can deliver for our stakeholders, and we are on the right journey.
Which is fine. The other question then therefore I have is that the common intelligence, if I can call it that, that we gather from people is that while, let's say for example, solar modules, solar panels, etc. has been a big opportunity because evacuation is a problem and storage therefore is becoming a problem, does battery energy storage system, for example, become a really big deal for India and for the world? It may not be relevant to you right now. Maybe you might have plans, maybe you don't. But which is why I said, okay, beyond your business as well, is there something that you see on the anvil?
Yes. So absolutely, the storage of electricity, managing the solar opportunity. In fact,
you can remove it if you want.
Okay. So sorry. So principally, we've seen that we are also interested in solar EPC. We're looking at international, we got one job. So we want to build the solar EPC portfolio for ourselves, and battery storage for sure is an opportunity. And we will look at as and where we feel that we have the wherewithal, the people, the execution, the skills, we will get into that.
Got it. So what's a couple of questions now. What's a comfortable order book to sales kind of ratio? Is that something you keep in mind, and what would that number be? Would it be 3 times?
At least 2.5 times.
Got it. And therefore, just trying to understand, the overall climate seems to suggest that there's a very strong demand for evac. How do you prioritize India versus Africa versus, and therefore, is there some upside potential to margins given the kind of push that there is, demand that there is?
So there are 2 parts of it. One is, let me talk international, then come to domestic.
Sure.
International, we work with mostly multilateral funding agencies. It's a World Bank, Asian Development, African Development. And these are very organized, systematic funding of the utilities where they plan the ROW, they look at the funding and all that. And they have better commercial terms. So it helps us to work internationally because we are fully qualified in transmission globally, including our factories are enabled for all certifications. Now when we come to domestic, now domestic itself has improved. There are a lot of new jobs, opportunities coming in, contracts coming in, and the margin profile in India is also improving because you're talking about bigger kV jobs of 750 kV. So it's moving from 400 kV to 750 kV. So principally, it again depends on your ability to execute on time. See, if you get delayed for any reason, 3 months, 6 months, 9 months, it lowers your margin profile. So the key driver is diversification, backward integrated, good execution skills and looking at good commercial skills. The billing to cash cycle should be good. So all these are integrated way to manage your margins.
So my final question is with regard to, and probably it's just a financials related question. When I'm looking at your numbers, working capital requirements are going up significantly in the near term. Is that something which is part of your business in terms of both inventory as well as receivables, or do you intend to bring that down?
We intend to bring that down. We definitely believe that we are looking at 74 days of net working capital. How can we improve that? And the reason of working capital requirement, that's why we went for an IPO to fund that. And therefore, we are pretty good in terms of stable for the next 2-3 years. And we feel that, of course, the improvement is every day and in every contract, in every place we work. So it's a constant endeavor to improve what we are doing, and it's the way of life.
Very interesting. Okay. Well, lovely talking to you, Mr. Naran. Thank you so much for being with us and giving us your thoughts, and all the best for the quarters ahead.
Pleasure is all mine. Thank you so much.
Thank you.
Privileged to be here.
No, the pleasure was entirely ours.
Thank you.
Thank you, sir.
And viewers, we need to slip into a break on the note that Transrail is doing not too badly, 2.5% up again today. I think they have had some recent order wins as well, so all of that combines. You heard the management. Hopefully that answered most of your questions. We take a break, come back with all the chatter behind the dealing rooms. Stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio.
Back with India Market Close right here on NDTV Profit. Let's try and pull up the markets once. We are 0.2% lower. Not bad. The IT index is just bobbing between the red and the green. But for all the heavy lifting that the Nasdaq did yesterday, not quite showing in our IT index today, must say. Bit of pressure yesterday, and I think that continues in the session today as well. We just did a conversation with the management of Transrail, and for all of you who might want to do it, please go to the digital feed and look up the interview. The stock is up 2.5% as we speak as well. But if you want to know more about stocks and the insight or the inside stories, well, we try and get you the chatter from the dealing rooms in our special segment, Heard on the Street. Let's get in Somit to talk about all of this. Somit, good afternoon. Take your time. What do you have for us today?
Well, firstly, it's ITC. We did tell about the block deal that could happen, and now what I'm picking up from dealers is that big buyers were lined up for this. Some of the prominent names for ITC block deal were GQG, SBI Mutual Fund and ICICI Mutual Fund. They were among the bigger names that have bought some stake in ITC of the 2.6% block deal that happened with of BAT selling its stake in ITC. Second on the list is Eternal and NBCC. Now, dealers are indicating that there are buy flows on DI desk on both these counters. In fact, if you look at Eternal, which was earlier known as Zomato, it was down around 1% in trade. It has recovered from its day's low, and dealers are indicating that SBI ETF could be one of the passive buyers for Eternal in trade today. Then it's Sandur Manganese, which is on the list of dealers. They are indicating that high net worth individual HNIs and smart investors have started to accumulate this counter in trade on anticipation of strong Q4 numbers. In fact, of late, if you even look at the delivery volumes for Sandur Manganese, they are on the higher side. So keep an eye out for Sandur Manganese as well. For Bajaj consumers, dealers are indicating that there is a buzz on the street that the name of the new CEO might be announced very soon for this counter. So keep an eye out for Bajaj consumer as well. Tata Tech dealers are indicating that there could be a potential block deal anytime that could be announced soon. Tata Tech is a company which has been promoted by Tata Motors. And lastly, it's Bellrise, a newly listed company. We saw muted listing. The stock gained around 9 to 10% in trade, but dealers are indicating that large HNIs have been accumulating this counter at every dip. So there could be a potential rise going forward is what dealers are indicating. So keep an eye out for Bellrise as well. It's just it listed just today in trade.
Okay. Well, certainly watch out for some of these. Somit, I have one quick follow-up. So are any, I don't know whether you know this or not, but I'm just asking. In ITC, maybe I can look it up, but the names that you've spoken, are some of these repeat buyers? Because we know, for example, GQG has a pattern of investing further into companies that they've bought in. Any insight on this?
Well, it's all three the names that I mentioned, GQG, SBI and ICICI. All of them are repeat buyers. So it's not that they were waiting for this block, it seems as if.
And Somit, now I'll be waiting for you to tell us at some point of time when BAT will be making any kind of exit in ITC hotels as well. Because I would guess that block too at some point of time would be on the anvil.
Yes, that block will happen, but Street is not expecting that block to happen at least for the next couple of quarters. So nothing on that so far.
Well, why is that so? The thought was that they would at some point.
Yes, they did mention that they will be looking to completely exit. In fact, that is a stated line that has come in.
Correct.
But they're just waiting for the right valuations to come in, and at that point they might.
ठीक है, ITC बेचा तो अभी थोड़ा राह देखते हैं. Hotels में बाद में बेचेंगे.
Anyways, ITC hotel they won't fetch much of money.
Yeah,
Here they are getting around 10-12,000 by selling just 2-3% stake.
Correct.
You know, the other thing is, by the way, just before we thank Somit, BAT globally has had some stress points. Right. 2023 was a really bad year for them. 2024 they came back, but because of amortization and a few other things that they did. So it's not been a happy hunting ground globally. So therefore, if you're making money in a counter where the tape doesn't get disturbed, and India we've seen that now, the tape doesn't get disturbed due to large selling as well. Maybe it continues.
Yeah, but I'm just looking at maybe the PE ratio for an ITC. It's around 25 odd trailing 12 months. So, I mean, you always look at it 1 year forward. I know the rules, but yeah, and it's still
not
at
an
a premium
expensive.
to
1 year forward valuations would be around 20
to 23 times.
It's
correct,
not
which
expensive.
is largely in line with their 5-year average, and therefore just kind of wanting to put it out there. That's how valuations stack up. Yeah, thank you so much, Amit.
Thank you.
Anyway, so yes, Neeraj, a couple of these stocks, right, in focus. One is a Transrail. Very interesting conversation. 25% growth next 2-3 years, 20-25%. Listed at around 28 times odd price to earnings, currently sitting at around 25-26 times price to earnings. So that one's also looking decent, and I'd love to have this conversation. Let's in fact bring in our guests as well. We have Kush Bora, founder kushbora.com, and Dharmesh Kant, head equity research at Chola Securities, joining us. Good afternoon, gentlemen. Dharmesh, let me come straight to you. This Transrail lighting conversation that we've had has been an interesting one. With regard to the way in which the stock performance has been, from the IPO, we've seen the stock up maybe 50 odd % from the IPO price. So very good returns for investors and very strong commentary. Would you at all venture into some of the names within this space, and are there any preferences you have within this T&D space?
Yeah, Gautam, see, T&D space is definitely attractive, but the problem happens with the valuation. So if you look at historical valuation multiple of this space, so more or less, I mean, 25, 26 times is where the average lies around, and beyond that, extending beyond that becomes difficult, because eventually over a period of time, say 5 years, 6 year or 10-year period of horizon, 20-25% kind of a CAGR growth is difficult to come by. So in couple of years it may happen, but eventually it lands up there. But this translate lighting has a very diversified business, and they're also heavily into the railway side of the business. So it offers well for them, because to my mind, this year should be a good for all the railway, infra kind of companies. So there we think last year they lagged it because of lack of spending happening out there. But this year the catch up is there. Plus this year own allocation will come into the place. So that makes the entire space attractive. People who have invested in the IPO, or I mean who have taken new positions because of the, there was a decline in between, they may continue to hold on to the position. Fresh addition, if you are not looking at very strong gains, I mean, if you are looking at 50-20% kind of an upside from a year's perspective, is fine with that. Another stock from the, I mean, not from the T&D space, but from the railway infra space, which we are liking, or just on the basis of valuation multiples, is Ilcon International. I think the stock is, just poised for a re-rating, and maybe around, I mean, once it is re-rated, 300, 350 should be the likely target. And the reason why I say so, 15-16% kind of a growth it has delivered already. But our expectation is this year, FY26, they would be delivering around about 23-24% growth, both on revenue with stable margins and the profitability.
Always wondered, Dharmesh, why is there such a large difference between an IRCON and an RVNL in terms of the way in which they are valued? Is there a thought process there? I bring this question to you only because you mentioned IRCON, so just trying to get that.
No, even I am at loss of thoughts to figure out the difference. To be very honest with you. Yeah.
Sure. Okay. Point taken. Kush, let me come to you with regard to the index calls first. What's the view with regard to the Nifty? What's the outlook looking like, both the Nifty as well as the Bank Nifty?
Sure. First, very good afternoon, everyone.
Good afternoon.
Well, I think we're consolidating, and maybe with a mild negative bias, but I'm not too perturbed by the moves that we've seen yesterday, and certainly not by the moves that we are seeing today. I still maintain that 24,500, 24,600, that support zone should act up, or today, tomorrow, for the next couple of days. Once the expiry is over, this one happens to be the monthly expiry, then we'll know the clear picture as to where does the index go. I would suggest that this is an opportunity to create long positions. Keep your stop losses at 24,500 or maybe just under that. Right now, what is happening is that 24,800 straddle is at play, which has a premium of roughly about 200 rupees. So over the course of whatever, a little under an hour left today, tomorrow, maybe the index could move within that range, and that falls precisely with that support and the resistance band of 24,600 and 25,000. So I think that's going to be the range for today, perhaps even tomorrow. But with 24,500 or just below as a stop loss, I think this could be an opportunity to create long positions, at least from a positional standpoint, if not an intraday trade. Bank Nifty has now started to consolidate with a mild positive bias, and it's holding above the 20-day moving average. So that's a positive sign, but the momentum is missing. Here too, the expiry effect might be lingering on. So for now, I think the 56,000 resistance on the upside acts up, but the support zone of 54,800 makes it a risk reward ratio of 1:1. So not very exciting up move on this one just yet. Maybe once it gives you that breakout, that's when you create a long position on the Bank Nifty. For now, you could focus on the Nifty.
Okay, what about your ideas? Good.
Both of them on the long side. First is Inox Wind. The stock has done well, we all know. But for the last two sessions, it's actually holding above the 200-day moving average. Call option data also suggesting resistance around the 200 mark. So that's that's some distance away. So on the upside for targets of 196, 199 and a stop loss around the 189 mark, Inox Wind is a long trade. On the other stock is Eris Life Sciences. Now, this is one stock that we had discussed yesterday also in our closing show. for a second target of for a first target of 620. Now that's been hit, so we're moving up the targets to 1680 and 1740, and the stop loss also moves up, and that now stands at 1560. So Eris Life Sciences and Inox Wind are the two long calls for the day.
Okay, also time for stock of the day. Apollo Micro is the one which is buzzing on the back of 113 crore rupee order win. But that isn't so. Getting us a better perspective, here is Anushi.
Right, so Apollo Microsystems has been in focus for the last few sessions as we speak. First trigger being the new order win that we are looking at, which roughly sums up to the size of 114 crore. Now this is an export order that we are looking at, and this is for the development of avionics system is what we are seeing for the company. This is intended to be used for civil as well as military aircraft applications as we speak. So the first trigger is that, but even if we look in terms of how the performance have been, just a few days ago the company came out with its fourth quarter results, wherein we did see a decent set of numbers. Revenue was up around 19% here, margins stood at the levels of 22%, while net profit saw about a 8% of growth. And if you take the FY25 in picture, they also met their 45 to 50% of revenue growth that they had projected earlier in FY24. So that is the, but it's the outlook going forward FY26 which is interesting for the company, because if we look, the current order book stands roughly at the size of 600 crore. This is as per the management discussion which we just had. So this 600 crore, the management does see that by December 25 of this year, that would scale upwards to 2,500 crore. So it's almost a 4 to 5 times of a jump that we are looking at in terms of where the order book is concerned. So this provides further revenue visibility forward for the business. Now this would be led by missiles and naval defense sectors. So it's important to keep a track of on how the inflows are going to pan out for the company in this coming 9 months or 6 months that we look at. Now, other than that, if we talk about the guidance forward, the company has maintained its 2 years outlook in terms of a 45 to 50% of growth in terms of whether revenues are concerned. Operating margins, however, will be in the range of 22% that we are looking at in the sustainable range that we are seeing. But it's the first half where we'll be looking at more of an improvement in terms of where the margins are concerned. But second half may see a little bit of an impact in terms of margins, and this is on the account of execution. So that is another factor that we'll be keeping a track of. But overall, in terms of where the capacity addition is also concerned, Unit 2 and Unit 3, the management does expect it to start commencing operations from the second or the third quarter of FY26 onwards. That would lead to revenue growth as well. In fact, even the new acquisition that the company has made in explosive space, so if we take that in account, that excludes the 45 to 50% of growth that we are looking at, but with which the company expects to double its revenue going forward. So that is an interesting space also for the company. So overall, that's the outlook that we are looking for Apollo Microsystems.
Thank you so much for that, Anushi. Neeraj, some of these defense names have really picked up steam over the last couple of weeks. We saw maybe exactly 2 weeks back, in fact, the defense index up 14%. Last week as well, it closed in the green despite that kind of rally. And some of these counters now have seen a stupendous rise. Now, where to from here will really be the question, because of the way in which some of these names have moved.
Yeah, the immediacy seems difficult to predict, Harsh, and maybe Kush and Dharmesh might be better placed, and Kush in particular, because of the technical charts. But the medium term, as we've discussed so many times right now, because of what's happened in Operation Sindoor and the proof of concept, that it seems, in fact, I just saw Apollo, as Anushi highlighted, an export order for avionics, right?
Yes.
And this is, again, a proof of concept, right? Maybe, I'm just putting 2 and 2 together, maybe it's happened after, or maybe it got hurried after all of this has happened. Maybe Apollo didn't play any part in Operation Sindoor, I don't know. But maybe it just happened because of that. So, remains to be seen.
Yeah, absolutely. Want to go across, Dharmesh, probably take a view from you. How do you look at defense and aerospace? What has changed, in your opinion, so dramatically, and rally warranted? Has things really changed on ground to warrant this rally?
Perception has changed. I mean, how you perceive the same companies has changed dramatically post this entire episode which has happened. And I mean, this is a humongous and a very tall task to achieve. I mean, from 600 crores of order books to 2,500 crores by the year end. I mean, only 6-7 months is left, or 9 months for the financial year is left. So such kind of order inflow, if it does actually happen, then definitely this price of 100 PE multiple is quite justified, because it drops down to, I mean, 30-40 times PE multiple if you take that 10% kind of a PAT margin into that order book. So, but again, Harsh, the point is most of these companies are EMS players. Basically, they are into PCBA kind of an assembly, kitting and tolling kind of a thing. And those value additions are, I mean, very less compared to the entire product. I mean, if 2,500 crores of PCBA assembly is there, then the final product would be at least, 5 lakh crore of product out there. So that is the size. I mean, 1.5 to 2% is PCBA goes into the entire, if a missile, if you are building a missile for that technology and everything. So that, I mean, the proof of the pudding has still to come on the numbers front. But as of now, most of them are heated. But still, having said that, there are fine plays out there. For example, Hindustan Aeronautics or BEL. I think solid companies are there, and still a lot of re-rating is likely to be there, because they are into complete OEM manufacturing. So my only advice is, if you are looking at defense companies, look at OEM manufacturers rather than, EMS kind of a player, because there can be too many slip between the cup and the tea eventually when the final numbers roll through for next 2-3 years.
Dharmesh, interesting perspective. Now, give us how one should look at these companies. Some suggest that you look at the order book size, look at margins, and determine how valuations should stack up. Some say look at growth potential, maybe next 1 to 2 years, what's the kind of growth clip, and therefore captures execution. And then there's a third basket which say that the cash flow, just the top line and PAT number doesn't count. It's the cash flow essentially that counts. How should one look at it? Should we look at this aggressively, look at only the order books, look at it slightly more conservatively, given everything that's playing out?
Yes, I can tell you about myself, how I look at these companies.
Sure.
So the first thing is the product profile, whether it is a service provider or an assembler like an EMS or PCBA kind of a thing, or whether it is an OEM. So when we picked up HL 2 years back, so the reason was a shift from an overall kind of a company to a complete OEM manufacturer. So that was point number one. And second is definitely the order book. So order book comes at the second stage. As of now, as we speak, it's 6x, order book HL is sitting on. So the book-to-bill ratio is almost 1,85,000 odd crores of order book they're sitting on. And third definitely is the execution timeline. So you may be sitting on a very big order book, but the execution itself takes 3 to 5 years. Then that entire order book is split, the profitability is split over 3 to 5 years, then it doesn't make any sense. But if the execution timeline is lesser, I mean 1 year, 1.5 years, then definitely your profitability growth would be far higher. So growth and margins will follow if these three things are in place. If it is a OEM manufacturer, a good size of order book, and the timeline, execution timeline is very critical in this.
Okay, while we are at it, we have flashes at the bottom of your screen. Some civil mock drills to be conducted, Gujarat, Punjab, J&K, Rajasthan, states bordering Pakistan. That's expected to happen tomorrow. So those residing in these states could well be part of those drills. So something again to quickly mark out. But Kush, quickly your take with regard to defense. You believe there is still some bit of leg to go with regard to this stupendous rally that we've had?
Not from a fresh allocation perspective, Harsh.
Okay.
Either you're seeing a lot of these names in overheated territories, or you're seeing negative RSI divergences, which don't really bode well for a fresh long position. But the kind of momentum that you've seen, and the shallow profit booking that some of the names like HAL, BDL have seen, and then they've rebounded quite sharply. I've maintained this for a while, that these are stocks that you want to just keep in your portfolio, even if you sell say 50% to book profits. That's how much you sell, and then you re-enter at lower levels, but they haven't really been kind enough to give you those tips. So don't let go of any holdings that you have, but fresh positions, I would suggest just wait up for some more time, because the risk ratio or risk reward ratio is not favorable. They keep moving higher, but then that just makes the risk ratio that much more unattractive. So no fresh allocation. But yes, if you do have, you don't want to let go of them.
Now, of course, that bucket of stocks buzzing, in fact, the top sectoral gainer is the Nifty India Defense. And we've hopefully given a good complete view of how defense is currently playing out. But let's quickly take a look at some more buzzing stocks that are on our radar. Puneet joins us with some stocks buzzing on the back of numbers. Puneet.
Well, unfortunately, there's some defense component in here as well for Sansera Engineering. The growth has been continuing for the company in Q4 as well. And revenue is up 4%. EBITDA is largely flat, but they maintain the 16 to 17% price EBITDA margins, while profit is up 28%, at 59 crores. And the company's order book has consistently increased. It's up 16% on a YOY basis to come at 1,855 crores. And they've also said in the conference call that they will be looking at the non-auto segment going forward, which is almost 30 to 40% of the revenues now. So it's become substantial. The margin push will come from those as well in the medium term, and hence the stock reacting to the commentary as well. The other key stock is Precision Camshafts, and this again is backed by results. And what's interesting is while the revenue of the company is down 25% in this particular quarter, it's actually the EBITDA that's led based on cost savings. That's the EBITDA is actually up 18%. So there's that 40% differential in lower revenue growth but actual margin growth. It was led by employee expenses that was down 11% YOY, as well as other expenses which was down 13% on a YOY basis. And Mr. Vijay Kedia does have a stake of over 1%, which has been one of the mainstays over the last 2 years at least. So watch out for this one. And finally, Techno Electric, another very solid quarter for the company. Revenue up 85%. EBITDA is up over 100% for the company, coming in at 126 crores versus 54 crores. And margins subsequently have gone up to 15.5% now in this particular quarter. Because of that, net profit is up 73% for this company as well. So overall, these three stocks buzzing on the back of earnings and reacting positively on commentary as well.
Okay, yep, and very strong move from some of them, but particularly, thanks Puneet for that, but particularly from Techno Electric, simply because it just surged during the course of the day, 8% higher, and then it's ending up about 13% higher. So it's very strong linear move. Kush, I reckon in technical parlance, such moves are welcome, but I don't have an idea of what the stock has done in the previous few days and weeks. So would love to understand from you, how do you think of it from a trade perspective?
Yeah, well, the reason for the big smile is that, about 12, 13 sessions ago, we did give that as a call for
is
a
that
second
so?
target.
Okay.
Oh, absolutely. 1250, 1290 were the targets. I mean, right now it's way above those, very comfortably above those. So my suggestion would be whoever's holding on now would be a good time to book this out completely, because despite the stock, giving these kind of good moves, still some distance from overheated territories. And, first time it's crossed the 200-day moving average for this calendar year. Now it comes up to those selling zones of about 1400 to 1440 odd. So there could be some supply pressure that might come in for anyone who's been holding on to this for more than last 6-7 months. You might just see some selling come about. But if you've got a position, you might want to book it out. If not, then just wait for some dip closer to the 1300 mark. That's again a good entry point. On the whole, the medium term structure for Techno Electric is very much intact.
Any thoughts from you, Dharmesh, on any of these, including Techno Electric?
None whatsoever, Neeraj.
No.
So I will take just a minute here.
Yeah.
Neeraj, I was just going through all the numbers of all the 600 companies which have reported number, and the pain point was you were unable to find a flavor. There was no secular move anywhere. And there was nothing negative, but at the same time, there was nothing positive in most of the numbers which came through. It's just that relative trades are playing out, and because of lack of liquidity, you do see such volume surge on the day the results are announced. But again, the drift is not there. So the hard point is the drift is not there. And secondly, the other highlight was almost 30% of the companies of that 540 companies which we were glancing through reported negative earnings growth not for the quarter, but for the entire financial year, FY25 as well. And the absolute growth was 6.5% for FY25. So that is what is a bit of a worrisome at this point of view when you are going to pick up a stock. So, and management are also very unclear as to the directional. I mean, defense and all is fine. They are very, gung-ho about their sector. But apart from that, if you look at anyways, even banking companies, if you talk to them, they are not sounding very confident about, say, 15% or near 20% kind of a profit growth in FY26 or 27. So that's the worry reason. That's why we are seeing consistent profit taking at higher levels.
So maybe that's something, and that's true, right, Neeraj? We haven't seen. That's so true, Dharmesh. Actually, that we haven't seen very bullish commentary from any one pocket of the market. There have been certain specific stocks where there has been extremely bullish commentary coming through in Q4.
But very unlikely that we will have synchronous commentary which is very constructive from a sector in the last 3-4 quarters either, right, Harsh?
Yes.
So, which is fine, but individual pockets. So, I mean, I don't know if NBFCs per se gave that, but otherwise I thought the commentary from most defense names. So, everybody from Apollo to an Ashok Atluri of Zen to whoever else that we spoke to, I thought was very constructive commentary. I don't remember the railway companies. Real estate still seemed optimistic. But otherwise, yes, you could argue, but do we hear that as a synchronous commentary?
Generally, when we see a bit of an uptick with regard to where IT is concerned, we start to see that commentary change a little bit. We didn't see that flavor coming in. Maybe so that's one pocket. But anywho, I mean that's broadly how we see it. Dharmesh, I wonder whether ITC would be something that you're looking for, because that's not a conversation that we've had. I mean, Neeraj, me, Somit had that. But what's your quick take with regard to an ITC?
Not really. I mean, the entire, FMCG space, I don't think it's just a trading bet. I mean, couple of percentage point here and there. And if you look at long-term averages, I heard Neeraj mentioning that a while back. It's actually trading there. Even after this block deal, I mean, there was a correction. Then there's a dividend issue. I mean, 1.5% goes into dividend as well in the price correction. But again, if you say 6 months down the line, whether it would be a trending buy for say 15% or 20%, it doesn't look like in ITC as well. So it's a very muted set of environment which we are experiencing, whomsoever we are talking at different regions of the country, be it north, east, even in the south. So, I mean, things are very muted, and that's the reason why I think this year will be very difficult in stock picking.
Yeah, certainly seems to be that way. Okay, well, let's move on from the listed to the unlisted. Or is it unlisted? Because it behaves like a listed company for sure. The kind of trading that happens on the NSE stock. But with the NSE IPO on the brink of SEBI approval, or so we feel, the shares obviously have gained a lot of attention in the unlisted market, with retail investors also seeking to grab a slice. Now, how does trade in this unlisted shares take place? Is there a regulatory oversight to this as well? Alex and Hiral joining to talk about that. Alex, over to you first.
You said it. There's a lot of interest, and FOMO comes into play as well, because the price of NSE shares in the unlisted space have gone up quite significantly in the recent past. Probably because there is a feeling now that maybe, just maybe, that IPO may be around the corner. But why has this taken place? There are a few aspects that took place in March. One is that the board removed the restriction that required new investors to be vetted by the board. That's one aspect. The second is that there was a bonus share issue, and so the per share price of NSE has dropped, made it more affordable, as a result of which the number of shareholders in NSE has gone up very dramatically. So both those aspects come into play. But let's talk about the broader issue of investing in unlisted space. Traditionally, you've had only large investors get a slice of unlisted companies, and also through the AIF route, the Alternative Investment Fund route, which invests in unlisted companies. To a certain extent also PMS, but they have restrictions on how much they can invest. But now, more so now in the recent past, you have a private network that has been created, and deals are taking place that are being facilitated by wealth managers as well as certain brokers. Now, what do you need to know about this? Beyond that, right? So how is this transaction done? You get in touch with your broker. Of course, you need to have a KYC, etc. with them, and they will let you know what shares are being offered that are available in the market. You might hear names like the NSE, or you might hear Chennai Super Kings, or certain other entities, other IPL teams as well. There is a certain amount of money that is quoted. There is generally a lot size, and traditionally these lot sizes have been pretty large. But recently you've had wealth managers and certain other players, brokers, that split the lot and make it available to multiple shareholders. Now, the amount is paid, the transaction takes place, the shares are transferred to your demat account. That's essentially how the transaction takes place. But there is a certain amount of risk involved. And let's talk about that. We'll talk about the opportunity first, of course. Why do people go ahead and buy that? Because you are getting in the early stages, potentially. There is a value that is seen that might go up when the market gets wind of an IPO that is in the works. When the company comes to IPO, there's a lot of interest and usually the value goes up. This is not guaranteed, however. Now let's talk about the risks as well. And there are several of them. First and foremost, there is no regulatory oversight and no one takes counterparty risk. What am I talking about? In a listed security, in a share, when you make a transaction, the exchange itself takes the counterparty risk to facilitate the transaction. This does not exist in the unlisted space. There could also be a drop in value. There's no guarantee that if you get in early, the price will keep going up even when it hits IPO. In fact, we've seen several instances of companies that have hit IPO and then lost value and are trading below the issue price as well. The drop in value could also occur during a lock-in period that existing investors have to bear once a company goes into IPO. And finally, the trading of listed shares, the Securities and Exchange Board of India has very clearly stated that it does not encourage this. In fact, it's advised people not to do this, particularly because of the risks that I've spoken about. Having said that, there are a lot of opportunities in the space. People have made money. And let's talk about the whole issue of NSE as well. Hiral joining me to tell you about why this is important and a comparison which is very interesting, I thought, with BSE.
Absolutely. I mean, two exchanges that are there, and let's understand from a business and a valuation perspective where it stacks up. Overall, if you see whether it's an attractive play or not, if we can just have the first slide clearly, which is talking about the top line as well as the profit number. Now, overall, if you see the FY25 top line, in terms of 2-year CAGR, NSE is at 13.9% versus BSE at 90.4%. So clearly, in terms of the CAGR, NSE is way lower. Similar is the trend in terms of the profitability as well. That's the compounded growth if you see. 28.7%, that's the 2-year for NSE versus 145%, which is in terms of where BSE is concerned. Now, let's understand the market share trends between the two of them. What is interesting is, let's only mainly concentrate on the equity options, wherein NSE equity options has been losing market share, and in this category from 100% it's come down to 87.40. Now, why this is happening is because BSE has gone ahead and ramped up their options trading, and that is one of the reasons why you're seeing this kind of a downtick in terms of where market share goes. Let's understand the operational efficiency also of both the companies. Now, yes, the operational efficiency has been fast, but what is interesting is, for BSE, it's faster as compared to NSE, and it's mainly the higher derivative volumes which are aiding the operational efficiencies of both the exchanges. If you talk about NSE EBITDA margin at 66% versus a 50%, which is 2 years ago, and BSE EBITDA margins are at 54% versus 24% 2 years ago. So that tells you in terms of where the operational efficiencies lie. Now, with all of these parameters, yes, it does seem that BSE from a business perspective seeming more attractive than NSE, but what are valuations telling you? If you have to look at the valuations which is current, NSE is cheaper as compared to BSE. NSE is trading at 43.7 times versus a BSE which is trading at 74 times. So it's an absolute play in terms of growth and value. Which side you want to go in terms of the boat is what is a call that the investors have to take, but that's what it is looking like so far.
Thank you so much, Hiral, as well as Alex, for breaking that down pretty comprehensively for us, frankly, and a very interesting one as well. It's listed versus unlisted. It's free market versus slightly more restricted in that sense, if I can call it. But it's a very interesting play. It's not something that we've seen too often, a BSE versus an NSE and the kind of opportunity capture that's there. Dharmesh, do you have a view with regard to, I would well presume that you may not talk about an NSE because it's unlisted, but but if you do have a view, and if not, then just give us the context. BSE gaining market share, trading at 74 times, large expansion in terms of margins. Do you see some of these tailwinds continue for the BSE and the valuations justifiable?
I doubt that these tailwinds will continue for BSE for a longer period of time. Maybe for a short period, 1 year, 2 year, it may. Eventually, the valuations have to merge in line with, international peers. So, if you look at the EPS of NSE for FY25, it was 50 rupees. And at 2000, it's trading at around, say, 40 times PE multiple on trading basis, whereas BSE is at around 75 times. BSE is still on, 1/10 of the profitability which NSE generates. So eventually even that will catch up. And globally, all of exchanges trade at around 25, 30 times PE multiple. And even their market has, grown. It's not that they are not growing and still they are commanding this kind of a multiple. So, US market has grown more than what our market has grown during last 3 years. So my sense is wait for this NSE IPO. If you are holding BSE share, try to book partial profit right now. And post that, to my mind, NSE is still a better option to go in for long-term investing.
Okay, so NSE, it is, at least that seems to be the verdict from Dharmesh. Dharmesh, you know what we're going to do? We're going to let you go on that note. Thank you so much for joining us.
Thank you so much.
Kush, we're going to take a technical view from you as well, but that's going to be on the other side of this break, along with the bull versus bear on LIC and the BTST ideas from Kush as well. Stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. Now, much awaited bull versus bear with regard to LIC. At least I was waiting for it. So let's quickly start off with regard to what the first bull case is on an LIC. One, it controls more than 60% market share in the life insurance space in India, so has a very, very large market share and is a market mover, no doubt about that, has done so for many, many years. But the growth in Q4 is weak. You want to see LIC pick up in terms of market share, or at least hold its market share. That doesn't seem to be happening. They seem to be letting go of market share. So that's the bear case. Let's talk about the second key piece in this. The value of new business margin has increased by around 152 basis points on a YOY basis. So we've seen a YOY growth of 152 basis points on the value of new business margin. However, you're looking at absolute value of new business, the number of 3,500 crore, which came in for Q4, is well below estimates. at least as per our polls. Let's look at the bull case. The third bull case is there's a strong pivot in product performance as well as margins. Now, LIC has guided for this consistently. Since the time of listing, they've been saying we will improve margins, we will increase our non-par, and mind you, non-par or rather non-participating products, which is 7% of the mix for LIC at the time of listing. They hiked it to 9% in just 2 to 3 quarters, and there were plenty of skeptics that they cannot hike that. Now it's sitting at 28%, at least on the individual policy side. But they continue to consistently lose market share despite this strong pivot with regard to product performance as well as margin. So we've seen that, but at the cost of market share, and that's where the bear case lies. Now let's talk about the fourth point with regard to bull. Relatively undervalued. It's currently sitting at 0.75 times price to embedded value, and this is after today's rally. So that's the kind of valuation you're looking at when peers are valued at maybe 3 or 4x the multiple that LIC is valued at. But your return on embedded value is just 6.8%. Your peers generally, something like an HDFC Life, likes to double their embedded value every 3 to 4 years. So that clearly is a far cry, but nonetheless, it's valued very reasonably. Let's look at how analysts are looking at it. 16 out of 20 analysts have a buy call. There is a 15% upside even from here. So 20+% upside versus yesterday's close that analysts were seeing on a life insurance corporation. The government owns 98 odd percent. So there's a large stake sale overhang which has to happen. Of course, there's still time for it, but that's of course the bear case. Now let's go across. We also spoke with the management. Let's go across, listen into what they had to say with regard to product mix.
You see, PAR we still maintain more than 72% because 27.69 is our non-PAR share and 72.31% is PAR share. And PAR, you see, yesterday we declared 56,000 crore plus bonus.
Yes, highest ever actually.
Highest ever bonus that will go to PAR policyholders.
Yes.
So my sense is PAR product also will launch, which will be attractive, and the policyholder will decide whether to take non-PAR or PAR, because both products have their own inherent characters which will attract policyholders. Benefits are there. So PAR policy also will maintain our in total basket, though non-PAR will grow, but will not ignore PAR.
Sir, we've been talking for a couple of years, and every year when we speak, you talk about how you are focusing on product innovation and product mix change towards non-PAR so that your VNB margins go up. We're ending the year at 17.6% in VNB margin. How do you see that margin going up from here? And what is the kind of strategy that you will have for non-PAR? Because you have always said that you want to reach out to the private players who have 20 to 25% VNB margin, and that's a goal ultimately which LIC has. So what is the game plan that you have here?
You see, margin last year 23-24 we gave a 16.8%. So now 80 basis points growth is there, 17.6. And the way current year strategy already we have adopted, initiated work is going on. Further growth will be there, and I am very much confident at least 2-3% growth will be there in the current year margin, VNB margin.
And it's very interesting with this conversation that the VNB margins is probably going to be the focus, which might help the stock going ahead as well. And Kush Bora, I don't know if we've spoken about insurance companies, but I don't think we have. I'd love to know, are you constructive on the insurance firms and in particular LIC?
So, Neeraj, Monday, if you recall, we had this brief discussion at Open, which is, where I said that in the financial space, I think banks definitely remain one segment, but beyond banks also, we need to start looking at the two names or the two sub-segments are NBFCs and, the insurance play. So most definitely in terms of price action, if you see HDFC Life had a fantastic run, and I think now SBI Life and ICICI Pru are also playing that catch-up game. So I think there is good momentum in some of these names. Volume slightly thinner for my comfort, but I think the price action for now, especially in the market which is consolidating, shows considerable relative strength. So for sure this is one space that you want to be in. As far as LIC goes, I think it's the sleeping giant awakened. I think for the first time since early October is when this stock has crossed the 200-day moving average, and in a very emphatic way. I think this momentum is here to stay. I see some mild resistances around the 1020 mark, but even that is still about a good 7-8% away. So there is a good up move to be had in LIC. I don't think this is something that traders typically want to be in. More of an investment bet, but with the kind of momentum that you're seeing, even traders can consider for targets 1020, and now the 200-day moving average near 890, 895 will act as a stop loss. So this momentum in LIC also could well continue for levels of 1020 and higher.
So, Sudeep, for the longest time, the stocks have flattered to deceive. Always the promise, always the under-penetration. Somehow, VNB, AP growth numbers would look good in a quarter or 2 or 3. Stocks would go nowhere. Are they finally showing some signs wherein an investor can gain from the price up move? Why or why not?
I think so, Neeraj. In fact, I also agree with your analysis. It's kind of deceived the investors or disappointed the investors for a very long time. Even when the IPO came, by and large the market was positive, and they looked at it as a hidden gem, and there's a significant potential. But unfortunately, it has not rewarded the shareholders for a very long time, and things haven't really worked out the way one had envisaged. But I suppose there are initial signs of things improving at LIC. Yes, they're losing market share, but that is quite natural in this kind of competitive market. They're the leaders by far, and obviously the market share loss is coming out of their kitty only. But having said that, the valuation wise, and from an equity investor, I would definitely look at valuation, and I find that really attractive vis-a-vis the private sector peers, and there is definitely value at the kind of valuation at which it is trading. Considering everything, they may not see a significant upside from here, but about 15% upside, maximum 20% upside is something one can expect if one is patient and can invest for a year in this stock.
Okay, all right, Sudeep. So that's the view coming in with regard to life insurers and more particularly an LIC. Let's go across though to Varsha, who's standing by to give us more perspective with regard to Aarti Industries. Now, it's interesting because we had a very, very large upside and a double upgrade coming in from UBS. Varsha.
Yes, exactly. First let me just talk about why the sell call was given to Aarti Industries by UBS, because of the peaking chemical cycle and all the pressure in the chemical industry that was going on. There was also risk to guidance and guidance expectation when it comes to their energy segment, and this all has played out, and that's the reason the stock was down almost 35% from the August 2024 peak. But now, why the upgradation? What is that they are expecting? So they're expecting meaningful improvement in the company's performance because of the gradual cycle improvement when it comes to low inventory, low channel inventory, and the steady pickup in monomethyl aniline volume which the company has seen. And of course, all the chemical companies have been talking about that the agrochemical demand has come up, though there's still pricing pressure going on, but the demand has been picked up, and that's one of the reasons why UBS is also bullish on Aarti Industries and the strategic initiatives which has been taken by the company to improve the efficiency. Now, these three are the main things where UBS is concentrating on. UBS do not believe that the market is fully pricing in these factors, as the stock is trading below its 5-year average EV to EBITDA multiple. Now, UBS is considering the guidance given by the company. Guidance is to increase EBITDA by 8 to 12 billion by FY28. How? Through cost optimization strategies, through volume and margin ramp up, and rise in realization plus capex-led growth. All these things will actually help Aarti Industries to achieve their EBITDA guidance, which UBS is betting on, and that's the reason they are expecting an EPS growth from 9 rupees to 26 rupees in FY28, though they have cut their EPS guidance of EPS estimates by 32 or 25%, adjusting for a lower FY25 base, and but they are expecting steady improvement across chemistries, and basis that they've given their target price and which based on that the valuation comes out at 30x June 2027 PE.
Thanks for that, Varsha. And Sudeep Bandyopadhyay, this will be another one which I would be forced to ask you. For the longest time, the last 3-4 years, I've been talking about a turn in the scheme of things for chemicals. Is it coming, or is it difficult to say that right now?
No, it is coming, Neeraj. I think, this has been a bombed out sector for a very long time. And, there were a lot of challenges in this sector. And obviously, the performance also was really disastrous. So they probably deserve the kind of beating they received in the market. But I think things are finally turning around. The restocking is now happening. And, I think the demand is generally increasing. China Plus One, which was the original rationale for this sector to start moving up, still remains very much valid. The tariff war and tariff-related shenanigans, I think that is one thing which one has to still monitor and see where the tariff rates vis-a-vis India and US settle, because that will be one important factor going forward. But having said that, I think there is genuine demand which has come back and the sector has started performing well. Also must say that the companies in this sector overall, not only Aarti Industries, but pretty much all the specialty chemical, agrochemical and chemical companies have tightened their belts, improved efficiencies. So yes, at current valuation, I think I have been recommending some of these specialty chemical and chemical companies for quite some time for portfolio pick.
Kush, anything here? There are a couple of small stocks, Yasho, for example, which is doing well, and a few others. So any chemical name, and of course, couple that up, Kush, with your top BTST or STBT strategy.
Sure. So Aarti could face a bit of a resistance from technical standpoint. There are a couple of factors working against it, I would say. And that's from a very near-term perspective, where the 200-day moving average, it's been hovering around that for the last 7 sessions, 38.2% retracement. Also, you're seeing some stiffness around the 480, 485 zone, where it's not been able to close above that. So I think while from a medium-term perspective, yes, it has bounced back, it could well continue. I think fresh positions should be considered once the supply zone near 495, 500 is taken out. Yasho, as you mentioned, has been doing very well for the last 4 sessions. Golden crossover 2 sessions ago, now above the 200-day moving average, still some distance away from the 200-day moving average. So you think, one would think that 2130 to about 2220 are the next levels to watch for on this one. And support zones near 1890 mark, should act as stop losses for anyone who's considering a fresh position. Now, as if it were on cue, my pick also happens to be from the chemical space, which is PI Industries. Stock was consolidating with a positive bias since mid-April and has held the 20-day moving average for the good part of the last month and a half, 2 months. Now you're seeing some volume uptick as well. Couple that with price action. So from a BTSC standpoint, plus a medium-term trade standpoint, 3950, 4050 are your targets. 3750 is where you place that stop loss. So PI Industries as a long call.
The other interesting one that I read today morning, Neeraj, was the JP Morgan view on banks. They believe Federal, they've actually downgraded that to a neutral from an overweight. They've cut the target price from 215 to 210, very marginal decrease. IDFC First, they've upgraded to neutral from underweight. IndusInd Bank to underweight from neutral. So they've made all of these changes. Bank of Baroda, they've maintained their overweight stance. The rest are largely maintained, but they prefer PSUs over mid-sized banks and NBFCs. They believe that lower margins on policy easing and slower growth at NBFCs could be the drag. Sudeep, how do you view this space very quickly?
Well, I think one needs to be a bit careful. There are a lot of positives as far as BFSI is concerned, but having particularly the interest rates coming down definitely does help the sector. Credit growth coming back does help the sector, but there are certain challenges in pockets, particularly in the unsecured loan segment, and we have seen that getting played out in the microfinance business, where the non-performing asset quality issue has become a significant challenge. Loan growth also has significantly dropped. So I think the small and unsecured loan part of the business is kind of taking a hit, and we have seen it across banks, microfinance companies, small finance banks, NBFCs, pretty much everywhere. So yeah, while there are significant potential for growth, there are near-term challenges which these companies, these banks and microfinance companies need to navigate first.
So, so that's the view coming in. But what do you prefer, Sudeep, very quickly? Private sector, public sector, NBFCs, what's the pocket you most like?
Well, I do like SBI. At current level, I do like SBI, and I think that's a very safe bet. NBFC, I like the gold finance companies, Muthoot and Manappuram.
Okay, so that's the view with regard to lenders. But we also had a chance to catch up with Goldilocks Global Research founder Gautam Shah, who has a bullish view with regard to metals. Listening to the rationale behind his stance.
In some sense, when you buy an ETF, the exchange is working for you. You'll always have the right basket of stocks in your portfolio at all times. I've seen this over the last 20 years. So ETF investing, I think, is the future. And I think a lot of investors, passive investors, have realized that. So that's one good way to play the entire basket. You could look at the mid cap, small cap 400 index. I think it has an ETF. It's a good way to play that basket. But if you really want to go stock specific, I think some of the metals PSU, I mean, look at what SAIL has done in the recent past. Look at some of the other capital goods PSUs like BHEL has done in the recent past. Lovely setups, and I think they're going to do bigger things going forward. Look at some of the infrastructure PSUs. I think that's again a good place to be in. Power is a story which is here to stay, you know, if you want to play the India story. So non-PSU and PSU power stocks, I think, are right up there. So I think these are some of the baskets that we like. I don't want to recommend any specific stocks, but these themes, I think, are likely to do really well over the next 6 to 12 months.
Sudeep, how would you play metals? Would you, and how would you?
Well, I do like metals. I think, I definitely like Vedanta because of multiple reasons. Of course, there is a general opportunity in the metals. The global valuations are going up. China definitely needs to do a lot of things to kickstart and increase demand, and that definitely going forward will help metals. In case of Vedanta, of course, the value unlocking possibility with the demerger getting completed definitely before the end of second quarter in the current fiscal will add to the allure of the stock at current levels.
Do you like metals, Kush? Your preferences?
Very selectively, Harsh. So Hindustan Copper is one stock that we like. It's a little muted today, but on the whole, if you see, it's had a good run so far. And by muted, I mean off the high point of the day. Also Nalco and Lloyd Metals. These are a couple of stocks that we like. Otherwise, the pack is far too volatile for one's comfort. So you have to be really selective. So Hindustan Copper, Nalco, Lloyd's Metal are some of the names that the viewers can focus on.
Paradeep Phosphates has had a bit of a spike, I must say, in the last few minutes of trade. So bear that in mind. That stock has done well. There are some others like Sanathan Textiles, etc. Some spikes too. So keep a few of these stocks the back of your mind. Sudeep, before we let you go, a word on cement. Everybody's talking about two different things. One, that the southern prices have consolidated and there the stocks could do well. But two, in the near term, because of the monsoons, there will be pressure and therefore some of the stocks should correct. And Ultratech, for example, has duly corrected this week. What's your thought? Near term, medium term?
Well, near-term correction is a reality, and we have seen this getting played out over decades and decades. Monsoon is definitely not a season for high construction and high demand for cement. So, of course, the demand will be a bit sluggish, and some price correction for the monsoon we have to factor in. But fundamentally, I think if you have to buy some Trump-proof stocks or stocks which has got growth potential in spite of whatever happens as far as the global tariff and global economy is concerned, I think I would bet on cement. Look, Government of India is going to spend 11 lakh crore on capital expenditure during the current fiscal. That translates to roughly about 1 lakh crore per month. And large part of it will go in construction, whether it's infrastructure in form of roads, ports and others. And that all requires cement. There is housing for all, there is real estate boom that again requires cement. So cement companies are uniquely positioned. Also, interestingly, if you see, most of these cement companies have done fantastic in terms of controlling costs and improving efficiencies. Petcoke prices have come down significantly. In fact, it may go up in the near future a bit, but I think the margins have improved significantly. So significant increase in demand generally, forget monsoon season. Second, margin cost efficiencies, which is leading to incremental margins will lead to significant improvement in performance going forward. Pricing power post-monsoon will come back again. And I think we will see good time for cement companies generally.
Okay, so that's the view with regard to a cement. Pricing power will come back, but you'll have to be patient till the monsoon ends. Thank you so much, both of you gentlemen, for joining us this afternoon, giving us all of those views. We're about a minute or so from close. Let's quickly look at how the Nifty is closing for the day. A third of a percent lower, some bit of midweek blues that we're seeing on the Nifty 50 index. 24,750 though is the level that's currently being held. Of course, there is some support available till 24,600. So those are some of the levels we'll look out for on the downside at least, because some bit of pressure coming through. The Nifty Bank though holding firm around a 1/10 of a percent higher in trade today. There's some bit of outperformance there. Let's look at the Nifty 50 in terms of the heat map of all the constituents. And HDFC Life sitting pretty, and life insurers have had a good day today. SBI Life as well, a third of a percent higher on an otherwise softer day. ITC down 3% odd, IndusInd 2% lower. Story about ITC, of course, that British American Tobacco selling some of its stake in that one. So that one therefore seeing a bit of pressure in trade today. Outside of that, it's overall a day where not too much has happened, at least on the index. So let's look at how broader markets have fared and how, frankly, the breadth of the market has fared all through the day. The broader markets, well, the Nifty Midcap has given up all of its gains, very marginal in any case, but given up all of that and has closed in the red, just about in the red. So some weakness seen there. The small cap index though holding in decent shape, 0.4% higher, some bit of outperformance within that small cap basket. Let's look at the breadth as well, and it's been largely flat, but it's reversed right towards the end, and that's largely because of some slip in the mid cap as well as small cap index that we saw in trade. Let's look at the sectors as well very quickly. The Nifty India Defence will likely be the top gainer. It's the PSU Bank which has overtaken the Nifty India Defence, but a percent higher on both of those. And there's still some bit of adjustments which are happening and playing out as we speak. But the Nifty Bank is one which has outperformed. Nifty IT Index had an otherwise muted kind of day. The Nifty Private Bank, while the PSU Bank was up a percent, the Nifty Private Bank has also had a very, very muted sort of move, and the Realty Index as well. What's not done well is FMCG and consumption. Remember those consumption-related stocks outside of an ITC as well. A Tata Consumer was languishing, a Nestle was languishing. So you're seeing that pressure on that index. The Nifty Auto also down around 0.7, and the Nifty Pharma and Metal down 0.6. That's how it's shaped up. Let's now finally look at the BSE 500 top gainers, top losers, and those are some names which ought to be on your list. 3M India declared numbers towards the fag end of the trading session today. Well, the others are just about not on numbers, but some of the big gainers in trade on the back of numbers: LIC, MMTC, ITI, all of those in focus, and some of them will continue to remain in focus tomorrow as well as brokerage views come through. Cues for tomorrow: Indian industrial production data and US FOMC minutes. We'll want to wait and watch out for what the views are and what has been exchanged in those US FOMC minutes. Tata Consumer, 8 rupees a share, dividend to be closed out tomorrow. That's the other focus. Gandhar Oil, another 20% shares to exit lock-in, and you'll have all of those earnings in focus. Bajaj Auto will be the big one. Outside of that, we'll have a Mazgon Dock within the defense pack. It has been in focus, mind you. Juniper declared a very solid set of numbers. Samhi will declare numbers tomorrow, so that one also in focus. Outside all of the others, including a Wockhardt within the hospitals pack. But with that, completely out of time on today's edition of India Market Close. From Neeraj, myself, and everyone who puts the show together, thanks so much for watching. Himakshi takes all the action forward with Market Express. Stay tuned.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answer.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. Viewers, choppy day on the Lal Street. Nifty ends below 25,000. ITC, RIL dragged the markets. 34 Nifty 50 stocks end in red. Meanwhile, broader markets outperform. Nifty, FMCG, consumption and pharma trade in red. On the other hand, PSU, banks and defense buck the trend. Rupee closes weaker against US dollar, settles 3 paise weaker at 85.37 against US dollar. British American Tobacco sells a 2.3% stake in ITC for 11,600 crore rupees at a 7.8% discount, pricing the deal at 400 rupees per share. Now, the transaction generates net proceeds of 12,100 crore rupees, which BAT plans to actually use for a 200 million euros share buyback extension. Now, with this sale, BAT's stake in ITC stands at 25.44% following its 3.5% stake sale in 2024 for 17,491 crore rupees. Nuvama expects ITC stock to recover after BAT stake sale. Though the overall impact on ITC remains slightly negative, Nuvama believes that BAT is unlikely to reduce its stake in ITC hotels in the near term. Now, on ITC's business, FMCG segment margins are expected to start recovering from Q2 of FY26. Now, the cigarettes segment continues to show decent volume growth expectations, supporting ITC's overall outlook. LIC shares rally nearly 7% in trade today as investors overlook Q4 misses, focusing instead on the insurer's strong VNB margin expansion and growing contribution from the non-par business. Now, despite falling short on key earnings metrics, LIC's improving profitability trends and strategic business mix continue to drive the market optimism. Macquarie maintains an outperformed rating on LIC with a target price of 1,215 rupees, highlighting valuation as a key safety net amid cautious VNB growth. Now, the Q4 miss in the VNB is attributed to a decline in annualized premium equivalent growth. Now, however, increasing non-par business mix and lower cost ratios provide strong margin support. Despite downside, risk to VNB estimates valuation continues to offer stability for the stock. DCX Systems shares stumble over 6% as weak Q4 results weigh on the sentiment. Market headwinds and global uncertainties take a toll on revenue, while rising raw material and employee costs impact the profitability. Margins also shrink, reflecting a challenging operating environment. Despite the slowdown, the company's order book remains strong, offering some stability amid tough conditions. Bharat Dynamics shares trade in the red as margin and profit take a hit in the Q4. Despite a strong revenue surge, delayed execution and soaring material costs weigh on the profitability. Margins shrink significantly, reflecting operational pressures, while net profit declines compared to the previous year. Now, the absence of a customer refund, which had boosted Q4 of FY24 profits, adds to the subdued financial performance. Bosch shares drop over 2% in trade as a sharp rise in tax expenses affects the Q4 earnings. Now, while revenue and EBITDA see steady growth, margins remain flat, reflecting limited operational leverage. Automotive revenue continues to drive the performance, while consumer goods see moderate growth. Now, the significant jump in tax expenses further impacts the net profit, leading to subdued investor sentiment. ITI shares surge over 9% in trade as strong Q4 numbers boost investor sentiment. Revenue jumps nearly 74% year-on-year, while EBITDA loss narrows significantly. A notable exceptional gain also helps reduce the net losses, reflecting improving financial health. Now, the company's robust order book and expected conversion of unbilled revenue in FY26 further add to the positive outlook. Techno Electric shares soar over 13% in trade as strong Q4 numbers boost sentiment. Revenue jumps 85.6% year-on-year, driven by robust performance. Margins also expand, reflecting improved operational efficiency, while the net profit rises sharply, reinforcing overall business strength. Now, the strong quarterly performance fuels optimism for the company's growth trajectory. Hindustan Copper posts a strong sequential performance, recording its highest ever revenue as global copper demand surges amid the shift toward renewable energy and EV adoption. Revenue jumps 123% quarter-on-quarter, supported by rising copper prices. EBITDA and net profit also see sharp gains, with margins improving sequentially. Yatharth Hospital delivers a solid Q4 performance, with revenue surging 30.4% year-on-year, fueled by higher occupancy and improved per bed revenue. Now, EBITDA also grows 22.6%, though margins see a slight dip due to operational losses. Net profit inches up 1%, impacted by higher depreciation looking ahead. Now, the hospital is also gearing up for future growth with a 300 crore rupees capex plan and expansion in Greater Noida. Keraro India posts impressive Q4 results, with net sales rising 13% year-on-year, driven by strong market demand. Quarterly net profit also jumps 30%. Now, while EBITDA improves 19%, signaling better operational efficiency, margins expand to 10.9%, reinforcing the company's stable financial footing. Now, the company continues to strengthen its portfolio, adding 6 new customers in FY25, including 2 in the latest quarter. MedPlus Health Services delivered a robust Q4 performance, driven by significant EBITDA margin expansion. Now, this was fueled by growing contribution from private label products. The company reported a consolidated revenue growth of 1.3%. EBITDA also surged 29% over the previous year, with margins expanding to 9% from 7.1%. Now, this reflects improved operational efficiency. Net profit also soared 53.7%, underscoring stronger bottom line growth. EPAC Durable has posted strong Q4 results with revenue growing 22% year-on-year to 643 crore rupees. EBITDA surged 30% while net profit also rose 35%, reflecting healthy business momentum. The company met its FY25 EBITDA guidance and expanded into consumer products like vacuum cleaners and coffee makers. With a 53% rise in annual revenue to 2,170 crore rupees, EPAC is poised for continued growth. Oil India CMD Dr. Ranjit Rath confirms that discussions regarding an IPO for Numaligarh Refinery Limited are underway. However, he clarifies that no final decision has been made on the matter yet. Meanwhile, the company faces challenges in its Q4 results, hitting a rough patch amid shifting crude production and sales trends. Despite this, Oil India remains focused on its long-term financial goals, aiming for 10,000 crore rupees in consolidated profit by FY27. JK Lakshmi Cement released their Q4 numbers yesterday, and the company saw profit increase of 17%, while the sales volume was at 3.59 metric ton. The EBITDA and margins were also up, but the margins were flat. Some of the key highlights was that the increase in sales volume and the Surat unit was also expanded to 2.7 million tons, creating an annual revenue of 225 crore rupees. Cummins India is set to announce its Q4 results with revenue expected to grow 18.7% year-on-year to 2,693 crore rupees, driven by domestic export recovery. However, margins may face pressure due to a strong base effect and higher competition, leading to an EBITDA decline of 4%. Net profit is also projected to drop 15.2%, while exports could see a strong recovery, surpassing 30% growth on a low base. Investors will be keenly watching management's outlook on pricing in the power gen segment. Red Tape has reported its Q4 earnings, showing stable revenue at 505 crore rupees with EBITDA rising 8.8% to 81.3 crore rupees. Margins also improved 16.1%, aided by significant inventory clearance and a sharp drop in inventory levels. Net profit inched up 1.2% to 41.5 crore rupees, supported by doubling of the other income. Now, these strategic moves have helped Red Tape maintain profitability despite modest revenue movement. Transrail Lighting, a leading EPC player in the power transmission and distribution segment, is poised for strong growth. Now, the company is projecting a 20 to 25% revenue increase over the next 5 years, driven by margin-led growth and robust order intake. Now, the company currently, is in 2 phases of expansion, sees significant potential in the T&D infrastructure space. With 92% of its focus on T&D, Transrail reported a stellar Q4 FY25 with net profit up 27% and revenue surging 40%. The company secured 4,965 crore rupees in new orders, boosting its FY25 order book by 44%. Royal Orchid delivers solid Q4 results with revenue climbing 14% year-on-year to 86 crore rupees, driven by new deals and portfolio diversification. EBITDA also rises 12%, though margins see a slight dip, while net profit declines 20.9% due to reduced other income and higher costs. Now, looking ahead, the company aims to generate 100 crore rupees from managed hotels over the next 3 years and is exploring expansion into Sri Lanka and Nepal. Bellrise Industries makes a strong debut, listing at 100 on NSE, up 11.11% from its IPO price. On the BSE, the stock opens at 98.50, reflecting a 9.44% rise. Now, the 2,150 crore IPO sees overwhelming demand with a remarkable 41.3 times subscription. Investors show strong confidence, driving significant interest across all categories. HDB Financial Services is nearing approval from SEBI for its long-awaited IPO, set to be one of India's biggest listings this year. The company plans to start engaging with investors next month as it prepares for the $1.5 billion offering. Now, the regulatory clearance would allow the HDFC Bank unit to finally move forward after months of waiting. Now, this IPO will be a key test for India's market, aiming to revive last year's strong listing momentum. Sources have told NDTV Profit that the NSE has seen its valuation surge to 5.8 lakh crore rupees, driven by growing investor excitement and optimism surrounding its long-awaited IPO. It is expected that the surge has happened due to the growing anticipations around its IPO. The market share has seen a strong spike in the past week. Time for some NDTV Profit exclusives. The Federation of Indian Chambers of Commerce and Industry has been advocating for streamlined regulations to facilitate capital market operations for listed companies and other participants. Now, the Federation is also emphasizing on relaxations and changes sought to take over norms and delisting conditions. It also includes suggestions to rationalize timelines for regulatory approvals. In NDTV Profit exclusive, Elon Musk's Starlink is ready to beam in India. The company is poised to kick off Phase 1 operations in India with 600 to 700 Gbps of satellite capacity. In the first phase, Starlink will be giving 600 to 700 Gbps of satellite capacity over the country. Now, the model is direct to customers, services, and will target premium users. Another exclusive from NDTV as the wedding season approaches. The fashion industry is grappling with an unexpected downturn in demand for festive outfits. In the first 3 months of 2025, wedding-related apparel sales have disappointed, with major brands feeling the pinch. Vedant Fashion, which actually runs the Manevar brand, reported a 4.5% drop in the same-store sales. Raymond Lifestyle saw an 11% decline in revenue, while Sabyasachi sales growth slowed sharply to 15% from 56% last year. Now, the key trends reveal families and guests are cutting back, opting to reuse wardrobes and buy fewer new outfits. Rising competition and affordable ethnic wear, especially in non-metro cities like Raipur, is adding pressure. The Telecom Regulatory Authority of India, that is TRAI, has released a consultation paper on assigning microwave spectrum as well as E-band and V-band. Now, this move is aimed to bolster 5G and rural broadband connectivity. Now, the draft proposes a major overhaul of spectrum pricing, including a shift from the current revenue share model to a pay-per-use framework. Now, it is also suggesting auctioning the high-frequency E and V bands. Now, while these bands promise ultra-fast internet, they could also increase cost to telcos. Now, TRAI's move, confirming earlier reports by NDTV Profit on May 22nd, seeks industry input to enhance the telecom infrastructure and bridge the digital divide. Goldium International posted a strong quarter-4 performance, with revenue surging 34% year-on-year to 199 crore rupees. Anmol Bhansali, MD of Goldium International, shares plans to open nearly 20 stores this calendar year, with 6 already launched in Mumbai. Now, the company remains a major player in lab-grown diamond retail. Indigo is all set to partner with Adani Airports to drive India's aviation growth, becoming the first airline to operate from Navi Mumbai International Airport. Starting with 18 daily departures, the airline plans to scale up to 79 flights by November 2025, including international routes. Now, by November 2026, Indigo will expand operations to 140 daily departures, reinforcing India's position as a global aviation hub. Now, this strategic move is set to help India emerge as the third largest aviation economy by 2030. Vodafone Idea is exploring equity or debt funding, with its board set to meet on May 30th alongside Q4 earnings. Now, however, past fundraising efforts have failed to boost operational performance in the past, and subscriber numbers have also steadily declined. A key hurdle remains pricing. Now, while the current market price is 7 rupees per share, the company cannot issue shares below 10 rupees. Now, given these constraints, this move may serve as an enabling resolution, with bank debt as a more viable option. Now, let's take a look at some of the brokerage calls now. UBS upgrades Aarti Industries to buy. setting a target of 625, citing strong strategic initiatives. The firm forecasts a 25% EBITDA CAGR for FY25 to 28, driven by market development and long-term client relations. Now, cycle recovery appears likely with the energy business MMA expected to ramp up gradually. RT Industries' growth prospects look promising as it strengthens its expansion strategies. Jefferies has come up with a note on Afcons, maintaining a buy rating with a target of 580 rupees, citing strong capex prospects despite challenges. Management also remains confident, viewing the FY25 order flow miss a timing issue. Now, the company also holds L1 status on 10,700 crore rupees worth of orders expected to convert in H1 of FY26. Now, Afcon's position suggests steady growth momentum in the near term. Citi maintains a buy rating on Info Edge but lowers its target to 1,685 from 1,820, citing higher A&P spending in Q4. While its services attrition may not rise further, other growth drivers remain intact. Now, the billings are also now expected to grow 13% in FY26 and 16% in FY27, with revenue increasing 15% and 14% respectively. Citi has also cut EBITDA estimates by 3% for FY26 and 1% for FY27. V2 Retail also posted their Q4 earnings, where the company registered record PAT and EBITDA. The volume growth was also seen over 43%. Same-store sale was up by 29%, and the management was bullish on the outlook of the company. Nomura raises Fortis Health's target price to 820 rupees, maintaining a buy rating. Analysts cite sustained financial improvements, a strong FY26 outlook, and EBITDA margin expansion. Fortis strategic acquisitions within its cluster support gradual growth momentum in the medium term. India continues to attract robust foreign direct investments, with inflows climbing from $36 billion in FY14 to $81 billion in FY25. FDI equity inflows surpassed $50 billion, marking a 13% year-on-year rise, though gross FDI declined 24.5% in the final quarter. The services sector led with 19% of total inflows, followed by computer software and hardware and trading. Meanwhile, manufacturing FDI surged 18% year-on-year, reinforcing India's status as a growing global investment destination. Unacademy's co-founders Gaurav Munjal and Roman Saini are set to exit their operational roles as CEO and MD within the next 3 to 4 months, marking a significant leadership shake-up at the SoftBank-backed EdTech firm. Now, the duo is shifting focus to AirLearn, a language learning app positioned to rival global giants like Duolingo and Babbel. Munjal, who recently criticized Duolingo's effectiveness, is spearheading AirLearn's development, aiming to create a more robust platform for teaching key language concepts. Andhra Pradesh Chief Minister Chandrababu Naidu proposes allocating 10,000 acres of land near Lepakshi, close to the Andhra-Karnataka border, for Hindustan Aeronautics Limited expansion. Now, the new unit is expected to enhance capacity for manufacturing light combat aircraft. Meanwhile, Karnataka Minister M.B. Patil asserts that no Chief Minister has the authority to relocate large HAL units independently. Actor Kamal Hassan has triggered another controversy with his recent comments while promoting his film in Chennai. He said Kannada language was born out of Tamil. The comments have seen backlash in Karnataka by some of the pro-Kannada organizations. Now, the activists tore down the banners of the latest film Thug Life in Bengaluru and have also issued warnings over his remarks. Tensions flare up in Manipur as protests erupt over the removal of state's name from a government bus. Members of the student wing locked central government offices and defaced signboards in the Valley district, demanding an apology from the governor and the removal of top officials. 36 people are left stranded in Chennai's VGP Universal Amusement Park for more than 3 hours. The ride, named Top Gun, got stuck at a height of around 150 feet due to a technical failure. The amusement park staff tried to fix the issue but failed to take swift action. Emergency services eventually brought all the passengers to safety around 10 p.m. The UAE strikes a groundbreaking AI partnership with OpenAI, granting all residents free access to ChatGPT+. As part of the deal, the country launches a new AI data hub called Stargate UAE. With staggering $20 billion in joint investments, this initiative cements the UAE's position as a leader in the global AI race. Elon Musk finds himself entangled in legal controversy once again, as a new lawsuit accuses him of wielding illegal powers to assist former President Trump in reducing government jobs and spending. Filed by Democratic state attorneys general, and the case also targets the Department of Government Efficiency, known as DOGE. Musk has yet to respond to the allegations. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit as Sanjana is coming up with Profit 360 on the other side. Stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Benchmarks slipped for the second consecutive session, weighed down by sharp losses in FMCG stocks, with ITC leading the decline. Nifty FMCG is the worst performer, with mid-cap and small-cap indices defying the trend. ITC closes nearly 3% lower after British American Tobacco completes a 12,100 crore block trade, selling 313 million shares to institutional investors. BAT also confirms that the net proceeds will be used to extend its 2025 share buyback program by £200 million. Elon Musk's Starlink prepares to beam in India as it will kick off phase 1 operations with satellite capacity of 600 to 700 gigabytes per second. Sources tell NDTV Profit that this could support 30 to 50,000 concurrent subscribers. NDTV Profit's Newsbreak confirmed TRAI proposes a fundamental shift in spectrum pricing, moving from a revenue sharing model to a pay-per-use system. Tata Sons will hold its board meeting tomorrow, where key discussions will focus on investment strategies, asset monetization, and the progress of Tata Capital's IPO. FICCI pitches for relaxation in listing obligations and disclosure norms. Sources say it's also sought changes in takeover norms and delisting conditions.
Say hi 6E Navi Mumbaikars. Indigo will be the first airline to launch operations from the brand new Navi Mumbai International Airport. The airline signs a deal with Adani Airports. Good evening, you're watching NDTV Profit. I'm Sanjana, bringing you the latest on markets, national developments and international headlines all over the next 30 minutes. So stay tuned as we break down the biggest stories, sector trends and expert insights. Let's get started with what the markets happened today and how they fared. Benchmark indices fell for the second consecutive day to end 0.3% lower. The FMCG index was the top sectoral loser and Nifty PSU Bank rose for the fourth straight day. My colleague Mahima now joining with a detailed market roundup.
Right, so the markets have been pretty much rainbow today in terms of the benchmark indices. The Nifty as well as Sensex fall around 0.3% and close around 0.3% lower. It's important to watch out for the 25,000 levels because that has been the resistance levels throughout 10 to 11 trading sessions now, and the market kind of psychologically is trying to go beyond that. Now, in terms of the Nifty and Sensex, they fall for a second consecutive day. The mid cap and the small cap during the day were doing well. They did open in green, continued to be in green, but closed lower. The mid cap 150 snapped its 3-day gaining streak, and the small cap 250 snapped its 4th-day gaining streak. Now, in terms of top losers on the Nifty 50, that was led by ITC as well as IndusInd Bank. IndusInd Bank yesterday saw a good rally, but today there was some profit booking seen in the counter. ITC on the back of the PAT stake sale saw a significant downtick from 3% in trade today. The mid cap 150 closed flat for the day. GlaxoSmithKline Pharma and Hitachi Energy were the top gainers on the mid cap 150, and the small cap 250 closed around 0.3% higher for the day. This was led by IFCI as well as Techno Electric. The Nifty FMCG was the top losing sector, and this was largely led by the fall in ITC and Procter & Gamble as well. The PSU Bank jumped for 4th day in a row, and lastly Nifty Oil, Nifty IT, Metal, FMCG all fell for 2nd day in a row. Nifty Realty snapped its 3-day gaining streak, and Nifty Farm also snapped its 2 days gaining streak. So it will be important to watch out for tomorrow as to whether the Nifty as well as the Bank Nifty, the Nifty as well as the Sensex will be able to cross the 25,000 mark as well. And tomorrow will also be an expiries day, so it will be an interesting day to watch out for in trade tomorrow.
If you look at the last 10 days, despite all the happenings, we've been in this 500-point band on the Nifty, which is great news, 24,500, 25,000. But let's not forget that we've had a fabulous run in the last 2.5 months. And if after such a big rally, the market is not able to lose 2-3%, I think that's quite commendable. I think we are still inherently strong. The market has been displaying bull market characteristics. The momentum is excellent. Participation is great. A sector after another seems to be coming back. And if at the starting of the year, somebody told you that there's going to be an economic slowdown, there's going to be FI selling, Mr. Trump is going to take on the world, and there's going to be geopolitics, would you expect the Nifty close to 25,000? The answer would have been no. But that's what liquidity can do. And I think I saw the same thing in 2003, 2008 bull market. And I'm seeing the same thing again. Last time it was foreign. This time it is domestic. So I do believe that the markets are headed higher. Our working target is 25,600 and eventually lifetime highs.
Gautam Shah giving us a reassuring view there. Moving on, shares of ITC closed nearly 3% lower after British American Tobacco sold a 2.3% stake via a 11,600 crore block deal at a 7.8% discount. Now, the proceeds will extend BAT's share buyback program by £200 million, increasing its total buyback to £1.3 billion. My colleague Mahima now joining us with all of the details. Mahima, over to you.
The block for ITC, that PAT selling its stake in ITC has now been completed. The expectations were that it will come at around 11,600 odd crores. Then there were sources telling that this might, be upsized and could also go to around 15,000 odd crores. But the final block deal has taken place at around 12,100 odd crores. In terms of this proceeds, the ITC block will be used to extend share buyback of around £200 million. Now, in terms of the details with regards to this particular block deal, The price deal was set at 400 per share, which was a 7.8% discount from its yesterday's closing price. The current stake of BAT in ITC is roughly 25.4 odd crores. And even in 2024, BAT had sold around 3.4% stake in the company for around 17,400 odd crores. Now, inflows due to this stake sale, where IIFL Capital expects inflow of around $96 million owing to this particular stake sale. The stake sale will lead to increase in free float adjustment in the Nifty as well as the Sensex. And Nifty related passive flows will see the overall action on 27th of June, and Sensex will see this on June 20th. Now, Nuvama's expectation related to this particular stake sale, post the stake sale, they're expecting ITC stock to bounce back post the deal. A bit negative overhang in terms of a structural change being considering the entire stake sale, and this could have some kind of overhang, but the stock might bounce back. They do not expect BAT to reduce stake in ITC hotels for the next 2 to 3 quarters is what they're saying, because of the luxury exposure that this particular company has overall in the hospitality space. Lastly, in terms of ITC business, they expect margins of ITC FMCG business to start recovering from Q2 FY26. They're also expecting margins to recover in the paper business as well. They're expecting second half of FY26 to be much better than that of first half. And in the cigarette business, decent volume growth is expected, though less than that of Godfrey Phillips. Lastly, how will this entire thing change in terms of the governance for ITC? BAT will not be able to block any kind of special resolution going forward, because their stakes will come down below that 22% threshold. And before this, BAT has only once blocked special resolution for ITC. So this is the overall view as to what has happened with ITC with regards to where the block deal is concerned.
Right, thanks so much for that, Mahima. Moving on, Tata Sons will be holding its board meeting tomorrow. Sajid now joining us with more details. Sajid, what is expected to be on the agenda and what are you picking up?
The board of Tata Sons will meet on May 29th to consider its financials, especially the results for the year ending 24-25. Most of the Tata Group companies have completed and announced their financials, and now the group will consider the consolidated numbers on Thursday. The board will also look at, apart from considering the financials, also look at reviewing and considering the dividend policy of the Tata Group. Tata Sons gives interest and dividend to its shareholders, which is the Tata Trust, and to the preference shareholders of the company. It's also going to review the investment and monetization strategy that it has for the year FY26. There is also expectation that Tata Capital's IPO will also be reviewed. Tata Capital is one of the IPOs which is expected in this financial year. Tata Group has already filed confidential filing with the market regulator SEBI, and it's expecting an approval in next couple of weeks and months. And as and when the approval comes in, Tata Capital IPO is expected before the end of September 2025 as per the regulatory requirement there. There is also other board committees which will be meeting, which includes the NRC, which is the Nomination and Remuneration Committee, and other company governance committees of the board that will be there. In addition, there will also be looking at other initiatives from the Tata Group, especially its entry into the semiconductor and other segment where it's already making a huge investment. Tata Sons is investing in semiconductors, investing batteries, not only in India but also in UK, and that investment will be reviewed at the board meeting.
Absolutely, Sajid. Thanks so much for that. All eyes, in fact, on this board meeting tomorrow. But now a big exclusive coming in from the telecom space. Elon Musk's Starlink is inching closer to its India rollout, preparing to beam 600 to 700 Gbps of satellite internet in its first phase. Sources are indicating this capacity could support up to 50,000 users, bringing high-speed connectivity to underserved areas. Now, in the long run, Starlink plans to scale its satellite capacity to 3 Tbps by 2027, pending necessary regulatory approvals. For more insights into Starlink's pricing, the rollout timeline and potential market impact, let me quickly turn to my colleague Aishwarya.
Well, Starlink is preparing to soon beam into India with a big bandwidth, a D2C push and premium pricing as far as their device pricing is concerned. What we're picking up from our sources is that in phase 1 of InSpace's approval, Starlink will begin beaming about 600 to 700 Gbps or gigabits per second kind of satellite capacity over the Indian market. Now, this beaming capacity will support or enable traffic in one go or concurrently about 30 to 50,000 subscribers over a certain area. By certain area, we mean an area approximately the size of any city or urban cluster. The projected capacity is expected to rise up to 3 Tbps by 2027, according to our sources. This is, of course, subject to regulatory approvals, which are still pending, and Starlink has not unconditionally agreed to all of the terms of the LOI as well, what we're learning from our sources. Now, they also have plans for 2 to 3 Earth stations. In India, the sites have already been identified and 9 gateways have been planned per site is what we're learning. Apart from their B2B business, Starlink is also planning to introduce, still mulling and having conversations and discussions around the D2C direct-to-customer model in India. D2C services will target premium users or premium pricing. As far as the pricing of the devices is concerned, that is expected to be anywhere in line with the global pricing, which is about $250 to about $600. That means about 20,000 rupees to 50,000 rupees per device. They have devices like the standard Starlink kit and also Starlink Mini. Those could be in the starting range, and for consumer or users, common users, the business kits could be upwards of 50,000 is what we're learning. Now, according to DOT sources, Starlink's global licensing head, Parnil, had met with DOT officials earlier this month to take care of some regulatory approvals and signing off some of the papers that are related to the GMP-PCS license. DOT is in process over and after this of securing bank guarantees from SATCOM companies, and the license is expected around mid-June is what we're learning from our sources, and Starlink is currently reviewing the terms under India's new SATCOM norms. We've written to InSpace as well as Starlink, but no response from them as of yet, but we'll keep you posted on the developments further as far as Starlink's India debut is concerned.
Right, Aishwarya, stay with us because this is also coming at a time that TRAI has released a draft consultation paper confirming NDTV Profit's May 22nd news break. Now, if you remember, we had actually reported about this, and the proposal today looks at changing spectrum pricing to help expand 5G and improve rural broadband. It also suggests moving to a pay-per-use model instead of the current revenue sharing system. So, Aishwarya, tell us more about what else the draft includes.
Well, another crucial update as far as the telecom sector is concerned, TRAI has finally rolled out its proposal, draft proposal in fact, to charge telcos for high-frequency bands. As far as this consultation paper is concerned, NDTV Profit had reported on 22nd of May regarding the pricing changes that TRAI is mulling, and the government plans to give a bit of an ease to telecom companies. The draft has proposed revamping spectrum pricing or what we call backhaul spectrum to boost 5G as well as rural broadband. Earlier, telcos were paying for the whole area, and now what happens is they will only be paying tower to tower or pay per use kind of a model that the government has proposed, and TRAI has proposed pay per use or link to link, which is tower to tower spectrum, to replace the current revenue sharing model. What the government aims to do with this is lower the costs, improve rural backhaul, and also power 5G reach with this particular move. Government has also asked the stakeholders to give in their comments as well as their views on this draft consultation paper by the end of June. Now, high frequency bands include frequencies from 6 gigahertz to 21 gigahertz, as well as E and V bands. Now, E and V bands especially power 5G and are considered to be ultra fast spectrum. So This could also aid 5G, which is going to expand in the country to a great extent, and even the ministry is keen on that. TRAI has proposed that these bands, E and V bands, should be auctioned, but of course that this is still under consideration, and comments will come in from stakeholders like Airtel, Jio, as well as Vodafone, who have been asked to put in their comments by June. E and V bands, of course, like I mentioned earlier, will enable ultra-fast, high-speed internet connectivity. So that's the update as far as the high-frequency bands being priced is concerned by TRAI in its consultation paper. Back to you.
Right, Aishwarya, thanks so much for that. Meanwhile, another update coming in from Unacademy, sources indicating that the co-founders Gaurav Munjal and Roman Saini are preparing to step away from their operational roles. However, they will continue to serve as board observers in their absence. Sumit Jain will take over as CEO with a strong focus on scaling the company's offline presence. For more details, my colleague Agni Dev joining us on the phone line with more. Agni, what have you gathered from your sources, and tell us more about this leadership change?
Hi, right. So, like you said, Munjal, Saini and Himesh Singh had together founded Unacademy as an edtech platform in 2015. And originally it was a very online-first platform focusing on the exam prep segment. But after COVID, the online segment sort of went down and the company started pushing for a more offline presence. And that's where the uncertainty started coming in, because an offline presence, of course, will push for more capital intensive, more capex going forward. So right now what we are gathering is that Gaurav Munjal and Roman Saini, the remaining of the three original co-founders, Himesh Singh left sometime in 2024. So Munjal and Saini are saying that they are going to step back from active roles in the company. Remember, Gaurav Munjal was the CEO, and the CEO's role is now going to pass on to Sumit Jain. Now, Sumit Jain was also onboarded into Unacademy and was elevated to a co-founder level. So he's also technically a co-founder, and now he'll focus on ramping up the offline presence of the company. But what's interesting to note is that Munjal and Saini are now going to focus on the online presence on of the products of Unacademy, particularly something called AirLearn. Now, AirLearn is competing in the same space as Duolingo, in the essence that it teaches you to learn foreign languages. Now, Munjal and Saini are trying to build up the brand, and they have also talked to existing investors of Unacademy to help in spinning this brand off into an independent company. So these two are getting a cash payout and are also expected to remain part of the board in their effort to launch AirLearn into a separate company. So as of now, these are the details that we have, but this is a developing story, so we'll keep bringing you more updates.
Thank you so much for that update, the leadership shift coming in at Unacademy. Now, moving on, Indigo will be the first airline to commence commercial flight operations from the Adani Group-owned Navi Mumbai International Airport. According to a joint statement, the airline will initially have 18 daily departures to over 15 cities from day one, increasing it to 79 daily departures. To tell us more, we have my colleague Sessa joining in with all of the details. Sessa, over to you.
Right, Indigo is set to become the first airline to take off from the upcoming Navi Mumbai International Airport with over 18 daily flights to and from 15 cities on the first day of the airport's commercial operations. The airline plans to scale up its operations at NMIA significantly from 36 air traffic movements daily to on the opening day to 79 daily flights, which corresponds to 158 air traffic movements, including 14 international departures by November this year. So what is air traffic movements, for our viewers to understand better? Each arrival and departure is counted as one air traffic movement. Now, this operations will be further scaled up to over 100 daily flights and by March 2026, and up to 280 arrivals and departures each by November next year, including 30 international flights. Now, NMIA is designed to handle 90 million passengers per annum, and 3.2 million metric tons of cargo annually once complete. However, in the initial phase, the airport is set to handle about 20 million passengers annually and about 0.5 million metric tons of cargo per annum.
Right. Thanks so much for that, Sesa. We'll continue tracking this story as this partnership takes off and bring you all of the details. Now, moving on to some other news coming in from space, but not quite really. In a third setback for Elon Musk's SpaceX, the colossal Starship rocket suffered a leak, tumbled out of control in space and disintegrated as it hurtled back to Earth during a test flight on Tuesday. The launch system, which comprised of the Starship upper portion and its super heavy booster, was meant to take off from the company's launch pad in South Texas. However, as the rocket lifted off, around 1.1 million people tuned into Elon Musk's X, and a few minutes into the flight, the recycled super heavy booster separated from the upper portion and fired its engines. But as it maneuvered itself into position and plunged back to Earth, it suffered an apparent problem and exploded. SpaceX also appeared to fall short of another key milestone planned for the mission, which is using Starship to deploy a slate of dummy satellites. But this is not the first time it's failed to launch its rocket. Malika now joining in with the details of SpaceX's past failures. Malika, over to you and give us all of the details.
Yes, thank you so much for that, Sanjana. Let me just explain you what happened in March of 2025 and in January of 2025. Basically, in March of 2025, the Starship rocket launched from Texas but exploded during a test flight. And minutes after the takeoff, the rocket started spinning out of control and lost contact with the ground team. Now, this caused the spacecraft to break apart. Debris fell all over the Atlantic and spread across the Bahamas. And the debris was so widespread that it disrupted flights in Florida. Now, what went wrong? It's not clear as to what exactly went wrong, but the upper stage was a problem causing the spin and the explosion. Again, in January of 2025, the rocket launched from Texas, but right after 8 minutes, it exploded over the Bahamas. And the problem started during the separation when the second stage of the aircraft, which was the upper part, separated from the booster, which is, as you mentioned, the heavier part of the rocket, that's the bottom part. And the fire broke out and the explosion happened. The rocket system failed because it could not handle the separation, which is sort of one of the main parts of a rocket launch. Now, SpaceX led investigations into both these crashes. They're trying to understand what went wrong, and they also said that the reason behind these two failures were different, although they looked similar. And they've made changes to the rocket. Plus, they're planning to use an upgraded Raptor 3 engine to make these future Starships more reliable. But however, the recent failure with the Starship does put a question mark on what exactly is going wrong, especially with the upper part of the rocket.
Right, Malika, thank you so much for those updates. Third time unlucky indeed for SpaceX. We'll continue tracking that and bring you all of the updates. We have a quick update coming in with regards to the IIP data release. There seems to be a delay in it because of a technical glitch. Remember, this data release was slated for 4 o'clock this evening, but there has been a glitch because of which the data now has been delayed. We saw the Ministry of Statistics and Program Implementation had recently shortened the timeline for IIP data release to 28 days. But now that it was scheduled for release today, it has been delayed due to technical issues. Now, officials are expected to announce a revised release date soon, but we'll continue tracking on the latest on that and bring you the date or potentially the new timing that we're expecting to see for the IIP data. But now that has been delayed due to a technical glitch. Meanwhile, let's take a look at some of our other stories that are making news around the country. COVID-19 cases are rising, with total cases reaching 1,010 today, but with mild and subtle symptoms. Experts have advised people not to panic, but state advisories urge residents to maintain hygiene. According to the latest data from the Ministry of Health and Welfare, Kerala and Maharashtra are witnessing the highest surge in cases. Legendary actor and politician Kamal Haasan is set to become a Rajya Sabha MP. The MK Stalin-led DMK released a list of Rajya Sabha candidates. One of the seats in DMK's quota had been set aside for Kamal Hassan's Makkal Needi Mayam in return for his support to the DMK in the 2024 general election. Now, the MNM had backed the DMK Congress alliance in Tamil Nadu for the 2024 election, and while the alliance swept all of the 39 seats in Tamil Nadu, DMK sources have said party chief and Tamil Nadu Chief Minister MK Stalin promised Kamal Hassan a Rajya Sabha seat in return for his support. A vendor has been found guilty in the Anna University sexual assault case that had sparked a massive political row in December. A Mahila court found Gyanasekharan guilty of 11 charges invoked against him for the sexual assault of a 19-year-old student on the university campus in Chennai. The charges against the convict include sexual assault, harassment, rape, intimidation, kidnapping, and other provisions under the IT Act. The court is yet to sentence him. At least 36 people were stranded at top of a roller coaster which got stuck at a height of approximately 150 feet at the VJP Universal Kingdom, which is an amusement park in Injambakkam in Chennai. They remained trapped for over 3 hours. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC. I'm your host Harsh Saita, and today we're going to look in at Info Edge. It's an interesting company because one, it's an expensive one. Two, it's also a holder in Zomato as well as PB Fintech, two absolutely new age listed companies now by themselves. It derives a third of its market cap from those two companies. But most importantly, what does Info Edge do in terms of core business? And the core business is Naukri.com. So hiring trends, Q4 has been better. Is FY26 going to be even better in terms of hiring trends is what I want to understand. Because if you're trading at the kind of valuation that Naukri is trading at, which is around 75 times 1 year forward price to earnings, then I want to know whether the business underlying is going to do as well in terms of growth. So that's going to be the first piece. And within this hiring, IT is going to be is the big bulk of the hiring that Naukri generates. And therefore, is IT hiring at a risk given AI as well as some of the other trends playing out? In the core IT business, a TCS, Infosys, we're not seeing hiring pick up, even though the Info Edge business does not seem to be very, very affected by it, but one would want to understand whether there is that risk which Info Edge business carries from a hiring perspective. The other piece is other businesses. So the other businesses that it does, the likes of a Jeevan Sathi, 99 Acres, Shiksha. Jeevan Sathi is the matrimony platform, 99 Acres is the real estate platform that it runs, and Shiksha is the educational platform that it runs. Now, when you're looking at profitability in all of these businesses, has not happened. So basically, Naukri is the one business which is profitable, which kind of diverts money into these businesses to ensure that these businesses can continue to run and continue to scale, and hopefully at some point start to generate profitability, core profitability. And that's what all business is about, right? When does that happen is really the question, and whether when that happens, as and when it does, whether that is sustainable or not. Now, the fourth piece of this is, how do you monetize some of these? So maybe they turn profitable at some point, maybe next year. Do you monetize your opportunities at that time? Is there a plan to monetize? Because shareholder value will get unlocked only when you monetize some of these prospects and businesses. And what are those plans? And the last one is with regard to promotion spends. Now, this is more micro than macro. A lot of the margin also depends on how promotion spends go. And what brokerages and analyst community has done this time around is they've reduced the EPS estimates with regard to FY26 and 27, saying that there may be some amount of pressure with regard to margins which are coming through, and some portion of that is because of promotion spends. So I want to understand whether that at all is at risk or not. So all of that and more once we start to analyze Info Edge, and of course we'll speak with management as well. But first off, I want to start by introducing the company itself. At its very core, it's an online classified company. It has a portfolio of brands, and what it does is it services companies as well as individuals to help with regard to marrying both sides with regard to hiring and people. So that's essentially what it does at its very core. That's how it was conceptualized and started. Now it owns a bouquet of brands. So let me talk about the first and the largest one that it owns, which is Naukri. It's an online recruitment platform. This is the first part of the business. The second part of the business is you have a 99 Acres, which is an online real estate platform. The third one is Jeevan Sathi, which is an online matrimonial platform. And fourth one is Shiksha, which is an online educational information services platform. So that's how it runs its business, core business. Outside of this, it also incubates other businesses. So it acts as an investor and has invested in several startups, starting from a Zomato and a PB Fintech, and now runs active portfolios within itself. It also has an AIF where Temasek has a 50% investment in. So it's fascinating how they have pivoted in terms of their business. They started off with core Naukri, and they had the very, very famous founder, Mr. Sanjeev Bikhchandani, who is now worth $3 billion odd. But he incubated this business from scratch, and it's a $0 to $3 billion story for someone like the founder of Info Edge. But that apart, it has investments with carrying value of around 640 odd crores. So all of the cash flow coming in goes into these investments in new age tech companies, including the likes of an AI. Now they have financial investments in some of these companies as well, which are flashing on your screen, but along with it, they have several financial investments in plenty of companies through their AIFs. These are some of the strategic investments that they've done, of course, which are very similar or which help their existing and current businesses. So all of that, plenty to unpack, of course. Now, in terms of the largest ones, the financial investments, the largest ones is a Zomato, where it owns a 12% stake. Zomato is worth 2.2 lakh crore. 12% of that is around 25,000 crore in itself. PB Fintech, which is again worth roughly 10,000 crore or 12.5% stake in PB Fintech. So overall, the value of a PB Fintech holding of Info Edge is around 10,000 odd crores. So Zomato plus PB Fintech at current market value is worth around 35,000 crore within that Info Edge basket. And then of course it runs Info Edge Ventures, which is what I spoke about, the AIF, through which it makes financial investments. So all of that. But let's talk about the core business a little bit more. This is how the recruitment business revenue has been growing. Look at it, 770 crore in FY21. It's gone up to around 1982 crore in FY25. But you look at the last 3 years, right? FY22 to 23, fantastic year. 24, 25, growth not coming through, right? You can see that visible in terms of the numbers. And this is the core business of Info Edge. So this is where I have started to try to understand as to how the risk is getting built in with regard to both valuations. That's one, something you want to understand as well. And two is the fact that can this grow and scale at the rate at which it did in FY22 and FY23. That's really the setup that I will want to look at when it comes to recruitment. Now look at matrimonial now. Largely flat, right, over the last maybe 5 to 6 years. No real traction seen here. Profitability, you'd want to wait and watch and want to understand how this becomes profitable, because currently looking at the numbers doesn't seem like an enthusiastic set. Let's look at property now, the 99 acres business. There too you've seen decentish uptick, right? So this one again chugging along fine. And the last one is education, where you've seen the sharpest uptick in terms of the way in which the business has scaled. But you want to try and understand whether the scalability is followed by profitability or not, because that will hold its key. In terms of the total, the net sales sits at around 2,657 odd crore, but out of that nearly 2,000 crore comes from the Naukri core business. So that's how large Naukri is in terms of contributor to top line. Even in terms of growth rates, Naukri of course hasn't done as well in FY24 and FY25, just an 8% growth in FY24, just a 10% growth in FY25. So the recruitment growth hasn't come through, as you can see on your screen. We saw the numbers in absolute terms. We're looking at the percentage terms now. That growth hasn't kicked through, especially with regard to its most profitable Naukri business. So I want to see whether that business actually starts kicking through in terms of growth. The matrimonial business has done okay in FY25, but of a low base, because FY23 we saw degrowth, mind you. Property has done decently well. We saw how it's been doing, 17% growth on the back of 31 and 24, not bad at all. And last one is with regard to education. You're looking at again a declining growth clip with regard to education. Even though we saw a good solid spike in terms of the numbers, now it's declining. You want to see whether these start making profit, because growth is declining and you want to see whether profitability starts to kick through or not. Now let's quickly talk about the recruitment business in terms of sector wise. What you're seeing is the top line is around 1880 crore, the sector wise revenue picture, versus the 2000 crore number in FY25. We spoke about some of these numbers, and look at the total number. It's 2850 versus 2000. So a large part of the revenue sits in the recruitment solutions business. Now I want to also last off talk about the 99 acres business, the total listings, because some of those also contribute to how the business traction is and how that gets built up. So when you're looking at, okay, so this is the billings by customer type, the different types of customers which contribute to the billings within the recruitment business. This is the recruitment consulting business, contributes around 26%. The tech and IT services 28%. Now, why I have put this up? Because this tech and IT services is at risk given AI. So I want to see whether that is actually at risk, or can the growth clip and the revenue and the billings by customer in terms of percentage continue. That's how the breakup with regard to the 99 acres customer base is. The type of customers, brokers, owners and builders. That's how the split currently sits at. Again, the billing breakdown, brokers, owners and builders. Just for information, of course, as to how the billing as well as the business works with regard to 99 acres. Now, let me quickly take it across. I hope we've tried to, as comprehensively as possible, cover the way in which this business works. Let's talk about the metrics that we look at on today's KYC. We look at the income statement, the balance sheet, the cash flow, the shareholding. So those are the four first metrics we look at. Thereafter, we look at street cred, outlook, valuation and street coverage. That's how we'll kind of cover all of the parameters today. Let's start off with the income statement. The top line growth has been reasonable, 21% odd over the last 3 years, FY22 to FY25. That's quite a decent growth clip. EBITDA has gone and done much better because some of the non-profitable businesses are obviously inching towards profitability. And that's why what you're seeing is your EBITDA going up 31% on a compounded annual basis. The net profit may not be the best metric to look at because there are exceptional and one-off items which are always sitting there. Like, for example, in FY22, you had the listing of a Zomato where around 2.5% stake was sold by Info Edge as part of the IPO, and some of those proceeds are sitting there in the net profit number as well. So maybe not the best metric to look at, but look at the revenue and the EBITDA. Honestly, it's a cash flow positive business, and therefore the net profit in its core sense may not really matter as much given the kind of gyrations that you will see periodically with regard to the net profit number. Let's look at the balance sheet now and let's try and break this one down. Now, in terms of the balance sheet, it's a clean balance sheet, no equity raises that they do, a large other equity base. Look at the way other equity has gone up because of all the stake sales that they've done. So 13,000 crore was the equity base maybe in FY23. It's currently sitting at 35,000 crore. There's no borrowing on the balance sheet. There's decent amount of cash sitting on the balance sheet. They continue to deploy the free cash. I did mention in some of the ancillary businesses which they run, as well as the fund which they run to incubate other businesses. So that's how the play kind of works with regard to the balance sheet metrics. There's definitely a decent amount of cash and no real equity or debt issues per se. Let's talk about quickly the third metric, the cash flow. Now you look at the way in which cash flow has gone up. It's a free cash flow generating company, mind you. It continues to generate cash at a rapid pace with regard to its platform businesses because the platforms are already set up. What they do is they do a little bit of investing in AI to optimize the platforms better. But outside of that, your cash flow from operations continues to grow at a very healthy clip. So no concern there. We've given that a thumbs up as well. Some of this cash, I did mention, gets invested to their AIF, which invests in new businesses. That's how the net cash flow adds up, and which is why it's currently negative. They also give some amount of dividend to shareholders, which kind of impacts that cash flow number. Let's talk about the balance, let's talk about the shareholding now. When you're looking at the shareholding, around 38% is promoter holding, around 30 to 34% is FII's holding, around 16 to 18% is DII holding, and the balance is public. See, the public holding is very low, which is likely a positive of sorts. But when you're looking at the promoter holding at 38%, 24% is owned by a Sanjeev Bikhchandani alone, who is the founder. And thereafter, there are some of the other promoters which also hold stake. So that's how the 38% is held. In terms of when we've seen promoter incubated businesses, we've seen that they hold a larger stake. Promoters hold a larger stake. That's not so here because it's a typical Indian startup which has diluted some of the promoter holding. No concern, let me put that across in candid terms, but when you have FII and DII holdings which are that large, you might see exits, and therefore you could see some exits happen at some point. So something to look out for, and hence we've been slightly more cautious and given this a neutral. So shareholding out of the way, let's talk about street cred. Now, in terms of the way the stock has performed, 1 month absolutely flat, 6 months down 14%, year to date down around 19%. So some pressure in the in the very, very short term, but in the 1 year term, it's up 16%. So that's a positive. And then you're looking at a 5 year where the stock is up 2.5x. So it's a 2.5 bagger over the last 5 years. Therefore, we've given this a clear thumbs up with regard to street cred as well. Now, I want to delve a little bit into the outlook and what's playing out. One, the company owns around 12.5% in Zomato and PB Fintech. I did mention this. I did the math as well. Around 35,000 crore in market cap currently owned by these two. Typically, you give a holdco discount when you have such large holdings in companies, and therefore even if we were to give a holdco discount, that'll be around 20% odd. That's what average analysts are penciling in terms of holdco discount. The second piece is it leverages on cash made by Naukri to invest in newer businesses. It invests in existing businesses, uses the AIF vehicle to invest in new businesses as well. It's now set up a completely different business with regard to investing. It does that through its AIF, which is the vehicle they use. The recruitment growth is led by niche and adjacent segments, including branding services. You want IT to grow or you want branding to grow? That's really the question, and that's something I will pose to the management as well. The A&P spend has increased, which is likely a concern and might impact margins. You have hiring activity, which remains subdued at this point, and therefore likely if IT hiring activity were to pick up, you could see a positive, but at this point, it's still weak. Look at expansion into new towns and customer additions. That's what's driving growth. It's not IT revenue or hiring. It's expansion into new towns which is driving growth. In property, you look at billing growth, which has accelerated in Q4. Can that sustain? Can profitability as well come through? And in terms of cash EBITDA, the segment has improved given the strong billing. So that's how we kind of sum it up with regard to what the outlook is. Let's talk about valuations now. In terms of EPS, FY26 average analyst estimates 19 rupees of EPS, FY27 23 rupees of EPS. So you are seeing the price to earning multiple shrink quickly, but as per Bloomberg, the competition average is 31 times. If I remove Zomato and PB Fintech from the market cap to adjust the price to earnings ratio, that adjusted price to earnings ratio will also be maybe around 50 times odd. So therefore, you will see this as slightly expensive compared to competition, maybe much more than slightly expensive compared to competition. And therefore, we've given this a thumbs down, given that growth does not seem to be very, very strong. Like some of the other startups. We see startups growing at 20, 30, 40%. This one is growing somewhere at mid-teens. So something to take care of. Last off with regard to analyst recommendations. There are 15 buy calls, 5 hold calls, 1 sell call, potential return being 14%. There is some bit of caution. We'll give this a neutral as well. To sum it all up, let's look at the rating. It stacks up as you can see on your screen. There you go. So 3.5 with regard to the first 4 metrics, and thereafter you have 5.5 as the total of our on our KYC rating with regard to an info edge. That's how it stacks up. Now let's quickly go across. We spoke with the management earlier. I spoke to Chintan Thakkar, who's the Director and Chief Financial Officer of InfoEdge, and I started off by understanding the risks which are getting priced in for FY26 from a growth perspective. Listen in to that entire conversation. So first off, I want to start off with Naukri. Growth in Q4 looks decent, but can this sustain is really the question. When I'm looking at the numbers, maybe over the last 3 years or so, the growth hasn't really seen a significant uptick. Do you see that in FY26, and what's the reason for that? Give us some perspective.
So first of all, thank you very much for having me.
It's a pleasure.
Going straight on the questions on the recruitment solutions. If you look at 3 years as the time frame, then we were coming out of COVID, and I think there was this great surge that happened, right? And in that process, what happened is that there was a level of over hiring that happened. So that's why in the second year we've seen that kind of the growth kind of got steady over there, right? And it was flattish. If you really look at this year, right? This year in FY25, we have seen that Q1, was little kind of, it's coming out of that, the flattish type of a year that we had, in FY24. And we had said that, look, it seems that we are coming out of that U-shaped recovery, right? And that's what happened. So Q1, the Q2 was better than Q1, Q3 was better than Q2, and Q4 seems to be better than Q3. So I think it looks like that it's an upward trajectory. And when I look at the numbers, and we can divide it in terms of the verticals, in terms of geography, functions, yes, there would be some pockets of higher growth and some would be little lower growth. But on the whole, it looks like that it's a very secular trend. Also, what we are hearing from the ground, is that I think there seems to be a little bit of momentum continuing over there. We also seem to be executing much better because of the adoption of AI that we have done in our products as well, in terms of how our algorithms are working, how our matching platforms are working, right? So when you look at, let's say, JobSpeak Index, as compared to that, we seem to be performing, a bit better. And I think a lot to give credit to how the product and the engineering people and the sales guys have kind of really performed. So we seem to be doing little better. I really hope. Of course, in today's world, I think every day and every week could be very different, and the whole business environment seems to be so volatile. It keeps changing. Business confidence keeps changing. This is one tweet or one news item.
Sure.
I think keeping that and all those external factors which can impact us. Other than that, that it looks like that it's a reasonably that yes, Q1 to Q2 to Q3 to Q4 we seem to be ramping up. And maybe we should be able to hold on to this type of growth. Certainly, from our side, we would want to achieve that as a part of our goal for next year.
Sure. So, with regard to IT in particular, and I'll talk about the recruitment business first. Let me take that out of the way. IT, there still seems to be some amount of momentum which needs to get built up, because that doesn't seem to be playing through. What's the sense like on ground with regard to IT? And do you believe that there is a systemic challenge that IT recruitment may be on the wane for maybe the medium term? Is that a risk that you're dealing with, given the AI, given the AI risk that IT employees run?
So first of all, I need to put the IT in perspective, because when we say IT it's a very broader kind of a spectrum, right? So IT has IT services, the export-oriented IT services company. Some of them are listed, and a lot of the narrative gets built on the basis of what those guys are really talking about in the market. But then there are product companies, there are BPOs, and there are GCCs, right? So there are some pockets where it seems to be doing well. GCC is certainly a brighter spot, than what the IT services companies are. So I think on the overall trend basis, we think that there are certain pockets in IT where it seems to be an opportunity so far as our business is concerned. I also want to kind of highlight that, like I said in my earlier comment, that look, even if there is no gross hiring happening in IT services, there is attrition. Right? And the attrition is also because of GCC coming and triggering some of those attrition. Some of the startup companies that gets funded, or some of the other tech-oriented manufacturing that seems to be setting up in the country, that kind of triggers some of the attrition. And when there's an attrition, there is at least a replacement. So for us, whether it's hiring because of the overall growth and expansion, or it is just to replace the existing account, for us it is still a growth. So in that sense, I think we need to also take into account that IT services company, their utilization rates are at its peak, and they seem to be doing a lot of replacement hiring. That's certainly happening. So that's helping our business. That trend may continue. The AI trend, has also, there are two sides of the spectrum. One is that the lower value items, which is mostly like around BPO customer support services and some of those type of segments, that could be an impact over there. But at the higher end, the guys who are involved in data science and machine learning and high end engineering, I think there the demand is far outweighed than the supply is. So I think again it's a mixed bag over there. Yeah.
So point taken. I want to therefore talk about now other businesses. What's the profitability outlook there? Because while Naukri continues to support those businesses well, at some point you'll want them to turn a corner, right? That doesn't seem to be happening.
Well, I think that we have arrived at that point. So if you look at Q4 numbers on the top line on billing, all the 4 businesses have kind of clicked good amount of growth. So overall, we have grown. Billing growth is about 19%, which is just not about Naukri, but even if you look at 99 acres, you look at Jeevan Sathi, Shiksha, I think so everybody seems to be growing. And probably this is the first time that we are seeing that all 4 cylinders are are firing, and they all seem to be growing profitably. So even if you look at from the cash from operations for each of these businesses, which sometimes when you just look at the PBT, which is PBT is helping when looking at top line as revenue, which is like looking in the in the rearview mirror. But when you look at the billing and you look at the expenses, you realize that there is a cash profit that's got generated. So non-recruitment business taken together, it's a cash positive this quarter, and when we look at each of the businesses, like Jeevan Sathi, which used to burn cash, which we have seen a decline in that. Even 99 acres, I think for the year. So both are kind of close to EBITDA neutral. And not only that, for in real estate business, 99 acres, we seem to be also gaining market share. So it's just not about that we are growing efficient, but also we seem to be growing in terms of.
Okay, so that's of course the conversation we had with Info Edge, but completely out of time on this edition of KYC. Stay tuned to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. In the mutual fund space, there is a category of investments that has gained a lot of popularity in the recent past because of the nimbleness in which fund managers manage their portfolio. And I'm speaking about the multi-asset fund, which sits in the broader hybrid category. Now, what it does is that it invests in multiple asset classes, equity, fixed income, and certain commodities. It can look at real estate separately, but largely it's gold, sometimes also silver. And what it does is that the fund manager switches between these asset classes or the allocation towards these asset classes strategically so that you don't have to. And there are certain advantages to that, of course. But what it also does is, as an investor, it helps you understand how a fund house is positioning itself with all of the information that it currently has available to it. So I specifically want to speak to Ramesh Mantri, my first guest, Chief Investment Officer of White Oak Capital, about how he and his team are managing their multi-asset fund. Ramesh, thanks so much for taking the time. Pleasure speaking with you. Let me first ask you about how you go about the construction of this, and then we'll delve a little deeper into action that you've taken over the course of the last couple of months.
Sure. Thank you, Alex. Thanks for inviting us. See, the multi-asset is is one of the most open categories in mutual fund where you can do equity, debt, gold, and then a few foreign equities. So it's actually your option. There's a buffet out there. You have to pick what you want to put in the portfolio, right, out of various asset classes and products. So it's one of the most interesting combinations you can make. So different fund houses choose to run this product differently. Our approach actually is targeting volatility than returns. So the White Oak Multi-Asset Fund is entirely focused on ensuring a lower volatility product on the multi-asset side. And in the process, we tend to have much lower equity allocation to these funds, particularly than some of our other hybrids also.
Interesting, very interesting, because when I look at the April fact sheet, and it might be a little dated because we're nearly at the end of May, so maybe you'll give me a sense if there is a dramatic shift. I'm just putting the data up as we speak. Gold has actually fallen to 12.8% at the end of April, compared with about 19% at the end of January, and about 22% actually in April of last year. And this is an interesting piece because gold has been on a crazy run over the last couple of years, and particularly over the last 5-6 months. Of course, it's cooled off a little bit. Can you explain to me why you've taken the decision to cool off on gold?
Yeah, so see, we use a quantitative model where we decide allocations to 3 broad asset classes, which is gold, equities, and debt. We actually last year at one point of time had 4% in gold when we found gold to be the most attractive, very attractive relative to other asset classes. Since then, gold has rallied one of the best last 2 years in gold's history. Since then, we realized that gold is overvalued, less attractive than, let's say, equities and debt. So we've significantly cut exposure, and particularly in Feb when you realize the big rally gold had. So we have significantly cut exposure, and at the end of April, we had one of the lowest exposure, in fact, the lowest exposure we ever had to gold. And in fact, at the same time, we also had the highest exposure to equities. So we switched from gold to equities.
Yeah. Okay. So, and as it stands right now, it's 31% practically, at least what I have data. Maybe you can tell me about how it's changed in May in equity domestic, and about 7% in equity derivatives, so about 37%. Has it moved up?
Yeah, so net equity has actually closes to the highest levels we have had last 2 years. So between these two high growth asset classes, which is equity and gold, today we have the lowest, probably one of the lowest exposures to gold and one of the highest exposures to equities.
Okay. Now, interesting, because while you have the quantitative indicators, I'm actually curious what you make of this thesis while we're on the subject of gold, and then we'll talk about equity positioning as well, is that it's tied to how the dollar has been moving. There's so many moving parts in the global market that are determining the course of these asset classes, right? We've seen dollar cool off just a tad bit, and that's primarily because of the trade dynamics that are playing out, also the debt scenario in the US, all of that is coming through. But if dollar weakens, the thesis is that gold will generally strengthen because it has more in the way of safe haven demand that comes through then. Is that something that you are paying attention to, and how are you reading that developing situation on gold?
So, understand gold has been the defining currency of the world for global trade for over 2,000 years. Dollar as a currency is only 75 years old in the sense as a defining currency. Before that, it was the pound, right? So you can understand the ultimate, while gold technically is a metal, but it's the ultimate currency in the world. So normally when there's a risk off environment, there is a shift towards dollar assets. Dollar gets a bid up But when there is uncertainty towards even the dollar, then it's when gold becomes most attractive. And in a world where we had geopolitical issues, tariff wars, the global trust levels have gone down. So the willingness of countries to trust each other's currencies, including the hard currency, has gone down. And that is the period when gold becomes the most attractive, because gold is the ultimate currency in the world. Even central banks in the reserves own gold. So that's the attractiveness of gold. So gold is the ultimate indicator of fear.
Yeah. And so you could tactically shift back to an overweight stance on gold. Is that something that is likely in the near to medium term?
Yeah, so as I said, it's a fear indicator. It's hard to predict fear.
Yeah.
Right. But if something plays out in the world which causes it, and remember, we've had a number of geopolitical incidents in the last 3 years now. We have had something locally in India now. So these things are not predictable. Right. Let's be clear about this. But if those opportunities will come, we will change the asset allocation. But as of now, the stance is more towards Indian equities over gold.
Okay. Now, it's interesting because when tailwinds work in this particular product, Ramesh, they can be firing on all cylinders because you have gold on the one hand, you have duration. I was looking at the April fact sheet and it said that the residual maturity of your fixed income is at 4 years, which a lot of people are actually saying at this juncture is a sweet spot. And you have domestic equity, which can see a run up based on what has happened. And we've seen that play out also after this geopolitical issue that cropped up domestically was resolved. So what has led to the kind of performance? And I know that you don't chase returns in this fund, as you've pointed out. You've specifically said that you target volatility and you want to bring that down. But incidentally, things have worked in your favor. And what, 17% over the last 1 year is nothing to scoff at.
No, so it's been a sweet period because all the three asset classes have worked. One, of course, gold is the best performer. Our equities have been reasonable and fixed income also has been stellar in the last 1 year. So it's been a short period where all the three asset classes work. Normally that doesn't happen. And I think the returns have come significantly also because in each of the three asset classes, our teams have added a lot of alpha. This is not sustainable and cannot be repeated. I want to be very categorical. We target volatility, not returns here in this product. But the asset classes have worked and our teams have created alpha on top of that. Significant alpha, actually.
Yeah. I want to speak about the equity strategy as well, Ramesh. And I think a lot of our viewers will be curious about how you're positioning at this juncture as well, because when you're talking about this scheme, of course, it'll give you some perspective on how the fund house is looking at equity. And the fact that you're highest equity than you have been in the history of this fund is indicative that you're seeing the opportunities to deploy as things stand right now in the equity market. So not just in this product, but broadly in your equity funds as well, how are you positioning yourself right now?
So Alex, on our pure equity strategies, we have a stated philosophy not to take cash calls.
Okay.
So we are fully invested. On hybrids, we do asset allocation. Now here there are two competing asset classes, which is gold and fixed income. Relative to both these asset classes, I think we find equities today more attractive because yields have come off quite a bit on fixed income, right? And of course, gold has gone up a lot. So considering both these, equities are today attractive. So even on our balanced advantage funds, today we are at one of the highest equity levels in the last close to 3 years now. 2.5+ years.
Okay. Now, when it comes to equity, everybody's trying to identify, and of course, this is the nature of the business. This is the nature of both for us as well as for you. You're trying to project future earnings because ultimately that is going to determine the course of equity. And so if you're talking about the 200 companies at the top in India, and you're looking at how the fourth quarter has been, Ramesh, what is your anticipation based on what you know so far about FY26? Do you think that, as a lot of people are saying, it's not going to be 14-15% growth, it's going to be more closer to nominal GDP, which is close to, 10-11%? And what, according to you, will drive that?
No, so I think first this base expectation of, we have the same base expectation that growth should be in line with the nominal GDP. That's where actually, if you took a very long period, that's where Sensex earnings have grown if you even look at 40-year periods. So that's the right base expectation to have. I think last year was a weak period of weak economic growth in India, both because of government spending on capex and also the fact that interest rates were where they are. Now we've already seen significant monetary easing and growth has picked up with government spending. So we have both of these vectors aligned. The external story is weaker on exports as we speak, but I think two vectors, local factors are in our favor. So growth should pick up from what it was last year, and that's why earnings growth in line with nominal GDP is a good expectation.
Okay, a couple of follow-ups on that then. This is what we're seeing despite the impact of the low base of the first half last year. And so what we're essentially saying, Ramesh, correct me if I'm wrong, my interpretation is that it's not going to be stellar, it's not going to be dramatic, and in fact it's more of what we've seen in the fourth quarter, maybe a few surprises here and there. It's going to take longer for there to be a material upswing in earnings trajectory.
Yes, because the impact of interest rate cuts takes a few months to flow through to the economy. So whatever's happened in the first quarter, benefits will probably start playing out in second half. So we are some time away. And remember, the external picture is not great with all the tariff situation. There's significant uncertainty remains on the tariff side, right? So considering all that context, I think a very normal expectations, right? No stellar expectations for now.
Last question, and I'm going to be studying the fact sheet when it's released for the month of May, and that will give me a perspective on your portfolios as well and what has changed. But just so that our viewers understand whether you're seeing certain pockets of opportunity based on what we've seen over the last couple of months. There have been pretty wild swings. Are you seeing opportunities? Which pockets are you identifying at this juncture or have identified in the recent past?
See, we're generally not thematic investors.
Sure.
At a very broad level.
Yeah.
Where are we finding good growth and attractive valuations? One is BFSI sector. One is the whole pharma healthcare, which is a very defensive sector, where both on the pharma and healthcare companies, we have lot of attractive opportunities there. Those are the two broad spaces. I think the adoption of tech digitalization in India also is a very interesting long-term story. So these are the broad things. And I think manufacturing, particularly on the precision manufacturing, there's some very interesting stories. And what has happened in defense in the last 2 months, I think it's a huge vote in favor of the quality of products that are coming from the Indian defense sector. And I think that should accelerate from here.
Fantastic. Thanks so much, Ramesh, for taking the time. Pleasure speaking with you as always.
Thank you, Alex. Thank you. Have a nice day.
You too.
Thank you. Thank you.
All right, so that's the way that White Oak Capital is managing its multi-asset fund. As things stand right now, looking at the way that bond yields have moved and gold prices, they're seeing more opportunities in equity, and particularly domestic equity, and so they've actually increased the allocation, which is very fascinating. This scheme, out of quite a few schemes that are available in the multi-asset space, has traditionally had a larger exposure to gold. So while we're on the subject, let's talk about the space. Why should you invest in a multi-asset fund? Should you in the first place? If you are already investing in equity mutual funds, in fixed income, and also in gold, then do you need this product? To talk about your strategy in this space, I'm joined by Prableen Bajpai, who's the founder of FinFix Research and Analytics. Prableen, as always, thanks so much for taking the time. Let's start by, and most people know about multi-assets and multi-asset funds. So let's start by what you think about that first question which I have. Should everybody consider investing, or is it a very specific type of investor that looks at multi-asset?
Multi-assets, I think, Alex, is a great place. It's a great category because it does provide the potential for upside while containing the downside. So the falls, are much lesser. And I'll just give some data, first to talk about this. So let's say if we are talking about Nifty 50, Nifty 50 being the benchmark of the Indian markets, in the last 7 years, if we look at the 5 biggest falls, the biggest one was during COVID when Nifty 50 fell by about 38%, and the least was somewhere in 2019 when it fell by 11.95%. And what we saw from September till about March 4th was the 15.77% fall on Nifty 50. So if you're just looking broadly at this data, we see that the category average multi-asset funds at all times have fallen much, much lesser than Nifty 50. For example, 15.77% was the recent fall for Nifty, and the category, the multi-assets, fell by 8.07%, and 24 out of the 25 schemes were able to contain the downside lesser than Nifty 50 fall. The highest returns being 3.16% positive, and the lowest being 21%. So that was the only scheme which actually fell more than Nifty 50. But if we look at all other periods, prior to COVID, we had much lesser schemes. So we had about 6 schemes, 5 to 6 schemes. And in all these other 4 periods which we've tracked for Nifty 50, we see that there's a 100% rate when the returns have been lesser than Nifty 50, and many of the good schemes have been able to give the upside and higher returns than the benchmark markets. So that's point number 1, that they do have the potential to contain the downside. And I think second, they are really useful if you do have a 3 to 5 year horizon, or you're stuck in markets like the current situation where there is volatility and there is some bit of, let's say, lack of direction, Alex. I think these are times when this category can emerge to be one of the better ones, because it will move across different asset classes. It will give you gold, it will give you silver. Silver has been, I think we've seen so many NFOs for silver. So rather than going and investing in a silver fund and taking on the whole risk onto yourself, probably the fund managers have a better and a clear vision of how gold, silver can move. And of course, the opportunities in the equity markets as well. For example, you spoke to White Oak, and they have actually increased their equity allocation. Not many people, Alex, in these times will have the risk appetite probably to increase the allocation. So these funds somewhere are able to do it in an automated way, a bit of, let's say, emotionless way. So overall, it's a great category, and I think it can find place in majority of the portfolios. Even if you have, pure equity and pure fixed income, I think it can still find place.
Okay, so we'll talk about some of that. And also a major advantage, of course, is that you don't have to book capital gains at any given point of time. The fund does it for you. So when you're switching here and there, what happens invariably is that you lose because you're booking either short-term or long-term capital gains, and that can be a significant erosion in what you earn. But Absolutely. The thing is, Prableen, that we spoke with White Oak Capital, of course, and there are quite a few schemes available. They all run it differently. So how do you understand how this product should be looked at?
Yeah, that's the problem here actually, Alex, because there's too much of variety, and then for a retail investor, it's not easy for him or her to go and study all schemes and decide which one is well suited. And I think the two extremes here would be, on one hand, you have a scheme like Edelweiss multi-asset allocation. They have a purely hedged equity portfolio. So it's arbitrage purely. And even gold and silver holdings are hedged. Only the fixed income, what they are investing in government bonds and fixed income, other money market and everything is the regular fixed income which they have. So everything is hedged. And of course, there will be a capping on the upside because they are not taking any unhedged equity exposure, but they are able to contain the downside. The structure is very different. On the other extreme, we have schemes like Motilal, which have gone up to 65-70% in equity also. And even in times when markets were really reaching, higher levels in terms of valuations, their allocation towards equity was high. And probably that is why the fall that we saw in their particular fund. But then there are some schemes, Alex, I feel, which are somewhere in between. And just that, it gets complex. But for example, SBI, ICICI, White Oak, I think they've done a great job in the last 1 year, although we still have limited, track record in terms of how they would be in the other market cycles. But if you look at Nippon, I think these funds have been able to give you a balanced exposure to the different asset classes. So I think for any investor, when they're going and picking a multi-asset allocation fund, I think the balance within different assets is important. And of course, how much of downside protection these schemes have been able to give. But majority of them have made good and agile movements from trimming. White Oak trimmed their gold exposure. SBI, for example, brought it down from 9 to 3% in the last 1 month. So probably they're booking profits as well and taking this opportunity to probably increase the equity exposure. So overall, a bit of confusion there, but I think if investors, if they are sure about their need and they can have their advisor or somebody suggest them, I think the right fund for themselves.
Yeah, 100%. And what you pointed out has actually borne out. Now, I started the conversation saying, should you consider investing in it at all? And you've pointed out that there are advantages to be had. But the question is, where does it fit in your portfolio? If you do have equity, if you have fixed income, how much allocation should you take? On what basis do you decide how much you should have?
So I think some pockets, how we can look at adding this, Alex. Number one, for example, if I have to increase my equity exposure and I'm not very comfortable investing in a mid cap or a small cap, I have a 5 to 7 year view. I feel that may be risky, but I want equity exposure. So from within multi-assets, probably I can pick a scheme which has a decent equity allocation because there is a structure which is given for all the different schemes. How much will be the sort of the movement for that particular scheme. For example, somebody has the 10 to 80% range, somebody has the 35 to 65% range. So if you can find a scheme which is slightly more equity oriented, which will always maintain that exposure, then that can be an addition within your equity portfolio because that can help me reduce my downside risk. So while I'm going to add equity, and look at some downside protection. Likewise, Alex, for somebody, I think with 3 to 5 years is always a very, very tricky time. How do you take allocation? How do you decide where to invest for 3 to 5 years? It's a tricky time period. And I think that is where these funds can really fit in. I think third very important usage is as an SWP. So, for example, when you're heading towards retirement, even before that, you can actually start building up your allocations in this kind of a hybrid fund. So that can be your first bucket from where you start your systematic withdrawal while your other equity schemes continue to grow. For the college education of your children, so horizon-wise. So I think there are a lot of ways where this can be added. And I think the very important, category of investors who can look at it, who are graduating from, let's say, pure fixed income towards equities. So for them also, maybe a conservative fund can be a good starting point of somebody who's just starting off. So, like zor ka jhatka, probably little dheere for them when they enter equities.
Well put. Not that you should make a decision based on tax at all, but since you mentioned fixed income versus multi-asset, a lot of people are gravitating towards hybrid funds because of the better tax treatment on it. Ultimately, all fixed income is, whatever you earn from that is taxed at slab rate. Whereas a multi-asset fund, like other hybrids, you get that 12.5% taxation. You want to explain that?
So this is actually one of the real good points of being in the multi-asset category, Alex, because we do have the variation as well. For example, Edelweiss is a safe kind of a fund within the multi-assets. It went up by 3.16% during this fall when Nifty was down by 15.5%. So one can definitely consider this kind of a fund. But still, if you are looking at substituting your pure fixed income, I think investors should be prepared for some downside risk. That has to be borne in mind that, okay, maybe there is some sort of a dip which can happen, but it can be a good substitute for somebody who can have that heart to take a bit of exposure towards equities, little risk, and then you're looking at better taxation because there are a lot of funds which, if they are holding about 35% in equity, qualify for the 12.5% taxation after 2 years, and the others are qualifying for 12% taxation after 1 year. But of course, this is a category overall we should think of 2 years plus. So we can say that it's going to give you 12.5% taxation, which is great.
Yeah.
And I think, Alex, the only point here is that it can't be like you just cannot go look at the past returns and pick something because that can be really detrimental to your portfolio.
Important point that you're making there, Prableen. But so therefore, last question, a slightly quick answer, running out of time. So difficult to put a benchmark in place in terms of what your return expectation should be, but still, what should investors bear in mind and what do you like in the space?
I think it should be around Nifty 50. So if you've picked a conservative multi-asset, then maybe 1 or 2% less or around Nifty 50. And if you picked a slightly the regular with 65% exposure, which can take up to 65% exposure, I would want my fund to be maybe 1-2% plus Nifty 50, which has happened in the past. We do have the returns, those kind of returns. And what I like, Alex, I think Edelweiss, for somebody who's really conservative, I think White Oak, we've started studying. It seems to be a good strategy. They've been able to contain the downside. They've been 0.67% up during this fall, the 15.5% fall for Nifty 50. I think Nippon, SB, and ICICI are some of the others. So I think these 5, so based on which one will suit you. But of course, investors should do their own due diligence.
Absolutely. You said it. Thanks so much, Praveen, for joining in. Pleasure speaking with you as always.
Thank you. Thank you, Alex.
All right, that brings us to the end of this edition of Your Money Matters. Thanks so much for watching. This is NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered.
It was a good year on a whole, and I'm told that you're retiring next week and you're leaving on a high, highest ever VNB margins, higher individual premiums, highest bonus to policy holders. How do you sum up the fourth quarter as a whole?
You see, the impact actually post product regulation change, it has impacted our Q3 last year. Yeah. But somehow we regained in Q4, actually towards last part, towards March, not in January, February. February some growth was there, but March we So that made some, whatever loss we made, that we could make up during Q4.
Sir, and if you look at the APE growth, for the first half it was 26% odd. And full year we have seen, on a flattish note we are ending. How do you see APE growth from here on, and what do you see as the key strengths of LIC which will drive that APE growth going into FY26?
You see, if you see entire industry, EV has been affected 24-25. But for us, somehow we have shown some good growth, 6.45% growth in EV. So current year 26, I am confident because the way we have taken certain strategies, further growth will be there in EV.
And how about the APE growth, premium?
AP actually last year AP was just flat because of, as I told, product regulation changes and all those things. Our people, they take time to adjust. But current year we have particularly focused on WRP and AP. That is our target, not a total premium like single, non-single, no. Yeah, WRP, AP. So my sense is in current year there will be good growth in AP.
So while non-par has been good for you, you've been able to take it up as part of your product profile to 27%. Par is something which is a challenging one because of the regulatory changes we saw in the second half of the year. How do you see par product growth, especially given the fact that the ticket size have gone up for par products? So how do you see the growth coming in for par products?
You see, par we still maintain more than 72% because 27.69 is our non-par share and 72.31% is par share. And par, you see, yesterday we declared 56,000 crore plus bonus.
Yes, highest ever actually.
Highest ever bonus that will go to par policyholders.
Yes.
So my sense is par product also will launch, which will be attractive, and the policyholder will decide whether to take non-par or par, because both products have their own inherent characters which will attract policyholders. Benefits are there. So par policy also will maintain our in total basket, though non-par will grow, but will not ignore par.
Sir, we've been talking for a couple of years, and every year when we speak, you talk about how you are focusing on product innovation and product mix change towards non-par so that your VNB margins go up. We're ending the year at 17.6% in VNB margin. How do you see that margin going up from here? And what is the kind of strategy that you will have for non-par? Because you have always said that you want to reach out to the private players who have 20 to 25% VNB margin, and that's a goal ultimately which LIC has. So what is the game plan that you have here?
You see, margin last year 23-24 we gave a 16.8%. So now 80 basis points growth is there, 17.6. And the way current year strategy already we have adopted, initiated work is going on. Further growth will be there, and I am very much confident at least 2-3% growth will be there in the current year margin, VNB margin.
Do you see FY26 you ending with a VNB margin of 20%?
Around that is our objective.
And that would be led with more non-par products coming into play?
Both non-par will be there, of course, non-par will be there.
One of the things which is coming out is the kind of distribution network that you have been able to put. You have around more than 50% people more than 5 years into the play. How is distribution playing a bigger role now, given that you have challenges coming from the regulatory front with respect to ticket size of par policies have to be increased and those things coming into play?
No, it takes actually time, because any change, because that will take time, because our field force they have to adjust. And already that is over. Last 6 months you see our field force, and some impact on business also is there. But current year they have adjusted, and ticket size, any change, our agents are well prepared and they will sell good policies.
And they should be able to come back to normalized level of selling?
Normal, yes.
And that will happen in FY26?
Absolutely, absolutely.
You said that non-par is now roughly around 28%, 27.6%. What should be the optimal mix for par and non-par?
You see, that depends on how we promote our non-par product, but there will be good mix and some growth will be there. Further, some growth will be there in non-par.
And because that's the one which is driving your margin, and you said your driving margins have to reach to 20 plus levels. So is the aggressive push that we have seen in the last 2-3 years under your leadership of pushing more non-par so that we get a better VNB margin, that's going to continue?
You see, though margin, of course, growth in margin will be focused, but at the same time, growth in bonus, as we demonstrated 56,000 crore plus, both to make that balance, it is a very difficult, challenging task. But I am thankful to entire my team, actuarial people, everything. So we will maintain both. We will demonstrate growth in margin. We will also demonstrate growth in bonus also. So both par as well as non-par products, focus will be on both, but there will have balance mix.
As an industry leader, sir, we saw the biggest disruption in par products because of the surrender value regulations which came in. How did you navigate through that? Because that would be a good learning for industry of how the leader managed a rehaul of the entire product portfolio and relaunching it and coming back.
You see, last 6 months, because regulation came in October, we do not experience any such adverse thing in surrender. And my sense is because surrender, in any case, surrender is lost to the policyholder. And surrender defeats the purpose of insurance. So even if surrender regulation has changed, first year more surrender value you will get, but you will get still less whatever you have paid. So you are a loser. And over and above, you are losing your risk also. There will be no risk because you are out of contract. So my sense is this regulation will have very, very minimum impact or no impact, because it is actually designed for people who may be under stress. Because somebody has taken a policy under some circumstances, but certainly something, some family emergency, medical emergency, something happens, he wants to withdraw, he does not have any other source. So he wants to surrender that policy. Earlier that was not there, now that is there. So that category of people will be very, very negligible, very minimal, and unless there is very much urgency, nobody will withdraw policy.
And you see this impact having very minimal going into FY26 as all your policies have been redesigned accordingly.
Yes.
How do you, what is the kind of strategy that you're going to have all for par policies going forward? Because this is a policy which is more in term insurance kind of nature, and as you said, only under stress people will surrender. But are there policy product gaps for you in the par segment?
PAR also will also depending upon the feedback from market, because we take market feedback from our agents, customers, we design product in both segments, non-par as well as par. And my sense is, since recently we gave this bonus 56,000 crore, it is very much attractive. Par policyholders also get very high return. And if we design good product in par segment also, that will get attraction in the market. So my sense is both par as well as non-par, both will continue.
Sir, if I look at the market share, there has been a slight decline in market share on a year-to-year basis, and it could be understandable because the industry players are increasing and the pool is also increasing. How do you look at your market share? Will there be a time where LIC will look at, say that I will have to maintain my market share at the cost of margins, or I will continue to grow and let the market grow as a whole?
You see, market share is a function of growth. The rate at which smaller players grow, for me, having a large base, it will be challenging. Having said that, we have our internal strategy. We cannot go below certain share in the market. That is our internal thing. But what we are focusing now is profitable growth. Post-listing growth over growth, that we are demonstrating profitable. So that is our focus area. So that in coming days, you will get more profit, more bonus for policyholders. But at the same time, market share at certain level will maintain.
Sir, if I look at your embedded value, and you said that your embedded value grew at around 6.8% this year, is that the comfortable level of growth that you're looking for your embedded value going forward? Because you've been growing at a much higher rate, actually.
It will further grow. And my sense is it will go further in the current year. Rate will be higher.
And how do you look at the market risk which is there, or economic risk which is there in today?
All these are embedded. Our people calculate everything while designing product, everything. So that will factor into.
In the last 1 year, sir, your exposure to the rural markets have increased with respect to distribution. How do you see product sales or product adaptability in that market, and your entire online digital framework of Ananda which you had launched, how is that expanding?
You see, if you see rural market particularly, I will just mention here, we have launched one Bima Sakhi, Women Empowerment Mahila Career Agent Scheme by Honorable Prime Minister on December 9th last.
Yeah.
And if you see the data, after Bima Sakhi launch, share of female insurance has gone up from 28% to 34% plus. And that is mostly from rural areas. And our objective for rural area, because we want to cover all rural panchayats. Every panchayat we should have at least one Bima Sakhi, so that to achieve the ultimate objective of insurance for all by 2047. What is the vision of Honorable Prime Minister, Government of India? We are working in that direction. So rural focus will be there for LIC.
And what about ULIP, sir? Because
ULIP, you see
that 166% growth,
yes,
which is a huge
ULIP last quarter, you see, we have shown substantial growth. That will continue because ULIP investors are different segment. They watch market, they take their own decision, they take their own risk, and that segment is to grow.
And you're going to bring in more product in the ULIP category?
It depends, depending upon our experience and feedback. Definitely some products will come in different segments, not only ULIP but other segments also.
Sir, your investments have given decent gains this year, and that also helped both policyholders and shareholders in terms of dividend and in terms of bonus which you have provided. What is the kind of investment that you are looking for FY26 into the markets?
Actually, it depends upon how market moves.
And what's your take on the market then? Let me ask you that way.
We are, you see, we are, as you know, contrarian investor. So even if market goes down, we also invest in good scripts, because that ultimately gains for all our policyholders. And current year, definitely last year experience, current year, let us see how market is moving. As per that, LIC will also take its action.
Sir, my final question, and I'm running out of time here. So, bank assurance is something which you've been focusing on, and you have doubled the contribution coming from bank assurance. How do you see bank assurance channel for you? And do you see, there's always this reports and talks about there could be some regulations that will come in for bank assurance. What is your view on it?
You see, last year our banca channel did extraordinarily well. Last year more than 5%, 5.6% share of banca premium to total premium. And current year definitely further growth will be there from that channel. Banca channel will give further growth. So far as regulation and other things are concerned, those will not affect LIC, because our banca channel is very disciplined and very. So I don't find any challenge for LIC to promote any banca product.
But do you are you looking at some regulations coming from the regulator for the banca channel?
There may be something, government or regulator may decide something that when it comes we will be able to know.
Sir, as you leave on a very high note, to sum it up, VNB at the highest margin, highest bonus for the shareholders, highest single premium that you have done. You are also telling us that the VNB margins will head higher from here.
Yes.
And also the growth, APE growth will come back once this entire thing settles down, right?
Absolutely, absolutely.
Let's move to an interesting corporate conversation. Dr. Ranjit Rath, CMD of Oil India and Chairman of NRL as the Numaligarh Refinery, is joining in exclusively on NDTV Profit. Dr. Ranjit Rath, thank you so much for speaking with us. Let's start by you taking us through the numbers for the financial year and for the quarter. We've seen a 10% increase in PAT, record production levels, but year on year there has been a dip in profitability, isn't it?
First of all, thank you very much for having me, and good morning to all of you there and the viewers. Yes, we had a record performance this year, the highest ever since inception, 6.71 in terms of crude oil and natural gas both. We also scripted a highest ever natural gas, and the year we scripted about 10% growth in terms of our standalone PAT, which is about 6,000 crore, and consolidated we did about 7,000 crore, which includes
we want that you should understand that you should follow the rule of law of the land आपको follow करना है और उसके साथ business भी करना है and consumer interest को protect करना है. This message is also being communicated to them. Ultimately पहले तो जो पहले action लेने से पहले हम लोगों को convince करना है, convey करना है. This is what is being done from last more than 2 years, and today at a next level we have done this. And it is not done, further action will be there as per the law.
सर असीम मुंचंदा सीबीसी आवाज से अभी एक डार्क पैटर्न ये भी कैबिनेटर का भी सामने आता है कि एडवांस शिफ्ट की डिमांड कर रहे थे वो, तो आपने नोटिस भी भेजा है लेकिन अभी तक कुछ उन्होंने हटाया नहीं है, तो आगे किस तरह की हम देख सकते हैं कार्रवाई होती है उनके ऊपर?
तो नोटिस हमने इशू किया है. नोटिस के बाद देयर आर बिकॉज इन द लॉ इटसेल्फ टाइम उनको कुछ टाइम देना पड़ता है. अगर नहीं होता है तो बाद में एक्शन लेंगे. और कभी कभी तो उत्तर भी देता है, कुछ एस्केपिंग उत्तर देता है, तब हम इसके लिए इन्वेस्टिगेशन के लिए एक सिस्टम है. अकॉर्डिंग टू दैट वी विल इन्वेस्टिगेट एंड टेक द नेसेसरी एक्शन.
अभी तक सर नोटिस कितने हो गया?
नोटिस नंबर आप बताइए.
जो डार्क पैटर्न से रिलेटेड है, देखिए ये एक चीज और भी मैं क्लैरिफाई करूंगी कि अनफेयर ट्रेड प्रैक्टिस बेसिकली डिफाइंड है एक्ट में. जो डार्क पैटर्न्स हैं दे आर नॉट एक्सीडेंट्स. एक्चुअली जो कंपनीज हैं वो बहुत ही सोच समझ करके एल्गोरिदम ड्रिवन इस तरह की मैनिपुलेट करने के लिए या कंज्यूमर चॉइस को एक्सप्लॉइट करने के दिशा में जब इसको यूज करते हैं टेक्नोलॉजी के माध्यम से, तो उसे हम डार्क पैटर्न कहते हैं. तो हम लोगों की अब तक जो एंटायर सीसीपीए ने जो अब तक नोटिसेस भेजी हैं, दैट इज 400 एंड इट हैज क्रॉस्ड 400, इट इज नाउ 401. मगर जो खास करके डार्क पैटर्न से रिलेटेड है वो करीब 11 लोगों को भेजा गया है जब हम लोगों ने गाइडलाइंस निकाल दिया उसके बाद. तो गाइडलाइंस निकालने के बाद जैसे अलग अलग ड्रिप प्राइसिंग है या बास्केट स्नीकिंग है या कंफर्म शेमिंग है, इस तरह से लेकर के हम लोगों ने करीब 11 सेक्टर के अंदर नोटिसेस किए हैं. सब एकदम करीब 4.
ना अभी वो बाहर आए, अभी भी आया है. दैट हैज कम जस्ट रिसेंट कंप्लेंट ऑन सीसीपीए, sorry, consumer helpline. It has registered very recently. Immediately we have acted on that.
Sir. Good evening, sir. Akshara Shrivastava from Business Standard. Sir, quick commerce platforms पे काफी dark pattern use होने के news has been coming out. Have you taken any suo motu cognizance of that and sent notices to any quick commerce platforms?
Quick commerce इसमें 10 minutes.
आपने वहाँ कुछ नोट लिया है, वहाँ पे डार्क पैटर्न्स यूज जो होते हैं और उनको नोटिस भेजने का कोई आपने इरादा है?
जब भी सीसीपीए में कंप्लेंट आता है वी विल डेफिनेटली लुक इनटू इट. इट इज नॉट दैट जो भी क्लास एक्शन भी होता रहता है. कंप्लेंट जब आता है, अगर समझो कंटिन्यूअसली एक पर्टिकुलर कंपनी के ऊपर कंप्लेंट आता है तो देन इमीडिएटली क्लास एक्शन हम लेते हैं. पहले उन लोगों को बताते हैं. रिफंड के लिए भी हमने प्रयास किया है, कई इशू में हमने रिफंड भी करवाया है. अगर नहीं मानते हैं तो एक्शन होगा.
This I am Deepak from Times of India. So, ma'am, wanted to know one thing. 11 notices, only notices, or in 11 penalties cases, and you said sector. So, number of company notices, or it's for the entire sector? That's number one. Number two, you told about 12 patterns, something like 12 or something.
13.
13. So, can you tell us all those 13 each? maybe in category wise.
आप बताइए 13 पैटर्न.
So जैसे 13 पैटर्न्स में अभी तक जिसको हम लोगों ने नोटिस दिया है, तो इसमें जैसे फॉल्स अर्जेंसी, फोर्स्ड एक्शन,
हम दे देंगे आपको.
हाँ, हम आपको
तो 13 आपको लिखने में थोड़ा समय भी लगेगा और थोड़ा कुछ टेक्निकल शब्द भी है.
और अभी सब प्रगति में भी मुझे.
हाँ, वो तो है. तो हम दे देंगे आपको, एक नोट भी दे देंगे आपको.
और जो 11 नोटिसेस
नहीं, अगेन जैसे मैंने कहा ना कि अनफेयर ट्रेड प्रैक्टिस, जो आपके डार्क पैटर्न्स हैं, दे कॉन्स्टिट्यूट अनफेयर ट्रेड प्रैक्टिसेस. सो इवन जब ये गाइडलाइंस नहीं आई थी, तब भी हम अनफेयर ट्रेड प्रैक्टिसेस के अंतर्गत नोटिसेस कर रहे थे. मैं सिर्फ ये कहना चाह रही थी कि जो एक मेजर सेक्टर के ऐसे लोग हैं जो अलग अलग, चाहे वो फूड डिलीवरी हो, चाहे वो लॉजिस्टिक्स से रिलेटेड हो, चाहे वो मूवी टिकट्स वाले हों, ई कॉमर्स के लोग हों, फार्मा से रिलेटेड लोग हैं, इन सब लोगों को मिला करके हम लोगों ने 11 लोगों को नोटिस किया है.
मैं जैसे कहा, डार्क पैटर्न्स आर नॉट सीन एज आइसोलेटेड डिजाइन फ्लॉस नॉर एक्सीडेंट, बट रादर calculated and hidden manipulation practices. This is what direct patterns.
Hi sir.
Dynamic pricing होता है सर, available में होता है, ये flag मिलता है, so that also comes under dark pattern. उस पे कुछ कर रहे हैं क्या?
इस पे सर हम लोग इन्वेस्टिगेट कर रहे हैं. जैसा सर ने भी कहा कि जब कोई डायरेक्टली जैसे एक इवेसिव रिप्लाई देता है और वो कहता है कि नहीं, ये तो पार्ट ऑफ उसका बिजनेस मॉड्यूल है, तो इसे इन्वेस्टिगेट करने के लिए हम लोग डीजी इन्वेस्टिगेशन को रेफर करते हैं. तो देखिए अगेन कुछ चीजें ऐसी हैं, जैसे मान लीजिए कि अगर किसी की लास्ट फ्लाइट में 10 मिनट पहले एक ही सीट रह गई, हो सकता है कि वो एक बहुत ही ल्यूक्रेटिव प्राइस पे ऑफर कर सकता है, लेकिन क्या वहां पर एक सोची समझी साजिश के अंतर्गत लोग जानबूझ करके ट्रैप कर रहे हैं और फिर ये डिफरेंशियल प्राइसिंग के नाम पर उसमें कुछ अनफेयर ट्रेड प्रैक्टिस हो रही है, इसके बारे में इन्वेस्टिगेशन आवश्यक है. नहीं, अगर
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Welcome. You're watching The Big Question. I'm Tamanna Inamdar. Donald Trump's latest immigration crackdown has struck at the very heart of Indian students' dreams to study in the United States of America. In what is perhaps the most sweeping and aggressive move of the administration yet in the crackdown against international students, all new student visa interviews have been suspended. This effectively means that all fresh student entries into the United States have been put on a halt for now. It doesn't end there. The Trump administration is planning a comprehensive social media vetting for all new applicants, a move which signals a new era of surveillance to obtain a US visa. Since March, consular officers have already been checking the social media of students who joined pro-Palestinian protests, and the scrutiny has now been extended to all student visa applications. An internal memo from Secretary of State Marco Rubio has instructed US embassies and consulates worldwide to stop scheduling fresh visa appointments immediately, pending further instructions. Now, this pause could lead to long delays in visa processing and impact universities that depend on international students for income. More than 1 million international students were studying in the United States in the past year, contributing nearly $43.8 billion to the US economy. For Indian students, who make up nearly 30% of all international students in the US, the biggest cohort of foreign students, the move spells deep trouble. Now, Indian students have long seen the US education as the ultimate ticket to opportunity, to realize their American dream, which now seems under threat. Just a day ago, the US Embassy in New Delhi also issued a stern warning to Indian students, saying that even minor attendance lapses could cost them their student visa. The embassy directive read that visas can be revoked if students are seen dropping out or skipping classes without informing their school. But it's not just a single directive. The Trump administration is tightening its screws across the board. It has already revoked over 4,000 student visas in its first 100 days. It has made the rules around optional practical training programs and H-1B visa more stringent, policies that once allowed Indian graduates to gain critical work experience in the US. The administration has even terminated student and exchange visitor information system records. That's the official government tracking system, without which foreign students lose their legal status to be in the US. Indian students are at the receiving end of this revocation, and their visas have been terminated for minor offenses such as speeding tickets and parking issues. There is an escalating battle with Ivy League colleges like Harvard and Columbia, which have churned out some of the best Indian minds today that are leading some of the world's biggest companies. Look at the Indian diaspora, which is at the head of companies in the United States, whether it's Satya Nadella of Microsoft, Google Sundar Pichai, or Shantanu Narayan of Adobe. With all this, Indian students are already exploring alternate options. Hong Kong, for example, has already called on the city's universities to attract top talent by opening their doors to those affected by the Harvard ban. They've said carte blanche, if you've been accepted by Harvard, we will welcome you in unconditionally. So the big question we're asking today, is the dream of Indian students studying in the US shattered? And should there be more opportunities for Indian universities to now attract that talent? To speak on this, I'm joined today by Advocate Gaurang Parekh. He's an immigration lawyer. Siddharth Iyer, Chief Operating Officer of One Step Global, and Ashok Sajjanhar, former diplomat, joining us on the conversation for that perspective. Welcome to all of you, and thank you so much for speaking with us. Mr. Iyer, I'm going to begin with you. And just to put into perspective how big a hit this is.
Well, see, this isn't just US kind of hitting a pause button with the student visa applications, but to a large extent, it feels more like a kind of unsubscribed moment for students who were actually ready to invest in the American dream. They say that American education is one of their finest exports. But right now, it kind of feels like a out of stock item, for international students, which is causing a lot of uncertainty with regard to how their careers will proceed in the middle of a storm. We are representing a couple of US universities ourselves, advising them with international marketing and recruitment strategies. I think all of this is going to be put on a pause till there's more clarity on the vetting processes. So till the time, a more direct student narrative issuance goes out, I think students will be left in the lurch, to try and find out what can they do.
Siddharth, let's start with some context. How many Indian students are going every year? I saw 2023 figures was close to 2.5 lakh. might have increased by then, or has it decreased? What kind of courses are people going for? And isn't the key reason that students make their way to the United States in hope of getting jobs there and then settling down and then getting an H-1B visa and then getting a green card and then moving up that chain?
You're so true on all those accounts. In fact, 2023 was that year where India overtook China with sending over 268,000 plus Indian students. And that was a 35% year-on-year increase just in terms of overall volumes. And currently, Indian students are almost contributing to $10 billion to the US economy. And this is through tuition fee, through living expense, and so much related spending. So the US economy is actually benefiting from Indian students and international students overall. US for international students has actually earned almost $40 billion with the contributions by international students. And not just that, when you were talking about skill gaps, OPT and job-based visas, in fact, OPT has grown to such an extent in tech, healthcare, and AI-based sectors that Indian students currently account to almost 70% of that overall population who are doing great work in STEM-based programs. And they are actually fulfilling those roles that companies in the US can't otherwise staff, with their own internal resources. And that's where international students plug in the gap. So this growth has been sustained and has seen a phenomenal rise because of US universities investing their time, effort in identifying good potential candidates who look up to a US education. I think putting a pause on all that is certainly going to hurt them, and it's like shooting themselves in the foot.
So too bad for them. Too bad for them. But, what is the opportunity for us, and what do these students do? I want to come to Advocate Gaurang Parekh, because there are a lot of students who are either stuck right now in the middle of all of this. If, visas have been suspended, they want to get into the next term. If there are no interviews right now, what do? That question mark comes in for them. Really unfair. On the other hand, those who have dreamt of a US education, and if they can afford it or on a scholarship, what are the opportunities they now have? What should they look at?
Now, see, this time US have suspended all the interview dates. So they don't have at present any opportunity to schedule an interview with US consulate or embassies in India or anywhere in the world. And they can't apply for visas now, right now. It's a suspended, they can't apply for. The individual or students who already have scheduled their interview, they can go for interview, and that also interview is going to be very, very tough, and they are most probably they are rejecting all the student visa applications. Now they have another options. Either they have these two university which have branches in any other country, like say Hong Kong or Singapore or Australia or New Zealand. They can transfer their admission to those countries and start studying there. Either the US is going into a recession mode, and they are shooting their foot on their own. Their interest rate and our interest rate are gapping together. Instead of that, Trump administration is heavily targeting student visas and student applications. This is not fair. Student dreams are going to go down, and this is a very difficult time for the US and Indian students.
Students' dream going down is one part of it. The force that the Indian diaspora brings, Ashok Sajjanhar, I just want to understand from you how you see this panning out. Is this going to be another one of those policies which starts off but then hits the pause button? It doesn't make sense for any nation to pause a global talent hunt. I mean, look at what Hong Kong has done. The Hong Kong Education Bureau has come and said, we welcome all of you. All of you come here. Everyone wants global talent.
Yeah, thank you very much, Tamanna. I think it's a lose-lose proposition for all concerned. As your other panelists have said, it's a lose proposition for the Indian students or the international students who want to go to the United States for higher education. It's a lose proposition for the United States because, it generates so much of revenue as a result of these foreign students. You mentioned about they going on, full fee payment or scholarship. I can tell you that these days scholarships have come down very drastically. The cost of education has increased very starkly, while scholarships have come down very drastically. So they were earning much more. And then, as you mentioned yourself, Tamanna, that it is, big talent pool, and Indian students, when they go there, they are focused, they are hardworking, they are dedicated, they are determined, they are, they're very motivated, they're very inspired, they want to do well. So I think that is a huge addition as far as the technical and the talent pool in the United States is concerned. But, you mentioned about Hong Kong. Now, Hong Kong also, I would say that the rules there are, it's getting increasingly integrated to China. So I will not,
Suggest going
promote
there.
that as, I will not promote
the
that
reason I
as,
brought that up, Ambassador Sajjanar, is it's an example that Indian universities can follow. Why should we not go out there to attract the talent pool? And then that's a very real question we have to ask ourselves. If we have brilliant students here, can we offer them the kind of education that they're hoping to get in American universities on par?
Absolutely. That is what I was coming to. That it is the Indian universities here, and also we are getting campuses of foreign universities established in India. We've seen the Australian universities coming here, the American universities. I also saw an ad yesterday that Liverpool University from the UK is going to come here. So I think the very well-known, well-recognized names from across the world are coming to India. And I think this process will get even quicker. It'll get a fillip as a result of the decision that the American administration establishment has taken, because they will know that, at a fraction of the cost in India, they can provide the similar sort of, teaching environment, teaching standards, levels of, in terms of the faculty, etc. And they can do. And also, in addition to that, there are universities in Australia, in Singapore, in Canada, in Europe. They are going to get into high gear to attract these students, because they will also bring revenue, additional revenue. And we know that under the, the geoeconomic changes that are taking place. So I think Mr. Trump is providing a disruption in this sector also, not only in the trade sector. And as one of your panelists has said, it is, in my view too, he's really shooting himself in the foot. It might be transient, but I think it will have done the damage, because that certainty and predictability would have gone away.
So a couple of things that we need to talk about, which is useful to our viewers here right now. And Siddhartha, here, let me come to you on that. So we know that there might be, as far as Harvard is concerned, maybe 800 odd Indian students who would be stuck. If all student visas are suspended right now, that number would be very, very, would be much higher as far as Indian students are concerned. What are the options and alternatives they can look at right now?
See, at least in ecosystem support, what Harvard has been able to do is that a federal court judge in the US has been able to put a stay order to ensure that Trump, doesn't take the next steps in order to affect those students adversely. To a large extent, I think the Harvard president himself has put out a notification that, look, you guys are family. We are here to help and protect you. And we have very robust student ecosystem who are going to help and advise you. Harvard, gets out the best lawyers in the US year after year. They certainly have that arsenal with them to ensure that they fight back, oppressive governments, who are putting out such policies, which are very arbitrary in nature. From what I have seen and understood is that students are being very well communicated within the university campus on their next course of action. and they've been asked to hold, till the time there are formal advisory services that goes on from the student community sector. In order from kind of looking at, say, transfer-based programs, in the middle of a US degree, it's going to be tough and challenging. It's not like other Ivy League universities, are waiting with open arms with tons of seats waiting to enroll. So they can certainly look at other good rank or similar ranked institutions in other countries, but that needs to be dealt on a course-to-course and case-to-case basis. To map that out, I think getting advice from, say, in-country reps or advisors who are there on US university campuses is a good way to go forward. But in large, I think till the time that this litigation, comes to a level of clarity that students want and expect, I would ask them, to certainly refrain from taking any further steps till there's more communication on those lines.
Should students start looking at options domestically? And are there enough good options domestically? And let's be honest here, Siddharth Iyer. I know we all want to say, yes, we have the best, we are the best. But let's be honest here, because we don't want to do a disservice to students who are watching this either. Do you think that there are good enough options now domestically to give that quality of education which will at the end of the day set up their careers the way they want?
In all honesty, I would say not yet. We are not there yet. To a large extent, there are a lot of Indian universities and institutions who are being very aspirational with good liberal arts programs and with great robust ecosystems that support the students, but there aren't just enough. And just the higher education ecosystem and capacity, even when you look at leave the rankings aside. Just if you look at capacity, you don't have the capacity for Indian students to fulfill good quality higher education ecosystems available in country yet. Ashokji very clearly pointed out that there are multiple, foreign universities setting up India branch campuses, be it with the UGC, be it at GIFT City, be it, with the Queen City in Karnataka, be it in states like Maharashtra with US universities coming in. But this will take time to come to fruition. We are yet to see, a good use case or a study where foreign universities can establish themselves well, provide robust employment and work opportunity support for international students coming in, not just from India, but from elsewhere as well. To attract top talent, we are yet to see that play out. And we'll get more clarity when we have that in the next 3 years' time frame. But till then, encouraging more foreign institutions to set up their India branch campuses and establishing a good base, good innovation hubs in India is going to be, the theme for the day, given that immigration laws across multiple countries are being really scrutinized a lot. But if I were to also look at the flip side of it, do international students going to a particular destination country from India, are they going there only for the university rankings? No, they are not. They're going for the experience of having lived in a foreign country, for having met international students from so many campuses. So will India be able to attract so many international students out here on our campuses? Well, we could possibly do that when, say, Indian tourism increases.
My point is, why not? Why not? Why have we not explored that option? Gaurang Parekh, I want your point of view on this. And I would add one more thing maybe to what Mr. Iyer is saying, that people want to go to international campuses to interact with people from a lot of different countries. You have that cultural experience, you have growth there, and you also want a pathway to immigration. Let's be honest, it's a pathway to immigration.
Yeah, so whenever one student goes to US or say Australia or New Zealand or Canada, they carry them with themselves the whole family. Once he's enrolled as a student, then he enrolled as a H-1B visa holder, then goes for green card and then becomes a citizen. Then he can invite his or her parent or get married and invite his or her wife. So it's a long drawn lineup wherein student attract the whole family to US. They can invite whole family to the US, and if they are going to stop this thing, it's going to be a big problem with US, because they don't have employees to serve in their hospital. They don't have employees to serve in their big companies, corporate companies, and they need employees from outside USA to serve their companies in USA. But if they are going to stop all these things, they are going to face a lot of problems. And and in turn, people and students have already started looking after Australia, New Zealand, and Europe. So this has become very difficult for them, and it's going to be a very tough time for US people.
Yeah, so forget about US people. Forget about US people. We care about in our students who want another opportunity. What are you telling some of the people who might be coming to you, Gaurang, right now? What is your
so at present, US is the best country for study. But after that, I'm advising them to go to Australia or New Zealand because they at present provide good education, good facilities on the campus, research facilities. So this is the best country at present. Students are traveling to Australia nowadays. They have stopped traveling to Canada because there is a lot of problem in Canada. We have a diplomatic standoff between Canada and India. So students are not traveling at present to Canada, but their preferred destination at present is Australia.
Preferred destination is Australia from the point of view, Gaurang, of the quality of education or the pathway to immigration once again? Would be very clear why people
pathway to immigration, not pathway to education. Yes, education is the best in USA. Nobody can compare education with any other country.
Question is, what are you doing with that education? Okay, Ashok Sajjanar, I want your perspective on all the conversations you've heard so far. Is it a lofty idea right now to provide alternatives for the best and brightest minds? And hey, why just Indian students? Let's welcome the best and brightest from everywhere.
Yeah, you're right, Tamanna. I think that needs to be the objective. We shouldn't, meaning this is an emergency. This is an urgency that we have to set up. I know that, there have been discussions that have been going on under the new education policy. We are to get, higher educational institutions established. But I do sincerely hope that it will now be taken up, on a war footing, and there would be sort of, also on the part of the Indian government, Indian establishment, that we attract more foreign universities, not only for Indians, but also for the foreigners. And I think, as we see that the global center of gravity of the global GDP is moving towards the Indo-Pacific, and India is today the fourth largest economy, shortly going to become the third largest economy. I think India will have much greater opportunities. So, what our friends on the panel are talking about, the new experiences, I think the foreign students also would benefit from the experiences that they would be able to have in India. Of course, I quite agree with Mr. Iyer that we are not there yet. But still, I think we have great potential, great possibilities, and now great opportunities that are staring us in the face. So I think we need to, proceed on that. But in addition to that, in parallel, those students who are not able to find their way into the United States at the moment. And, the gentleman said about Canada, there is a new government in Canada. Hopefully relations will improve. I'm very sanguine about it, that relations are going to get better, and Canada will once again emerge as a very attractive destination for Indian students. So I think there is a temporary blip as far as this decision by the United States is concerned, but I think it's going to be more damaging and more harmful to the United States in the medium and the long term, both in terms of the revenue that they earn, as also in terms of getting the brightest talent that they are able to attract.
Do you think, Ambassador Sajjanar, this is something that we should take up with the United States, or should our policy be, then too bad for them, we get to keep better talent here?
Yeah, I think those who are in that particular bracket, those who have got admissions and are waiting for visas, I think we should definitely bat for them that, they are being shortchanged because they have done all the hard work, gone through all the procedures. But otherwise, And I think the United States hopefully would realize that the America itself is a land of immigrants, and they depend upon immigrants, and all their, when there is this contestation between the United States and China for dominance as far as technology is concerned, they need all the talent that they can get rather than pushing them out of consideration. So I think these are the sort of thoughts and ideas that need to be brought to the United States, because I can understand where they're coming from as far as Harvard is concerned, this anti-Semitism, this, that. But then you are throwing the baby out with the bathwater. There's this problem. Okay, if the establishment feels that is a problem, take care of it, but not.
And also the extent to which you are cutting down. You're telling students, if you cut class, we'll cancel your visa.
Yeah, exactly.
Is this a proportionate response?
Absolutely. And due process of law needs to be followed in this, and here it seems to be just executive action, executive order without any sort of reprieve as far as the affected party, that is the students, are concerned.
My question, and thank you to all of you for joining us, my question really to Indian students: is there any point spending your hard-earned money of your parents at a forex loss, taking an expensive loan to go and experience something in a country which doesn't seem to want you? Is that really the best idea at this point? Something which I suppose students from India also have to consider. Where do the opportunities lie? Where is the growth story? And is it not right here in India? With that, it's a wrap on this edition of The Big Question. Thank you so much to all of you for joining us.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to this Wednesday edition of the World Report. I'm Arjun Samar Mahindran. Let's take a look at what's making headlines around the world. We begin with the neighborhood where calls for restoration of democracy are in fact growing in Bangladesh. 3 associate bodies of the Bangladesh Nationalist Party, or the BNP, are in fact gearing up to hold a massive rally at 2 p.m. local time. The BNP is demanding early election. For more on this story, my colleague Saurabh joins me. Saurabh, if you can hear to me, how's the government responding to the civil unrest and the demands of these various political groups? Also, what are some primary reasons behind the delay in setting a definitive election date by the interim government headed by Muhammad Yunus, of course? Saurabh.
Well, it's the lack of perhaps a reason, a proper reason that explains the delay in laying out a roadmap for elections that's led to a situation where there are protests now taking place. Now, where are the protests taking place? They are taking place in Dhaka's Neapolitan area, which is, of course, the office of the BNP. That's the area where the BNP office is situated. And what we know is that this rally, this protest today that's taking place, and there are massive crowds that have gathered already in the area. These protests are taking place and these are organized by the affiliates of the Bangladesh Nationalist Party. Now, the Bangladesh Nationalist Party is one party that has said that elections should be held by the end of this year, which is December this year. And the army also has echoed the same demand. But obviously, Muhammad Yunus, as his critics argue or critics accuse him, is delaying elections, perhaps making a bid to stay on in power. And that's something that perhaps is leading to a situation where political parties are now beginning to feel that there needs to be more concrete steps taken towards elections, which was the primary mandate for the interim government, of course, when it came to power. Now, obviously, Muhammad Yunus is away on a 4-day official trip to Japan as these protests take place, but the protests are taking place in Bangladesh. Not just today's protests by the BNP affiliates, but also protests that have been taking place organized by government employees who are protesting an ordinance that allows the government to sack government employees for misconduct without lengthy process. And that, they say, is taking away the sort of protection from arbitrary dismissals. So obviously these protests are taking place, but today's protest is massive, political, and the demand is quite clear that the BNP, of course, wants elections by the end of this year, which is December this year, something that the Yunus-led interim government has dilly-dallied on and has been wishy-washy on a date.
So in fact, thank you for getting us the latest there, Soren. And of course, many around the world are wondering when, in fact, will Bangladesh's interim government hold the promised elections. Now, moving on, SpaceX launched Starship on its 9th test flight. It was a crucial test mission after 2 previous failures. The flight started smoothly, but Starship encountered some issues in orbit. The first stage Super Heavy booster exploded shortly before it was expected to splash down, and fuel leaks on the upper stage, in fact, vehicle caused it to spin uncontrollably before its planned re-entry through Earth's atmosphere. The White House has reportedly moved to cancel remaining federal contracts to Harvard University amid an escalating battle with American universities. Now, Harvard has already sued the Trump administration over halted funding and also a ban on, in fact, enrolling international students. As experts highlight, meanwhile, by targeting institutions, cancelling grants and firing government researchers, Trump is impairing the ability to solve problems, prevent diseases, design policy, inform the public, and also make technological advancements. Here's a very special report.
The attack on Harvard and its international students is part of a deeper effort to defund and dismantle the academic world.
Trump has begun a dangerous march to roll back civil rights in this country.
If there is anything to learn from this Jewish history, it's that when we push people out of our schools because of their identity, it's a symptom of a morally bankrupt politics.
But Donald Trump is attacking these freedoms because they get in the way of his authoritarian takeover. This is what authoritarians do.
By framing Harvard as a bastion of Marxist maniacs,
and liberal bias. Would you argue that the Trump administration is now using the global visibility of elite academia to actually signal a new ideological litmus test for US institutions?
Thanks as always for having me. Yeah, I think what's clearly happening here is it's an ideological battle between Trump and those who oppose him. And, you know, anybody who knows Harvard in and out knows that Harvard is hardly a Marxist far left institution. I mean, this is one of the richest organizations in the world. It's an organization that has produced any number of billionaire capitalists. I mean, it doesn't even pass the smell test. What it really is a front for attacking anybody who doesn't agree with Trump's particular ideology. That's the ideological role and war that's going on here. I mean, as I think the last clip you showed said, it's part of the authoritarian project. Trump is trying to strangle off institutions that won't narrowly go along with his line.
Harvard's president has called the curbs on international student enrollment devastating, as you are also highlighting. But Daniel, from a diplomatic standpoint, does this not then send a contradictory message to countries that invest heavily in sending students to the US, as you are pointing out?
I think it does. It sends a message that the United States is now less open and less welcome to international students than it was before. And look, you can say it's just one university, it's just Harvard, but they're picking arguably the most famous and prominent university in the United States. So there's no way that's not going to send a chilling message. And I think that also is bad for American power in its own way, right? It's a form of American soft power, of American outreach. As you were saying, diplomacy, it's really a key word here. The United States can reach out not just to other countries' governments, but to other countries' societies by saying, look, we want you here. We want to give you an opportunity to study with us, to come into the country, have that be a pathway for you. And you're shutting that door out. You're shutting that diplomatic messaging down.
Right, Daniel, as always, thank you so much for joining us with your views. We will, of course, revert to you for a regular update.
Well, staying with the US, where the COVID vaccine will no longer be recommended for healthy children or healthy pregnant women, Health Secretary Robert F. Kennedy Jr. said on Tuesday. Now, the decision was a significant departure from the government's previous approach of recommending annual shots for everyone 6 months and older. Meanwhile, some public health experts have criticized the decision, pointing out that the risk of severe diseases and even hospitalization among infants was comparable to that among adults 65 and older. Others condemned the decision to stop recommending the shots for pregnant women who are at high risk, in fact, of severe illness and complications from COVID. The US State Department is dismissing concerns about deliveries of humanitarian assistance into Gaza by a US-backed private initiative that bypasses the UN and establishes aid organizations. Department spokeswoman Tammy Bruce told reporters, in fact, in Washington on Tuesday, that such concerns were unfounded and that the most important priority is, in fact, getting aid into Gaza, the besieged enclave, no matter who's delivering it. She also blamed Hamas for trying to stop convoys organized by the Gaza Humanitarian Foundation from getting to distribution centers. Here's more.
The fact of the matter is Hamas has been opposed to this dynamic. They have attempted to stop the aid movement through Gaza to these distribution centers. They have failed, but they certainly tried. The bottom line is, the real story here is that the aid is moving through, and in that kind of an environment, it's not surprising that there might be a few issues involved, but the good news is that those seeking to get aid to the people of Gaza, which is not Hamas, have succeeded.
Chaos erupted on the second day of aid operations by a new US-backed group in Gaza as desperate Palestinians overwhelmed a center distributing food on Tuesday, breaking through fences. Israel said nearby troops fired warning shots. Meanwhile, an AP journalist heard Israeli tank and gunfire and also saw a military helicopter firing flares. The Israeli military, meanwhile, has said its troop fired the warning shots in the area outside the center and that control over the situation was established. Meanwhile, at least 3 injured Palestinians were seen by the Associated Press being brought from the scene, one of them even bleeding from his leg. Listen in.
احنا اشتهينا السكر، اشتهينا السيرج. هاي جابوا لنا سكر، جابوا لنا سيرج. وهي جابوا لنا طحين وهي طحين. اولادنا كانوا مشتهين اللقمه، اكلنا عدس، اكلنا معكرونه، والتجار بيعونا كل حاجات غاليه.
EU countries have formally approved a new €150 billion loan program to help rearm in the face of Russia and worries over US reliability. Now, this is according to the Polish presidency of the bloc. The safe borrowing scheme, backed by the EU's central budget, was proposed by Brussels in March, and the bloc rushes to boost its defences. The King Charles III was given a heartfelt standing ovation in Canada's Parliament in Ottawa after a historic speech in support, in fact, of the country staying strong and free. My colleague Maha Siddiqui, meanwhile, unpacks the latest from Vancouver.
Many Canadians are feeling anxious and worried about the drastically changing world around them. Today, Canada faces another critical moment. Democracy, pluralism, the rule of law, self-determination, and freedom are values which Canadians hold dear, and ones which the government is determined to protect.
King Charles III said that true north was indeed strong and free. And that's the sentiment or the message that King Charles III, as the head of state of Canada, wanted to convey from the Canadian Parliament to Canada's neighbour down south, the United States. As the threat from the Trump administration on Canada over annexation looms large, Mark Carney, the Prime Minister of Canada, and his Liberal government had invited King Charles to make this address and open the Parliament. The last time that the Parliament was opened by the monarch and the speech from the throne was delivered by the monarch themselves was in 1977 by Queen Elizabeth. King Charles III referred to the first speech that was made by Queen Elizabeth in 1957 in the Canadian Parliament at a time when the memories of World War II were still fresh and there was an onset of the Cold War, a period of uncertainty, in some ways drawing parallels to the geopolitical uncertainties at this juncture, and how Canada needs to remain free, pluralistic, protect its democracy as well as the rule of law. He said that Mark Carney's government is committed to all these aspects. He also spoke about the trade war and said that US and Canada were negotiating an economic and security agreement while Canada was opening up its access and trade opportunities with other partners as well. He also spoke about how Canada will make an effort to break the interprovincial barriers and make it a one economy rather than 13 separate economies, which has been much criticized by experts as well as the people, considering that much of it and much of these policies have led to Canada's dependence on trade on the United States.
UK police say 50 people have been treated in hospitals after a car rammed into a crowd of Liverpool football fans celebrating their team's English Premier League championship, and 11 remain in hospital. Meanwhile, police are continuing to question the suspected driver of a car that ploughed into a crowd during Liverpool's Premier League victory parade on Monday. Assistant Chief Constable Jenny Sims of the Merseyside Police said the patients were all stable. Listen in.
Following the incident yesterday, I can confirm on behalf of the National Health Service that we are aware of 50 people who were treated at hospital for ongoing treatment. Of those, 11 remain in hospital for ongoing treatment. They are all in a stable condition, and I am pleased to say that they appear to be recovering well. I want to take the opportunity to pay tribute to the brave members of the emergency services who were on the scene of yesterday's incident within a matter of seconds. Following such a shocking incident, they immediately ran towards an extremely uncertain and potentially dangerous situation in an effort to protect members of the public and fellow emergency responders from harm.
Meanwhile, car ramming survivor Jack Trotter said he was clipped by the vehicle which injured his back and legs and also resulted in the use of crutches. Listen in.
I was taking videos of just random Liverpool fans. So I was, just having a ball and singing away. And then I didn't know anything at all was happening until Abby has started screaming my name, Jack. And then I sort of put my phone down and looked up. And then what happened was the car just started ramming through people. He had hit me, and then when he had hit my legs, I just basically sort of span around. So I had just about dodged the middle of the bonnet, and then he clipped my legs with sort of the side of his bonnet.
News from the neighborhood now, where Pakistan's Islamabad has in fact banned child marriage, offering hope that the practice could eventually be outlawed across the Islamic Republic. The bill faced fierce opposition in Parliament, with some religious leaders criticizing it even. Still, Pakistan is among the 10 countries with the highest number of child marriages. Climate-fueled flooding has led to a further surge of monsoon brides, as they are called. Now this as poverty-stricken families in villages marry off their young daughters for money. And the European Commission expressed serious concerns over a Hungarian law that would allow bans on public events by the LGBTQ+ communities as pressure mounts on the country's populist government over democratic backsliding. Speaking in Brussels on Tuesday, the EU Commissioner for Democracy, Justice and Rule of Law, Michael McGrath, said that if adopted, the proposed legislation would constitute a serious breach of the EU principle and EU law. He also added that the Commission would not hesitate to use the tools at its disposal to ensure the EU law is safeguarded. Here's more.
In particular, we do have serious concerns about the draft law on transparency tabled in Parliament earlier this month, and I raised this again at the hearing today. The Commission believes that if adopted, the proposed legislation would constitute a serious breach of EU principles and EU law. And last week, together with the Executive Vice President Hennifer Cunnin, I wrote to the Hungarian government asking that the draft law be withdrawn from the legislative process.
In the world of business, Nissan is reportedly seeking to raise more than 1 trillion yen or $7 billion through a mix of debt and asset sales to shore up liquidity as it faces a looming repayment wall next year. Now, the plan includes issuing up to 630 billion yen in bonds and convertible securities, alongside a £1 billion syndicated loan backed by the UK Export Finance. Now, the report suggests that the automaker is also eyeing disinvestment in stakes in Renault and battery firm AESC, as well as sales of plants in Mexico, South Africa, and real estate, including its Yokohama headquarters. Automaker Stellantis has reportedly appointed Italian Antonio Filosa, in fact, as its new chief executive. The new CEO succeeds Carlos Tavares, who quit the group in December after a sharp drop in profits and also sales, especially in the US, raising questions about his management and practices. Berlin on Tuesday made a bid to host the Olympics again, possibly a century after the city hosted the 1936 Games under the Nazis. Berlin Mayor Kai Wenger presented bid plans with help from 4 other German states. This as at Berlin's Olympic Stadium 2036 would be the 100th anniversary of the Berlin Games. Listen in.
Wir wollen Olympische Spiele und ich mache das nicht an Zeitfenster fest, sondern wir wollen diese Spiele nach Deutschland holen. Wir glauben, dass Berlin mit seinen Partnerinnen und Partnern ein starkes Angebot ist, damit Deutschland die Chance hat, Olympische Spiele auszurichten. Und da kommt es nicht auf Jahreszahlen an, sondern es kommt auf das gute Konzept, auf die gute Vorbereitung und vor allen Dingen auf die nachhaltige Wirkung an. Und ich glaube, darum geht es in erster Linie.
Pope Leo XIV met on Tuesday with freshly crowned Italian champion soccer team Napoli at an event in the Vatican City, as you see on your screens right now. Now, Napoli crunched its 4th Serie A title win after a 2-0 win over Calgary on Friday, with goals from Scott McTominay and Romelu Lukaku. Speaking in front of an audience of the team's players, managers and staff, The Pope cited the social aspect of Napoli's title. Here's what the Pope said.
Sappiamo quanto il calcio sia popolare in Italia e praticamente in tutto il mondo.